Oil prices gained marginally after a 4% slump the previous day as investors weighed concerns about global oversupply. Meanwhile, gold prices fall as the broader market sell-off follows the US government reopening. In key earnings, Tata Motors CV business reports a 6% revenue rise from the previous year, but market share losses continue, and the company also reported a net loss of 867 crore compared to a 500 crore profit last year. Meanwhile, Hero MotoCorp reports a 15.7% rise in its bottom line on a year-on-year basis. The revenues were up 16%. And the counting of votes for the Bihar elections begins at 8 a.m. today. Most exit polls gives NDA the slight edge. The state registered a historic voter turnout of 67.1% in the two-phased election for the 243-member assembly. It's the final trading day of the week, but not short of any action whatsoever. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Center. I am Hormas Fatakia. Let's first take a look at how the Asian markets have started off. And after a swath of green all through the week, it's a swath of red across the Asia Pacific, and all of the indices tracking the overnight losses on Wall Street are trading lower. The Hang Seng down almost 1.25%. The Taiwanese index too trading with losses of 1.5%. Losses also coming in from the Nikkei in Japan, which is down 1.5% as well. The Kospi, the outperformer of the year, is now the underperformer of the day today, 2.5% lower on the South Korean benchmark. So all the Asian indices currently trading with losses of anywhere between 1% to 2.5%. Pull up the GIFT Nifty. They'll give you an idea of how our own markets are likely to start off. Well, it's still a gap down compared to the earlier ticks of 130-point down tick. It's a marginal recovery, if you could call it that. It's a 105-point down tick nonetheless after all the cool off that we saw from the highs of the day in yesterday's trading session. But to set you up for today's trade, our research team is right here with the trade setup, the stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. Firstly, Gaurav is here to get all the market cues we need to watch out for. Gaurav, good morning. What are you watching out for today?
Well, yes, yesterday when we look at Nifty tried to breach that 26,000 mark, but it did not do so. In fact, it gave up all the gains and it ended it with flat gains. When we look at today's setup, now today we are seeing some kind of activities happening around 25,800 puts and 26,000 calls. So these could be the levels for resistance and support. But apart from that, one key thing to watch out for is that today is the result of Bihar election. Now, as per exit polls, some of the exit polls said NDA is at a upper edge at a marginal level. So that is something that will define the market and the tone of the market today. Other than that, when we look at the corporate options, today is the record date for Infosys, record largest share buyback of 18,000 crores. We also have GSCL who has a record date of share buyback of worth 300 crores. And apart from that, whipsaw Energy System. Now there will be a stock split in the ratio of 10:1. So let's watch out for these stocks. When we look at the IPO market, we are seeing some kind of action today as well. Tenago Clean Air, today is the last day of subscription. Remember, the IPO has been subscribed more than 3 times. We've got Capillary Technologies who will come up with the IPO today worth more than 800 crores. And we will also be having Pine Labs getting listed. Remember, this IPO was also subscribed almost 2.5 times. Other than that, yesterday, when we look at the trading, Ashok Leyland, Muthoot Finance, Vedanta, Laurus Labs, all these players were at all-time high levels. So let's watch out for these also. Remember, Muthoot Finance also came up with good set of numbers. And lastly, when we look at the earnings calendar, today is the last working day of our earnings calendar. So we've got important results like Siemens, Glenmark Pharma, Exide Industries, Natco Pharma, Tata Motors Passenger Vehicle. Now, all these stocks will be in our radar today.
It's a long list. It's the final day of the earnings season, but a long list nonetheless. Gaurav, thank you for that. And to take you through that long list in greater detail, Winnie is here to tell us more on that. Winnie, good morning.
Hi, good morning, Urmas. It's Friday, but that list is just getting longer. Luckily, it's just the last day of earnings season today. So let's keep an eye out on Hero Motor first. Steady quarter that's coming in Q2 FY26. Profit growth of 16%, revenue growth of 16%, and double-digit volume growth. That is something that has overall aided the revenue growth for the company. Even when you look at the margins, they've come in at 15% versus 14.5% last year. Margins are at a multi-quarter high, this 15%. So keep an eye out on that. We're expecting some positive move maybe we could see here. Jubilant Food food, good quarter again coming in for the company. Good performance in terms of revenue, 20% growth there. Profits of the company, 54% growth there, and margins have remained stable at 20.3%. So keep an eye on that. NSEL again, NSDL, I beg your pardon. That's again a one that has reported a good set of numbers. Payments bank business, that's done well for the company. Overall profit growth of 23%, margin improvement that has come in as well. 32% is what the EBITDA margin has come in at, around 150 basis point improvement on a sequential basis, and revenue was up by around 28% on a sequential basis. Voltas has reported a weak set of numbers this time. When you look at it, revenue largely in line, but that major miss came in on the profit and the margin front. So margin at 3% versus 6.2%, profits just at a decline of 74% as well, and revenues fell by 10% versus expectation of 9%. This decline obviously was that EC segment, which has not done well. PNC Infra, what we're seeing coming in, that revenues are down by 21%. Profits of the company, yes, they're seeing an increase in terms of profit, but there's a one-time exceptional gain this time of 162 crores. The management has lowered the FY26 revenue guidance to 5%, so that is going to be a key factor, and we could expect red come in here, and they expect EBITDA margins at 13% for FY26. Afcon's Infra, that also we're expecting red here on the screen today, because revenue is just a 1% growth, margins at 11% versus 11.6%, and they too have cut their revenue guidance for FY26 to 10% from previous 20 to 25%. GMR Airports, that we're expecting a good quarter that's coming from the company, so expect green here, 47% growth in terms of revenue. Margins have seen a sharp improvement as well, and the company has swinged into a profit this time versus a loss last year. Akums Drug, red expected here, weak set of numbers from the company, profits down by 38%, revenue seeing a decline of 1% as well, and margin contraction of around 200 basis point. Tega Industries, on the other hand, good set of numbers, a steady quarter come from the company, revenue seeing a 15% growth, mainly led by the equipment side of the business, that has seen a 56% growth, and they've maintained their margin guidance as well as a whole full year FY26 revenue growth, so could see green here.
Vinny, thank you for that update. Lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, opportunities for both bulls and the bears yesterday, but what's the FNO data indicating?
So two big cues. Bihar election result will start getting the trends or say leads from 8 a.m. And on the global front, in the absence of any major cues after government shutdown was lifted, investors have taken profit out, like profit booking we have seen yesterday, and there was a big fall in the Wall Street. Now for today, following these global cues, GIFT Nifty is indicating a start with cuts of around 100 points. As of now, it's down almost 108 points. On the domestic front, the data has improved in the last few days. Look at the flows. In the cash market, FI sell figure was just rupees 400 crore, while DIs have bought more than rupees 3,000 crore. In the index futures too, FIs have turned buyers and they have bought more than rupees 450 crore. They have reduced long positions, but at the same time, they have also reduced short positions, and here reduction was more than 3,300 contracts. In the options data on the call side, 26,000 and 26,200 have seen maximum addition in the open interest. Also, premium has increased for both these options, and on the put side, we have seen 25,500 put that has seen maximum additions in the open interest. Support for Nifty 25,750, very important level. Resistance remains around 26,000. Yesterday we saw that Nifty crossed intraday 26,000 level, but we have to see that if comfortably Nifty breaches or crosses that level. For Nifty Bank, support 57,900, resistance remains around record high of 58,600, and above that, in the band, sale remains in the band. And stocks amongst stocks that will be in focus, Muthoot Finance has come out with a very strong set of earnings, so keep an eye on that. And two stocks, Supreme Industry and Astral, might be in focus because government has withdrawn the export control order.
Sudarshan, thank you for that update. And now shifting focus to the highly awaited Bihar Assembly elections. The question everyone's asking is, will Nitish Kumar continue his winning streak, or Tejasvi Yadav would get the victory? Parikshit is now joining us to take us through all of that. Parikshit.
Out of 243 seats in Bihar, 122 is the magic number. At least 8 polls are giving the NDA a clear edge in this election. The News 18 mega exit poll is giving 140 to 150 seats to the NDA, 85 to 95 seats to the Mahagathbandhan. Prashant Kishore's Jan Suraj party is set to win 0 or maximum up to 5 seats. As per exit polls, the BJP will win 55 to 65 seats in both phases of the Bihar election, while the JDU will win 60 to 70 seats, making it the single largest party. In the Mahagathbandhan camp, the RJD is set to win 50 to 60 seats and the Congress only about 15 to 20 seats. While the NDA did not initially project Nitish Kumar as the chief ministerial candidate, Union Home Minister Amit Shah later said that there was no vacancy for the CM's post in Bihar. This means Nitish Kumar is likely to lead the government in case NDA wins again. In the 2020 Bihar election, the Tejasvi Yadav-led alliance fell short of a little over 12,000 votes when Nitish Kumar formed the government with a slim majority. This election campaign was marked by sharp personal attacks and polarized rhetoric. The NDA leaders invoked memories of Jungle Raj under Lalu Prasad Yadav and said that Tejasvi Yadav represented a return to that era. The BJP also alleged that Mahagathbandhan allies want to protect infiltrators. Meanwhile, the opposition targeted Nitish Kumar's health and claimed the BJP would replace him post-elections, as it did with Eknath Shinde in Maharashtra. The NDA has promised jobs to 1 crore people and has said that the government will set up factories in every district to strengthen local manufacturing. The Mahagathbandhan has promised 1 government job to every family in Bihar, 200 units of free electricity and a monthly unemployment allowance for graduates and postgraduates.
Parikshit, thank you for that detailed breakdown. Of course, counting of votes begins in just a few minutes from now. Take a short break, get you all the action from Wall Street on the other side. Welcome back. On to action from Wall Street. Indices there ended sharply lower following steep losses in other Nvidia and other AI-related stocks. Even as the record US government shutdown came to an end, the investors turned cautious amidst lower expectations of a rate cut due to inflation worries. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
Markets were down across the board today, with tech stocks showing some of the biggest losses. Investors also grew pessimistic about the interest rate outlook, even as the U.S. government reopens after a record-setting shutdown. The Dow down 798 points, the S&P 500 down 113, and the Nasdaq fell by 536 points. Foreclosure filings climbed again in October after sitting at historic lows in recent years, according to new data released Thursday. While the numbers are still small, the persistent rise in foreclosures may be a sign of cracks in the housing market. Florida, South Carolina, and Illinois led the nation in state foreclosure filings. And the IRS announcing new contribution limits for 401ks and other workplace retirement plans. Starting in 2026, employees can defer $24,500 into workplace plans. That's up from $23,500 in 2025. And one big change for workers over 50, those who make catch-up contributions will no longer be able to put that money in pre-tax. Those contributions will automatically go into an after-tax Roth account.
Kate Rogers, thank you for that update. Now, Fed officials cast a doubt over the rate cut in December and the markets turned cautious as stocks took a hit while Treasury yields moved higher. Steve Leisman brings us a roundup of what the alternate inflation data suggests and where the Fed stands with regards to rate cuts.
It was CPI data in the United States, but because of the government shutdown, there was no data. But among the alternative data sets that Fed Chair Powell said he's looking at is one from State Street called State Street Price Stats. It scrapes millions of retail prices off the web and calculates a change. It has crept up slowly since the president put tariffs in place, gaining nearly a full percentage point since May and underscoring the caution of some Fed officials about cutting interest rates. The good news is it's been stable for about 2 months, but it doesn't measure services, which is an area of prime concern for the Fed. The data series tracks the BLS headline CPI number pretty closely, though it has run a little cooler than both since the pandemic. And Atlanta Fed President Raphael Bostic said he opposed a December rate cut in part because of survey data from businesses gathered by the Atlanta Fed showing they intend to boost prices. Bostic, who is not a voter, announced his retirement in February, said he also saw inflation spreading to core services. CNBC now counts about half of the voting members at the Fed as either outright against or cautious about a December rate cut. Boston Fed President Susan Collins joins Kansas City Fed President Jeff Smith, who is likely against a December cut, having dissented at the last meeting. Presidents Goolsbee and Musalem and Governors Jefferson and Cook have all suggested going slowly or being cautious about cutting rates. Meanwhile, Governors Myron, Bowman, and Waller, they all are presumed to favor a cut, perhaps along with New York Fed President John Williams, though he's less certain. Fed Chair Powell is also an unknown. Before Collins spoke, markets put a 64% probability on a December cut, but that has now fallen to around a coin toss, or 50%. There's still a 69% probability of a rate cut by January. It will likely take clear data on a weakening job market or stable or declining inflation to convince the hawks to cut in December, or an equally clear sign that inflation is headed to target.
Former Fed Chair Lael Brainard believes that the Fed should protect the labor market. Listen to what they said.
The hawks and the doves have both really hardened their positions since the last meeting. There are risks on both sides. From the tariffs, there are risks of inflation staying high. You know, it's already been 3% for the last few months, and it hasn't been at its target for nearly 4 years now. So that is why the hawks are quite concerned. On the other hand, the doves are concerned that the U.S. labor market was really softening quite substantially the last few payrolls prints before the government shutdown, and nothing that they've seen since then has allayed those fears. My own leaning would be to protect the labor market because the risks there, I think, are the more urgent risks, but I think reasonable people can disagree, and I think you could expect to see dissents either way the committee goes.
Lael Brainard also spoke about the U.S.-China trade ties. Listen.
In the first Trump administration, they really targeted their tariffs on China. They were really very focused on the bilateral relationship and regaining a level playing field with China. This time around, they have imposed tariffs across the board on all trade partners because they are now targeting a large amount of fiscal revenue. So it is a fiscal arithmetic, not a strategic calculus, that is driving their tariffs. And as a result, U.S. manufacturers and consumers are being hit, but also America's partners are being alienated at a time when America needs those partners to work with it to strengthen their hand relative to China in all of these sectors.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Thank you for that, Hormuz. I'll start with the crude oil prices because after that very sharp decline that we saw a day before, the prices seems to be trading steady right now. But with the bearish Q, because the IEA says that the global demand is expected to increase by 0.7 million barrels per day in this year, but the supply could increase by 3.1 million barrels per day. That takes us to a global surplus of 2.4 million barrels in this year and nearly 4 million barrels per day in the next year as well. So most people believe that unless something changes drastically, we perhaps are looking at bearish crude prices going forward. But what has done well has been metals as a sector. So this week we're looking at gold prices heading for a 5% weekly gain. Silver is up 9% in this week. The U.S. government signing an opening for a U.S. government shutdown, the longest one, by the way, is what has led to slight profit taking in the Asian markets right now. And also because the treasury yields have continued to climb, also is weighing onto the markets. But apart from that, on a week-on-week, on a month-on-month basis, we still are trading in the positive for the gold and silver prices. Such has been the case for metals as well, where zinc is trading at January highs. We are looking at HRC steel prices at July 2025 highs. Tin is now trading at near 6-month highs as well. And so is the case with copper, which is trading at a 2-week highs. So across base metal prices, whether it is ferrous and non-ferrous, the markets are looking at strength continuing. The decline in US dollar index, individual supply concerns, expectation of strong demand going forward, all has been quite supportive.
Manisha, thank you for that update. Just before we take your leave on the show, the Asian markets continue to remain lower. There's no change in that aspect as of now. The Nikkei has just managed to increase its losses. The Kospi 2 down 2.5% as well. The Hang Seng Index is down 1%. So it's a marginal recovery from those lows. But the data coming out of China has been a disappointing one this time around. Industrial output down 4.9%, missing expectations. And the retail sales also missing expectations. Take your leave on this edition of Power Breakfast from me and the team. Thank you for watching. Bazar Morning Call on the other side.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazar Morning Call. We're coming to you as always from the CNBC TV 18 Motilal Oswal studios. What you are seeing are the election headquarters, and we're completely charged up here at CNBC TV 18 and throughout Network 18, getting you, of course, the biggest, the most comprehensive and the most incisive coverage throughout. We'll talk about this. Bihar obviously is, center stage. It's center mind. But there's a market to trade, and those global cues are looking a little wobbly this morning. Nigel, hi, morning.
Well, morning, and not a bad day actually to have a domestic cue, and hopefully it works out in favor of what the markets are expecting.
Yeah.
But otherwise, overnight, the global markets clearly got spooked. We've been talking about this. Is it in a bubble or not?
Yeah.
Yesterday were the first signs of, a sharp downtick. And actually, I think the Nasdaq in the last 6 trading sessions is down 5 out of the 6. So there is some kind of selling that's creeping in there. But to be fair, they've had a very, very big run.
No, absolutely. And so let's just quickly outline what cues we've got overnight. And as far as the global picture is concerned, those cues are not looking very, very promising. A sell-off led entirely by technology, but it wasn't just limited to the technology space. And that's what changed overnight. The Dow, the S&P 500, the Russell 2000, none of the indices could be spared, so to speak. And it was tech names that were leading from the front. You had names like Nvidia, Broadcom, all of them are falling between 3 to 4%. There's some murmur again about whether there will be an interest rate cut or not by the Federal Reserve in December. Also some chatter about how the Fed may still, or how the government may still take more time in releasing a lot of the crucial economic data, including the jobs report. Remember, we've not seen a jobs report for the last 2 months now. And one of the Fed governors made that point, or made a statement about how they don't see the need for an immediate December cut. So that spooked the market. Now, with valuations being where they are on the AI trade, you just need the smallest of triggers to get people running to the side. And that's exactly what transpired yesterday. This morning in Asia, we actually have an additional issue in the form of data that's come out of China. If you're talking about the industrial production number, or you're talking about the fixed asset formation numbers, most of those parameters for October are quite weak. In fact, fixed asset investment, which includes real estate, that's actually contracted 1.7%. Versus a decline of 0.5%. So it's not looking too great across, some of the regional markets as well. The implied open is on your screen. It's indicating the start is going to be probably about 95 points lower. The reason our screen right now, the GIFT Nifty and the implied open, is not reflecting a wider sell down is because of the local queue. The bets are that the NDA will manage to go ahead and emerge victorious in Bihar. That is what the bulk of the polls have been indicating. Now, the question is whether this is a done deal, because one of the polls, and that's the Axis poll, that was indicating that the margin is actually fairly narrow. So that's what we are going to be keeping a very close eye on. The counting is all set to begin, and I think some of the early trends will start emerging 9 o'clock onwards. But yes, there is a sell-off across Asia. Markets are down between 0.5% to about 1.5%. So there's a fair amount of caution. And remember, our market has run up. The Nifty has had a great streak so far this week. We're up about 2%. We've put on about 600 to 700 points from the lowest point of the current rally. So we'll see how this transpires. But Nigel, very interesting day lined up, given the global cues on one side and the big domestic cue on the other.
Well, that's right. The markets are working with the NDA coming on top, and then the focus shifts to the negotiations with President Trump, and then all the attention will move out there. So the bulls will be hoping that actually the outcome that they are factoring in, that actually works out. But in yesterday's trading session, we came off the top, and you'll be wondering what's happened. Were the FIs big sellers? No, that wasn't the case. Actually, the selling was only around 400 crores in yesterday's trading session. What played out in the final hour of trade yesterday was obviously the Sensex has their weekly expiry that played out. And besides that, there was big unwinding of positions. Whether you look at the Nifty,
You look at the Nifty Bank, there was a lot of unwinding of positions that we saw. Even if you look at what the FIs did in yesterday's trading session, there was unwinding of positions both on the index futures as well as on stock futures. So net in yesterday's trade, there was a lot of lightening of positions getting into a big event like the Bihar elections. And also overnight, the cues are fairly somber. So we did see a fair bit of unwinding. One cue was that, in yesterday's trading session, the futures did see a sharper pullback. The Nifty ended more or less flattish, but the futures actually were under some pressure because the premium did come down yesterday. There was some contraction that we saw in the premium from around the 110, 120 that came down to around 70 odd. So there was some unwinding, some mild shots as well getting into the system out there. But pulling up what the FIs did, unwinding of positions, index futures as well as stock futures. In percentage terms, the shorts are now at around 88%. So it's pretty much at the upper end of the range in percentage terms. In absolute terms, it's ballpark 1.6 lakh contracts or thereabouts. Moving to the options data, then, we had a couple of strikes that were fairly active in yesterday's trading session. And the 26,000 call saw a good amount of open risk build up. And just when the bulls thought that they had that covered, well, we did slip from the top. So this becomes a crucial mark. Premium at around 100 rupees, 26,000 call, fair bit of open risk built up out there. The 25,500 put though, and the recent low, that gives the bulls hopes that, till that 25,300, 25,500 level does hold out, then they could believe that they could fight back, in the coming few trading sessions. So important support, 25,500. Very, very important. First reference point at around the 20 DMA, which is at around the 25,748, which we could visit in the first hour of trade itself. But there is a stiff resistance coming in at around that 26,100 odd mark. For the last few trading sessions, the Nifty Bank has been going to those fresh all-time highs and it's been selling. So this is the crucial, juncture that you're looking at in terms of a resistance level that we're looking at on the Nifty Bank. A stock that I'll be tracking is Glenmark. The stock is 18% off the recent peak that we saw in the middle of 2025. And from there, the stock has seen a decent correction. Now it's holding above the 20 DMA. It's in the middle of the 20 and the 50 DMA. Price action suggests that maybe, in fact, there is some kind of buying at lower levels. There was a fair bit of delivery-based buying, some open risk build up as well. So I'll keep an eye out on Glenmark, not just for today, but for coming few trading sessions as well, Surbhi.
Okay, all right. So let's get started. Nigel, then we've got our first guest joining us on the show. Stephen Englander, Managing Director, Global Head of G10 Forex Research, as well as North American Macro Strategy at Standard Chartered Bank is with us. Stephen, great to have you join in. And it's an interesting morning, right? Because suddenly the whole world is feeling the chills, so to speak. And it's all about AI and, whether this kind of pulls back stronger or not. But first on US macros themselves, as we start getting more data, finally now that the shutdown is over, are you expecting to see a steeper deceleration in the US economy? And particularly on the labor market side, what are your expectations?
Well, we'll be getting the September numbers next week, and it's possible. It's possible they'll be softish. I think that the Fed will really wait to see what the November numbers are saying, because September is pretty dated. We have a couple of ADPs since, we've had claims. It's history now. But I think that there's still room for more labor market weakness. It's getting tight. We still think that they're going to cut 25 because we think that the numbers will support it. But we're also not expecting to see much from the Fed next year. We think that once they're done with the next cut, they'll be pretty much done as far as cutting goes.
All right. Hi, Stephen. Good to see you, Ben. Give us a couple of other cues then in terms of, the movement of the dollar index. It was giving signs that it's going to be falling apart and moving maybe closer to a 95.5 handle odd. That's actually stabilized. What's the outlook out there? Because that's important from a flows perspective, particularly from an emerging market like India. Your view on the dollar index?
Sure. I mean, there's lots of things going on with the dollar. Some, long-term themes playing out in the course of one trading day. I think that, when it was selling off in the morning, it was sort of the AI sell-off and the angst about the U.S. economy. When yields started backing up as Fed speakers were more hawkish, the dollar had a real hard time selling off further and actually recovered some ground in the New York afternoon when those comments came out. And I think we're going to have a battle here. Ultimately, we're optimistic on the U.S. economy. We think productivity is going to pick up. We think profits are going to stay robust. And we think that will attract enough capital to the U.S., but we don't think it's going to be a straight line. We think, as we've been seeing in the last couple of weeks, there'll be ups and downs, but ultimately we see a stronger dollar. And thinking of the euro going down to say 112, certainly below 115 in the course of the next year.
Okay. Stephen, from everything that you're hearing around you, this whole talk of diversifying a bit away from the AI trade, right? And we've seen evidence of that. And when such diversification starts, it usually comes with a fair amount of volatility. So do you think, where do you see that money rotating? Do you see that going to US treasuries? Do you see that flowing overseas? Or maybe US equities? Any sense?
Well, I think that's up in the air. I think there's a lot of nervousness about AI and valuations. I think what investors would like to see is that some of the performance shifts to other sectors outside of the tech sector, to the tech using sectors. And that would probably be very positive, both for the dollar and for US equities. But I think right now they want to see a couple of more quarters of good productivity growth, good profits growth, until they buy into it.
All right, Stephen, final question before we let you go. What about an India-US trade deal? We thought we were going to be getting a favorable outcome. A lot of other nations have, but we are still waiting in the wings. What's your take with regard to Trump's trade tariffs? And do you think India is going to get a good deal?
I think there's desire on both sides to come to a deal. There are economic reasons, there are geopolitical reasons for there not to be a trade conflict between the U.S. and India. But again, the last 100 yards seems to be taking a long time. But ultimately, I think there will be some resolution.
Okay. All right, Stephen, we'll leave it on that note. Thank you very much for joining in. And we look forward to more conversations in the future. Thanks for being with us. Well, on that note, let's welcome in Prashant, who's made his way to the studio. Prashant, we missed you for a little bit. But I think we got the broad sense from Stephen on exactly this, like the overnight sell-off that we've seen on Wall Street, this whole AI trade, and there is nervousness around it, and people are constantly looking to take some money off the table, and I guess we saw that overnight.
Stay close to the door and try and run if there's problems. But yeah, Bihar is the big story, right?
Yeah.
And I think, I think leads are already starting to come in. So counting across, I think, 46 odd polling stations has started. And that's the big one. And the counting began at 8 o'clock in the morning. Initial trends, and I think, by the way, we'll have initial trends by, I think, 8:45, 9.
I think, yeah.
Right? And I think we'll have, within the first 2 hours or so, you'll start to get some sort of a picture in that sense. Remember, overall outcome is usually expected by early to mid-afternoon. I think about 11, 11:30, 12:30, I think we'll get a real picture of the outcome. Of course, I think we've been discussing about US equities, etc. It's not a green-looking screen. It's quite a red-looking screen, actually. So it's technology, which has been the pain point. NASDAQ 2.25% lower. And it's largely a valuation concerns and, this entire AI thing, as I think Surabhi and Nigel have been talking about. NVIDIA was down 4%. Reports earnings next week. Tesla was down 7%. Disney was down 8%. Macro markets 10-year yield went up 5 basis points. The dollar index was down a little bit, not very much. And basically, since we closed absolutely unchanged yesterday by the end of it, I think levels don't change very much. 26,100 eventually, 20 days moved up. So support now 25,748. 40 days has actually unchanged after yesterday, 25,444. As I said, the levels are the same. Nifty Bank support 20-day, which is 57,918. That's very close. So maybe one more support level is the swing low in the month of November, which was 57,158 or so. So those are just some sort of, broad levels and numbers out there. But Bihar is the big story. So let's bring in Parikshit, who's now joining in with not the key trends, but I think at this point, 10 minutes into counting, 12 minutes into counting, just the lay of the land, the picture, and what are we really going to be watching out for? Parikshit, morning.
Well, it's a tough fight in Bihar, and most exit polls are giving the NDA an edge. Yes, early leads have started coming in. Those are paper ballots which are being counted. Last time around in 2020, we had seen the NDA securing 125 seats, the India Alliance 110. And in terms of the vote share, they were almost neck to neck. This time, the JDU this morning is saying that the results will be similar to 2010 Assembly elections when the NDA had swept the election with 206 seats, the JDU 115, the BJP 91. Tejasvi has put up a tough fight with the Mahagathbandhan. Let's see if he can be lucky this time around. However, all exit polls saying it is NDA in the lead. Let's look at the early numbers coming in. Well, we're getting some leads for about 30 seats out of 243. 122 is the magic number. NDA has gains in about 16 seats. India Alliance 14. So these are very, very early numbers. This is set to change over the next 2 hours or so. I'll be watching out very closely also for how the Jan Suraj party of Prashant Kishore performs in this election. Many of the well-known pollsters in the country have said that he could win anything between 0 seats to 5 seats. And if he does well, then he could be a spoiler in this election. Tejasvi Yadav had a party meeting last evening. He met members of the Mahagathbandhan. It seems that the opposition is getting ready to target the government and the Election Commission. For example, the Aam Aadmi Party this morning has said that 80 lakh votes were stolen in this election. There were RJD leaders which were saying this morning that in case the counting is slow, then they will take matters into their own hands. So we're looking at a lot of drama in the Bihar election over the next couple of hours. But more or less all exit polls are saying that NDA is likely to do better than its 2020 tally. Let's see if the Nitish Kumar and Modi magic will work once again in Bihar, or whether the Tejasvi Yadav-led alliance will be able to make a dent in the BJP and JDU's winning streak.
Okay, indeed. So very interesting. Next couple of hours coming up. Pariksha, thanks very much, and we'll keep coming back to you to discuss how these leads and these trends shape up. Thank you for now. Well, some of the early leads are on your screens. 26 to the NDA and RJD at 15 right now. That's only 42 out of the 243 where the early trends have started coming through. So our eye on the screen as far as the battle for Bihar goes. Well, in the meantime, let's tell you what else we're covering on the show today. It's a packed market lineup. We'll have the management of Granules join in at around 8:35, talk about the company's second quarter performance. At 9 a.m., of course, we keep it with Bihar, and by then we'll have some more definitive leads. So we have our panel of experts joining in. Ninad Sheth will be with us to decode the numbers. At 9:20, Manishi Ray Chaudhary joins in. He's our market master of the day, gets some perspective on how things are placed. At 9:30, we get chatting with the management of LG Electronics. It's been a weak quarter for LG. We'll get to the bottom of it. After that, Samvardhana Motherson, that stock rallied yesterday as soon as numbers came out. So we'll find out what's gone into the solid second quarter performance and then the second half outlook. At 9:50, we continue our Bihar coverage. We'll have senior journalist Sanjeev Srivastava as well as Aditi Fadnis of Business Standard joining in to talk about the landscape. And towards the end of the show at 10:15, we'll have the management of PG Electroplast joining in with a quick business outlook. Okay, and on that note, we'll take a very quick break. Coming back on the other side with a list of top stocks to watch this Friday morning.
CNBC.
Welcome back. Well, you got what, the numbers coming in from the Bihar elections. I mean, initial trends, etc., right? I mean, that's a big one on your screen. Initial look-ins coming in on 67 out of 243 odd seats. This is, I mean, very, very initial kind of leads which are coming in, and these are not results. Well, our research team is standing by with a list of top stocks to watch out for the day. It's a long list of earnings reactions. Guys, morning. Sudarshan, Hero MotoCorp first.
Good morning, Prashant. So it's the election day result of Bihar election, and it's the important market of Hero MotoCorp. And company has come out with its Q2 earnings, and earnings have looked very strong. Margin has come in at a multi-quarter high of 15% after several quarters. This number company has reported. Revenue too has seen a healthy growth of almost 16%, and that was led by a sharp increase in the volumes that company has seen on a both sequential as well as year-on-year, and it has outperformed the peers as far as volumes are concerned. And in the festive season also, company is saying since Onam, it has gained the market share of almost 40 basis points. And as far as the increase in the volumes is concerned, it has outperformed the industry. Its volumes have seen a growth of almost 15%. So for today, I'm going with green.
Okay, all right. Thanks a lot for that, Sid. Going with green on that one. But let's hop across to Upasana. Upasana, LG Electronics, lot of interest, blockbuster listing, numbers a little subdued.
Good morning. Certainly, numbers are subdued. It's been a weak quarter for the company, and the company's growth momentum has also slowed down. If you look at the revenue, it has seen a flat growth on Q2 and H1 FY26. Now, overall, if you look at the margins, the EBITDA margin is under pressure, down about 350 basis points at 8.9%. Mind you that the margin is under pressure for both the company's key segment. Now, coming to the company's key segment, that is home appliances and air solutions, which form 64% of the company's mix. It saw a muted performance, which dragged the overall performance of the company with a flat revenue and EBITDA margin downtick of nearly about 400 basis points. Company's second segment, that is home entertainment, which forms 36% of the mix. The revenue here just saw an uptick of 3%, and margins also under pressure, down about 180 basis points. Now, coming to the numbers on an overall basis, consolidated numbers, revenue stood at 6,174 crore with a uptick of 1%, EBITDA down 28%, EBITDA margin 8.9% with a downtick of 350 basis points, and PAT stood at 389 crore with a downtick of 27%. So overall, weak results.
Okay, and of course, we'll be speaking with the management as well to try and understand what was this. Was this some deferment of demand up to the festive season and the GST cards? Was there more to it? So conversation with LG coming up at around 9:30 today. But let's get back to Sudarshan. Sudarshan, Tata Motors CV business, how are the numbers?
So it's the first result after the demerger was announced and got effective on October 1st. Results are not that bad. Revenue has improved by almost 7% in line with the industry growth, when margin has improved by more than 150 basis points. It has come at 12.2% versus 10.7%. But two important metrics that we track in the auto sector, those two are realization and the market share. So here, realization has come down by 5%, and company continues to lose the market share. If you remember, Ashok Leyland had said that it had gained market share. So which company has lost the market share? That is Tata Motors commercial vehicle. Its domestic market share has fallen to 34.6% against 36% that company had in the last quarter. So just on the basis of fall in the market share and the drop in the realization, I'm going with minor red because earnings are not that bad.
All right, so thanks very much for that. Muthoot Finance is the next one we want to focus on, and Gaurav has got details. Gaurav, morning.
Well, yes, when we look at the numbers were great for Muthoot Finance. When we look at AUM growth, that increased almost by 47%, but the real magic is in the profit. Now, net interest income that increased almost by 58%, PPOP increased by 70%, and profit increased almost by 87% on a year-on-year basis. Now, there was a cushion of around 300 crores in this quarter as well, because NPAs reduced, and that is the reason why net interest income that increased. And at the same time, net interest margins, they also expanded almost by 50 basis points. But from here on, what is another key thing to highlight is that they have increased their AUM growth guidance from 15% earlier to 30 to 35%. So that's a sharp uptick. That means that management still sees this momentum to continue. And at the same time, the yields, now they expect yields to remain somewhere in the range of 18 to 18.5% versus what we have seen at around 20%, because this cushion that we saw in this quarter of around 300 crores, that is not something which will be recurring or something which will definitely come. So that is something that they had to say. But all in all, very great set of numbers from Muthoot Finance. And as a result, brokerages also gave a green sign in the trade today.
Okay, all right. Good to hear, Gaurav, and we'll speak to the management later. And Niharika is saying, don't just look at the gold finance companies. Where's the gold? All the best, Gaurav, as you get into the final leg. Next month, you and Niharika tie the knot. Our best wishes. So, all the best on that front.
Thank you so much.
Well, let's move across to Upasana. She's here to tell us about Bharat Dynamics. Upasana?
Well, overall, it was a good quarter for the company. The it beats estimates on the major parameters, but margins take a hit. Revenue more than doubled on a YoY basis to 1,147 crore versus the estimate of 27% growth. EBITDA expands 90% versus the estimate of 32% growth, but margins decline 179 basis points due to higher material cost and even finance cost. Now, when we look at the other expenses, they also see a jump of about 82%. But despite that, net profit is up 76%, which was aided mainly by the higher other income. Now, company has also signed a contract worth 2,000 crore with Ministry of Defence for supply of Invar anti-tank missiles for the Indian Army. So overall, we are seeing a good set of numbers from Bharat Dynamics.
All right, well, thank you very much, Upasana, for that. Apollo Tyres is the next one. So back to Sud with that. Sud, take it away.
So it was an inline to slight beat as far as Apollo Tyres are concerned, and the reason is commodity costs were benign. Both crude and rubber prices had fallen both on a sequential basis as well as year-on-year. So margin has improved to 14.9%, and the earnings overall were lifted by Asia Pacific region, where we have seen the margin improving to 10.9% against 7.6%, while Europe, which is not the biggest contributor, there we have seen margin dropping to 4.4% from 5.9%. So on the back of the improvement in the Asia region, we are going with green for Apollo Tyres.
Okay, all right, sir. Thanks for that. Go hop across to Mangalam. Vishal Mega Marts on your radar.
Good performance coming in from Vishal Mega Mart. You have an SSSG of 11.3%. At the same time, the revenues grew by about 22%. They added a fair number of stores as well. EBITDA, because of operating leverage, up 30.5%. And the net profit on that is up 46%. The company has added 25 net stores in the second quarter, and their own brands, which is the mainstay of Vishal Mega Marts when it comes to the numbers, etc., that accounts for nearly 3/4 of their sales. So 75% of the sales coming in from their own brands. That does well. See the stock in the green, but the only fly in the ointment could be there could be a supply event where the private equity may want to offload some stakes. So we'll keep an eye out on whether that block is on offer or not. But for these numbers, the stock likely to be in the green.
Okay, Vishal Mega Mart. So looks like a good quarter. Let's hop across to Vinny now. Vinny, GMR Airports, numbers looking good?
Yes, numbers looking very good because, this is the first time they've come PBT positive, profit before tax positive in more than 3 years. Now, looking at the numbers, revenue growth of around 47%. EBITDA margin also seen an expansion coming in, 41.7% versus 38.5%. So improvement there as well. And company has reported a profit of 35 crores this time. Now, obviously, Q2 overall, there was an improvement that came in aero revenues as well. And that was mainly led by the improvement that they saw 166% on a year-on-year basis due to the tariff hikes that one saw at the Delhi airport, and that is the main reason about the business and aero business doing quite well. Positive impact obviously of these Delhi authority tariff hikes, scaling up of non-aero units, and overall growing the adjacency side of the businesses at the airports is something that has done well for GMR Airports. Jeffries also has given the numbers in Q2 FY26 a thumbs up, so we're expecting green.
Thanks a lot for that, Vinny. Hopping across to Mangalam, not asking you for a pizza because you never give it Mangalam, but tell us how are Jubilant Foodworks numbers?
That's life, Nigel. You sip on green tea and speak about pizza. So good numbers coming in from Jubilant Foodworks. Why do I say that? On a consolidated basis, near 20% revenue growth, which is a far outperformance as compared to all the other peers that have reported numbers so far. And that's percolated to the EBITDA as well. EBITDA margins at 20.3%, holding steady. And the net profit has seen a 50% jump. Why is that? Because the finance cost came down from 138 crores to about 105 crores. stores. The important numbers for them would be the India numbers. That too has seen a growth of almost 15-16%. Like-for-like growth in Domino's is around 9.1%. So the fourth straight quarter of good performance coming in terms of like-for-like, and that's been led by delivery. Delivery is up around 16.5% in terms of like-for-like sales, and the company has taken heart from that. They've added 81 new Domino's stores, and for those who love chicken, Popeye's chicken also has actually done strong double-digit SSSG, so that's doing well for them.
Okay. Manglam.
All right. Manglam did get us pizzas once, remember? It was, but we can do with more.
I can't remember.
Okay, you can't remember.
It was the editors round table.
Yeah. You get the hint.
You can make that face, Nigel. In the evening, maybe, perhaps.
Oh, okay, guys.
Children's Day, Manglam, we look to celebrate. We are still all children and wishing everyone a very, very happy Children's Day. And we're going to celebrate here at CNBC TV 18 with Manglam treating us to a few pizzas.
When we were children, Nigel, parents didn't give us a lot of pizzas. So
Okay, guys, time out. Calling time out on this one. There's going to be a large block in Sagility. That's the expectation. And some of the promoter entities could be actually selling out. Nimesh is here with more on this. Nimesh, morning.
Hi, morning, sir. So yes, you're right. Going to expect a large block in Sagility today. The promoter entity is looking to sell up to 16.4% stake via block deal. I understand the demand is strong, so entire block, including the green shoe, which means the entire 16.4% will get sold. The indicative floor price is around 46.5, so a nearly 10% discount to yesterday's closing price. But there is a 6-month lockup now, so no further sell can come from Sagility. Remember, the promoters a couple of months back sold via OFS at 38, and now the next block is coming at 46, 47. So a big selling has happened. Now there will be a cool off for 6 months. But I understand there is a strong demand. So the stock will open in the red for sure because there is a discount. Need to see how the demand pans out and might recover as well. But to start with, expect a red take with 16.4% getting sold in Sagility today.
Okay, so Sagility definitely on our radar. Thank you for that, Nimesh. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them are Hero MotoCorp, Muthoot Finance, GMR Airports, Vishal Mega Marts, Bharat Dynamics, Jubilant Food and Apollo Tyres. The ones with negative news flow around them would be LG Electronics, Tata Motors CV and Sagility. Okay, we've got a bunch of other earnings as well. So Vinny is going to highlight some of the major ones we should watch out for. Vinny.
Hi, so let's start with NSDL. We're expecting green here. Good set of numbers that's coming from the company. 28% revenue growth, 100 basis point expansion in terms of margins, net profit up by 23%. That's a strong business growth that one has seen coming in, or revenue growth that is mainly led by the payments business, bank business growth. That's all 33% growth on a quarter-on-quarter basis. All these numbers that I spoke about right now are on a sequential basis. So good growth on a sequential basis. NSDL expected to be in the green. Tega Industries, that's another one that we'll keep an eye out on. Good numbers again that's coming from the company. A steady quarter, 15% growth in terms of revenue. Mainly this growth in revenue was led by the equipment side of the business for the company. So keep an eye out on that. Margins have seen a very strong expansion, 17% versus 9.7% last year. Net profits also more than 500% growth on a year-on-year basis. And management has reiterated their statement in terms of FY26 guidance for 15% overall revenue growth and the margins for each individual sector. They have reiterated the statement there. So no worry on that front. Now let's move on and talk about Voltas. We're expecting red on the screen for this one. Weak numbers that's come in, and obviously it's been a seasonally weak quarter for most of these companies on the consumer durable side. So revenue is down by 10%. Mainly, obviously, this decline is led by the UCP segment. That's the AC side of the segment. That's seen a decline of 23%, and that segment has reported a PBIT loss as well. So that's a big concern, and that's why the margins also overall clearly are under pressure, 3% versus 6.2%. Lastly, PG Electroplas, red expected here as well. Consolidated revenues, that's seen a decline of 2%. EBITDA margins 4.6% versus 8.4%. And obviously here also the RAC segment or the AC segment that we talk about, that's seen a major decline and sharp decline. And washing machine segment, that's managed to see some growth of 55%. But the main segment, that's the AC segment, that's seen a decline. So red here.
But more green than red, right, Vinny? And actually across what I'm hearing so far from our research team, across the board, strong beat, more of those as opposed to, misses.
Yeah.
And I think that's been the story across most results season. We'll have to sort of collate, of course, all the numbers as we wind down this one. Vinny, thanks very much for that. Manisha is here with a quick roundup of all the action from the commodity space. Manisha, good morning. What's on your list?
Thank you for that, Prashant. Well, almost everything in case of commodities seems to be rising up right now. Remember, it is a soft US dollar that has supported buying. And then the markets are also very uncertain on what the new US government data could be after some agencies were unable to collect data during the shutdown. So there's a lot of uncertainty on what numbers we may not entirely see. Having said that, gold is up 5% for this week. We've seen silver prices gain up by 9% on the week as well. And the crude oil prices, after falling 4% the previous day, are trading 2% on the higher side right now. That exactly is the case with base metals also, whether it is tin, copper, zinc, aluminum, everything is up anywhere between 1 to 2% right now. So across board, all commodities trading in the green.
Okay. All right, Manisha, thank you very much. So that's the commodity landscape for now. We'll take a quick break on that note. Coming up on the other side, we continue our conversation with the corporates, and the management of Granules is going to be discussing their Q2 numbers.
Welcome back and hope you're having a good morning. Well, Granules India, that's the first management on the show. The company actually reported a good set of numbers. The growth mainly was due to the formulations in North America as well as in Europe. We're now joined by Mr. Krishna Prasad Chugurupati, the chairman and managing director. Hi, sir. Good morning. Always good to see you in, sir. A couple of quick questions first. In the first quarter, I recall when we had a chat with the management, you all had indicated there were some constraints, capacity constraints. Has all of that been ironed out in quarter two? And from here on, things have returned back to normalcy? And also on margins. Are margins on an improvement trajectory? If you could give us a margin band. Please go ahead.
Good morning.
Morning.
Since we last spoke, Q2, the growth was driven mostly by the manufacturing in our US facility. The constraints in manufacturing in India still continue at our Gagillapur formulation facility. However, we had approval, the US FDA has approved our new facility at Genome Valley, the GLS facility, and that would take away most of the constraints in manufacturing. And I see Q3, at least the rest of Q3 and Q4, that the constraints in manufacturing will be over, and we should continue the growth trajectory.
Okay. All right. So for the first half of the year, you've done close to around 16-17% of revenue growth with margins at around 21% odd. Could you give us numbers? I think you were guiding for mid-teens earlier in terms of growth. So do you stick by that and margin band?
Yeah, I always stick to that. I think definitely we will have some growth, and definitely with the new capacity coming in at GLS, we are quite confident that we'll have a much better quarters going on.
Mid-teens growth, right? Revenue growth?
Yeah, I don't think I should exactly be guiding you, but yeah, I'm very confident and optimistic.
I think the street is working with 13 to 15%, so that's good, right?
That's okay. Let's look at that.
All right. You briefly mentioned the Gagillapur facility. Could you give us what is the status update on that front? Earlier, I think we were talking about things gradually start clearing out from December onwards. Where is it at, and how do you expect things to progress?
We did comply with all the requirements of what the FDA has asked us, and we have reported back to the FDA saying that we are ready. We asked for a meeting or a re-inspection, and they have given us a meeting in January of 26. A little disappointing, it's stretched, but there's nothing else we can do. We look forward to having that meeting, and then we have to see when they're going to, what their next steps will be. But however, we are not constrained by great manufacturing today because of the new facility. But once we get the warning letter lifted, we have some new approvals that are pending, and those approvals should again drive up the growth of the whole company.
So if this meeting is in January, sir, good morning. What is the, what do you do from that facility, and it's not holding you back, but once, say, for example, remediation happens there, what will it allow you to do?
The production is continuing today. We don't have any constraints on regular production, except for some of the things that the FDA wanted us to do, like cleaning. There was a constraint in capacity. So that would be gone, number one. And other thing is the new approvals, products that are pending, will drive a good amount of growth.
A lot of filings from that facility, sir?
Sorry?
There are lots of filings from that facility, which
there
perhaps...
are about 3 to 4 pending already, which have been filed, and everything is cleared. We're waiting for the lifting of the warning letter.
Okay. Could you give us a margin profile as well for the year ahead? If 27 is going to be a growth year, what will margins look like?
Margins will definitely be at the same level, if not improve. We are positive on margins, and with extra capacity and taking care of overheads, the margin should definitely improve.
Okay, all right. What about the debt number, sir? I think it's more or less constant, gone up a little bit.
It has gone up a little bit because of the Sun Chemicals acquisition. But as we go by, that should be slowly coming down.
All right. So by the end of this year, what should the debt look like? Or let's talk about FY27. If it has to come down, what level does it come down to?
Maybe it should be coming down by at least 10 to 15%.
And currently it's around 1,050 crores.
That's right.
So it comes down to ballpark close to around 900 to 950 crores by FY27 end, right? Not 26.
That's right. That's right. Because we also have a lot of capex going on. Otherwise, it would have been a much better number.
Got it. All right. And I've just looking at your numbers. I think your gross margin as well has expanded quite well. Operational efficiency and better product mix have worked in your favor. Well, appreciate you joining in, sir. Wishing you all the best for the quarter 3. And hopefully, I think in quarter 4, you'll see that Gagillapur unit that sees an all clear. Thanks a lot for joining in. Wishing you a good day ahead. Take a short break. Come back. We'll discuss a lot of stocks. Siddharth Khemka of Motilal Oswal is waiting for us.
Okay, those are more trends. 105, those are the leads for NDA, 58 for the RJD. So this is just the first. We're at 8:45 now, and this is the first, less than 1 hour of counting. So let's see. That's what we have, 105 for the NDA for the time being. Okay, let's welcome in Siddharth Khemka into the conversation this Friday morning. Siddharth, great to have you in. We'll talk Bihar and politics and all of that in a bit. But I want to first start with earnings. And the one number that really caught my eye yesterday was Bharat Dynamics. It was a dynamite of a performance, just the way, because with all these companies, these defense companies, the order book is never a problem. And Bharat Dynamics is right at the forefront of almost every single missile program in this country, right? It's always about the pace of execution, margins, etc. What do you think of this one?
Hi, good morning. Yes, I think such a lovely day to start the day. A lot of earnings last few days and superb execution by Bharat Dynamics. I think, as you rightly said, especially in the defense segment, the order book is not a concern. What is of concern is the supply chain, is the entire chain of the suppliers also working in tandem. So I think that easing of supply chain issues that resulted in sharp execution ramp up. So I think that has been a pretty good point for Bharat Dynamics. Some margins were affected because of the project mix change during the quarter, but again, good order inflows from Invar anti-tank missiles. Middle is also expected to benefit from the emergency procurement of the QRSRAM, which is the surface-to-air missiles. Plus the follow-on orders from HAL and all. So order book continues to do well. Execution now picking up, supply chain easing out. We believe that the growth will now pick up. So we are forecasting a revenue growth of 35%, margins easing off, leading to a 51% PAT CAGR over the next 2-3 years. Stock definitely trades at a PE of 40 times, but with a 50% earnings growth, we believe less than one peg, there is definitely a lot of room for upside given the current global geopolitical environment, a lot of demands, and especially Bharat Dynamics leadership and strong presence in the missile segment, which is a key for India's defense. So we have a very positive view on Bharat
Dynamics. I just want to add here for the benefit of our viewers, aside of the earnings, which are like rock solid, they've also announced another order win, and it's a big one, 2,000 crore rupee order for the Invar anti-tank missiles. So one stock perhaps to keep in mind, folks.
Well, I think lots of stuff, right? Lots and lots of earnings in that sense. And of course, how can we not have secondary market action, which is, listing of Pine Labs is also today. So that is something which we will track as we go on as well. Just if you will, Siddharth, come in on some of the other earnings which have been coming through. Muthoot Finance is something we can talk about, right? All-time highs. Stock's been consolidating last 3 months, but phenomenal numbers. And I was looking at the Morgan note this morning. They're using superlative terms to describe the numbers: rare, beat, XYZ. Perhaps one of the big ones. What do you make of it?
Definitely, Prashant. Good morning. I think stellar number that we have also used, stellar revenue growth, especially in the gold loans, and we have seen margin expansion that has also lifted earnings. So continues to report strong growth, definitely aided by the sharp bump up in the gold prices, and the management has raised the gold loan guidance from about 15% to now 30 to 35%. That's a huge bump up in the guidance and the growth. What we are forecasting, we are projecting a growth of almost 40%. So even higher than what the management is doing. So pretty strong growth, margins pretty strong, market leader. I think one space in NBFCs which continues to show consistent growth, and even I think the macros are helping. So sector tailwinds are in favor. Valuations, if you look at price to book, I think they will trade at a premium valuation. But I think with the growth, one can definitely justify. We have seen the kind of ROEs, 5 to 6% ROEs, almost ROEs of 26% next year. I think the price to book of about the 3 times, 4 times, I think is justified. One can also look at a PE ratio with this kind of high growth, the EPS growth of this year is of about 66%. PE is of just about 15, 16 times on a one-year forward basis. So I think definitely a lot of room for upside in Muthoot Finance, even at current levels.
Okay, so that get ready, strap up. I need to do an IPO rapid fire with you because it's like such a hot market, right? So very quickly, Lenskart, 400 is the price.
It's a long-term bet. I would still wait for a few quarters of delivery and then take a call.
Okay. What about Grow? It's growing towards that that milestone of 1 lakh crore rupees in market capitalization. Has had a phenomenal last couple of days.
So we were the investment bankers for the IPO. We are very positive on the entire capital market theme. So in a way, positive on the space sector.
Okay. And Pine Labs. Again, the question is going to be about pricing. They've just turned profit-making. Pine Labs, okay, we've got the numbers as well. So the good thing is that at least in the first quarter, this company is now profit-making. It has great pedigree. It's got the who's who of the private equity world backing it. But yeah, I mean, the business model, margin, sustainability, and the price at which this is coming.
So positive view on Pine Labs, we believe the fintech space is doing well. They have created their niche. They have a global presence as well. And pretty good, decent business model financials. I think valuations are comfortable if one can hold for the next few years. This is a space which will do very well.
Sticking with that recent listings, new IPOs, etc., LG Electronics reported numbers. A lot of people were, and they left value on the table in that sense. What do you make of it at these levels? Not done very well since listing, though.
So yeah, Prashant, I think if you look at the entire consumer durables, especially the IT sector, that's not done that well post-monsoon. Things were expected to be better. Even the GST rate cut was supposed to help them. But across the space, be it Voltas, LG Electronics, Amber, we are not seeing the kind of numbers. And big disappointment, especially in the form of the margins, that has contracted operating margins by 350 basis points. That is a big disappointment. But I think what works in favor of LG is the market share gains that they are doing across segments. Revenue has been in line, but again, that margins and EBITDA decline of about 28% YoY, that is a bit disappointment. I think post-listing now, the stock will consolidate. The discount to the other peers, which you were talking about, that was left on the table at the time of IPO, that has narrowed down. And for here, the stock to move on further, I think the growth in the sector needs to come back now.
This is the NDA. The numbers are on your screen, right? NDA leads hit halfway mark of 122. So that's what's coming through at this point in time. So I want to make a quick mention of it. Our network has got the fastest leads coming through. People at the booths, the counting centers, and this is directly information from the ground. But these are still leads, remember, and not slowly, actually, pretty fast from here on. We'll have firm results coming in, along with leads, and more of those leads converting into firm results. But this is the headline. NDA leads hit halfway mark of 122. Let's just quickly look at the GIFT Nifty. I think it was down about 100 plus points. And we should be able to quickly tell you if that is starting to move as well. We're about 3 minutes away from the pre-open. I think losses have been, cut in half, Surabhi? We were down 120, 130. Yeah. We're down about 70 points. Markets will take note as we get a firmer handle on things, which should be pretty soon. But leads cross the halfway mark in Bihar for NDA.
Absolutely. And, again, given the global backdrop and the sell-off we're seeing in global equities, this is not bad at all because we started first with a 100-point dip. Now it's been reduced. I just want to make one more point. If we can maybe get the breakup as well. The breakup is very interesting. Within the NDA, now those leads are at 124. Now, going by the leads, the BJP is down 9 from 2020. And the JDU is getting a resounding sort of, thump up, so to speak. 18 more than last time. At least that's what the early leads seem to be indicating. So if this is how it really plays out, then obviously, it's a no-brainer Mr. Nitish Kumar is definitely not looking at any anti-incumbency. But again, these are leads. It's very early. It's just about 9 o'clock. So we need to sort of tread with a bit of caution over here. Let's take a break on that note. In fact, we'll stay full throttle with the Bihar elections and what this means, what it means for the market, what it means for, policy making, if it's going to be just limited to Bihar, if there's any impact on the center. That discussion coming up right after the break. And then, of course, we have our technical experts joining in with the trading calls for the day.
Okay, well, as we've been telling you, it's not just the three of us. How many of us are on screen right now? 3, 4, 5, 6, 7. Huh?
It's a political theatre.
Well, I think the tally is showing the leads for the NDA at 130, 122. Remember, is the halfway mark, and leads are showing 130 for the NDA. So, if these leads hold, and that's the big question, right? Then you're through. But I think people will be careful, and we've seen this before. The famous example, of course, is 2015 when one news network called it early in the first 1.5 hours. And by the time the results were announced, it was completely the other way. It went the other way.
Yeah.
So I think people, and it's obviously these are just,
And closer home, we're talking the 2024 verdict. Remember what a topsy-turvy roller coaster it was. You thought it was done at 8:30, and then you realize it's not, and then by the time
The general election.
the general election result,
all the way till 2000, all the way till what 3 o'clock, 3:30 markets were closing, and I remember, I mean, this was right there. Okay, more coming up, but I think those leads will continue to update, and I think we will have the actual conversion to results coming through as well. More and more. But Mitesh Thakkar is with us and Shrikant Chauhan is with us as well with what they want you to do in terms of trades and how to do this. Any way to trade this, gentlemen? Morning. Or you'd wait for this, for those tallies, for that Bihar tally to actually turn into results and then take a call. Mitesh, what's the sense?
I think, Prashant, obviously any kind of news flow will have some impact on the market. So in that sense, I think, you can argue that caution may not be a bad idea. But overall, I think this is a market, which is upward trending for sure. And therefore, my belief is that it might be more useful to, use the opening gap down in case what the GIFT Nifty was indicating. Because with that gap down, we might open around 25,800 or 25,750 zone, which is where the first short-term support lies. And in case the trend as the numbers are showing on the screen continues positive, I think then I'll bet on a market recovery as well. That's the view just for the day.
Okay. Shrikant, morning. Your view for the Nifty?
Good morning, Survi. Good morning, Prashant and Nigel. So yes, what Mitesh is saying is absolutely right. I am also of the same view that 25,750, 25,700 is going to act as major support for the market. And today, in case, because of any reason, if we see the market is closing below 25,700, then the chances of hitting 25,500 would turn bright. But if we see the overall entire pattern of the market, since the market has started its run-up, I am of the view that the market is heading for the levels of 26,500. So today, in fact, it is opening lower. It will be an opportunity for traders to look for adding long positions with a stop loss at 25,700.
Okay, gentlemen, let's quickly get to the stock lists as well. Shrikant, what about you? What are the stocks on the radar?
So for the day specifically, I would like to go with the IT companies because there we saw some pause sort of activity in last 2 days. We saw some profit taking at higher levels, but while looking at their entire pattern of last, let's say, 2 weeks, I'm very much confident that this space is going to do well in the near term. Infosys looks attractive at current levels around 1540-45 with a target of 1600. We can keep a stop loss around 1500 for the same. And the other stock on which we are bullish is from the real estate basket, and that is Prestige. Currently, it is around 1725, 1730. There we have a target of 1830. And for the trading purpose, we can keep a stop loss around 1690 for the same.
Okay, all right. Thanks for that, Shrikant. Mitesh, come across to you. What's your pick for the day?
I have a mix of buys and sell, Nigel. I have a buy on KPI Technologies with a stop at 1212, but try to buy it around 5-6 points lower, so say around 1230. And a target of 1265 to about 1270. Also a buy on HDFC Life, again, mild pullbacks around 777, 778. Buy with a stop below 765 for a target of 800. And 2 sell calls. Hutco is a sell or negative short-term call with a stop at 230 or just above it. And target of 215 can be looked at. And Eternal has been declining, made a fresh swing low. So that could signal some continuation. So keep a stop at 302, look for targets of 290.
Okay, all right. Gentlemen, thanks very much, both of you. We'll speak again, Mitesh and Shrikant, for those trading ideas. Well, let's go across to the Bihar Assembly election counting, which is underway. Parikshit is with us with the key trends that he's picking up on the magic wall. Parikshit, over to you.
Well, the NDA had won the Bihar election in 2020 with 125 seats, and they are already ahead of that number as per early trends. Yes, NDA seems to be in the driver's seat with 129 seats where they are leading. India Alliance at just about 68. The Jan Suraj Party of Prashant Kishore at 3. Remember, pollsters were saying anything between 0 to 5 for Prashant Kishore, and they're managing early leads in about 3 seats. So for the NDA, currently there are gains in about 24 seats compared to last time, and the India Alliance losing in about 21 seats where they had gains and victories last time around. Now, let's just show you the difference in performance over here. If you look at the NDA, let me break down the numbers of the NDA. Here you see the BJP and JDU both performing well
in this election. The BJP has early leads in about 58 seats, the JDU at 55, LJP of Chirag Paswan at 8, RLM of Upendra Kushwaha at 5, the Hums Party at 3. So all the alliance partners pulling their weight, doing well in this election. But clearly, the BJP, JDU combined is what pulling the NDA through, and the BJP at 58, the JDU at 55. And if this kind of a performance continues, it will only solidify the position of Nitish Kumar as Chief Minister. Earlier, initially, when the campaign for Bihar had begun, the BJP did not project a chief ministerial candidate for the NDA, but then Amit Shah cleared the air and said there is no vacancy for the chief minister's position in Bihar. So both the BJP and JDU performing well. Now let's look at the performance of the India Alliance, and you'll understand what's really going wrong. India Alliance at 68, and here all the heavy lifting is being done by the RJD, by Tejasvi Yadav's party. So they're winning in about 45 seats, but this is 30 lower than last time around. The Congress at 12, other parties at 7-2-1-1-0. So clearly, are the other opposition partners, including the Congress, bringing down the India Alliance? That is a question that remains to be answered. But if you look at the NDA numbers, they're doing well all across the state among the women voters, in the rural vote bank, the urban vote bank as well. Also retaining their traditional strongholds as well. The NDA right now at 130. Will they do better than the 2020 election? That remains to be seen. However, JDU's prediction this morning is that their victory would be somewhere close to the 210 results, where the NDA had won 206 seats. So these are the early trends. Lots could change, but clearly for the moment, it seems NDA is in the pole position.
Oh, absolutely. For the timing, it's advantage. NDA, Parishad, thank you very much for that. Let's discuss some of these early trends with Ninad Sheth, senior journalist and political analyst, who's with us now. Ninad, thank you so much for being with us. And, I want to start by asking you about what these trends, and it's 9 o'clock right now, what they really signify for Mr. Nitish Kumar. Because, look at, if we are to go by the trends, he seems to be building on, a lot of gains from the 2020 numbers as well. And if this is the way the final results turn out, then it seems that that high voter turnout in Bihar was, a lot of it perhaps was, a resounding approval of the way he's been running things. Your thoughts on what these trends right now indicate for Mr. Kumar?
I think it's a remarkable victory. We should bear in mind that the electoral rate in the last 2 or 3 election cycles has been an electoral rate of expectations. As India grows, there are expectations which are growing with India's economic growth. So in that context, I think it's remarkable that in one of the poorest parts of India, the promise of governance, the green shoots of industrialization, although they have been very, very small, have indeed come through quite well. It's also in many ways a vindication that despite leaks, the prohibition, of alcohol has worked politically in favor of the ruling alliance. For Nitish Kumar in particular, well, he has, proved once again that he's got a fight in him. There were a lot of speculations about his health, but he has nurtured, we should bear in mind, and this we saw in Andhra Pradesh also, that the women constituency in Indian politics is the new big thing. That if you have a direct connection with the women, it is working out, in the election results. So, overall, I would say personally that 3 things have happened. One, green shoots of industrialization, which was not at all discussed during the political discourse of the elections, have somehow worked. There has been, from this kind of result, it appears to me the first beginning of secularization of the Yadav vote. That some of the Yadav vote has voted perhaps both as for governance and for Hindu, as a Hindu sort of a vote. And finally, I would say that there is the Narendra Modi connection. There, we don't give it emphasis, but there is the Narendra Modi connection, which does.
No, absolutely. Absolutely, Ninad. And that was actually my follow-up question to you. And there'll be a lot of analysis. And if this indeed is the final tally, then a lot of analysis will go into what got the NDA these numbers. But that's exactly my question. That let's also remember that as early as just the budget, the February budget, a lot of schemes were announced for Bihar, the Makhana board, the IITs, the new greenfield airports for the state, right? So Bihar has been getting a lot of attention from the central government because it was an election-bound state this year. Now, with Mr. Nitish Kumar coming back with this kind of a majority, if that's the final result, will it have a bearing on central politics, just the allocation of resources? I mean, does anything change at the center is my question.
I think things do change. Nitish Kumar has more leverage now to ask for more concessions. Nitish Kumar probably, he is known for building roads. That's how it all began. So it is not as if it's new. It's a little bit of history repeating, really. I think that we will see more allocation towards industrialization, something completely missing so far in Bihar. Perhaps allocation towards food processing, because Bihar, bear in mind, is in animal husbandry, in fisheries, and so forth. So some agricultural relief. So this is a mandate to take the people's hopes forward economically. Many times we think of Bihar as a political mandate, but I think that just 10% people in formal employment. This is also a mandate for economic reforms. So I think there is a long runway now for Bihar to do what it should have done 20 years ago, get its economic game together, just as Odisha, as I've been following on this channel and elsewhere, is already doing.
Yeah. Narinder, thanks very much for joining us, and I hope you will join us as we continue to track this, because this is rolling programming as we are getting the results in. But really good setup from you. Appreciate you joining us. We are hitting market open, and that's the reason why we are saying goodbye for now. Let's just look at maybe a bunch of stocks which have ended and where they've ended at the end of the pre-open session. Because look at Muthoot, maybe if you can pull the stock up. That is the big results reaction of the day. And I think 5-6% higher on Muthoot, 7.5% higher. Just look at that go. Hero MotoCorp, we should just quickly pull up as well. We should look at LG Electronics. Hero's flattish. LG next. We should have GMR Airports, which will come up. Vishal Megamart will come up. LG is down 5%, and Vishal, etc., will come up as well. We've got the opening bell coming up. What do we have? First rates, 25,778, about a 0.4% lower. The Nifty Bank is down about 0.5, 58,178. Sensex and the small and mid-cap indices will come up on your screens as well. So this is the overall picture. So 1/3% down, 25,792 is the opening rates. Nifty 50 heat map will give you a quick sense of where things are landing, and then we will pick it up from there. Adani on one end, Tata Motors passenger vehicle business there as well, but bulk of it is all in the red. ONGC, Tata Steel, Eicher, etc. on the other end of the spectrum. But almost 40 stocks lower and about 10 stocks which are higher. But I suspect this will change, and you will see a bit of a swing up and down. From where we are starting. Surbi.
Well, my screen is stuck, I think, on Bihar. So, Nigel, please fill us in.
Well, plenty of stocks moving around from the broader markets. It's the final day of earnings. Wowee. But let's address the stocks first. You have Muthoot Finance. On expected lines, they've gone ahead and increased their guidance, but the street loves it. They were waiting for this announcement. The management promised it's going to happen. And that stock is bursting away. It's up more than 7% as we speak. Grow continues to move higher. That's up close to around 6%. What a fantastic listing this one has had. It continues to move from strength to strength. Here, Jubilant Food. I don't know where the Pizza Huts are coming out, yeah? But that stock, in fact, opens up with a gain of close to around 5%. So clearly, the street likes those numbers. Bharat Dynamics moving, like a missile. That's up close to around 5%. So good move is what we're seeing out there. And KRBL as well, up close to around 4.5%. GMR Airports, I recall Vinny saying that those numbers are quite good. And Vishal Megamarts as well, that number was quite good. So the street likes it. All those reacting favorably to the numbers. Now on the flip side, LG Electronics. Had a good amount of subscription, priced the issue very, very well. The stock ran away. The numbers are a little bit disappointing. Well, I'll tell you what, we'll get some clarifications from the management in just a wee bit from now. So that's going to be a stock on the radar. We also have Tilaknagar Industries. Well, the growth was there, but maybe not as much as anticipated. Some of those price hikes, I think, may be due in the next quarter. But for the time being, the street doesn't like it. They're slamming the stock down close to around 7% as we speak. PG Electroplus, another management will get in the next 30-40 minutes or so. So that one as well is down close to around 3%. And Nalco coming in for some profit taking. So a lot of action on the in the broader markets. The mid-cap index, to be fair, is more or less flattish. PG Electroplus, actually, the stock, I think, gapped down close to around 6%. Now it's given up all of those losses on the verge of moving to the green. Street is willing to look ahead.
And absolutely. And, this is some of the stuff which is coming through, right? Muthoot, maybe I just want to just go back to it, right? That's the big winner, a continued winner. That's a breakout. I mean, it's, as I was saying earlier, I think for the last about 4 months or so, it's been flat, ranged, but that's almost a 4,000 rupee stock now, Muthoot Finance. Look at the volumes, almost getting to that million share mark coming through. Manishi Chaudhary is with us, Chief Executive Officer at Emor Capital Partners. Manishi, good to have you with us here. Thanks for joining us. I want to start with this one. Muthoot, if you have any views, gold loans, what a takeoff it's been for Muthoot. 2024, it used to be 1,500 rupees, Manishi.
Well, I wouldn't have an opinion on a single stock, of course. But yes, in general, if you do have a situation where gold prices continue to move up despite the recent fluctuations, then obviously the volume of gold loans and the kind of interests that can be charged, they would also stay healthy. So, it's ultimately, it's all a call on how gold would perform over the longer term. And on that question, I am actually convinced that despite the recent fluctuations, the recent wobbles that we have had, I think in the medium term, gold prices would stay healthy. Central banks continue to buy. It remains a relatively safe haven destination during times of geopolitical tensions. And all these reasons are not going away in a hurry.
That's as far as gold finances are concerned. Manishi, hi, good morning. So we were, just before you joined us, we were looking at the numbers out of Bihar, and right now they seem to be going definitely in favor of the NDA, right? I'm not sure if it really changes the needle at all for the market, barring that there was a little bit of nervousness. So we had some profit taking yesterday, and maybe it gets the bulls get a bit of a fillip up if this is indeed the final result. But do you see any other bearing with respect to this result, either in policy making or just market sentiment? And market anyway is more focused right now on the trade deal and on earnings, I guess.
Right. So it's, it's clearly an underscore as far as policy stability is concerned. It gives the ruling party at the center, the BJP and the NDA, some more wiggle room at this point of time. Remember that there were some important decisions that were actually not being made, or at least anecdotally, that's what we hear, before the Bihar elections, in terms of engaging with the United States and, the kind of discussions that need to be had as far as agriculture and dairy are concerned. These are very sensitive political issues. And I think, both sides, India and the United States, India in particular, were not able to arrive at those decisions pending the Bihar election. So obviously, it opens up avenues for, some of those important decisions to be finalized now. We must also remember that now we have an ambassador, an American ambassador in India, who has a direct line to President Trump. I mean, he's not only been the personal advisor over there, he has also been, very close to not just to President Trump, but to his entire family. So I think it's an important signal that the U.S. wants to re-engage. That engagement had fallen off, in the middle, but it's clearly on kind of getting mended, or at least that's the signal we are receiving.
All right. Hi, Manishi. We hope that Mr. Trump is on board as well, because thoughts can change on a dime, but nothing wrong in hoping, and hopefully we hear something sooner rather than later. That said, let's talk about various themes. I recall that, we have chatted about the quick commerce space in the past and, just getting quite competitive in China. At some point of time, we had mentioned that the growth rates could moderate as well. Some of these stocks have actually declined considerably from the recent peak, whether it's fear or with regard to profitability, or whether it's fear with regard to a bigger competition coming in there. What's your view on this space, and would you be positive on it?
See, in the longer term, I think these quick commerce, think of Blinkit is a part of the matter. So they have a lot of penetration yet to execute. As of now, I think they are active in the top tier, the tier 1 and tier 2 cities, but the runway for them is still quite long. So in a sense, India, as far as food delivery, grocery delivery, and other services are concerned, India is possibly about 8 to 10 years behind China, because in case of China, the likes of Meituan, and a few others, the LME by Alibaba, they actually came up, in the mid 2010s. So, and importantly, these companies have constantly reinvented themselves. They have added new services. They have possibly addressed new customer requirements at regular points in time. So that's, I think, something that the Indian companies would also have to think of. So yes, I mean, I think, well, logically, they do have a long runway. There's a lot of growth still left on the table. Valuations, no doubt, are a concern. The Chinese companies are way cheaper than the Indian ones. But then you have a lot of growth on the table for the Indian ones.
So you'll be a little bit positive on that?
I would think so. I mean, selectively, one can be positive on this space. We don't really have any exposure to that space in their regional model portfolio. I run an Asia ex-Japan model portfolio. But, it's a sector that's clearly worth looking at closely.
Okay, so tell us about what you have in your portfolio then. From the Indian markets, what are you quite bullish on? We've gone through a decent amount of a time correction, not a big price correction, but various pockets will still look up. So tell us.
Right. I'll name 3 or 4. Number one, we have financials, the private banks. It's something that I've been harping on for quite some time. And it's only over the last 1 or 2 months that the large frontline private sector banks have started moving up. Encouragingly, we have seen that old concern of retail loans going sour. That has been sort of underplayed by the leading private sector banks in the most recent conference call chatter. So that's clearly the first, the top sector exposure that we have. Second, we also have the consumer discretionaries. We have a significant chunk in the auto OEMs, private, personal vehicles, and, even tractors and other SUVs, obvious names that you can think of. I would also say that some of the more recent exposures, like jewelry, organized sector jewelry in India, it is partly a play on gold prices, but that's another sector we do have over there. Third, industrials. Not only the large conglomerates, but also some of the defense names. And I was very careful of this sector, cautious of this sector, even about 1 or 2 months ago. But recently we have added after this sector underperformed and the earnings growth forecast stayed healthy. Finally, some of the conglomerates that are not only exposed to, say, retailing or telecom or petroleum, so which are kind of a broad spectrum play on India. Right. So these are the kind of sectors and stocks we have. Conspicuous by their absence of IT services, I still remain quite negative on that sector. So in a nutshell, that's it.
Okay. That gives us some perspective on how you are sort of looking at the sectors over here in India. Quite helpful, Manishi. Thank you very much for joining in, and we look forward to another call soon. Well, with that, just a quick glance at the screen before we move on. Still down about 77 points. Mid-caps are doing much, much better today. Wherever there are positive earnings surprises, those stocks are getting fully rewarded. Case in point would be something like definitely a Bharat Dynamics, but Muthoot has been the headline of the morning, 9% up. By the way, look at Jubilant Food. The pizza is definitely piping hot. Cheese burst or whatever you want to call it. 8% up on Jubilant Food Works as well. And Bharat Dynamics. So that's a trio, your top 3 earnings, positive reactions today. Well, one stock that's facing the heat because of not such a hot quarter is actually LG Electronics. We saw flat revenue growth from the company, and there was a lot of EBITDA margin compression as well. Actually, at the EBITDA level as well as the gross level, there was a margin pressure that showed up. So let's get in Sanjay Chitkara, Chief Sales Officer, and Atul Khanna, Chief Accounting Officer at LG Electronics, to better understand the business dynamics. Gentlemen, thanks so much for joining in. Mr. Chitkara, maybe, either one, maybe you can open and tell us what really happened, because we've seen pressure across the board. So at the top line level, both on the entertainment side of your business and the home appliances side, things are flat to slightly, very, very slight growth coming in. And then the margin pressure. I mean, 350 basis points EBITDA pressure. So just walk us through why it was such a challenging quarter.
So actually, our short-term numbers are just a reflection of timing shift, and there is no as such business weakness. As we all know, our industry faced a cool summer this year, geopolitical tension, tariff escalations, and on top of it, uh, there was a timing gap of GST implementation. The GST was announced on 15th of August, but implemented on 22nd of September. So there was a deferment of purchase by customers and partners. And once the transition was over, the partners and customers started buying. So it was just a timing gap. As such, there was no business issue. And if you see within 1.5 months, we covered the entire quarter turnover and grew also. So if we improved also our market share during this period. Our refrigerator, TV, air conditioners, market share have been improved. Our brand strength is at its peak.
You're talking just to yeah, just to get the period right. So you're saying that post the GST rollout, what you're saying, this improvement in market share, etc. Are you talking about October?
No, I'm talking about YTD September. Since the business conditions were tough, that was the best way that we improve our market share. So there was an improvement of our market share. In TV, we improved 1.4%. Refrigerator improvement is 1%, and air conditioner we improved by 0.5%
Which
of
is,
our market share.
which is great.
Up till September.
No, which is great, but what we're trying to understand is that this lack of growth on the top line, was it only a Q2 phenomena because of maybe a lot of rain and unseasonal monsoon or extended monsoon, and obviously there was a GST transition happening, or is it still extending? What is your projection on growth in Q3 and Q4?
We have already surpassed the toughest phase of GST transition. And now the inventories of our partners is also normalized. And our brand health is very good. As I mentioned, we improved our market share. And after GST cut, the affordability of our product and sentiments of consumers are very high. And next year, the calendar year, the new B-star rating guideline will come. And the additional cost of new energy efficient products has been already absorbed by GST cut. So this additional cost will not go to customers. So things are very positive and we are very optimistic. Things will fall in place.
All right, got it. All right. Hi, Sanjay and Atul, and good to have you on the show. And I like what you said. You're optimistic about the future. So that's pretty good news. Now, a lot of your investors out there would like to get a broad guidance on the way ahead. At the half-year mark, well, revenues are more or less flattish. Margins are holding ballpark close to around 10% or thereabouts. But as you said, difficult phase over. Way ahead is good. So for the year, what kind of growth should the investors pencil in, given that inventory levels as well in the system have cooled off? The last quarter was marred by product mix as well on the margin front. For the year, what kind of revenue growth should we look at? And should you get back to that 12-13% margin at least?
If you see our CAGR growth, it was roughly around 13.1% from financial year 2022 onwards. And we have been registering a double-digit EBITDA. During this quarter, we invested ahead of festivals in our channel promotion and GTM costs. So we have now rationalized our promotion intensity. We have also taken a price increase in refrigerator and washing machine in the tune of 1.5 to 2%. And the ongoing localization efforts are still going on. So we are very positive that very soon we will achieve to our sustainable levels.
So sustainable is never. So you have grown in double digits for the in the past. So you're saying you'll continue that trajectory, right?
Yeah, so we have still half of this financial year ahead. And being a sales leader, we will definitely like to catch our previous performance. And we have never pushed the short-term margin tactics or growth tactics. Our strategy has been always a long term because the market share drives your revenue and revenue drives your profits. And as I mentioned, recently
Yeah.
we improved our market share, so we expanded that advantage.
Sanjay and Atul, thanks very much for joining us. Prashant here. And I was just joking here with Surabhi and Nigel that I have a refrigerator, 15-year-old LG. And still working fine. It's good brand advertisement for you, but I think
because you're not buying another one now. That's the thing, Prashant.
Customer like you are, we are short.
No, but I'll tell you what. When you have all these people who come in now, service and this, say, "Pehle wala nahi banta ab." LG ke bare mein nahi, but generally across white good products, So that's generally a broad feature which I think a lot of, this is anecdotal more than anything else. I want to talk about ACs in that sense. Atul, if you want to come in, we were hearing from many other players as well that AC inventory is very, very large in the system, and that will take some time to run down. Unseasonal rains, etc., have not helped. Where are we at on ACs, Atul?
For AC inventory, yes, you are right that during the cool summer of Q1, which carries some a high inventory of air conditioners in Q2 as well, whereas the GST rate transition has given an impact post 22nd September, where the inventory level of air conditioners of our channel is also getting normalized. And one more important thing is that the new BE ratings are coming in effective January 26, where the manufacturer has to produce all their old stocks, and whereas the trade partners are allowed to sell those stocks in the market. So there would be a good combination of new BE rating stocks as well as the old rating stocks, which will give a boost to the air conditioner business, as the penetration level is currently around 12 to 13%, which is, as per the industry report, in a coming period, in next 3-4 years, it goes up to 19-20%. So there is a good room, and the government has also given a good booster to the especially air conditioners, which earlier was being treated as a luxury product. Now they are coming into a normal product category. They have reduced the GST rate to 18%, making it more affordable for the consumers. So this is a good sign as an economy as well as for the industry. So our inventory level is also normalizing, and we are hopeful that we will get more better sell-out positions in the market.
Okay. All right, gentlemen, we'll leave it on that note. Thank you very much for joining in, and I look forward to talking to you again through the year. And let's see, hopefully the second half ends up being better and stronger. Okay, that's 152 for the NDA, going by the leads as of now, and 77 for the RJD and the Mahagathbandhan. Well, yeah, so that's the tally as it stands right now with those leads coming in. The market, by the way, has recovered very, very nicely. Look at this. We started with, Nifty was earlier indicating 100-point cut. Then we opened. It was still about a 70-point downward drift. But now Nifty is barely in the red. Let's pull up the intraday. It's very early to pull up the intraday, but still, it'll give us an indication. And the mid-cap index is up 0.5%. Okay, quick break right now. We will be back, and on the other side, we'll be in conversation with the management of Samvardhana Motherson to talk about their business performance.
Okay, the big winner, of course, today is Muthoot Finance, which has reported a very, very strong set of numbers. And I think there are some upgrades afoot by brokerages. Gaurav is here with details. Gaurav, morning.
Well, yes, when we look at Muthoot Finance, it actually resembles how MS Dhoni actually ends his innings, and that is how Muthoot Finance has also ended this earnings season for second quarter. When we look at AUM growth, around 46% growth on a year-on-year basis, and the key thing to remember is that they have now increased the AUM growth guidance from 15% to 30 to 35%. Apart from that, if you look at net interest income, that increased almost by 50%. There was a one-off impact of 300 crores, but this is because of the reduction in NPAs, and that is the reason why, if you look at profit, that increased more than 80% on a year-on-year basis. Now, when you look at the net interest margins, there also we saw some kind of increase, and from here on, management is very strong and very optimistic about the growth going ahead, not in just gold business, but in the other segments as well. On the back of that, when we look at brokerages, now CLSA, they increased the target price to 4,000 rupees. They say that they are expecting around 25% AUM growth for the next 2 years. And apart from that, Jefferies, they also maintain their target price of 4,000 rupees because they say that net interest margin should expand and credit costs should decline. So definitely a green signal from brokerages as well. And this is the clear sign that we are seeing in the stock price as well. As we speak, it is up more than 5% in trade.
MS Dhoni and all, huh? Gaurav, you're getting onto the pitch as well, brother. Hope you're in fine form.
Many ways to interpret that. I think,
next phase of life for Gaurav, he's getting married next month, just to clarify.
Just in case you missed it. That's the main story. By the way, when you said the winner of the day is, I thought you were referring to Mr. Nitish Kumar. But no, Muthoot also. Let's not forget.
I think you've got numbers on the board for both, right, at this point in time. But I think the Nitish Kumar story will play out in the next couple of hours. Should be clearer, much clearer. But the leads are there. 151, they've crossed 122, 123 to win. And the leads are showing that they've passed the halfway mark comfortably now. Samvat and Motherson delivered a steady set of second quarter earnings. Margins were in line with the CNBC TV18 poll. We're going to discuss this with the CFO, Kunal Malani. Kunal, great to have you with us here. Good morning. Thanks for joining us. I just want to start by asking you that the overall global auto OEM picture remains pretty muted, right? I mean, you can look at the guidance which companies like Volvo, etc., has given for 2026. They're actually forecasting a decline. So as you look into calendar 2026, what are your thoughts? What is the discussion with customers regarding tariffs? Have you managed to pass on the entire tariff costs? Let's just start there.
Hi, good morning. I think we do anticipate that a lot of the powertrain challenges or powertrain mix challenges that were there, the customers have taken corrective steps around those. And as some of the new launches happen, you should be able to see a better traction come back in the market. We do expect, for example, the H2 to look much better than H1, and then momentum should continue. Europe was a little bit of a miss for the last few quarters. I think that seems to have bottomed out. And again, we anticipate some amount of growth to come back in that set or that part of the world as well. So if you look at the overall volume expectations at the beginning of this year was around about somewhere between 88 to 89 million. That's already moved to the 90 million mark, and to be seen how it moves as we move ahead to FY27 as well. On the tariff front, I think the industry in general has been able to figure out ways to work with the revised, world dynamics, however to put it. And that's what we have taken in our stride as well. We have worked hard to be able to find mitigating elements together with trying and working with the customer to pass through some of these costs. Some of it has been done. We are still carrying around about 10 million of additional costs in our P&L right now, which should also be passed on as we move through the rest of the year. So overall, I think much of the not so good parts of the industry seems to be behind us. When we look ahead, at least things seem clearer. Things seem that if not, significant growth, it's still muted with a fair amount of content growth coming in, which should all aid in our growth. And on top of it, please do bear in mind, we're not only automotive. We've transformed ourselves to be a DEMA, which is design, engineering, manufacturing, and assembly powerhouse. And we are industry agnostic. So many of our non-automotive parts of the world, parts of our business, stuff like consumer electronics, stuff like aerospace, all seem to be moving towards a high double-digit trajectory for some time now, and will continue to do so as its order book is pretty robust as well. So hence many legs of growth as we look ahead. We're pretty positive as we look through the rest of this year.
All right. Hi, Kunal. Good to see you. When you mentioned about non-auto as well. We had Mr. Sanjay Parekh of Soham, who joined us on the channel yesterday, and he was talking about prospects of the company. So I just want to focus a little bit on that. It's still a very small part of your business, the non-auto. How do you see this part of the business scaling up, and will it be inorganic in nature, or will you do it organically?
We've never said either or. It's always and for us. As you know, we are a fairly acquisitive company. Right now, however, I think with the amount of order book that we have on the organic space itself, the absolute immediate piece is organic, though we continue to look at opportunity sets in this space as well. So you're aware that we are setting up our largest greenfield ever that we have set up for the consumer electronics piece, which should kickstart in the latter half of FY27. We are having new facilities come up in the aerospace side as well. There's one in the health and medical side now as well. So a large variety of investments being done right now to enhance the growth around this topic. And as we deliver more, there are enough number of opportunities at the global level that are also at play, which you will hear as we move through the rest of the year.
So it moves to what in terms of a percentage contribution as the facilities come on stream? First electronics facility has come on stream. Second one is coming on stream, and all of that. So non-auto, how much does it contribute by 27, 28, 29?
Difficult to guesstimate given we remain acquisitive. So if I give you an estimate and then tomorrow announce something, it will start looking very different, specifically if the announcement is on the automotive side. So, but needless to say, I would say that the non-automotive piece will be driving growth at a significantly higher pace organically versus the automotive piece. And hence at an organic level, the share should consistently increase. The inorganics can change the share as we move ahead, and the inorganic can happen on either part of the business.
Yeah. And Kunal, hi, morning, which is why it will really help because there's so many different parts to your business, right? And you're in so many different markets. It will really help if you give us a sense of, not just for FY26, say looking at FY27 perhaps, on a steady state 12-month basis, the organic business across, all the lines. What is the run rate at which you think your organic revenue will grow? And again, margins, overall, which are about 6.7% as of this quarter. I'm talking about blended margins. What is the trajectory on a steady state 12-month basis?
So look, I think one, you should not ever view us on a quarter-on-quarter basis because there's obviously too much volatility that is embedded.
Yeah, which is why I'm asking for a sort of an annual outlook.
Yeah. So on an annual basis, as we have always maintained, I think our endeavor is always to do better than last. And I think that's what we will deliver most likely in this financial year as well. We should do better than what we did last year, both on top line and bottom line front.
So, but better than last year, Kunal, can also be 1%, right? But for investors, there's a huge difference between 1% and 5% or 9%. But some ballpark estimates, if not numbers, will it be single-digit growth? Will you aim for double-digit growth?
Look, there are many things at play right now. So it would be a little too early for me to really talk about it from a particular percentage of growth. Let me give a little bit different picture. Maybe if you think from an ROC perspective, we are today at somewhere around 14.5%. We should trend, at least a couple of percentage or more up as we move through the rest of this year.
And on margins, where this quarter there's been some pressure on wiring and harness, modules and polymer more or less steady. So again, I'm not asking for a quarterly trend because it can be volatile. You're across so many markets and businesses. But, when we talk about full year margins, would you be perhaps northwards of, say, 7-8%? But just how is it looking? Or are you expecting margin pressure in the second half? And if yes, across which businesses?
So we are aware we are an ROC-focused company, so margins is not really what we focus on in that regard. But I would expect that, as the top line grows with our H2 looking better, the absolute value of our profitability should also go up. And that's what's giving me the comfort that ROC should track upwards.
Kunal, we'll leave it there. Good luck to you. Thank you very much for joining us and appreciate your time here on CNBC TV 18. Stocks up about 3.5% as we speak. Markets are down 16 points. Things are looking much better. Of course, I think you can put a, leads tally for Bihar and look at the Nifty, and I think you'd kind of sort of have a same trajectory in terms of direction of travel at least. Let's go across to Parikshit, who's now standing by with the latest trends and firmer trends, right? I imagine compared to when we last spoke with Parikshit. Parikshit, what's the latest?
Well, yes, firmer trends in favor of the NDA alliance. They are clearly past the halfway mark. The halfway mark being 122. The NDA has leads in 162 seats. This is 43 more than last time. India alliance at just about 73. And it seems to be the Congress and the other opposition parties dragging down the India alliance. In the NDA, you've got both the JDU and the BJP performing well. The JDU at 72, the BJP 70. So look at them. Their performance is almost neck to neck. LJP at 15, Hums Party at 4, RLM at 4 as well. So all the alliance partners doing well. But if you look at the India alliance for that matter, it is only the RJD which is doing the heavy lifting, and that's where the problem seems to lie. RJD at 50, the Congress at 16, so there is so much of difference between the alliance partners. The NDA also seems to be doing very well all across the state. But there is one important trend that I'm really picking up, and I want to show this to our viewers, which tells you that the BJP, the JDU, they've been working consistently on improving their tally in Bihar. Let's look at the 2020 vote share for these parties. If you look at the vote share of the NTA last time around, it was just about 37%. But this time, the BJP and JDU alone together is about 40%. So BJP and JDU both have increased their vote share in this election if we look at the trends that are coming in right now. So clearly, the BJP and JDU have worked on their performance. If you look at some of the factors that are playing out in this election, let's look at the Mahila factor. Let's see how the parties have performed in areas where there are a large number of women voters. There are about 122 seats out of 243 where the women factor plays an important role. And the NDA is leading here with 92, India Alliance at 27. Now, let me also look at some of the rural seats in this election. Here also, you see that the NDA has 149. So the NDA performing very well in the rural seats. 149 areas are where it has leads. The India Alliance only at 67. Losses for them here in rural Bihar. Finally, in the urban seats, again, you will see a strong performance by the NDA, India Alliance at 5. So there are 20 seats where which can be termed as urban seats, and the NDA seems to be doing better. Finally, one factor that I'd like to leave our viewers with is the Muslim-dominated seats in this election. So there are 53 seats where the Muslim vote holds sway, and you can call them Muslim-dominated seats. Even here, the NDA has a lead of 31. India Alliance at 19, others at number 2, and the Jan Swaraj Party at number 1. So this is not just one particular factor, or like the Nitish factor, or the Modi factor, or the women vote, or the Muslim vote, which is working in this election. It seems to be a pan-Bihar exercise which is working out in favor of the NDA Alliance. But just a caveat that we'll add for our viewers, that these are still early trends. The Election Commission is yet to call the election, but we should have very clear trends in about 2 hours or so. But as far as early numbers go, NDA leading in about 165 seats. Will they match their 2010 performance? That remains to be seen, but they are clearly winning as far as this goes. And JDU and Nitish Kumar seem very clear in terms of becoming the chief minister of the state. That position has been solidified as well.
Yeah, no, absolutely, Parikshit. I mean, if these numbers hold, then it's really, a great reiteration, of course, Mr. Nitish Kumar's leadership of the government in Bihar, and of course, the alliance's strength as well. Very interesting. Sanjeev Srivastava is with us, and so is Aditi Fadnis, Consulting Editor, Business Standard. Thanks very much, both of you, for joining us. Sanjeev, I guess backing the exit poll numbers was absolutely the right thing to do.
Well, what to say? It's very difficult to gloat.
नहीं करिए थोड़ा सा तो
Actually,
करिए.
I was not. Just to correct you, I was not backing the exit poll numbers. I was backing my numbers.
No, I know. But I was asking you. No. It's not. It's not about you. Because my question to you then was whether you would kind of because what's happened in 2020 and maybe 2015, you would go with. But you said, well, in your travels and all, you've also kind of felt that the exit polls are they kind of confirm what you thought as well.
Yes. So I was. See, it is all instinctive at the end of the day. We are no pollsters, but what one felt on the ground, my number was around 153 to 155 for NDA. Now, obviously, they are exceeding it, and some of my fellow travelers had these numbers also, 160 to 168 type. Let's see where it ends. But what looked clear was that Nitish Kumar continues to remain the number one choice of people as chief minister, while Tejasvi strangely and paradoxically remains the most popular leader in terms of numbers. But the combination or the alliance of BJP, JDU, Chirag Paswan, Upendra Kushwaha, Jitan Ram Manji, this kind of cast broad rainbow, it just continues to deliver election after election after election. And we have been seeing the same story since 2005. So there is no rocket science really behind explaining this verdict. And the Mahagathbandhan, unfortunately, very solid numerically, but can't cross that threshold of Muslim Yadav. And so it remains around 35%, 36%. Congress doesn't bring in any additional votes. So, it is just, in hindsight, it looks like a no-brainer.
But also, Sanjeev, morning, and thank you for joining in. Thanks, Aditi, to you as well for being with us. But it also once again reminds us, right? I mean, Gujarat many years ago, many decades ago, and a state like Bihar now, that anti-incumbency at times can be more a matter of conversation, electoral conversation than electoral reality, if this indeed is the verdict. So, Aditi, come in on the discussion with your thoughts on what you think has, particularly led to this kind of a verdict, if this is how it's going to be. Is it the multiple schemes? Is it wooing the woman voter? Is it the fact that they managed to appease to, people along caste lines? And as Parikshit was indicating, maybe even along across religious lines as well, because in some of the Muslim-dominated areas, there seems to be the early leads are indicating a tilt towards the NDA. So what do you think do the leads really tell us about the electoral politics in Bihar as of now?
So I think the most important thing is the popularity of Nitish on the back of all the infrastructure development that his government has been able to do, regardless of whom he's had as partners. I think Nitish has very firmly put behind him this allegation or this charge that he shifts partners at will and is an opportunist and so on and so forth. Clearly, people of Bihar at least have no view on this. They have voted for Nitish Kumar, I think, as leads show, in very large numbers. That said, I don't think Tejasvi Yadav is out. I think Tejasvi Yadav has taken the Rashtriya Janata Dal into a new trajectory, which keeps caste as its central issue, but talks about a lot of other things also. He has captured the imagination of the young voter. So I think it would be a big mistake for anybody to sit back and complacently believe that just because NDA seems to be leading heavily in Bihar, that Tejasvi Yadav is a write-off. He's not. The third thing is women. Yes, women have always been committed JDU voters from the time that Nitish Kumar came to power in 2000 and continued his stay. We all know all the things that he has done to his commitment towards women voters. And frankly, even if this 10,000 rupee scheme, which is to be converted into 2,90,000, which is what women voters' eyes are on, frankly, even if he had not done that, women voters would have voted for him. Part of the reason is the early investment in girls' education, which is actually showing results now.
As well.
And followed by a number of other things, including prohibition. So women voters are committed JDU supporters. I think it can be said without fear of contradiction, and they are looking to more. They're asking for more. Which is, I think, a pretty encouraging thing because, as we know, women are better at most things than men.
I'd second that completely, Aditi.
Aditi, nicely done. Nicely done.
Lovely. Completely with you on that one. But, ladies and gentlemen, one more question, and we look at this from a stock market lens. So it's important to really understand whether this has any bearing on New Delhi at all, or whether this remains a Bihar issue and then the NDA celebrates today and then life goes back to usual. Because from a macroeconomy, business, markets and policy perspective, that's very important to understand. Sanjeev, you want to take that first?
So like I was mentioning the other day, a couple of days back when we were discussing exit polls, the reverse would have really caused mayhem in the markets.
Yes.
If the NDA had lost. Now it is more like status quo. The next big elections will be May next year, West Bengal, Tamil Nadu, etc. So till then, everything is stable. Nitish Kumar continues to stay with NDA, at least one thinks so. So everything is status quo. I think the markets will be more guided by what happens on policy front, what happens on tariffs, what happens on the earnings of companies. So all those things, the usual stuff. So this politics has just reaffirmed that the government is stable, there to stay. Nothing unusual or out of the way expected in near to short to medium term.
So we were just, because, for us, the next event is the union budget, right? And Aditi, just quickly, last 30 seconds on this, we were just wondering whether this means more big Bihar packages. We just want to figure out whether this will have any bearing on how the fiscal kitty is going to be spent. Or was that all done? Because 25 was the election year.
Days of big Bihar packages are behind us. We'll see them after 4 years, maybe.
Okay.
I think on the Bihar package, I don't think that's a possibility, but Bihar is the place to invest now. Bihar has seen 15,000 kilometers of roads being built. There are innumerable bridges and so on. They are going to emphasize, whichever government comes to power, they're going to emphasize on employment and industrialization of Bihar. As you know, Bihar is one of the least industrialized states. It is one of the least urbanized states. It has the lowest per capita income. That represents an opportunity, not a risk.
Well,
I'm sorry. Very quickly, I'll disagree there with Aditi, whom I have great regard and affection for. See, Nitish Kumar 2005 to 2015 was a Vikas Purush of sorts. Last 10 years, despite of this government being there, there's nothing much done on ground, infrastructure-wise or industry-wise or policy-wise. So really, I would love to share our optimism, but the track record of last 10 years doesn't indicate that.
We'll continue to debate and focus on this in segments through the course of the day. But for now, it looks like it's a done deal, unless there is a surprise afoot, which
never know.
No. Sanjeev and Aditi, thanks very much for joining us with that. Pine Labs listing, right? I mean, 10 now. So it's a 10% pop on Pine Labs. 243 is where this one is now at. So on top of the issue price. So it's a pretty solid listing for Pine Labs this morning. Already about 11 million shares nearly coming up on your screens right now. What we'll do is we'll have a quick sort of setup in terms of where valuation is, any comparables, etc. coming up in just a bit with our research team on Pine Labs. Technicals, right? Sudeep Shah is with us, Head of Technical and Derivative Research, SBI Securities. Now, Sudeep, if you're watching Bihar, as you heard, and we've been showing the numbers, it looks like a game, set, match. What's your sense and how would you trade things from here?
Good morning, Prashant. Yes, I guess now it's done and dusted. Bihar is the Bihar elections and the entire event is now behind us. Markets have, we have seen that recovery in the first half an hour when the numbers were being flashed. And now I feel it will be back to normal. It will be back to technicals or it will be back to how the results are coming out. So overall from here, what we feel is from a medium term outlook perspective, support for Nifty now is closer to 20 25,650, 25,670, where the 20-day exponential moving average is there, and which was the prior breakout zone. So overall, we feel broadly Nifty will be in a range between 25,650 and 26,000 on the upside, and a lot of individual stock specific or sector specific moves will happen. From a bank Nifty perspective, that could outperform. That has been outperforming, and we feel banking and financials, NBFCs, capital market stocks, that could be the space to focus on. And levels, if we see for bank Nifty, 57,700, 57,750 would act as a strong support on the downside.
And stocks, Sudeep?
Stocks, there are a couple of them. One is IIFL Finance, which has given a fresh breakout today above 545, 547. Good set of numbers few days back. And what we feel is from the current levels, the stock can do 585, 85 on the upside and can be bought with a stop loss at 540 on the downside. The second stock that we have on our radar is CDSL. Here also this stock is at the cusp of a symmetrical triangle breakout, a long-term one. And we feel that the support zone here is 1610. So the stock can be bought with a stop loss at 1610 and upsides up to 1690, 1710 could act as targets.
Okay. All right. Got that, Sudeep. Thank you very much for joining in. By the way, we shouldn't take note of the environment in which we are trading today. Some of the Asian regional markets, they are sliding, and how the South Korean market's down 2.5%. Japanese market is down 2%. The Hang Seng, maybe we can pull up the Hang Seng, is down. So we've had that pop. We've touched the green territory once the, verdict became almost clear with these leads.
I think,
but then there is this reality, which is why we've had another dip.
As someone, I think in the past discussion, someone said, right? I mean, the market reaction would have been if this went the other way.
Yeah.
Now, this was expected, it's happened, and I think markets will kind of move on.
Exactly.
Remember, markets, Nifty's already also rallied from 23,300. So about 600 points in about last 5-6 days, right?
Yeah.
That's where we're at. Well, we'll start to focus on the usual stuff, right? Once Bihar is done, which is, of course, I mean, the global stuff, etc. So we mentioned Jubilant Food is what we're going to focus on. It's seeing a big move, and this after numbers. Mangalam is here to put the spotlight on this one. Mangalam, over to you.
A pizza party continues for Jubilant Foodworks, right? Ever since the company reported its second quarter update, the stock's been doing well, and now that the numbers are out, the street has taken a lot more, gusto to those numbers. Over 20%, almost 20% sort of revenue growth on a consolidated basis, and a similar amount of growth in the EBITDA, which implies a margins of 20.3%. And the finance cost reduction has actually led the net profit a lot higher, from 70 crores all the way up to 110 crores. And a large part of this business is led by the India vertical. The standalone business has seen a 16% revenue growth and a 16% EBITDA growth. And these numbers shine particularly as, all the other QSRs that have reported their numbers have actually been fairly weak. So the leader has far outperformed this time around as well. The last 4 quarters have seen high single-digit to double-digit like-for-like growth. So that's something we'll continuously monitor. Yes, it has moderated on a trend basis, but 9.1% in an environment where others aren't growing as much, it definitely stands head and shoulders above the peers. The company's taken heart from that and added about 81 stores, Domino's stores, and the total number of Domino's stores in the country now stand at around 2,300. And all of this, nearly all of this, has been led by delivery. So delivery of pizzas, like-for-like growth is 16.5%. Remember, that accounts for nearly 3/4 of their revenue. And add to all of this, even their newer verticals, Popeyes for one, doing extremely well. They've, reported strong double-digit same-store sales growth in that one. Obviously, the company refrains to give specific numbers on Popeyes, but all guns firing or all ovens baking, as you call it.
Well, there you go. Mangalam describing the Jubilant numbers as only he can. Mangalam, thanks very much for that. Well, on the other side, Manisha will be focusing on the commodities space. And we'll go across to her in just a bit from now. Markets are, they've almost come back into the green. They're down about 80 points, 25,800 nearly. Back in 2.
Well, just as we were talking about that pullback, actually the markets have gone back to the low point of the day. We're down close to around 90 points. But let's let the markets settle themselves. For the time being, let's go across to the commodity markets. And Manisha's waiting by to tell us what's going on there. Manisha?
Well, thank you for that. I want to talk about metals right now because what a week it has been for across metals as a sector. It has been a strong rebound that we've seen for gold and silver, and that is on the back of soft US dollar really. Apart from that, there is also uncertainty over the backlog of the official data that would start coming in from US, how much, where, and whether the officials there have been able to collect all of that data. Well, this is after the US president has signed a short-term bill, ending the longest US government shutdown. But the markets are still not sure or aware or what kind of numbers we could be looking at in sense of economic numbers from the US, and that is keeping the markets jittery there. We have seen gold prices gain up by nearly 5% in this week, and this has been the best weekly gain that you have seen in last 1 month. Silver is up by 10% in this week, and that one is trading at a 1-month highs right now, just $1 away right now from its all-time high. So that's the kind of rebound that we have seen come in both for gold and silver there. The gains have just about continued for the base metal prices also. Copper is trading at a 2-week highs. You have zinc prices now trading at an 11-month highs. The refined zinc production is expected to decline by 2% in this week. And the smelting problems that we have seen continue in Kazakhstan and Japan clearly have been quite supportive there. The best performer of the lot is tin prices. Those futures are trading at a 7-month highs right now, above $37,000 a ton. Onto that one, there is gradual rollout of mining quotas, prolonged suspension in Myanmar. There also is Indonesia ordering closure of 1,000 legal tons mines in Sumatra, and that tells you that the supply perhaps could be a big concern going forward there. And when you look at the tin usage itself, well, this is one commodity that also gets used in various data centers development, electrification projects as well. And with tin supplies continuing to going down, as I said, this is an outperformer rather for overall sector there. Take a look at the HRC steel prices, and they were trading at around 2-year lows not too far back, but that also has seen a very strong gain, trading at July 2025 highs right now, having gained 5.5% in the matter of last 1 month itself. The final chart shows you on what we've done in sense of prices in year until now, and it continues to shine bright for the precious metal prices. Gold is up 60% this year now with the kind of gains we've seen in this week. Silver jumps up by 85%, and within base metals, it's tin, which is up by 30%. And then it is copper, which is up 28%, aluminum up 13%, zinc is up 3% as well. So very strong gains continuing in precious metals, and then followed by some of these base metals. Having said that, all in all, it's been a positive year till time for many of these metals.
All right, Manisha, thanks very much for that. That's commodities in focus. So many big movers, right? In equities, Muthoot was there at the bottom of the screen. There is Bharat Dynamics there. Jubilant Food, Mangalam highlighted. PG Electroplast is, of course, something we're going to talk about as well, right? I mean, the big talking point there, inventory in the system, as PG has been guiding for some time, that by the end of the year, things will become much better. That's the management on the other side, on the back of their second quarter numbers. Stocks up about 0.5%.
Well, let's continue our focus on earnings. And PG Electroplast, well, it reported a mixed set of Q2 numbers. The company says the operating cash flows were impacted by higher inventory levels in the first half of the year, but also adds that the order book remains healthy for all products. To discuss the past quarter and the optimistic way ahead, we have Mr. Vikas Gupta, the MD of PG Electroplast, who joins in. Hi, Mr. Gupta. Good to have you in. Well, you're still sounding very optimistic about the second half of the year because you're sticking to the guidance. Now, in the first half of the year, the revenues are ballpark 2,200 crores. For you to get to that guidance, in the second half, you will do around 3,400 crores. So is that gettable? And also on the profit front, you've done around 70 crores in the first half of the year. To get to 300 crores, you'll have to do 230 crores. Are you sure that this guidance is coming about?
Good morning, Nigel. It's always a pleasure to be there on your show. Yes, we are pretty confident about the numbers that we have said, and we are sticking to the guidance that we have given on the revenue side, also on the profitability side. It comes on the back of the order book and the kind of forecast that we have from our clients and the kind of ramp up that we are experiencing in our AC business in the current months. So we are quite confident that we will be able to hit the revenue guidance that we have given.
Very good. All right. So you're sticking to the guidance. The profit number as well will be close to around 300 crores in FY26, right?
Yes.
Got it. All right. Let's revisit the numbers then. But I wanted to ask you about the JV, because there's still not much clarity with regard to the JV. Is there any approval delay from the Chinese government? If you could give us an update when, because of the last few quarters, it's been just being pushed on. So when can we expect the approval to come in?
So Nigel, regarding the compressor partnership that we were looking at, please understand, let me correct it first. Like, it was never a JV. It was a kind of a manufacturing agreement where we have to start manufacturing compressors for one particular company and for which we have a particular plant in Supa in state of Maharashtra. Okay. So that Chinese partner, as I told earlier also, is still waiting for the approval from the local Chinese government. Unfortunately, it is taking the more time than expected, and it's still waiting for that only. So we have to just keep our fingers crossed on that, and we're just waiting for them to press the button, because we already have the building which is up and already erected, and we have to just start installation of plant and equipment once that go-ahead comes.
Matter of Vikas, hi, morning. It's a matter of just time, right? So should we expect this in the next 3 months? I mean, or there's no way to tell.
So Prashant, we are just waiting for that approval to come in. We have all the RFQs on the plant and equipment already finalized. We have to just release the purchase orders and get those things into the factory and start the installation. So that we are just waiting. It has taken more time, and we have been saying that it will take more time. So I can say, let us wait for another 3 months. Let us see how it works out. And our teams are also visiting China. Let us see how it takes out.
I just had one, to go back to ACs, Vikas. You'd guided us that the inventory will correct as we go into the end of the year, and maybe by January, February, I think is what you'd said. Is all of that on track? Because, I mean, it's been the monsoon season kind of ended, 10 days back, 15 days back, right? I mean, in many parts of the country, maybe a little longer, a little earlier than that. So it's been unusually long rains, not just in Q2, but into third quarter as well.
So Prashant, please understand, as I told, we have the order book, we have the production forecast available with us. We are already under the ramp up of our production for ACs. In the month of October, we did around 100,000 air conditioners. This month, we are targeting more than 200,000 air conditioners production. So we are hopeful that the inventory should get cleared up. And please understand, there is a energy rating change from the January 2026. So there will be a lot of pre-build, and we expect a lot of pickup to happen before the end of December to clear the inventory for the old rating label inventory.
Okay. All right. Mr. Gupta, just one more word. This advanced stages with regard to the compressor JV has been going on for 3 or 4 quarters, I think. So I'm reading a note coming from Equities. Do you think that by Q4 at least, it'll get the all clear?
So Nigel, please understand, it's a government issue. I cannot comment very definitely on that.
Okay.
On our part, whatever actionable items are required, we are already doing that.
Okay.
And we are just following up with the Chinese partner for that.
Okay, not in your hands, we let that go. But how much have you already incurred in terms of a capex? You know, some plant machinery, I think there is some expenditure that's already taken place, right?
So we have, as I told you, we have already erected the building. The factory is already erected. For that, we have incurred an expense of almost around 100 crores. So that is still there. And till the meantime, we are using for our warehousing requirements. But that is something will be used for the compressor facility going forward.
Okay, all right. You know, we'll get back to business, but I wanted to ask you this one question. You know, y'all gone ahead as a promoter group and sold some shares earlier this year. And then the street started getting a little bit, skittish. And then unfortunately for y'all, business as well went through a bit of a downturn. Now that cool-off period, I think the cool-off period is 6 months. You could correct me on that. But if the promoter intends to buy shares, you know, I think that cool-off period ends. Is there an intent to go ahead and maybe creep in a little bit and buy some shares from the open market? We briefly discussed this the last time we chatted.
So Nigel, please understand, we have a long-term commitment to this business, and we feel that still the promoter group is holding a sizable stake in the company. And we feel that we have no need to sort of chip in and try to buy back some stake right now. We will discuss this issue once this 6 months period is getting over now, I think. So we will discuss this issue, but as of now, there is nothing on card.
So as of now, you're comfortable at 43.6% promoter holding, which was 61%, maybe 2 or 3 years ago.
Yes. So Nigel, so that dilution has happened because of the fundraise that we have done.
No, I've got that. I've got that. But as of now, you're saying there's no intent, but you'll have to revisit it once that cool-off period, which is in the next few days, does get over. Then we'll have to see what action on that front. Well, Mr. Gupta, we appreciate you joining in. It's good to hear you're sounding far more optimistic, and the street has looking past last quarter's numbers. They're looking ahead because you're sticking to the guidance. You're optimistic that something happens with regard to the way forward on the JV, the compressor JV, though it's not in your hands. And also, that PAT guidance of 300 crores will stick. Thanks a lot for joining in. We look forward to chat up with you as the quarter does progress. Well, we'll wrap up on this edition of Bazar. Chartbusters comes next. Stay tuned.
Welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Manglam, and as you can see, the market's a little bit skittish, though it appears, at least as of now, that the Bihar election verdict has gone as per what the markets did predict. The BJP is on top out there.
BJP, indeed, the NDA on top in Bihar, and that's exactly what the market is digesting as well. We had seen a rally post, the exit poll results had come by as well, which is why maybe some bit of decline from the highs, given the weakness that we're seeing in the global markets as well. The mid-cap index is something that we'll most definitely watch out for, because at an index level, it is outperforming the frontline indices in the sense that it's not falling as much. But if you look at the broader markets, we have a few more number of stocks which are declining than the number of stocks which are advancing. 1,500 on the red side versus 1,100 or 1,200 in the green side itself. But let's focus on IRCTC. The company reported slow September quarter in spite of the early onset of festive season. And we spoke with the management on what they expect in the next quarter, the festive outlook for the tourism segment. Let's hear them out.
Overall outlook is very, very positive. Reasons being, as you correctly told, that there is a seasonal demand. Railway has run a large number of special trains also, and in tourism segment also there is a quite a demand, and I'm happy to tell that we could be able to find this opportunity to grab this business in the best possible manner. You see, historically also, our next quarter, that's quarter 3 and quarter 4, we'll be doing a good business in tourism. Reason being, all the foreign tourists are coming onto Maharaja's Express and the Golden Chariot, which this year we will be running like 7 trips. Last year we could run only 3 trips. And we have already booking got for Maharaja's Express, which is highest ever since its inception. So, and similarly, Bharat Gaurav trains, we have already launched Bharat Gaurav trains for this quarter, and the coming quarter there is a pipeline. So, to me, we will be doing very good business in tourism segment during this quarter and the coming quarter.
All right, that was the management of IRCTC. A couple of important conversations coming up on the show right now. The first one is Eureka Forbes. A rare voice reported a decent second quarter where the revenue saw a 15% uptick. The profits grew 31%. The EBITDA crossed that 100 crore mark for the first time. We have Gaurav Khandelwal, who's the Chief Financial Officer, the CFO at the company, joining in. Thanks a lot, Gaurav, for joining in. A 15% revenue growth is what you've reported. The question is that, first half, you've done around mid-teens. Does this number continue? And if you could give us further clarity on, how will this number grow in terms of sales coming in from services and sales coming in from products? And in products as well, your key segment, the water purifiers and the others. Just give us a complete breakdown for the next couple of quarters.
Good morning. Thank you. I think I'll start off with giving a flavor of what has given us the growth so far, because that will give an indication of what will drive growth going ahead. As we stand today, our product portfolio has done extremely well. We've grown in high teens. Incidentally, with this quarter, our product business has grown by double digit in every single quarter over the last 2 years. And the reason for that is we've built a very strong innovation pipeline. We've invested in R&D, and that is something which is beginning to play off. Equally, we've made a strong pivot in driving penetration for the category as well, which is at a low 6%. And that is something which has helped a lot. We've also invested ahead of time on categories like robotics. And these are categories which are very clearly inflecting and are making a very meaningful contribution to our growth profile. So that is as far as the product story is concerned. The service business turnaround is very, very visible and clear to us. In quarter 1, we grew by double digit, and I'm pleased to share that in quarter 2, the growth has only accelerated. Sitting where we are today, I think the big picture from our perspective is that product business will continue growing strongly. And with service now coming back, we do expect to keep driving double-digit growth ahead as well.
Okay. All right. Hi, Gaurav. Good to see you in. This is Nigel on this side. Congratulations on a good showing. Now, for the year, if you had to pencil in revenue growth, what should we work with? Mid-teens growth? Should that be a fair number? And also, I'm looking at your margin trajectory. Now, that's improved to mid-teens. But on a sustainable basis, what should it look like? And also, if you could throw in ad spends as a percentage of your sales, where do you see that number stabilize at? I think it's more than 20%, right?
That's right. That's right. So first, on as far as revenue is concerned, we will keep aiming for a double-digit growth. I think the categories in which we are operating have passed an inflection point, and with the pipeline that we have on the product side, that is something where the growth should continue. And with service coming through, I think double-digit growth is certainly something that we'll aim for. Although keeping in mind that the consumer sentiment is still mixed, but we believe that we will be able to drive a double-digit growth. As far as margins are concerned, on an H1 basis, our margins were up by 70 basis points year on year. We will keep aiming for a full year margin improvement. Just as a reference, a couple of years back, our margins were 6% odd, and now they've climbed to much higher levels. And we will keep aiming for margin improvement as we go ahead.
So
advertisement and sales promotion spends, given the stage at which our categories are, with a penetration of 6% in water, a sub 2% in vacuum cleaners, we strongly believe that growth investments are needed to incubate these categories, and we'll stay the course as far as growth investments are concerned. We will obviously make sure that how do we kind of balance the return on our investments and growth and profitability.
All right, Gaurav, I need to just press you a little bit for numbers, because encouraging to hear about the double-digit growth, but in the first half, you've already done 13%. So double-digit is a given. And also in terms of margins, from 6, it's moved to around 14%. Great going out there. For this year, should the street work with, say, 14 to 15% revenue growth? Will that be a fair ask? And on the margin band, consistently, since your ad spends are going to remain elevated as you penetrate further, should the broad guidance be 13 to 14%?
From a margin perspective, we will keep aiming for an expansion. I think the fact that in H1 we are up 70 basis points gives us a sense that the margins for the year will expand. And I think I just want to call out one important part of our business is the impact of operating leverage. With the gross margins at which we operate, operating leverage plays a key role in driving margin improvement. And hence, we expect margin improvement. As far as numbers are concerned, our bias will be towards growth investments, and that is a balancing that we keep on doing. But at this point in time, one should assume a full year margin improvement. It will not be to the extent of, let's say, the margin improvement that you saw last year of roughly 125 basis points, but you should expect a margin improvement to happen.
All right,
as far as growth is concerned, you rightly pointed out that we are at teens growth at an aggregate level, and our aim will be to kind of, strive to continue that and improve it. I'm also cognizant of the fact that there is a consumer sentiment which is still mixed.
Got it.
But we will keep aiming to sustaining our growth and taking it up as well.
Take that point. So teens revenue growth is something that you will continue to focus on. And, one has some estimates. Over the last 3 or 4 years, your margins have improved by almost 500 basis points. Brokerages expect, the operating leverage to play out maybe over the next 3 years, 200, 250 basis points on the cards in terms of expansion as well. But those are analyst estimates. And you said that you are looking to expand them going forward. Just a couple of questions. And, it is an underpenetrated category. I do understand that. But also highly competitive, right? If you look at some of the recent listings, say in the services side in particular, urban companies' thrust has been so high that, water purification service is something that is the key contributor for them. So much so that they took heart from that and entered the water purification hardware business as well, which is native. So on that, how do you expect to, contain your moat and expand over and above what you're doing here in light of this competition?
At a macro level, our belief is that categories which are operating at low penetration levels, they benefit a lot with competition coming in, because then there are more people talking about the category. And that is something that we've actually seen over the last 4 to 6 quarters. And we believe the category is now far more heard, visible and salient. And that has helped in kind of driving category salience. So at a macro level, we welcome the competition that is coming in. And from our perspective, there are 2 things that I'll call out. Our focus would be to not operate like a legacy company or a status quo company. We will be competitive in the market, and our innovation pipeline, our thrust that we've done so far is a reflection of that. Second, on the moat, I think this is a business that I would call out is relatively low on entry barriers on the product, but the real moat comes in on the service side, and we believe our moat on the service side is extremely strong. We've strengthened it even further. For example, every single of our 8,000 technicians are on our digital platform. So we know exactly what is happening. And as we go ahead, we'll keep strengthening these moats even further, because this is something which our view is that will be difficult for competition to replicate.
I'd be, it's very interesting because one would imagine that Eureka Forbes hardware is the moat and not so much service, whereas for urban companies, service is the moat and not so much hardware. But we'll monitor as things move along. Just a final question from my end before we let you go, Gaurav. Robotics and air purifiers, these are very small categories right now, but extremely interesting and fast growing as well. How much do they contribute to your growth, or how much do they contribute to your overall pie right now? And how much will they be, say, 3 to 4 years from now? How much do you anticipate coming in from both vacuum cleaners and air purifiers?
I'll start off with robotics, and it's a great question. This is a category which is clearly inflected. It's solving a very real consumer problem. And this is a category which over a 3-year period has come to a stage where it's become a bigger part of the vacuum cleaner category. And it's now making a very, very meaningful contribution to our growth numbers. Our view on this category is that this is a category which could become much larger as we go ahead. And what we have done is made ahead of time investments in innovation, in supply chain, in product capabilities, and that is something that is bearing fruit. We will keep focusing on accelerating this even further because this is a category with a very long runway. As far as air is concerned, at this point in time, the category is relatively smaller, but it has got all the ingredients for it to become a lot bigger. 37 of the top 50 polluted cities in the world are in India, and that is something which gives a good lead indicator that what potential this category holds. Our focus there is on creating the innovation capabilities, and over a period of time, air would scale up. But at this point in time, I would say robotics is something as a category which is making a very meaningful difference for us.
Okay, all right. Gaurav, appreciate you joining in. Personally, I can tell you I live in a Mumbai-sized house, which is not very, very large, and I have 2 air purifiers at home. So, that's telling you the kind of demand that's there. Thanks a lot for joining in, explaining the business. Let's chat up soon and, understand the way ahead as well. For the time being, let's slip into a short break. As we do that, a quick programming note for our viewers. You don't want to miss this One Meet, the new team at CNBC TV 18, live at 3:30 p.m. today. Watch as our new anchors make their debut.
cnbc.
Well, that's a saffron sweep that the street will be liking. The NDA in command, 176 seats is where they are leading. That said, let's get back to earnings. Muthoot Finance, that's the stock of the day. It's up close to around 10% after a stellar showing in the second quarter. The company has also hiked its AUM growth guidance to around 30-35% from around 15% earlier. Mr. George Alexander Muthoot, the MD at Muthoot Finance, joins us on the show. Well, sir, you had to make us wait for a few quarters and a few weeks. But I think over the last 2-3 times we have spoken, I've been asking you, will you be upping it? Will you be upping it? And mathematically, it looked like you're going to do that. Now, my question to you is, the street will liked what you have done. 30 to 35% is no mean feat. But can it be higher? Do you think a 40% is on the cards? That's point number one. And point number two is, what about yields? Competition is quite high as well. Do you see some kind of sacrificing on the yields front from here on? Or do you think you can hold on to current yields?
Okay, thank you. Anyway, we have revised the guidance from 15% to 30 to 35% because in the first half year, we have already grown by 21%. So I think it is not correct to say our guidance is 15%. So, but then we are also seeing good traction in the gold loan offtake. In the H2 this year, this second half also, we are seeing good traction in the gold loan offtake. So I think that should augur well for us, and that is why we have revised the guidance to 30 to 35%. Of course, if there's an opportunity to grow more, we will certainly do it. But the guidance for us remains at the 30 to 35% only. That is what first thing I would like to say. The second question is also answered from my response to the first question. That is the guidance, etc., and the growth. See, we see a lot of demand for gold loan in these days, not only from the rural area, but also from the towns, cities, etc. More and more people are starting to use or monetize their ornaments which they are having with them. Earlier, probably they did not think it as valuable as it is today, because today every media, every newspaper talks every day about the gold price and the record gold price, etc. So I think people are getting, maybe they are realizing the importance of the ornaments they have. And probably when they require money, they are using this as a mode of...
Mr. Muthoot, just to follow up on what Nigel asked, you said that growth will continue. There are analysts who are expecting 40% growth for this year. Would that be out of whack? Because you've given a guidance of 30 to 35%. You've upped your guidance. The street believes that you can still do a lot better than what you've upped your guidance to. A lot of them believe between 38 to 40% is what this, the company can do this year. So I wanted your comments on that. And secondly, on yields, 18 to 18.5%, will they sustain at these levels?
So I think instead of the yields, we should be looking at the NIMs. So NIMs, we are thinking at 10.5%. So occasionally we get some bump in the yields because of some old reversals of NPAs and old churning of the NPAs, etc. Churning is actually what is happening here. The old NPAs with a lot of old age, lot of interest accrued on them becomes replaced with a new set of NPAs. So on that, we get a bump in the income. That is one of the reasons. So, but instead of the yield, we should look at the NIMs. So if the borrowing cost comes down, maybe 10-15%, 15 bips is what we expect in the next 2-3 quarters. So we will still maintain our yield, maintain our NIMs, and probably reduce the yield. But there is competition is there always. All the banks are also doing this big business. Every bank has got a very big portfolio of gold loan. NBFCs also have. It is not that the banks are taking away NBFCs loans or NBFCs are taking the business of loan. The market is, the pie is growing bigger and bigger every day.
It's not only that banks who are taking or NBFCs who are taking your business, you are also taking some of their business, because I'm looking at Belstar, out there, the MFI subsidiary losses are reducing, no problems about that. So just a couple of questions. When does that become profitable? And the second part is that I read that you've opened 23 new gold loan branches in Belstar to diversify your portfolio. That is a little surprising because, you know, you moved into MFI to diversify away from the gold portfolio, and now you're opening gold loan portfolios in Belstar itself.
Thank you. And the growth in gold loan is, of course, there. About Belstar, I think they have the problems are actually almost bottoming out. So we don't see any more problems coming. So going forward, the loss will get reduced and probably we will have a nil loss in the next 2 quarters. Thereafter, only we will be thinking of a calibrated growth in the MFI portfolio. So MFI probably will start seeing some growth in the portfolio probably in the first and second quarter of next year. Having said about the growth, you wanted to know about our thoughts on the gold loans also. See, the Reserve Bank of India, last about 6 months back, changed or maybe revised the guidelines for non-MFI loans from 25% to 40%. Probably they also feel that a pure play MFI may not be able to sustain when there is some ups and downs like this. So they are expecting MFIs to do some other business also. So as far as Muthoot is concerned, other business other than MFI, what runs in our blood should be the gold loan. That is why we thought of doing some gold loans business also there. Although we have opened 23 branches now in this half year, we are planning to open about 150 branches in the microfinance Belstar also by the end of the year. So we'll have a mix of portfolio, some good collateralized gold loan portfolio as well as the microfinance. Microfinance alone may not be sufficient to take care of such aberrations in the collections and the market, etc. So they need some support from other quality portfolio also. That is what we are. That's our thought process on that.
All right, Mr. Muthoot, you know, your shareholders of Muthoot Finance will be very happy. And they've heard your commentary on Belstar as well. They'll be wondering, can they get a chance to have another listed entity? Can we see the Belstar IPO coming out in Q4 or the first quarter of FY27? Is that likely?
No, as of date, they don't require much capital because as you would have seen, the book is actually degrowing. We had about 10,000 crores, now it has come down to 7,000 crores. And probably the next 2 quarters also it will remain flat. So as of now, they don't need any additional capital. So as I said, after next year, when the other business and the MFI start looking up and they start growing, we'll require capital. At that time, we will have to probably think of IPOs, etc.
Maybe FY27 the IPO comes or FY28?
Anyway, we'll see. We'll play it as we require, sir.
Played by the year. Played by the year. Also, played by the ear. Not just the year, but the ear also. Okay. You know, just a final question before we let you go. You've also approved an equity investment of up to 500 crores in Muthoot Money. How big do you expect that business to be from here on? It's a wholly owned subsidiary. Just wanted to understand, can this be another of your growth drivers from here on?
Yeah, it can be because we started the Muthoot Money about 6 years back, starting the to diversify and start the high purchase business. We started it by financing used cars, used commercial vehicles, etc. But after COVID, it got a big hit, and then the portfolio started behaving badly, and we are gradually running it down. It had a portfolio of about 600 crores. Now it is only about 70 crores. In the meantime, since we already put capital in the company, we didn't want to waste that capital. We started gold loans there. Today it has about 900 branches in the gold loan sector. And today, as everybody knows, gold loan is doing well. So we will certainly see that it also does well. It has today a portfolio of 6,000 crores. That is why we put in 100 crores of share capital. As long as it is a 100% subsidiary of Muthoot, all the profits and all the business definitely will come to the parent only.
All right, but you have not heard anything from the regulator. You know, if the regulator demands, I think in the past you've said you'll fold it into Muthoot itself.
Yeah,
right?
you can't work against the regulator. If they want us to do something, we will do it. That's it.
But you have not heard from them as of now about folding it in.
Not yet, sir.
All right, Mr. Muthoot. First of all, congratulations. Super numbers. Wishing you all the best. You have teased us for the last few weeks, but now you came out there and you have revised that guidance. All the best. We'll chat up soon and we look forward to speaking to you.
Thank you.
Well, on that note, though, I think we'll slip into a short break, come back. We'll continue to focus on markets and stock-specific action. Stay tuned.
It's a clean sweep for the NDA in the Bihar elections. That's something that the exit polls did indicate. But as you can see on the top of the screen, 180 crossed in terms of leads. It's a very clear victory for BJP and Nitish Kumar. So obviously, as you can see, a big one, a thumping victory. 180 seats where they're leading, well above the halfway mark, and in the others not doing particularly well, the RJD plus. So what we'll do is take a short break on Chartbusters. We'll wrap up on this edition. Come back on the other side. You have the team of Trading Guard, which comes up.
Hello and welcome to Trading Hour, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Patakia and Reema Tendulkar. Well, for the markets, yesterday again we saw a day in the green. We were off the highs of the day. We touched that intraday record as well. But for now, it's been quite volatile. Yes, right now we are seeing that massive recovery from the lows. The Nifty is absolutely flat, but there's some negative bias to that. We do have the mid caps, which are in the green currently, but right now as well, advanced decline ratio is in the favor of declines. This is something that we saw yesterday as well. Bank Nifty in the green right now, but quite flat, so to say. And we are talking about a lot of results as well. The earnings reactions which have come by, and of course, the big talking point has to be the outcome that we are awaiting from the Bihar election results as well. That is something also that will move markets in a certain manner. For now, a recovery which is underway. We'll have to see whether that continues or not, because that has been sold into at the initial trading hour as well. But a lot of stocks on our radar today and some primary market action as well, guys.
Indeed, but it looks like it's going to be a landslide. Okay, landslide win for NDA in Bihar, and maybe the markets are now finally pricing that in. From the lows of the day, it's been a recovery of about 100 odd points. 25,750 was approximately the intraday low on the Nifty, and now it's up close to about 100 points off that. And Adani Group stocks, by the way, are the ones fueling the up move in the last 30 minutes or so. So pull up in Adani, Ports, Enterprises and the rest.
Good going for the benchmark. It's been a good week, if you can call it that, other than the reaction that we saw from the highs of the day yesterday and this topsy-turvy moves that we are seeing so far in today's session. But otherwise, it's been a fairly decent week. But the race for Bihar counting is currently underway. The NDA comfortably in the lead as of now. Parikshit is joining in with more on this. Parikshit.
Well, yes, we have to see whether the NDA can match its performance of 2010 Assembly elections when it crossed the 200 mark on its own. 122 is the halfway mark in this election, and the NDA seems in a very comfortable position. But there is another story playing out, and that is the JDU and BJP improving their vote share over 2020. Just a small statistic that I want to bring up for our viewers. In the last election, the NDA won 125 seats with a 37% vote share. And the BJP vote share was 20%, JDU's was 15%. Currently, as per the Election Commission, the vote share of the two parties, that is BJP and JDU combined, is already at 41%. So BJP at 23, JDU at 18. So the NDA has gained because of these two parties. And both these parties have done well all across the state. They've done the heavy lifting in this election. And when we look at the India Alliance, we see that the opposition has been dragged down by the Congress and the other parties as well. Now let's look at the overall factors playing in this election. Let's look at the current leads. Out of 243 seats in the 2025 Vidhan Sabha election in Bihar, the NDA is leading in 183. So if they win at this number, this will be one of their best ever performances in electoral history. They're already doing better in 62 seats compared to last time. The India Alliance only at 55. And let's look at the numbers of the India Alliance. And that's what I was really saying. The RJD has 38. Yes, they've done poorly in about 37 seats. But the Congress has also performed badly. The CPIM, the VIP, CPM, IIP, CPI, all the smaller parties not doing very well. And we've already seen the Congress saying that this election is a fraud. There has been vote chori. This is an election now against the people of Bihar and the Election Commission of India Chief Ganesh Kumar. They're talking about how the special intensive roll was conducted and almost 80 lakh people were out of the electoral race. But remember, when the SIR was being conducted, there were no appeals at that time. Let's look at the overall numbers once again. There are certain filters here in our magic wall which I want to bring up for our viewers. Let's look at the SIR impact, because this is what the opposition is going to be talking about in the next few days. Now, there were about 106 seats where the SIR or special intensive role could have possibly had some impact. Here, the NDA is leading in about 83, the India Alliance at 20. And the reason why the opposition according to the BJP, cannot complain is because they had been given a chance to appeal at every stage and no one exercised the right to appeal. No person, no citizen came forward with appeals at this stage. Let's look at some other factors now. I want to bring up the woman factor, the Narendra Modi factor in this election as well. Let's begin with the Narendra Modi factor. The reason why I'm mentioning this is because in 2014, 2019, 2024 and the 2020 and 2025 Assembly elections, Bihar has stood firmly behind Narendra Modi. And these were the seats, 94 seats in Bihar where Prime Minister Modi had carried out his rallies and the NDA is winning in 68 of them. All across the state, be it women, be it the rural voter. And just lastly, I just want to end with the rural vote. 82% of Bihar is rural vote. 223 seats can be called as rural seats. The NDA performing exceedingly well here with 168. So it seems that JDU, Nitish Kumar is in the driver's seat. Tiger Zinda hai, as says the poster outside the JDU office. And it's been a strong performance by alliance partners in the NDA all across the state and with different vote banks in Bihar.
Okay, Pariksha, thank you very much for that. We'll keep coming back to you for more. For now, let's turn our attention to some primary market action now. The IPO of Capillary Technologies India has opened today. Now, this is a SaaS company that basically helps company run end-to-end loyalty programs. Right from helping customers earn reward points to redeeming the reward points. So, for example, just you and me enter into any retailer's app. Now, Capillary, this company's software will track your existing loyalty points, your rewards, and even your complete profile. So if that app or the brand wants to send you an offer, any discount or coupon, then the Capillary's AI, artificial intelligence, will analyze the customer behavior and automatically send you the most relevant offer. And again, when you go to checkout, make the payment, Capillary's APIs will instantly fetch the customer's points balance or help apply rewards and help you redeem the points. And some of the big clients include Tata Digital, ABFRL, Puma Sports, Domino's, etc. Anish Reddy, MD and CEO of Capillary Technologies, is here with us in the studio. Anish, good morning and thanks so much for joining in. Let's talk about revenue growth for the company. I think 25% in the first half of FY26. Is that number sustainable? And you turned profitable just last year. What aided that? And what is the outlook on profitability and margins going ahead?
Thanks, Rima, for having me here. You asked about revenue growth. Yeah. We're a fairly global business, right? So we see growth across markets for us. The first half of this year, we grew at about 25%. If you take our net revenue growth for all of last year, that was also at 25%. Now, the way this growth comes about for us is a lot of our large customers grow with us. We work with 19 of the Fortune 500 globally. And we have a number in the DRHP, about 15 to 20% of annual growth is from these enterprises growing. Each of them grow 15-20% with us. Right? So that's the biggest chunk of this growth. And that we have visibility for a while. If you look at our last many years of net retention rate, which is existing customer growth in a different language, it's been between 115% to 120%. Right? So a good chunk of growth comes from there. Further, we tend to win, at least or around one Fortune 500 customer every quarter. So if you look at when we filed the DRHP in June, we had 16 Fortune 500 customers. Today we have 19. That's the second axis of growth. We continue to win some of the best customers globally. That's because if you pick any analyst report on the space, on loyalty globally, we are in the top 2 in the world. Either we're first or second, depending on which report you end up picking. So that gives these enterprises a lot of confidence to work with us. A third engine of growth for us has been acquisitions. We go by competitors at, it's a fairly good ROC model. It generates about a 25% ROC. We buy these companies, migrate their customers over to our platform. So you convert what's a very services-heavy business in the competitor we buy into a software SaaS 65% gross margin business. So those three have been the ways of growth. On EBITDAs and if you look at our last 3-4 years of, we've roughly added about 3-4% EBITDA each year. So last year, we also turned net profit positive. But if you look at EBITDAs wise, we did a 76 crores last year and a PAT profit about 14-15 crores. This first 6 months, we've already done about 40 crores of EBITDAs. And more importantly, the business generates a lot of cash. We've generated about 55 crores of cash as well
So,
the first 6 months.
Coming back to profits itself, are you profitable in the first 6 months of this fiscal already?
Yes.
And is profitability a path that will continue for the company going forward? Because usually before the IPO, we see a profit and that doesn't continue. So that's an investor concern. Even on the cash flows, you did have negative cash flows in FY25. Now you've said you're cash flow positive. Is this a trajectory which will continue as well for the company?
Yeah, so let me answer the profits piece and then I'll come to the cash piece. So if you look at our EBITs for the last 3 years, they've increased by about 3-4% each year. So there is a very sustained 3-4% growth that we've shown all through the last 3 years. And even if you take the first half of this year versus the first half of last year, there's again a 3%, about a 300 bips movement, right? So there's no reason why that should not continue into the near future. It is a 65% gross margin business. We talk about it in the RHP as well. We're today at 11-12% EBITDA. Right? So there is quite some distance you can move up in that sense. Coming to cash, like you said, last year was a negative 46 crores of cash. The year before was a 96 crores of cash.
That's
Basically, we work with these very large enterprises in the US. And one of these customers paid us about 80 crores in March of FY23, right? So that's why that year looks like 97 crores of positive cash.
Got it.
I think it's good to touch on the business model. We typically charge our customers annually or quarterly upfront, right? So this is a recurring subscription. They sign up for 3, 5, 7 years. Our annual churn is about 5-7%. So it's very long relationships. And typically we charge them annually or quarterly upfront. So in this specific case, in February, we won a very large, a Fortune 10 healthcare company in the US, and they paid us fully upfront in March of 24, right? So which is why FY24 looks like it's 96 crores positive, and then FY25 looks like slightly negative at 46 crores. But the right way to look at it is do both the years together. So it takes care of this. If you take the first half of this year, it's a 55 crores of positive cash on a 360 crores of revenue, right? So we are well above the 10% in terms of free cash in that sense. So,
Unfortunately, Anish, we're out of time. We'll continue this conversation another day. Wish you all the very best.
Thank you.
Well, that was just a little bit of a precursor about Capillary Technologies, the IPO which opens today. We will slip into a break. On the other side, we'll focus on crypto markets. Manisha Gupta joins in on the other side.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.
And Crypto Corner, we talk about the crypto prices today. Remember, we've seen a very sharp decline onto this one. It really has been a tale of two halves, really. The first half of 2025 was all about buying, institutional adoption, tokenization, and strong rules, regulations coming in from US as well, and all-time highs being hit in many of those cryptos. But take a look at the prices right now, and we're trading below $100,000 for Bitcoin. It's trading at a 6-month lows at around 97,500 right now. We did see an all-time high for Bitcoin on 6th of October, and it hit $126,000 therein. But we have seen nearly 22% of a decline from those kind of levels for Bitcoin alone. And with the kind of action that seems to be going on, the heaviest of action for puts at 95,000 to 90,000 is where it seems to be getting in. So those are the kind of targets that people are working with at this point in time. Well, apart from that, if you look at the overall crypto markets, it has seen a decline anywhere between 15 to 25%, not just for Bitcoin, but all coins and various other used coins as well. Markets are looking at a very heavy selling pressure coming in. And if you look at the last 1 month itself, well, investors have sold roughly 8,15,000 Bitcoins, and is the reason you have seen not just the prices decline, but the overall market cap has continued to decline as well. The high that we have seen in this year in sense of crypto market cap has been at around 4.3 trillion. It seems to be at around $3.3 trillion at this point in time. And with the kind of selling pressure that we are seeing, it is the highest since we saw in January 2020. There also is a fresh wave of risk aversion coming in. Remember, there is selling that we are looking at in tech stocks. The regional stocks have come under pressure as well. There's uncertainty when it comes to also the kind of economic data that we could be coming in looking at from US after that or ever longest shutdown that we saw in the US government. There's uncertainty on what, if and whether we would see any economic data coming in, and that seems to be putting pressure on many of those risky assets therein. Apart from that, when you look at the overall value liquidation, it has been to the tune of almost $450 billion since early October. And that is because there is huge redemption that we've seen come in from institutions, high net individuals, even retailers on the side. ETF redemptions have come into the markets as well, and corporate treasuries also seem to be selling into Bitcoin and other altcoins on the street, and that is the reason you have seen such sharp declines coming in across crypto there. So much so that on a week-on-week basis, month-on-month basis, and even for the year, we've seen declines or red come in for many of these cryptocurrencies. On a week-on-week basis, as you can see, it's anywhere between 5 to 13% of a decline that we have seen in cryptos like Bitcoin, Ether, Binance, Cardano, Solana, etc. On a month-on-month basis as well, it's down between 12 to 30% is what we've seen in case of crypto markets. The last quarter of every year mostly is a positive one, and is the reason you saw a lot of buying ahead of this quarter. But with the kind of declines that we're looking at, the decline also has been very, very sharp. With a lot of people now selling crypto for cash is what we've seen happen in the month of October, and November seems to be going the same way. But that's all the time that we have on Crypto Corner for you. Go for a break, come back and talk more about markets and stock specifics.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and the recovery on the Nifty again getting sold into. It's been that kind of a day. It's been an absolute roller coaster, if you could call it that, if you could see that chart. But continuing our conversation now on the financial sector, we are now being joined by Vishal Goyal, the India financials analyst at UBS. Vishal, good morning. Thank you for joining in. You know, there was a lot of conversations about private banks, their results, the larger names as well, some stress with regards to their asset quality and margins. But the highlight of this quarter has been the immense amount of money that the smaller lenders have received, be it Federal, be it RBL. Do you believe that the smaller lenders are now more primed for better returns compared to their larger players, just on this anticipation that there might be more such deals brewing in the future?
Yeah, hi. So, yeah, I think availability of capital clearly helps the small players, because easy liquidity, good asset quality environment, and availability of capital. These are generally, a great recipe for mid-sized lenders across, like whether banks or NBFCs. And typically the valuation gap versus the larger peers closes in such environment. So, probably what we are seeing in terms of outperformance is pretty much, what the environment is giving them as opportunity.
Vishal, hi. Morning, Rima here. You hosted about 30 financials at the UBS India Summit. What were the key takeaways in terms of loan growth sustaining beyond the festive season, this immediate GST 2.0 push, and even on asset quality? Because in the numbers, there were some chinks in the armor, whether it's about MSME, credit costs have gone up. Say, for instance, something like a Bajaj Finance, for instance. So what were the key takeaways on loan growth, on cost of borrowing, on the asset quality that you gleaned, and if you could provide specifics on that segment-wise?
Sure. Yes, I think it was a great conference for us. Like, we had, as you said, 30 odd financials and experts actually attending the conference. And what we see is mood is pretty optimistic. We have seen loans like demand environment generally getting better. I think most lenders are comfortable seeing better growth. So the festive demand, of course, almost everybody is watching it very closely, that whether it will sustain, but clearly there has been some positive impact of festive demand on the lending side, especially consumption lending. And what we actually see is most lenders are more comfortable lending unsecured as well, once again. So, we have seen a couple of, years of pause on unsecured lending, and now we are seeing the risk appetite coming back. So that was, I think, heartening to see from the lender's point of view. The question on asset quality, yes, I think, again, if you see, there are fragments and segments where there is some stress brewing up. So we hosted, credit bureau also for MSME risks. And what we are seeing there in the data is micro loans are seeing increased stress. Some of the players, I think NBFC segment lenders are probably seeing higher defaults, while the larger banks, including larger private and SOE banks, are still seeing stable asset quality on the MSME. So that's the only particular segment where we are hearing increasing risks. Otherwise, I think most banks or lenders have suggested the unsecured risk is stabilized, and therefore they are all expecting credit losses to come down from the unsecured book.
Vishal, now that we are seeing improved demand outlook, and that's the consensus view as well, how much of it is in the price already? Trying to understand the valuation perspective, also because there's so much funding that's already happened for some of these names.
Yeah, great. I guess, see, valuation question, frankly, if you compare banks' valuation versus the rest of the market, Bank Nifty is still trading below historical average multiples. So that probably, kind of gives you a sense that valuation-wise, they are quite reasonable as a sector. But yes, I think the issue has been demand. So we used to growing at 20%, which came down to 15%, and now we are like a system struggling at 10%. There is a small, improvement from 10 to 11 to 12 probably by the end of this year. So the loan demand part, I think, has to come back for the valuation to re-rate significantly from here. Otherwise, I think as a sector, I think the valuations are reasonable. And within sector, there are, opportunities in the weaker players because they are generally valuation catch-up plays, while the defensive or high-quality names, they are already, delivering numbers, and there is no major upside, earnings upside revision which are happening on the larger caps.
Vishal, have you tracked some of these recent new listings in the broader financial landscape? Grow and Pine Labs. Grow is inching towards that 1 lakh crore market cap. It's already at 90,000 crore. Pine Labs has had a pretty good day one on the Dalal Street. Stock is up 20%. Any thoughts on these two?
We don't cover any of those, so I won't be able to comment. But let me give you a broader sense on how we are thinking about the overall financial services and within that capital marketplace. And we had recently published a 5-year thematic note also as well. We clearly seeing this shift of household savings pattern from bank deposits towards equities and slightly more sophisticated product. And that trend would generally be supportive for the financial intermediaries, brokers, asset managers, even exchanges, except that there is a near-term regulatory risk, right? As we all already know. That's the only caveat in the interim for this segment. But otherwise, if I think about next 5-7 years, that is a segment where the new flows are growing at a faster rate versus the traditional fixed income products.
Okay, all right. Thank you so much, Vishal, for joining in today with your thoughts and the outlook on the banking space overall. That's the word coming in from UBS. But we do have a lot of buzzing links, maybe on the upside or downside. Hormuz has gone across to the wall and he's going to put the spotlight on top movers in the market. Hormuz, take it away.
Well, the conversations all through the morning have been around Bihar and the election outcome. But amidst all of this, Vodafone Idea has quietly slipped above its FPO price just for a brief period, still trading around those levels of 11 rupees. The fourth straight day of gains, so the stock is up 15% now in the last 4 sessions. And from the lows of August, where it was down to around 6 rupees, the stock has almost doubled. And we have had volume substantially high as well. It's around 70 crore shares that have been traded, which is 2x of the 20-day average. And of course, as I mentioned, it's trading above its FPO price of 11 rupees. Of course, it gone up to 19 and then it came off. So still some scope still there. But Muthoot Finance has been the earnings of the day, if you could call it that. 10% higher on the stock now, trading at record high levels. It's set for its best week since June of 2020. And we've had more than 25 lakh shares already traded on this stock. The 20-day average is just 1.5 lakh. As the fourth straight monthly advance, and if you take a look at the year-to-date returns as well, the stock is up 74% and it's turning out to be the best year since 2014. 5% more and the stock will have its best calendar year since its listing. Now, Explio Solutions is the third one. The last 9 sessions, the stock had gained only in one of those, and we've had today 1.7 lakh shares. The 20-day average is just 2,500 shares on this 15% advance. The stock has moved above its 100-day moving average of 1,096 and still been an underperformer, down 20% still in 2025. And lastly, Paras Defense. Numbers came out yesterday, building onto those gains. Now 6th straight day of gains at 15% in the last 6 sessions. Volumes already are double of yesterday. We had close to well over 30 lakh shares that have been traded. The 20-day average is just around 2 lakh shares. And the stock moved above its 100-day moving average of 723 and has a fairly good year so far as well. Gains of around 50%.
Thank you very much for that. We will get into a break. On the other side, the management of TVS Supply Chain Solutions will join in to talk about their Q2 numbers. Stay tuned.
Welcome back. You're still tuned into Trading Hour. TVS Supply Chain Solutions reported its Q2 numbers. Company saw its revenue go higher by 6%, but margins came in under pressure. Profit after tax surged nearly 54% versus last year. That was led by higher other income and lower finance costs as well. Mr. Ravi V, who's the managing director at the company, is joining us now to understand the outlook going forward. Mr. Ravi, good morning. Thank you so much for joining in. Well, it was a 6% revenue growth and other income was up 60%, which led to higher profits as well. Can you give us a sense of what was the impact of reduction in GST rates on the business? How has it been in Q3 so far? And what is the outlook for FY26 considering that big change that we have seen in GST rates?
I think it's thank you so much. It's been a good quarter, stellar quarter actually. It's been a landmark quarter for us as we delivered a PBT of 23.3 crores. I think it is a high since we listed. And it's come on the back of very strong delivery efficiency and cost optimization. When you look at the India perspective, the India business grew by almost 11%. And the freight business also contributed to the India business, thanks, I guess, in a way, to a lot of shipments during pre-tariff deadline. But if you look at it from an overall perspective, the India business looks very healthy. We are actually looking at a significant opportunity given the GST rate reduction. We are seeing uptake in the volumes, and we expect 3 to 4% sequential growth on the India business. So very bullish about the opportunities in India from a company perspective.
Ravi, hi. Morning. Rima here. What about the overall top-line growth? You've been struggling with mid-single-digit kind of top-line growth. Q2 was 6%. Q1 was about 4-odd%. FY25 was also a high single-digits kind of top-line growth. Because in the past, you've spoken about your aspiration of mid-teens kind of revenue growth. For FY26, FY27, what do you expect on the revenue front? And then we'll get to the PBT guidance.
Right. I think you're absolutely right. The aspiration of the company is to be in the mid-teens. And we saw about a 6% growth year on year this quarter. Going forward, I think the opportunity, when you look at the pipeline, we have almost 6,200 crores of pipeline. And many of these opportunities, especially in the ISCS side of the business, are slightly longer in terms of gestation period. We are confident of closing quite a few deals in this coming quarter and looking to, like I said, a 3 to 4% sequential growth over the next 2 quarters. That should take us to a double-digit growth for the full year. That's the outlook from an FY26 perspective, and continuing on that trend to get to an aspirational mid-teens number for FY27.
Mr. Ravi, your business development pipeline, if I read correctly, is well over 6,000 crore rupees. What is the execution timeline for that, and what are the kind of margins that you are envisaging for these projects? Are these high margin projects, low margin projects, and what does that do to your overall margin trajectory for the year?
I think the margin has to be looked from the fact that the ISCS business has actually seen a 16% margin expansion from Q2 of last year. The ISCS business, if you remember last quarter, we had guided to the fact that we have combined the UK entity to one, and we see a lot of operational efficiencies out there. And that is really playing out. We expect that to get completed by Q4 of this year. So we should exit Q4 at a significant expansion in the margin in the ISCS business, which today contributes almost about 70% of the overall revenue of the company. So from a company perspective, we will continue to see expansion in the EBITDA numbers and the subsequent increase in the PBT and PAT numbers for both the year and going forward. We expect FY27, we expect to complete at about 4% PBT.
So when you say you will continue to see EBITDA margin expansion, if you can quantify that for us, Ravi, how much will that be in overall business and your key segments as well? Because this time around, even the global EBITDA margins have halved. So what does it do to the consolidated EBITDA margins?
Right, the global freight business, global forwarding business is definitely an area which is on watch. We had messaged it last quarter also that it is impacted significantly by the overall global macro. we will continue to see softness in the global forwarding business, and we will see sequential uptick, but it's not going to be something which will not be a trajectory change from a global forwarding business. But on the ISCS business, we will see significant expansion. So from right now, the ISCS margins have expanded from 8.1 last year to 8.7. We should be in the region of 9 and above when we finish the year for FY26. So we see significant opportunities to expand the pipeline, and that's coming on the back of the initiative that we have kicked off. We call it Project One, which is the unification of the European business, and that's giving us significant headroom to expand the ISCS margins to over 9%. So overall, we expect ISCS to be in the region about 9% and GFS to be the 2.5% margin, which will get the company's margin over 7% at the EBITDA level.
Thank you very much, Ravi, for joining in. That's TVS Supply Chain. It's been a bit of an underperformer since its IPO 2 years back, August of 2023. I think the issue price was 193. Stock today is 122. Before that, Manglam is now joining in to get us the latest trends from the futures and options space. Manglam.
If you look at it, there has been some supply coming in at around 26,000 on the Nifty a couple of times in the last 2 or 3 trading sessions itself. And earlier, as the market moved towards 26,100, we did get supply. And that's something that the F&O players are looking at as a bit of a line in the sand, and which is why the Nifty and the Nifty Bank are slightly under pressure in today's trading session. But there's nothing really to worry about. Why do I say that? Because one, at the index level, the mid-cap index is doing fairly well. And secondly, post-Bihar verdict, the India VIX is also fairly well contained. All you got to do is cross that 26,000 mark and stay above this sustainably. And that's something that we'll most definitely keep an eye out on. And the other reason why, bull should not worry is because the 25,750 mark, which is now the rising 20-day moving average, that is holding on fairly well as well. So long as we hold it, that's, advantage bulls. On the way up, however, at 26,000 call, the bears are still not giving up fight. There is a fair amount of writing in the 26,000 call. At the lower level, the 25,800 puts are fairly well written as well. So 25,750 to 25,800 is an important support zone. For the market to cross past that 26,050 mark would lead to a powerful short covering rally. And the most interesting thing in the F&O action today is that there is a lot of activity at the 27,000 call. Not to say that the market is going to run there, but the 27,000 call for about 1.5 rupees a pop is seeing a fair amount of bidding right now. And a lot of people have done some punt buying out there. See, 1.8 crore shares, as you can see, of which 71 lakh shares on the 27,000 call have been added just today, premium of 1.5 rupees. Who's to say if the market sustains above that 26,000 mark for a bit, perhaps crosses the record high at some point as well, maybe these, who are buying it for a punt may get rewarded, but that's exactly what it is. Not to say that the market's going there, but there is a fair amount of punt buying at the 27,000 call on the Nifty.
Oh, 27,000 call. Very interesting there. You're still struggling to get to 26,000, but there's some punt buying, as Manglam was highlighting, at 27,000. We'll take a short break, but just before we do that, a quick programming note for our viewers. You don't want to miss this one, is the Meet the New Team at CNBC TV 18, live at 3:30 p.m. today, and watch our new anchors make their debut. We'll be right back.
Welcome back. Let's get to the big story of the day, and it's individual stock. Sharp moves seen in stocks like a Muthoot Finance, Jubilant FoodWorks and Bharat Dynamics, all reacting to the Q2 numbers. And our team is joining in, Gaurav, Mangalam and Upasana, with the fine print. So first, let's begin with Gaurav on Muthoot Finance.
Well, as when you look at Muthoot Finance, it is shining just like gold because AUM that grew almost by 46% on a year-on-year basis. And in fact, what remains a key thing is that they have now increased the guidance from 15% to 30 to 35%. Remember, Muthoot Finance in FY25 also grew its AUM more than 40%, and in FY26 so far, the AUM growth has been more than 40% as well. Apart from that, if you look at the numbers, net interest income now that increased almost by 50% on a year-on-year basis, and profit that increased almost by 87% on a year-on-year basis. So that's actually a huge beat. Even if you look at the consensus estimate, there was a one-off impact. We should not call it as a one-off impact. In fact, it was the reduction in NPA that helped its net interest income to increase almost by 50%. And as a result, if you look at yields, now interest yields that also increased to almost 20%. But going ahead, management said that this will remain in the range of 18 to 18.5% on a steady state basis. Now, what remains another key thing is that it is not just gold business. If you look at the other businesses like Belstar, there also we are seeing some kind of stability. The AUM that has stabilized, and at the same time, losses have narrowed just to 32 crores on a sequential basis. Apart from that, the management commentary remained very strong, and as a result of all the things, if you look at brokerages, they have also been bullish now. In fact, we have got CLSA who increased the target price to 4,000 rupees per share, and at the same time, Jefferies also maintained a target price of 4,000 rupees for the stock. As a result, the stock is up more than 10%. So definitely, at the end of the result season, the stock actually delivered very well in terms of numbers as well as stock performance.
Oh yes, a big surge in Muthoot Finance's stock price today. Thank you so much, Gaurav, for that. From gold to pizzas now. Mangalam is joining us now to talk about Jubilant FoodWorks. How did the numbers look, Mangalam, and what is the management commentary looking like?
Well, you know, a couple of things. The company had already given their second quarter update, so the street wasn't unaware of this 9.1% like-for-like growth that came by. But from then to now, all the other companies have also reported their like-for-like growth. And as a result of which, we saw a big outperformance coming in from both brands which are operated by Jubilant FoodWorks. One, Domino's India, the like-for-like growth has been 9.1%. Popeyes itself, they've said it's strong double-digit growth coming in. Compare that to McDonald's South and West, which is Westlife Food World, minus 2.8%. Burger King India, plus 2.8%. Even if you look at the Yum brands, numbers that have come by, Pizza Hut by Devyani, minus 4.1%. Pizza Hut Sapphire, minus 6%. KFC India, minus 4% for Devyani and minus 3% for Sapphire. So when you look at all these numbers that have been reported and then look at the size, scale and the pace at which Jubilant FoodWorks is growing, that definitely tells you that it is head and shoulders above everyone else, and which is why the stock is doing extremely well too. Add to the pizza, you have some seasoning, which is the management commentary. What is that? They expect 5 to 7% same-store sales growth and 10% store additions to continue every year, which is about 15% growth every year in the Domino's franchise. They target about 150 to 200 basis points margin improvement as well. So that's some cheese in the middle. And finally, for Popeyes, they plan to reach a 100-store mark by the end of this financial year or the start of next financial year. So that adds crunch as well. So to all of this, how much does it cost? 65 times FY27 price to earnings is what the stock has been trading at. And that's after today's up move. So crunch, cheese, as well as taste, all of that as compared to all the other players which are there in the QSR space.
And investors don't mind paying for it. Mangalam, thank you very much for joining in. Get into a break. More on the markets on the other side.
Welcome back. Yet again, the Nifty recovery getting sold into the below the 25,800 mark is where the index stands. We're counting down to few more major earnings on the final day of this earnings season. But we take your leave on this edition of Trading Hour. Halftime report on the other side.
Uncertainty over the US Fed's next move, even as NDA nears an electoral win in Bihar, keeps stocks skittish. Consumer durables and utilities notch some gains, while IT and realty drag.
Muthoot Finance posts a strong Q2 FY26 growth with improving asset quality, leading to a jump in profits on a gold price surge. The lender ups its guidance for the year and also points to a pickup in micro lending. The stock leaps.
Pizza seem to be in high demand as Jubilant FoodWorks outperforms its QSR peers with robust same-store sales growth in the second quarter. The QSR major adds 81 Domino's stores in the quarter, even as its Popeyes franchise gathers pace. The stock fires up.
SEBI has floated a consultation paper proposing allowing pledges on locked-in shares to provide those other than promoters more flexibility. It also proposes issuers release a summary besides the voluminous offer document for retail investors.
The results of counting show the National Democratic Alliance clearly in the lead in Bihar polls, and a win is expected to see Chief Minister Nitish Kumar counting to hold the reins of the state.
Good afternoon. You're watching us here on CNBC TV 18, Motilal Oswal studio. This is Halftime Report, and we come to you from, the election headquarters, where the story of the day so far has been the Bihar verdict. As expected from the exit polls, and in fact outperforming those exit polls as well. It has been a clean sweep for RJD and BJP's NDA in Bihar, and that's exactly what the street is factoring in as well. From lows of 25,300, the Nifty had seen a rally all the way up to 26,000, and today, as the verdict gets out of the way, because of global weakness, we are seeing some bit of profit taking from the top, but nothing really to worry about. Down but not out. With me, Ekta and Vinny.
Hi, good afternoon. So in terms of markets, also a quick check today, a bit of a muted day, right? 25,792 is what the Nifty's at, down 0.3%. But look at the broader end of the market. That's managing to hold on to some bit of a green, especially the Nifty small cap is managing to hold on to better gains. Mid cap also around 0.06% gains, but the small cap, that's doing very well. 0.5% of gain coming in for the Nifty small cap. Let's look at the advance decline ratio. More like an even Steven, slight bit more in the favor of declines. But yes, advance is also still there. We'll wait out for, where this is going to be headed. But today's surely interesting day, given that, we'll be seeing the result of this Bihar election as well, Ekta.
Well, guys, yes, absolutely. And, there's no problem really if you look at it on a week-to-date basis for the market. So on a week-to-date basis, the Nifty is up around 1.2%. We have the mid-cap index, which is up around 1.4% or 1.5%. So good going on a week-to-date basis, despite the fact that the markets are a bit skittish in today's trading session. Obviously, in wait-and-watch mode, we do have a lot to reckon with in terms of cues going forward, especially the Bihar elections, though there is an expectation that there could be an NDA win coming through. In fact, let's talk about the big story. The race for Bihar is on, with the NDA leading as of the latest trends. Parikshit is here with more details on that. Parikshit, over to you.
Well, there seems to be a clear wave in favor of the NDA. They seem to be beating anti-incumbency and winning with a record number. Yes, in 2010, they had won 206 seats in the Bihar Assembly. This time, they're winning at least 193 if we look at the early trends coming in from the ground. Can they cross the 206 number and win the Assembly with a record result? That remains to be seen. But yes, NDA's performance much better than last time around. If we look at the numbers of the NDA, let's just break it up for our viewers. Just take a look. BJP at 86, JDU at 76, LJP, Chirag Paswan's party at 22, Hums at 6, RLM at 6. All the alliance partners have gained. So somehow the BJP strategy has worked all across Bihar. Let me also get you certain factors that have really helped the NDA. Let's look at the woman factor in this election. Election after election, we're seeing how women are playing a very important role. And in Bihar, we had seen how just before the code of conduct came into place, the NDA had announced 10,000 rupees for every woman in Bihar. So 10,000 rupees was transferred under the Chief Minister's scheme to 21 lakh women beneficiaries in the state. You have 124 seats where women play a big role in this election. The NDA is winning 107 of them. India Alliance only at 14. Let's look at some of the other factors. And I want to speak about JDU here. 74-year-old Nitish Kumar. The opposition had raised questions about his mental health, about his ability to continue. Well, there are 24 seats where the JDU has a very strong hold in Bihar politics. And the JDU is winning 22 out of 23. So Nitish Kumar's party putting up a very strong performance. Clearly, Tiger Zinda hai, as the JDU says. BJP at 1 as far as the JDU stronghold is concerned. Let me also look at the BJP. Bihar is a state which has been consistently supporting Narendra Modi for the last 10 to 15 years. Out of those 23 seats where the BJP has a stronghold, the NDA is winning about 23 seats. So strong performance there by the JDU, especially 22 over here. Let's finally look at the rural vote. There are about 82% of the seats in Bihar can be comprised as rural seats, and the NDA doing very well here in about 23 seats. Let me just look up and bring up this overall map once again. Well, it's a lead for the NDA all through. 192 is where they stand right now. India Alliance at 47. And in the India Alliance, we're seeing how Parties like the Congress are now just at about 5 seats. The RJD is at 34. So overall, it seems like a poor performance for the opposition. Tejasvi Yadav also trailing in the state. So clearly there will be a lot of upsets for the RJD, for the Congress, for the opposition. A lot of thinking to do, but clearly the NDA winning all across the state in Bihar.
Absolutely. So, yes,
Okay.
you have 191 seats right now for the NDA in terms of the Bihar elections. We'll watch out for the final results as well. As of now, RJD 48 plus seats, 4 for the others, and GSP is 0 as of now. But, yes, that's the update there coming in.
Yes, absolutely. Well, that's on the Bihar elections, but we also have the WPI data, which is flashing on your screens. It is a deflation of 1.2% in October versus 0.13% inflation on a month-on-month basis. So it has slipped into a deflation. That's primarily because of the food prices. So there was a decline which was expected in terms of the food prices, and that has come through. And that's the reason why you're seeing that October WPI to come through in terms of a deflation. We do have Aditi Nair who's joining in to give us her perspective on it. Aditi, what was your, what were you penciling in terms of WPI for the month of October? And what do you think is the key reason for this deflation?
Thank you, Ekta. We had actually penciled in a deflation of 1%, so it's come in a tad bit lower than that at minus 1.2%. And mainly, of course, like you said, the base effect for food inflation was particularly high, and that is something that is going to narrow now going forward. So this might be one of the lows, I think, over the next couple of quarters. I do expect that there is going to be a slight inching up overall in the trajectory of the WPI from here on out. But also, if we look at the non-food manufactured products and look at manufactured products in general, there also month-on-month the momentum has been very low this time, and that's partly because of the GST rate cuts, the rationalization basically seeping through. We had expected perhaps to see a larger impact on the CPI side than on the WPI side of the GST. But I guess, even as far as the inputs are concerned, possibly, a similar trend has gone through. And that's also helped to keep a lid on the overall, the core WPI inflation.
What is the trajectory that you are expecting in terms of food prices and WPI?
See, for the food prices as such, this year the momentum remains very slow for a lot of food items, right? So that's a positive. We've got a good monsoon. We've got a good kickoff even to the Rabi sowing, for instance. So generally the trends are very good this year. But in any case, we have a very high base that is there. Now, over the next few months, I think the benefit of that will start to go away. So for the CPI as well, for instance, we do expect that it may inch closer to 1% by the end of this quarter and move into the 3% handle in Q4 and then perhaps cross the 4% handle in Q1 of next year. So overall, now the trajectories from here on out look like they're going to be on an uptrend. How quickly the uptrend happens is something that we'll be waiting to see. The WPI tends to be a lot more impacted by commodities, including global commodities. So, of course, what happens in terms of global commodity prices will play a larger impact on the WPI than necessarily the food price trend. But overall, I would expect that the WPI is going to be very flattish in the current quarter. And average maybe 1% or thereabouts in Q4. So the average WPI inflation for this year is going to be marginal at
All
best.
right. Aditi, what are you penciling in from the RBI come December now? We have this additional layer of information, though it's not the determining piece of information for the RBI. But nonetheless, after CPI and now with this deflation coming through for WPI, what are you expecting from the RBI in December, as well as the trajectory, say, for the next 2 meetings?
So possibly we'll get like a final rate cut from the RBI in its December meeting. I mean, the last set of inflation prints certainly supports that. We are fine-tuning our GDP forecast for Q2. It's looking like it's going to be, 7% or thereabouts. So that's a step down in terms of the pace of growth from Q1 to Q2, but it's still a very strong number. Now, with this, our projection of GDP growth being around 7% and the CPI and the WPI numbers that we have so far, I think it's a close call, but I would say that it's definitely tilted toward a 25 basis points rate cut. Now, if we end up getting a surprisingly strong GDP number, then I think we'll have to take a relook at whether that last rate cut will come through at this point in time. But yeah, as of now, that's our call, and not expecting any further rate cuts after that. So I don't think we'll get any more rate easing from February onward. Let's see how long the pause cycle lasts then after that.
Okay, sure. Thank you so much for that, Aditi, and thank you so much for joining us on the show this afternoon as well. On that note, we're going to slip into a very short break. On the other side, we'll have the management of Rainwood Children's Medicare to talk to us about the Q2 numbers. So stay tuned in for that.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, let's get talking about one particular hospital company. Rainbow Children's Medicare reported what was a subdued set of Q2 numbers. Occupancy slipped sequentially, while the margins, however, sustained above 30%. The management has reiterated mid to high teens revenue growth guidance. To discuss this and more, we have Ramesh Kancharla, who's the chairman and the MD of the company, joining in. Mr. Kancharla, thank you very much, or rather Dr. Kancharla, thank you very much for joining in and speaking with us. If you could just, give us a sense in terms of the guidance from the previous quarter, or rather the trends from the previous quarter, where you had the occupancy dip, but you had your average revenue per occupied bed increase. Is that because there are lesser volume of lower ticket surgeries and occupancies taking place, and the case mix is possibly a little more superior? That's what sort of panned out this quarter as well?
Yeah, that's exactly happens. When we have a seasonal business, usually seasonal business has a low ticket and also high volumes, which is why when you see the current quarter results, the volumes have come down, the occupancies have come down, and also the kind of a revenue has come down. But overall, your EBITDA is stayed fine, and also the RPOPs are pretty healthy because of the superior case mix.
So just give us a sense in terms of what we can expect when it comes to occupancies, as well as the average revenue per occupied growth. Per bed, do you expect this kind of metric to increase quarter by quarter?
I think they should increase rather than RPOP, revenue per occupied bed, is always a little bit of difficult for our children's hospital. We look at both RPOP as well as kind of a ARPP. So ARPP is probably a better metrics for children's hospital. Therefore, when you have a kind of a high quality business and a low ALOS, your RPOPs will obviously go up significantly. When you have a lot of seasonal business, so your RPOPs will get moderated, and then your revenues will kick in better. And that translates to kind of a better EBITDA as well. So the percentages may remain the same, but your overall throughput will be better because you are already the Rainbow is a very fixed model kind of things. Beyond a critical point, anything which is beyond 55% of occupancy, our EBITDA conversion is very significant.
Sure. Also, just in terms of overall, if I'm looking at newer operations, especially in the Northeast, how is that done for the company, and where do we see that headed here on in the second half of the year?
Yeah, it's a high quality business. What they have is they have a high obstetrics, and they have a IVF, and also the gynecology. They have a decent pediatrics. What we plan to do is we plan to add pediatric specialties and to drive the intensive care services more aggressively. We already started doing transport services and those things, adding specialties. So make it a proper hub for based in the Gauhati for the Northeast. We see a great opportunity in that territory because there's no other children's hospital delivering the high quality and also specialty care. So with a strong base of obstetrics and pediatrics, if we can build the specialties and more intensive care services, this would pan out to be a very good business for Rainbow.
Right. Dr. Kancharla, let's cut down to the brass tacks. Over the next 6 quarters, 1.5 years, how do you expect your revenue to grow in terms of average revenue per occupied bed, in terms of the business as well? So when occupancy increases, the number of beds increase, and at the same time, RPOBs, if you could give us a sense on where that goes, we'll obviously be able to derive better what the EBITDA of the company looks like as well. So over the next 3 to 6 quarters, if you could give us a sense of a trend that we should track.
Yeah. Okay. So in the 3 to 6 quarters, if you go back and see that in the last the 2 years, we have almost about 760 beds. So addition of this 40+% of the beds to the existing beds to us, the next 6 quarters, I think what we have, we do not have many hospitals to come in. The 2 more hospitals are going to come in, and Bangalore is going to commence in about next couple of months' time. Post that, we do not have a really serious any operations going to come on. It's going to be an operational excellence, and we would seriously look at kind of our revenue growth would be kind of about 20% for the every quarter. So at that kind of a revenue growth, if we can manage and maintain about 55% of occupancy at console level on a yearly basis, then that will give you a very good throughput. Giving a guidance on the RPOP is always going to be different, because when you have a quality business and also seasonal businesses, also new hospitals, especially in the Tier 2 hospitals. Now we have 3 hospitals, one in Rajahmundry and Guwahati and also Warangal. So with those 3 hospitals coming in, and RPOP growth is difficult to predict, but overall our ARPP's average revenue per patient will continue to grow about 5 to 6%. That's what I can give you guidance.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Rainbow Medicare. Stock is down around 1.3% today, and in fact has corrected around 20% from its 52-week high of over 1700 odd rupees. So that stock in focus post its numbers. We'll take a short break, but we'll focus on the F&O setup at midday on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. The Nifty is at about 25,800 levels now. In the last 15-20 minutes since we started the show, it's moved up a few 40 points or something odd that we could say coming in. But what's happening in the world of F&O? We have Mangalam at the F&O desk to take us through all of that. Mangalam, over to you.
Well, we're in a very tight band after having seen a near 600-point rally from the lows of the Nifty, close to 25,300 thereabouts. And that's exactly what is playing out. You know, there is consolidation. What's giving the market some supply is the Nifty IT index, which is down about 1%. And what's giving it some support is the fact that the Nifty bank isn't falling as much. In fact, it is at the flat line as we speak. But over the last, month or so, if you look at it, every time we've gone towards the 26,000 mark, the Nifty's faced some bit of supply. So it has to really break out of these levels. So that's something we will be monitoring. Today, the not so worrying part is that the market breadth is fairly even Stevens, even as the mid-cap index is mildly in the green. So that's good. The other part is that, the India VIX, that too is fairly contained. Post-election results and post this decline that we've seen from the highs, that's the India VIX is equally contained as well. The important level to track on the Nifty as well as the Nifty Bank are the 20-day moving averages. So long as the Nifty is holding that 25,750 mark and the Nifty Bank is holding a little around that 57,900 to 58,000 band, there is no real problems from a bull standpoint. However, there is not much upside. That's what the bears believe, given its trajectory of supply around 26,000, which is why there is some writing at the 25,900 call and the 26,000 call. Both of them come up for you. 25,900 call is a premium of 100 rupees. So 26,000, there is some supply. 26,000 call has a premium of 60 rupees, so around 2650 as well. So short point, 26,000 to 26,050 is a bit of a congestion zone for the market. But at lower levels, like you said, the Nifty's recovered from the lows. 25,800 put writers are fairly active. So 25,700 to 25,750, which includes the 20-day on the move, 20-day moving average on the Nifty, will be an important support zone to watch out for. One most interesting option that I saw today was the 27,000 call on the Nifty. Remember, it's way above what we are at right now, but for 1 rupee a pop, there is a lot of punt buying that is taking place at the 27,000 mark on the Nifty, so that's something we'll watch out for. A lot of individual stocks on our radar, long positions added understandably post good results on Muthoot Finance and Bharat Dynamics, but a lot of shorts continue to be added on Tata Steel. From the yesterday's high, the stock seen a correction of nearly 3-4% and currently seeing some short addition as well.
Okay, all right, Mangalam, thanks very much for that. Well, we take a short break, but on the other side, Manisha Gupta will join in and she's going to take us through a conversation with Chetan Mehta, CMD of Lakshmi Diamonds.
Welcome back, and joining us on the show now is Chetan Mehta. He's Chairman and Managing Director at Lakshmi Diamonds. Mr. Mehta, hi, thank you so much for joining in. First of all, your sense on gold prices, because we've seen very volatile moves coming in for this one. We are back around that $4,200 an ounce mark, with markets anticipating that the global central bank buying, the investment buying will just about continue supporting gold prices, not just this year, but in next year as well. Would you also have a sense on gold prices, on what your targets are for the next year now?
Good morning, Manisha ji. First of all, I'd like to wish happy children's to each and everyone, all the children across the country. And yes, as I was always highly thinking that gold price will go up. And as you know, the gold prices are going up. I'm sure that coming days, and as you can see, the gold have given more from the Diwali at this time. The gold price have become jumped around 10 to 15%, and I'm seeing the very good number coming years. I think next to the coming 2-3 months, we can have a around 10-20% of more hike in the prices, Manisha ji.
How are you looking at the overall demand? Because this is 1 year, Mr. Mehta, that seems to be on record, where we are looking at highest investment in gold and not so much in sense of jewelry. I mean, investment seems to have taken over in sense of jewelry. But as comes the wedding season, do you see that turning around, with jewelry again taking precedence?
Manisha ji, I think the Diwali was very good, and we all know that we had a great sale in Diwalis, and after that, after the Diwali, the sales have been moderate for 10-15 days. And I think the coming season is coming up, and we will have a good sale. I always tell you that there is now, it's a totally a seasonal business, that weddings are there around, from the year we have around 7 to 8 months wedding always, and 3 months we have a slack time for the market. But after the Diwali, 10-15 days was a little bit slow down, because people were purchasing in a good amount of gold and they're investing into jewelry. Now, again, from the last week, the movement have started, because the weddings on the way. And I'm seeing a good demand of the jewelry buying. People have been, and the best demand, what I'm seeing is people are exchanging their old gold also in a big quantity, because people who had old jewelry in their bank and in their house, they're all exchanging and they're buying it and they're adding some gold. So I think this time I'm seeing at the Diwali also, people are exchanging their old gold into a big numbers, and they're adding some gold and buying a big jewelry. So I see the demand is very good, as though always 15-20 days a slag of a market, but overall the market is very jump up, because the wedding seasons are coming, and you have seen the returns have been so big and so huge, and majority people have invested in jewelry, because we were all always telling there is a bullion and coin will, you can't enjoy by not wearing it, by you keeping in your banks and deposits. Now I think people are understanding that, and they're buying a jewelry and they're enjoying this assets, and they're enjoying the appreciation of the market also, Manisha ji.
As you mentioned, that the exchange gold is coming in quite strongly. Last quarter, if I remember, the number was 40 to 50% of old gold coming in for new. Is that number still continuing for this quarter, this month?
No, last month we had, I think, huge exchange because of Diwali also, and people wanted to, they have planned their, they have to exchange. But this quarter, I think, coming quarter, maybe around 30-35% will be there. And the new purchase also will happen, because people, I think, who have missed not purchased the jewelry in the Diwali time, people are now very much, missing those prices, and they are not getting back those prices. So I think people will invest more. So I think 20-25% of the old gold in this quarter, it should come. I don't see 50% coming, because it was a season for the festival, so people have had a more exchanges. But now I think who had an exchange, they will again buy a new gold, because I think the what returns and investment it is giving, I think they will have a more, around 20-25% of old gold will be exchanged. I think not 50%, Manisha.
What's your sense also on the diamond part of it? Because a lot of jewelry companies which have been coming out with their earnings tell us that the studded ratio continues to do quite well. When it comes to diamond, especially for the southern part of India, do you see that gaining precedence as well?
To be very frank, I can tell you very clear, okay, before last in the Diwali quarter, or diamond studded gold jewelry did very, very, very great. And I have seen the people who were investing before into the gold jewelry also converting into the diamonds, because they feel diamonds are more precious, and that is, they're lasting forever. And when you take about the investment, it is not about the only investment. It is like they're wearing and enjoying also. So diamonds have been, I think, now constantly, they have a good sale in the market. I don't see any dip in demands, as though I told you before also, okay, there is a dip in demand. The size of solitaires, which is 100%, came down. The businesses have been come down of the solitaires. But when it comes to the small studded diamond jewelry demand, it is truly high and very in a big way, it is going on. And what I've seen the last quarter sale, I think more better sale of diamond jewelry, lighter weight or mid weight or a high weight, we will have in this quarter also, Manisha.
Okay, all right, Manisha, thanks very much. Always interesting to hear about the jewelry trends in the market. So the demand for solitaires has reduced, but for small studded diamonds, it still exists. Well, for the markets, we're down around 71 odd points for the Nifty. We have the Bank Nifty, which is trending lower by around 70 odd points at this point in time as well. Just watch out for the PSU banks because that seems to be bucking the trend. The Nifty PSU Bank Index itself is higher in today's trading session, and stocks such as Canara Bank, Bank of Maharashtra, all of these stocks are managing to hold up at this point in time. We'll take a short break, but up next, we'll connect with the industrial analyst at UBS. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. Nifty as of now 25,800, but you do have those numbers that are coming in from the Bihar election. NDA in terms of seats right now 197 is what it's standing at, RJD 41. So yes, that's what we'll be keeping an eye out on as well. But let's shift focus now, and we do have UBS's industrial analyst who's joining in. Amit is joining us in the studios today. Amit, good afternoon. Thank you so much for joining us today. Let's just start by talking about the CapEx story. Where do you see now that maybe the next leg of growth could come in? Would it be railways, defense, power generation side? Where is it that we're watching out for in terms of the next leg of growth?
Thanks for having me on the show. I think if you see last specifically 1.5 year, the industrial CapEx momentum has broadly got some moderation. Where we see strong ordering momentum demand is on the power equipment value chain, be it on the cable side, on transformer switchgear side. A lot of this is global and local both. Where we see a lot of value is on the power equipment value chain. You have thermal, wind and solar. The incumbent leaders are winning a lot of orders. You see a clear ordering momentum which is outperforming the industrial short cycle ordering momentum. That tells you a story. And on the defense side, we believe the tier 1 integrators, defense SOEs, are attracting a lot of orders, and we see a lot of tier 2, tier 3 private sector complementing them with the deliveries as you cut down the import, on the defense side. So these are two segments where, on the industrial subset, which are doing very, very well.
So where in the power, value chain do you find a lot of investable opportunity right now? Because specifically, there's so many parts to that value chain, and a lot of them have been discovered, spoken about, perhaps, fairly priced in as well. Where do you still see some opportunity?
I think you're right. I think, you have a lot of cable and wire and transformer and switchgear segments where we've seen a lot of earnings momentum in last few years, and to an extent market recognizes a lot of them. But we think, specifically a couple of months ago when we published our, industrial initiations on some of the generation equipment companies, I think on the profitability side, you have a lot of thermal, wind and solar companies where, there is a lot of surprise waiting for you in the next 2-3 years on the profitability side. We have seen ordering which have been in momentum. We are due to see execution. It's a matter of time. You take a 2-3 year period and you will see a lot of on-ground execution. Power capacities are not planned for 1 or 2 years. They are planned for 20-30 years. Right, so I think there a lot of catch-up will happen. We've not seen any significant addition on the thermal side in last 10-12 years, which I think is now going to catch up. And likewise, even on the wind side, so the entire integrated renewable power, thesis where we think a lot of execution will happen, and you go back and see a lot of incumbents who are consolidating the market share, and I think the profit pool is there to catch.
What would a range of stocks in that be without any specific buy or sell recommendation? And I'm not saying that this is your, this is just for example, purely from an example standpoint. The bunch that you're talking about, you can take 5 or 6 names, and this is not a recommendation. I've given the disclosure on your behalf.
No, so I think again, without going into names, I can say that if you look at the thermal power. Right, in last 3 years, the kind of ordering government has pushed, that tells you a lot of work is happening on making sure that next 4-5 years, a lot of capacities which are needed, because you have to take care of peak load and thermal. There is no immediate answer to thermal, right? So you will see a lot of thermal incumbents who are gaining orders. They are bound to or due to execute projects. The supply chain is being focused upon. On the wind side, you see a lot of policy changes. So across power chain, government is tweaking policy to make sure the local equipment companies get the competitive edge. We are not allowing imports on a case-to-case basis, if you see. So I think generally, which is where I think market needs to maybe focus on. The power of industrial subset, I think in the power generation equipment value chain, where a lot of things to catch up. And we are saying all the 3 sources.
How are you placed on defense?
Ekta, on defense, you have one challenge where, tier 2, tier 3 companies, might have a very elevated working capital. But where we see value is a lot of electronic warfare, electronic tier 1 radars. Post the recent conflict, you've seen a catch up or a fast tracking of decision making. right? So on the defense SOE side, you have...
Is that what the companies have been saying on their calls as well in terms of the commentary?
Yeah, we keep meeting companies, and I think even on the,
UBS
on the preview note, we've indicated that a lot of companies are indicating that the decision making is getting faster. Government is prioritizing in the next 2-3 years what to order and award. So I think that is happening clearly, and you can very well see between the shipyards or the OEMs or the tier 1 electronic warfare companies, there's a very clear demarcation of next 1 to 2 year value.
Sure. Amit, what about the consumer durable side as well, right? Obviously, this time we have seen those issues coming in, RAC segment not doing well. Most of them have faced those issues. But specifically, if you're looking at consumer durables, in that, would it be more cable wires? Where would you, pick your bets?
See, very clearly, if you see last years of results, the B2B businesses are clearly outperforming. And again, I borrow those lines from the power equipment value chain, right? That is basically a lot of export opportunities for incumbent leaders. India has some large players with significant globally comparable capacities. So that is where they are benefiting on cable and wire. On the pure ECD consumer side, if you see, the profitability has been very, very weak, and that is indicative of demand. Maybe around, it will take some time, but it's very clearly B2C is lagging B2B there.
All right, we take that point short on time today, but not out of questions. Amit, thank you so much for joining in. It's peak earnings season, and just as you were speaking, the Marico numbers hit the bourses as well. It's a mild beat, but largely in line. The street was prepared for Marico's numbers already. The company had given their second quarter preview saying that the revenues are likely to grow in 30s, and that's exactly what has happened. 30% sort of revenue growth that has come by. The expectations were high 20s, around 26, 27%. So it appears that it's a bit of a beat, but it's something that the street was already prepared for, closer to 3,500 crores. So the company is posted against 3,350 crores. The good part is that the EBITDA is in line with expectations in terms of margin, 16.1%. The expectations were 16.3%. The EBITDA, reported absolute EBITDA is 560 crores, and that's gone all the way down to bottom line. So no surprises coming in from Marico, and the stock, which is just about 5% away from its 52-week high, continues to hold on around those levels as well. So no big change that we've seen in the stock price apart from a mild recovery from the lows. All the other details is something that we will be tracking as the company reports its press release and information to analysts. A volume growth of high single digits, around 6 to 7% is what the street is working with. Take a short break, come back, get you more of the markets and individual stocks.
Welcome back. Well, those are the trends, the latest trends which are flashing on your screen. But for the markets, currently we have the Nifty, which is down around 72 odd points, so just about lower by around 0.3%. Just about biding time, you'd have to say. A little bit of a wait and watch mode and a negative bias is what the market is trading with at this point in time. It is 72 points off the day's high, so let's see how the rest of the trading session goes. As of now, it's a wrap on Halftime Report. Business Lunch up next. Stay tuned.
Uncertainty over the US Fed's next move, even as the NDA nears an electoral win in Bihar, keeps stocks skittish. Consumer durables and utilities notch some gains, while IT and realty drag. Muthoot Finance reports strong growth with improving asset quality, leading to a jump in profit on a gold price surge. The lender ups its guidance for this year and also points to a pickup in micro lending. The stock jumps. Pizzas also seem to be in high demand as Jubilant FoodWorks outperforms its QSR peers with robust same-store sales growth in Q2. The QSR major adds 81 Domino's stores in the quarter, even as its Popeye franchise gathers pace. The stock fires up. SEBI has floated a consultation paper allowing pledges on locked-in shares to provide those other than promoters more flexibility. It also proposes issuers release a summary besides the voluminous offer document for retail investors. The results of counting show that the National Democratic Alliance clearly in the lead in the Bihar Assembly polls. A win is expected to see Chief Minister Nitish Kumar continuing to hold the reins of the state. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Patakia. The Nifty following a familiar script in today's session, and not so familiar considering how the week has been. It's been a fairly decent week for the index, but in today's session, as you can see on your chart, every single intraday recovery is getting sold into, but the index is trading in a very narrow range. It's a 120-point range for the Nifty. Same is the case for the Nifty Bank as well. It's a very narrow range here too. And every dip is getting bought into and every recovery is getting sold into. For now, the index remaining below the mark of 25,800, although the poll outcome in Bihar is pointing to a decisive mandate for the NDA, but fair to assume that it was in the price considering the price action that you saw in the first 3 days of the week. But for now, the Nifty consolidating near that 25,800 mark, and there you can see on your screens the trends currently there. The NDA well above the majority figure of 122. The India Alliance led by the RJD down to only 41 seats, and as we just showing you on your screens, the NDA comfortably ahead in the latest trends. Parikshit is now joining in with more additional details on what he is picking up from the counting trends in Bihar. Parikshit.
Yes, we're seeing celebrations at BJP headquarters all across the country. Jalebis being cooked at the BJP Delhi office, Litti Chokha being cooked as well. And why not? They're well past the halfway mark of 122. 197 seats is where the NDA is leading. They're inching closer to 200, but will they cross the 2010 tally when the NDA had secured 206 seats? That is something we need to wait and see. But we are seeing the Congress and the opposition performing badly in Bihar. Almost down 73 seats compared to last time. India Alliance only at 41. The Congress, all these blue seats that you see, 1, 2, 3, 4, 5. Only 5 seats going to the Congress party as of now. These are leads that we are picking up from the ground. Lots could change over the next few hours. The BJP and JDU, they are both at about 85 to 83 seats. So both parties neck to neck, both of them performing very well. And JDU and Nitish Kumar will clearly lead this government. Already, Amit Shah has said that there is no vacancy for the Chief Minister's post in Bihar. Now, let's look at some of the factors that were playing out. Let's look at the BJP stronghold, areas where the BJP was strong in this election. Here, there were about 29 seats where you can say that these were BJP strongholds, and the NDA has done well here, 25 of them. India Alliance only at 3. Let's look at the RJD factor in this election, areas where the RJD was strong. There were about 10 seats. Here too, the NDA has made gains, plus 6. Let's now look at the JDU stronghold. Both the JDU and the BJP have performed well all across the state, along with their allies, such as the LJP, Chirag Paswan faction. So there were 24 seats where you can say that these were strong, friendly seats for the JDU, and the NDA has won 22 out of them as per early leads. The women voter was an important factor in this election, and it seems that women have voted across caste lines. They voted above party politics, caste, religion, everything. And out of those 124 seats where women have a big say in the Bihar polls, 103 seem to be going for the NDA. And finally, let's look at the Muslim-dominated seats as well. There are about 53 seats, according to our election analysis, where the Muslim voters play a big role, and NDA seems to be winning 41 of them. So is it the pro-development image of the Prime Minister Narendra Modi and Nitish Kumar, the Chief Minister of Bihar, that seems to be working for the people? What really brought down the India Alliance? That seems to be some of the questions that we'll seek answers to through the day. But let's overall finally look at the tally that we have for our viewers. We're looking at record numbers here, and clearly the discussions among NDA partners have worked. If I can just try and show you a breakup right now. Here you have it. 197 seats is where the NDA is leading. BJP at 88, JDU at 79, LJP at 22, Hums Party at 5, RLM at 3. So this means that there is complete teamwork here. All alliance partners firing all cylinders to take the NDA towards a record tally. And if I can finally show you the opposition tally in this election, well, it's just about 41, the RJD 30, Congress at 5 right now, and the left parties at 6. So this seems to be hurting the India alliance right now. A lot of questions. For example, I saw that RJD spokespersons are being asked, did the Congress really bring you down? So that introspection will be there in the opposition camp. But today, of course, it's a day for the NDA to celebrate.
Parikshit, thank you for that update. Potentially decisive mandate coming in for the NDA in Bihar. Let's also listen into some reactions coming in from Mohan Yadav, the Madhya Pradesh Chief Minister, and Pawan Khera, the Congress spokesperson.
भाजपा ने अपनी जो पहचान बनाई है, जो रुझान आ रहे हैं, हमारे पास अब भाजपा नंबर 1 का दल वहाँ बनकर निकली है। दूसरी हमारा सहयोगी दल जनता दल यूनाइटेड है, और तीसरा जैसे हमने देखा है कि आरजेडी की स्थिति हुई, जो हम कह रहे थे, तो कांग्रेस ने आरजेडी को डुबाने का काम किया है। कांग्रेस के नेता ने मैदान समय के पहले छोड़ा, उसका परिणाम उनकी आरजेडी पार्टी को भुगतना पड़ा है।
मैं सीधा सीधा बोल रहा हूं, मैं कोई लाग लपेट के साथ नहीं बोल रहा, मैं सीधा सीधा बोल रहा हूं कि शुरुआती रुझान पिछले 2-2.5 घंटे के रुझानों में ऐसा अभी देखने को प्रतीत हो रहा है कि ज्ञानेश कुमार गुप्ता बिहार की जनता पर भारी पड़ रहे हैं। हो सकता है बिहार की जनता जीते।
The latest developments there from Bihar. But back to the markets and a number of stocks that are reacting to their earnings. It's the final day of the earnings season today. Upasana is here to tell us about all of those names. Upasana.
Well, certainly. First up, let me start with KRBL. The company has reported a good set of numbers. It's a good growth seen across the board with healthy margin expansion. Now, export revenue of this company grew by 74% on a YoY basis versus domestic growth of 6%. Now, coming to the revenue has seen an uptick of 19%. EBITDA margins have expanded 460 basis points at 17%. And PAT has also seen a healthy up move of 67%. Next up is Bharat Dynamics. For this company as well, it was a good quarter. It beats the street estimates, except on the margin front. The revenue has seen an uptick of nearly about 1.1 times versus the estimates of 27% growth that the street was working with. EBITDA margin saw a downtick of 180 basis points due to high material cost and finance cost. But the company has also mentioned that it has secured order worth 2,000 crores from Ministry of Defence, and with this, Phillip Capital estimates the order book of the company to go above 24,000 crores. Next up is Muthoot Finance, shining higher in trade today. It's an all-round beat. The AUM has seen a strong growth of 48% in line with the street expectations. NII has seen an uptick of 58%. PAT has seen a growth of 87%. And mind you that the management has increased FY26 guidance from 15% to as high as 30 to 35%. Coming to Jubilant FoodWorks, it's a good result overall. The company has outperformed its peers with a revenue growth of 20%. Akam Drugs and Pharmaceuticals, it's a subdued performance. Revenue has seen a downtick of 1.5% and margins also under pressure. And lastly, coming to Transformers and Rectifiers, the World Bank has removed the name of the company from the DPARD list and has also sanctioned an extension for submitting the company's explanation in the sanction case to 12th July 2026. So all in all, these are the top buzzers.
Indeed, big news coming in there for Transformers and Rectifiers. Upasana, thank you for that update. Take a short break. More news and updates on the other side. Welcome back. Now, SEBI has proposed to introduce an enabling framework on the issue of lock-in of pledged shares held by persons other than the promoters. Yash is joining in with more details on this. Yash.
Well, this is to make the whole IPO process for individuals other than, other than the promoters of the company much more easier. What market regulator SEBI has done is that it has released a consultation paper which essentially says how the lock-in and the pledge relation can work in terms of companies which are coming out with an IPO. These are strictly for people other than the promoters of the company. What SEBI has proposed is that it has said that equity shares, if they are pledged, they will be treated as locked in the account of the pledgee itself. If in case the pledge has been revoked, then they will be treated as locked in case of the pledger itself. What this does is it does not stop an individual other than the promoter to sort of come out with the IPO in case the shares are pledged with a lender or any other form of pledger. Apart from that, of course, we keep hearing complaints from investors about how tedious it gets to read the DRHP and RHP documents because of the sheer size of it and the complexity of it. SEBI has given a very practical solution, proposed a very practical solution to it. It has asked all the companies to have a brief, concise, document along with the DRHP and RHP, which gives the key information on the IPO. This could, include the risks, the advantages, all sorts of those things, but in a very concise way for someone who wants to understand the material aspects of any IPO. And this document, the concise document, is to be published to all the exchanges on the company's website, coming out with the IPO, also to all the retail investors in every form.
Yash, thank you for that update there. And shifting focus now to the crypto market, the sell-off in the risk assets that you have seen across the globe has not spared cryptocurrencies either. And that's because Bitcoin has now slipped below the $100,000 mark. Manisha is joining in with more on this. Manisha.
Well, yes, it's a sharp decline coming in for crypto as an overall space. If you look at Bitcoin, it's trading at a 6-month lows right now. It was in the first week of October that we saw an all-time high at 126,000. It's trading at 97,000 right now. So it has been a sharp decline coming in for not just Bitcoin, but various other cryptos as well. When you look at numbers then, most of the cryptocurrencies are trading 15 to 25% off its highs of 2025. Same is the case for Bitcoin as well. It's trading 22% off its all-time highs at this point in time. Well, the total market cap also has slipped from $4.3 trillion of a high in this year to about $3.3 trillion at this point in time. There is a fresh wave of risk aversion. There is sell-off in tech stocks, and there's a lot of liquidation happening into the markets as well. Well, actually, if you look at since early October, we've seen $450 billion being liquidated in overall positions when it comes to crypto. There is redemption that is coming in from investment funds, ETF allocations, corporate treasuries. Even the retail seems to be waiting on the sidelines right now. And the next screen should show you on what we've done on a week-on-week and a month-on-month basis for cryptocurrencies. So Bitcoin is down 5.5% in this week, down 12% in the past 1 month itself. And that pretty much is the case with Ethereum, Binance, Cardano, Solana, down anywhere between 8 to 12% in this week, and down anywhere between 20 to 30% for the last 1 month as well.
Manisha, thank you for that update there on cryptocurrencies. Take a short break. More news and updates on the other side. Welcome back. Now, Fed officials have cast doubts over a December rate cut, and the markets have turned cautious as stocks took a hit last night while Treasury yields moved higher. Steve Leisman brings us a roundup of what the alternate inflation data suggests and where the Fed stands with regards to the rate cuts. Listen.
It was CPI data in the United States, but because of the government shutdown, there was no data. But among the alternative data sets that Fed Chair Powell said he's looking at is one from State Street called State Street Price Stats. It scrapes millions of retail prices off the web and calculates a change. It has crept up slowly since the president put tariffs in place, gaining nearly a full percentage point since May and underscoring the caution of some Fed officials about cutting interest rates. The good news is it's been stable for about 2 months, but it doesn't measure services, which is an area of prime concern for the Fed. The data series tracks the BLS headline CPI number pretty closely, though it has run a little cooler than both since the pandemic. And Atlanta Fed President Raphael Bostic said he opposed a December rate cut in part because of survey data from businesses gathered by the Atlanta Fed showing they intend to boost prices. Bostic, who is not a voter, announced his retirement in February, said he also saw inflation spreading to core services. CNBC now counts about half of the voting members at the Fed as either outright against or cautious about a December rate cut. Boston Fed President Susan Collins joins Kansas City Fed President Jeff Smith, who is likely against a December cut, having dissented at the last meeting. Presidents Goolsbee and Musalem and Governors Jefferson and Cook have all suggested going slowly or being cautious about cutting rates. Meanwhile, Governors Myron, Bowman, and Waller, they all are presumed to favor a cut, perhaps along with New York Fed President John Williams, though he's less certain. Fed Chair Powell is also an unknown. Before Collins spoke, markets put a 64% probability on a December cut, but that has now fallen to around a coin toss, or 50%. There's still a 69% probability of a rate cut by January. It will likely take clear data on a weakening job market or stable or declining inflation to convince the hawks to cut in December, or an equally clear sign that inflation is headed to target.
As the longest shutdown in the U.S. history came to an end yesterday, the federal agencies have reopened and the employees have returned to their jobs in Washington. Take a look at this report.
Federal workers returned to their jobs in Washington, D.C. on Thursday after the longest government shutdown in U.S. history. The shutdown forced more than 1 million workers to go unpaid for more than a month and cut food aid to Americans in need. It also disrupted air traffic. But on Thursday, travelers at Reagan National Airport were cautiously optimistic.
Today it's a 45-minute delay, but that's nothing compared to what a lot of people have been through. But we've had no problems.
Just making sure that my flights leave, depart, and lands on time. I don't get routed somewhere else that I don't want to go.
We were lucky that we hadn't been affected. So far, so good.
The Smithsonian said some museums along the National Mall would reopen by Friday. And the Agriculture Department said states would get full funding for the SNAP food program within 24 hours. But the deep political divisions that caused the shutdown remain. The stopgap funding passed by Congress does little to stop President Donald Trump from pulling back spending and does not address the health care subsidies that Democrats had wanted to extend before reopening the government. The president is still on track to cut the 2.2 million strong civil service by 300,000 workers by the end of the year. And the deal only pauses Trump's broader effort to downsize the federal government until the end of January, meaning another shutdown could come early next year.
And with that, we take your leave on this edition of Business Lunch. The Nifty continues to meander in the range that it has been meandering all through and through. We'll see you next week on Monday, but don't go anywhere. There is a lot of action coming up in the final 2 hours of this trading session, starting with Midcap Radar on the other side.
Good afternoon. Welcome to Mid Cap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. Today with me is Ekta Batra. Hey Ekta, good afternoon. A Friday afternoon, but the Nifty very volatile. We're 60 points off from the highs, but 60 points off from the lows as well. At the 25,811 mark, Mid Cap's absolutely flat, and Bank Nifty is also in the red right now.
Hi, Sonal. Yes, absolutely. So it's turning out to be a day of a little bit of trepidation at this point in time. But on a week-to-date basis, at least, the Nifty is up around 1%. But let's take you through the top stories we're tracking this afternoon. Uncertainty over the US Fed's next move, even as NDA nears an electoral win in Bihar, keeps stocks skittish. Consumer durables and utilities notch some gains, while IT and realty drag.
Akim's drugs and pharma slides almost 4% in trade after a subdued set of quarter-two earnings. EBITDA declines 22% on a YY basis and margin contracts from 12.6% to 9.3%.
KRBL jumps 10% after the company's net profit jumps almost 70% year-on-year and EBITDA margins expand over 450 basis points. The company posts a solid 74% jump in its export revenue despite tariff headwinds.
Jubilant FoodWorks is among the top F&O gainers today after a stellar quarter-two, outperforming its peers. Revenue and profits jumped during the quarter while finance costs declined. HSBC upgrades the stock to buy with a target price of 660 rupees a share.
Pine Labs makes a good debut on the exchanges, listing at 242 against its issue price of 221. The stock extends gains, surging up to 28% intraday.
All right, those are the top headlines that we are tracking. Some stocks on our radar as well. For now, the Nifty down 68 points. We have the pharma index, which is outperforming as we speak. The small cap index doing well as well, but the mid caps under pressure and the advanced decline ratio in the favor of declines as we speak. What is not doing so well? The auto index, lower in trade, banks also putting some pressure, but it continues to be a very volatile day. But as you pointed out, Ekta, week to date, it has been decent for the Nifty.
Yes, absolutely. Week to date, the Nifty has given gains of around 1%. The mid caps also haven't done too badly on a week to date basis. But let's now go across to Hormuz in our mid cap movers segment. He's tracking all of the stocks which are moving around this afternoon. Hormuz, over to you.
Final day of the week, and more importantly, the final day of this quarter's earnings season. So we'll take off with some of the earnings reactions that are taking place. Firstly, on the positive side, because they are the ones that are grabbing the headlines. And look at Muthoot Finance. Still, you can say it's off the highs of the day, but still up 9.5% at a record high. Jubilant Foods is doing well, 7% higher. Bharat Dynamics as well, some positive brokerage commentary coming in after the results, 6% higher there as well. Not doing so well on the earnings front. Sonata Software is one of them, was down around 5% earlier in the day. Drugs and Sudarshan Chemicals too, building on to those losses. Stocks that are been making headlines at Transformers and Rectifiers, some big relief coming in from the World Bank today. The stock is up at 10% in an upper circuit. Aether Industries reported results yesterday, but is building onto those gains, 8% higher in today's session. And Paras Defense as well. Earnings came out yesterday, is building onto those gains, 7% higher in today's session as well. On the volumes front, Seshasthai Paper is doing well for itself, among the top volume-led movers, up only 3%, but among the top gainers, Dollar Industries is up 6%, and Man Industries too, 13% higher today on very strong volumes. And lastly, stocks that are at a 52-week high in today's session. DCB Bank continues to move from strength to strength, 3% higher here. And in line with that, another smaller lender, City Union Bank too, at a 52-week high today. And along with Cupid at the highest point of the day, 8% higher on the stock, a 52-week high here as well.
All right, take that point. Thank you so much for joining us with that list, Hormuz. It's a good time now to welcome Saumil Mehta of Mirae Asset Sharekhan for a technical check on the markets. Saumil, good afternoon. Thank you so much for joining in. A volatile day so far. Do you think this is something which could continue and could intensify in the last 1 hour of trade?
Hey, hi, good afternoon to everyone. Markets has been in a good momentum on the upside. So short term, medium term definitely remains positive. Nifty has a very crucial support around 25,800, 25,700, which is very close to 200 daily moving average, a 20 daily moving average, and a very important swing low. So these are very important crucial levels, and I'm not expecting markets to go below 25,700. The targets on the upside would be all-time highs, that is 26,250, 26,300 levels. So this is what I'm aiming for. But in the medium term outlook, I think 26,800, 26,900 is on the cards, definitely. For Bank Nifty, again, same thing. I'll be expecting buy on decline strategy here. It has been outperforming for a little while, and I'll be expecting this outperformance to continue. But now the private banks like Axis Bank, ICICI Bank should start participating as well. So bullish on Bank Nifty, buy on decline should be the strategy.
Okay, bullish on Bank Nifty and buy on decline should be your strategy. But Somal, specific stocks, do you think that would be a strategy to play in today's trading session and maybe even going into next week?
Absolutely. Pharma looks good. As I said, private banks look good. So I have Axis Bank here on my list. Axis Bank is definitely broken out of a flag pattern, and I'll be expecting a target of at least around 1300, 1350 levels for Axis Bank. Stop loss is very small. Risk reward ratio is great here. So 1215 would be my stop loss here. And the next one is from the Pharma pack, Glenmark Pharma. It has been correcting for a little while now, but I think now it has a very crucial support around 1900, 1850 levels, and this stock should hold on to these levels. Target for this stock would be 2050 in the short term, and stop loss would be 1880.
Interestingly, it's holding up ahead of its numbers, which are due today. So that stock is, in focus on account of that. And Natco, in fact, which came out with its numbers just a couple of minutes ago, that stock is lower post its numbers. But Somal, just wondering your, thoughts on Concord Biotech. If you look at that counter, it's come out with its numbers yesterday. Stock is up around 2% today.
In the very short term or even in the medium term outlook, it has a downtrend. Definitely weekly, monthly, low top, low bottom formation, struggling to go above the 20 and 40 daily moving average. But today is it has reversed from a very crucial level. It has taken support around 1370, 1380 levels for multiple times on the weekly charts, which is a good sign here. So I'll be expecting a target of around 1680. I'll be bullish on this in the very short term, not in the medium term outlook. Target would be 1680 and stop loss would be very strict here. That will be 1385.
All right, take that point. Thank you so much, Somal, for joining in today with those technical bets. With that, we'll do one thing. We'll slip into a short break. Management of Capacity Infra Projects will join in next to discuss their Q2 numbers.
Welcome back. Well, for the markets, it's turning out to be a little bit of a lower session as we speak for the Nifty. So we're down around 110 points currently for the Nifty, down around 0.4%. And there is a little bit of profit booking which is seeped into the key indices such as the mid-cap index, which is down around 0.2%. But really taking it on the chin now is the Bank Nifty, which is down around 0.3%. Stocks such as Infosys are now showing cuts, aggravated cuts of around 3% at this point in time. But let's talk about one particular stock, Capacity Infra Projects, which reported their Q2 numbers. Revenue was up nearly 25%, while the margins came under pressure. The profit after tax grew around 10%. We have Subir Malhotra, who is the whole-time director at Capacity Infra Projects, joining in to discuss the quarter gone by now. Mr. Malhotra, thank you very much for taking the time out. Just wanted to start by asking you about your full year guidance, which was around 20% earlier. For first half, you've done around 13%. How much are you expecting in terms of growth in the second half? Enough to get to that 20% mark, or do you think you have to scale back your guidance?
So thank you for having me on the show once again. And so first things first, this is amongst one of the best Q2s that the company has ever had. Q2s are always a little tough given our kind of business when, you have rains affecting the operations in a major way, and especially with the extended monsoons in this year. But given that, we have closed this quarter with 650 crores. This is up by almost, 18% on an EBITDA part. And we are standardly in the same margin of around about, 7.5, 8.5 for PAT also. Coming back to your question of do we want to change a guidance? No, not at all. We are very positive on how Q3 and Q4 pans out. These are always the best quarters for our industry.
Okay, so you stick to your growth guidance of 20%.
Oh, yes,
the second half will be better than the first half.
Oh, yes.
What about your order inflow? Year to date, it is at 3,464 crore rupees. Your full year guidance was 3,500 crore rupees. Is it safe to say you will be able to exceed it by a wide margin? And if yes, what is the guidance right now? What are the projects you are L1 in currently?
So, yes, we are already at 3,400, a little over 3,400 crores for the order booking this year. We had a 3,500 guidance, and we've just become L1 in one of NIIT Mumbai's fast track project, which we have just got around maybe a week or 10 days ago. Still have to sign the final work order, though we've got the letter of intent already. So exceeding the order book by a wide margin is definitely on the cards. I won't really like to comment on how much we will exceed it by, but it's quite obvious that we will exceed it by a wide margin.
Okay. Just give us a sense in terms of what the order inflow is looking like for you all in terms of the second half. Sonal did mention how much you are L1 in at this point, but if you could just give us, more qualitative idea in terms of where you are seeing orders coming from in terms of the inflows. What is the competition like? Is it more than what you probably saw same time last year?
So let me answer the question this way. First things are that quarters 2 and 3, as I said, are the prime quarters as far as our operations are concerned. And existing jobs from their present revenues are really going to boost revenues in the quarter 2 and 3, taking it back to the whole yearly guidance as far as the turnover is concerned. Yes, we have a lot of orders as far as real estate is coming in from Delhi. We have humongous amount of order booking which will happen from the government orders, especially with the Central Vista projects which are coming up now. And each of those orders are now like 3,000 crore plus orders. There are humongous amount of opportunities which real estate is and Maharashtra government is itself presenting to us in Mumbai and around about Maharashtra.
Okay. Mr. Malhotra, since you are talking about a lot of orders which would come by, you're L1 in a couple of them as well. What is the balance sheet situation currently? What is the debt, the cost of debt? What is it right now? Will you be able to bring it down further? You did see some few rating upgrades that came by. And what is the cash situation, receivables, especially from the government organizations?
So, multiple questions, so I'll divide them up into multiple answers. So, question number 1, that as far as the balance sheet is concerned, we are where we are with our EBITDA, which was fantastically placed in this quarter. I've already told you the PAT numbers were great. We have also said that as far as an yearly guidance is concerned, we are sticking to 20%. And as far as debt is concerned, we are happy to come back to say that we have reduced gross debt in this year. We had, I think, a 420 crore debt, and we are now 407, something in that region. But we've drastically reduced debt, and we intend to reduce debt by a gross of almost 10% in this year itself. Our net debt to equity, for which I have always been, telling the markets that capacity is very touchy about, is not more than 0.1, I think, at the moment. It's 0.11 or 0.1 at the moment. So yes, we are very positively placed as far as debt is concerned, and as far as the balance sheet is also concerned.
What about receivables? Are you getting that on time, especially from the government sector?
14, 15 days. Gross receivables have come down to 14, 15 days. Debtor cycle has come down by almost 21 days in the last year. So as things move in the manner that our numbers are showing, all these things will take a turn, or are taking a turn, only for the better.
Okay. Just quickly, you mentioned that Q2, this particular Q2 has been one of the best Q2s that you've ever had.
Yes.
Is that a sustainable trend going forward?
As far as we see operations coming up in the next 2 quarters, undoubtedly, yes.
Okay.
Okay, all right, Mr. Malhotra. Thank you so much for joining in today and giving us all the details on the projects going forward and the order wins as well. With that, we'll slip into a short break. But before that, a quick programming note for our viewers. You don't want to miss this at all. Meet the new team at CNBC TV 18 live at 3:30 p.m. today. Watch as the new anchors make their debut.
Welcome back. Well, the numbers are on your screen. That's basically what we are getting in terms of trends right now. The NDA has crossed that 201 mark, or rather the 200 mark at this point in time. So comfortably crossing that majority mark. And remember that the total was around 243 assembly seats. And it seems as though there is a comfortable lead which has been taken at this point in time. Early trends now, or rather the trends are indicating that the Nitish-led NDA has comfortably passed that 200 mark in terms of total seats.
It would be the fifth consecutive term for Nitish Kumar if this actually becomes the final number, which seems like it would be the case.
Seems as though, but as of now for the markets, we're still a little lower at this point in time. So let's see whether there's any kind of sentiment rub-off. But the street was pretty much anticipating this outcome, you know. So anyway, it is projected for a big win in Bihar at this point in time. Remember, 243 total seats, and they've crossed that 200 mark at this point. But Sonal, you're looking at a couple of stocks.
Oh yes, I'm looking at Aether Industries. That stock is on our radar, up 10%. Now do remember, it reported numbers yesterday during market hours. The revenues, they grew by 38% on a YOY basis to come in at 275 crore rupees. EBITDA up 64%. Margins expanded 500 basis points to come in at 32%. And profits up 55% as well. After that, they had the conference call post market hours, and that is what the street seems to like, because they indicated that EBITDA margins will be between the 29 to 30% mark. They expect to grow that 25% mark going forward as well. And this is coming in after a weak phase that the industry has gone through as well. Second half will be better than the first half, and their 60 to 70% of sales will come in from CRAMS. Now remember, CRAMS is a high margin business for the company. The CM business as well will be doing well for them in the next 2 years. They have 55 ongoing projects in the pipeline from which they expect revenue recognition to come through very quickly. And their working capital days, that has reduced to 149 versus 194 days that they saw in FY25. So the P&L working well, and also the balance sheet. And that is something that the street seems to like very well. 8% higher on that stock as we speak.
Okay, all right. So that's on Aether Industries. That stock up around 8% at this point in time. So more details will be flowing in with regards to the Bihar elections. But as of now, it seems as though the NDA is projected for a big win in Bihar, crossing that 200-seat mark out of the total seats of around 243. But that's all the time that we have on Mid-Cap Radar. Your stocks once we're back. Stay tuned.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. And obviously, today is the Bihar election verdict day that is coming in. And as of now, in terms of the seats that you're seeing for the NDA, that is crossed that 200 mark. Now at 201 is for NDA, 37 for RJD, and others is 5. So clearly, seems like that majority side so far leading, coming in there from the NDA side, and that is something that we'll be watching out for through the day as well. But yes, as of now, NDA 201 out of the 243 seats. Clearly, we're seeing that majority coming in there. But final results is what we'll keep an eye out on. Now, let's keep it going with the markets then. What's happened on that front is interesting to watch out for as well. As of now, the Nifty is moved towards the day's lowest point, 25,760, around that mark. So almost near the day's lowest point is what the Nifty is trading at, down more than 100 points in today's trading session. So at 12 o'clock, when you looked at it, it was down almost 50 points, not much. But then we've again seen a fall coming in, and look at the Nifty right now. Today's lowest point, like I mentioned, for the Nifty 50. Broader end of the market, I want to look at that, right? Because at one point of time, the Nifty small cap was managing to hold on to green, but that has also given up gains. Look at the mid cap, that has also given up gains. Small cap still managing to hold on to some bit of a gain that is there, though it was holding on to very strong gains. But from the day's highest point, we're seeing that the market has come off. So that's market setup. That's what we're watching out for. Last trading day in this week. But yes, a lot to watch out for in the last couple of hours of trading session as well. As of now, Nifty near the day's lowest point. But let's keep it going with those stock-related queries. And for that, we have our independent market expert, Shaina Mukaddam, joining in with us, as well as Aditya Agarwala, Head of Research Investment at Invest for Edu, to answer all those stock-related doubts. Shaina, as well as Aditya, good afternoon, and thank you so much for joining us on the show, as always. Let's get started with the first query for today. We have this coming from Mithun Das, who's writing to us from Chennai. He's holding 100 shares of Balrampur Chini. Price is 461 rupees per share, is what they have bought the stock at. Currently around that price is what the stock is trading at. Wants to know for the short term, what is the outlook on this one? Shaina, afternoon, and what are you keeping an eye out on in terms of Balrampur Chini?
Well, I think the numbers were quite decent actually, with the reported for Q2. And I think even the government policies have started turning positive for the overall sugar sector in the near term. If you see, they have started to allow exports much earlier than what they had done in the last season. Monsoons were good. Also, I believe, see, while ethanol prices have not increased over the last 2 years, there is a talk that there may be some review on ethanol pricing, which could be a positive both sentiment-wise as well as in terms of increased profitability for Balrampur Chini. So I think at current levels, one can hold.
Okay, at current levels, one can hold. Aditya, good afternoon. What's your view on Balrampur Chini? They want to hold it for a short term only. Do you think that they will see a good run-up in the short-term time period?
Good afternoon, Vinny. Thanks for having me on the show. I think so, yes. One should clearly hold on to Balrampur Chini, because the correction, we've already seen a correction in the stock from the peak of 640 kind of a level. After that, stock has formed a double bottom kind of a formation. From there, it's seeing a good kind of a buying as well. So the technical indicators are also suggesting that a short covering rally in the stock is very much on card. So for a target of 500, I would actually go ahead and continue to hold on to the stock, maybe place a stop loss somewhere around 430, 420, which is his buying price as well, and continue to hold on to the stock.
Continue to hold on to the stock. That's the view on the fundamentals and the technical front, but keep an eye out on that stop loss level as there. Okay, so that is something that you have to watch out for. Let's move on to the next query. We have Raghuram, who's writing to us from Hyderabad. He's holding 4,500 shares of Vinati Organics. The price is 1,927 rupees. They're making a loss on this one. And they're holding one more stock that they're talking about is Gujarat Gas, 5,000 shares there at a price of 490 rupees per share. They're making a loss on this one as well. Shaina, both these companies, whether you talk about Vinati Organics or Gujarat Gas, what's the view? Should they continue to hold or sell and maybe switch to some other stock?
I would suggest that it is better to switch from both the stocks, because, you know, the numbers that we saw in the quarter were not encouraging for either of the two. Vinati Organics, you know, while they have increased the capacity for their polymer chemicals, which has just come on stream in August. it is obvious that there is pressure on the overall margins, and they do export to the US market also. While the company does say that it is exempt from the duties, but all these issues actually is putting a pressure on the overall performance. Valuation is also not cheap, so I would say this underperformance can continue on for some more time, and the same goes with Gujarat Gas. After good Q1 numbers, again we've seen Q2 actually not a very encouraging performance. Here, while volumes were okay for this quarter, I believe there is a pressure both in terms of average realizations. They are trying to increase their CNG outlets, but all these things I think are going to take time. And in my view, over the medium term, you're not going to see too much upside in either of the two stocks. So I would say it's a switch for both.
Okay. Switch from both the stocks, that's the word there. Aditya, on the technicals, what's your view as well? Would you suggest a switch as well? Given Vinati's not even done anything in the last 1 year, right? It's negative returns. Even Gujarat Gas, specifically if you look at it since July, we've seen a bit of a downfall that has started for Gujarat Gas as well. So on the technical front, what's your view?
Keeping it short, Vinny, definitely one should look at switching, especially Vinity and Gujarat Gas. Both look, nothing is happening there. Gujarat Gas is a little on the weaker side. Vinity is absolutely flat. So I would recommend actually you can switch from Vinity, and in the same space can look at Navin Fluorine, which is looking extremely bullish after the numbers. Stock has witnessed a massive upsurge as well. And this consolidation that we're witnessing in the stock for past few trading sessions is an opportunity to go long and maybe have a staggered approach as well in buying the stock. Start buying at current levels and all the way down till 5,800, 5,600. On the upside, stock can test levels of 6,600 to about 7,000. So Navin Fluorine is something that I would recommend switching from Vinity. And Gujarat Gas too doesn't look all that great to me on the chart setup. And this entire space is also not doing much for itself right now. Instead of you can look at anything from the energy space, you can look at something like an Tata Power, or maybe you can look at something in the OMC space like a BPCL or an HPCL.
Okay, a lot of names there as well. Switch from both the Vinity as well as Gujarat Gas. Navin Fluorine instead of Vinity is what you could look at, and instead of Gujarat Gas, a couple of other names that Aditya has mentioned as well. So keep an eye on that. Let's pull up the charts for Red Tape Limited. They reported their numbers. We're seeing a bit of a spike up that's come in the stock post. They reported the numbers. 10% uptick in terms of profits. 27 crores approximately is what their profits are for Q2. 18% growth in terms of revenue on a year-on-year basis as well. So yes, as of now, when you look at the stock, seen a spike up and holding on to gains of almost 1%. Keep it going with those next query that we have been sent today, and that is from Kadam, who's writing to us from Noida. He's holding 700 shares of SH Kelkar. Price is 225 rupees per share. Should they continue to hold or look to sell this one? Shaina, your view for SH Kelkar? It's normally, we've not received much queries on this one. This is quite different. What's your view?
Yeah, it's a very boring stock, both in terms of the way it's performed in their revenues, in their profits. Actually, if you see 5 years, where the revenues have gone up slightly steadily, the profits have actually, I think, almost halved over a 5-year period. So there is nothing much happening. It's a small cap. But if you look at the balance sheet, if you look at the promoter quality, these are positives. If you see their clients, they've got very good clients in their fragrances. It's in the fragrance and food flavoring business. It's a leader. So those are the positives, but nothing much has happened on the front of the stock price, the performance in terms of fundamentals. So I wouldn't really be buying this small cap just based on fundamentals, expecting my portfolio to do very well over the next 2 to 3 years. So I would say it's a switch.
Switch from this one and switch to where? Any suggestions there?
Well, you can look at some of the consumer durables. Actually, they are doing pretty well, so you can take your call, but I would say it's a switch from the small cap.
Okay, switch from this small cap company. SH Kelkar clearly not done anything. Aditya, would you also call it boring or bleeding maybe, because given that the rating... Yeah, it's down almost 40% in the last 1 year, right? And the viewers' buy price is 225. So what should they do?
In fact, this week's stock is down 22%. That's a fresh breakdown from a trendline support as well on good volumes. My sense is stock can slide all the way down to 160, 155 odd levels. And if it actually breaks 155 odd levels, can slide all the way down to 130. I don't see any immediate upside in the stock. Doesn't make sense to continue to hold on to the stock. it's a prudent call to switch from SH Kelkar and maybe look at some of the large cap FMCG plays or maybe something from the consumer space will be actually a better play as compared to an SH Kelkar.
Okay, keeping an eye out on these other names, but SH Kelkar, that's a switch surely coming in there. Next query for today coming from Sanjay, who's writing to us from Kerala, holding 500 shares of Tata Steel, prices 102 rupees per share, making a profit on this one. And he's been holding the share for the last 2 years. Now he wants to know, should he continue to hold or look to sell this one? Shaina, we had the results also that came in for Tata Steel this week. Good results that came in there. Overall, EBITDA per ton was something that beat the estimates at CNBC TV 18 poll as well as the analyst poll as well. Overall, your thoughts on Tata Steel now from here on?
Yeah, so the numbers were good. Having said that, I think the investors also made good amount of money from his buy price, which was pretty attractive. As of now, if I was to recommend, I would say take part profits and switch to some non-ferrous stocks, maybe even copper, some stock which is in copper, because steel prices have actually started to come off. While the government has protected the domestic industry with a duty, at the same time, I think even coking coal prices are going up. So over the next couple of quarters, I think numbers will be subdued over the next 1 to 2 quarters. If you're a shorter term investor or medium term investor, I would say that there is more money to be made for the next 2 quarters in non-ferrous. But if you're a long-term investor and you've gotten at a good price and you want to remain invested, then I think Tata Steel is fine. They are bringing down their debt, overall debt, and I do think they will do better over the longer term in terms of better margins as steel prices stabilize.
And Aditya, your view for Tata Steel, should the viewer hold or sell?
I think continue to hold because he's been already holding for some time now, been a year or so. And since his buying price is so attractive, I don't see stock coming all the way down to those levels. There is an intermediate correction that we are witnessing in the stock for past couple of trading sessions, but I think so that's a very short-term phenomena. Over a longer period of time, maybe 6 months to about 1 year's time frame, stock should see levels of 200. So I would recommend continue to hold because the entire metal pack is looking quite interesting and could be the sector to watch out for at least the first half of 2026. So I wouldn't look at booking or profits, rather stay put here and look for a target of 200 from medium to longer term.
Okay. That's a view coming in there on Tata Steel. Maybe can look to hold from the medium-term point of view. But, looking at the projections that are coming in from the Bihar election, let's just pull that up because NDA is projected for that big win in Bihar. 201 seats for the NDA, 37 for RJD. Out of the total 243 seats, 201 seems like for the NDA. So that is what we are keeping an eye out on in terms of this as well. Important updates for us on the domestic front will be coming in. But on that note, we're going to actually sip into a very short break. But here's a quick programming note for our viewers. You don't want to miss this one because meet the new team at CNBC TV 18 live at 3:30 p.m. today. Watch as our new anchors make their debut.
partner.
Welcome back to your stocks. And as of now, NDA in terms of that 201 seats that is there for a thumping victory is what we're keeping an eye out on. But in that, BJP is around 90 and JDU is around 80 seats. And obviously, you have the RJD numbers there, but clearly seems like that win is coming in from the NDA, that's the National Democratic Alliance, where we have 201 seats. And I mentioned the breakup for you all as well. But yes, keeping an eye out on more numbers that will come in there. But on that note, let's keep it going with the stock-related queries. And we still have Shaina Mukaddam as well as Aditya Agarwala to answer all of that. Let's move on to the next one. This is a newly listed kid that has come on the block, that is Transrail Lighting. And Shaina, Rajesh is writing to us from New Delhi. He's holding 200 shares of Transrail Lighting. Price is 743 rupees per share. Medium-term outlook for the stock. What's your view?
This is one IPO that came out about a year back. I think it came out in December. Yeah, slightly lesser than a year, December 24. So this is one IPO that has remained above its issue price largely. And but actually, unfortunately, the investors bought it at a high. So the issue now is whether he is going to recover his buy price. In my view, it's going to take some time. I doubt in the next 6 months he is going to recover his buy price. While the numbers have been good, they have reported strong numbers for Q2. And also the order book position is pretty good. They're talking of 7,000 crores, which is equivalent to what they should do in FY26. So that is comfortable. And they are in a good segment. They are in power transmission and distribution EPC. So everything is fine, except that in terms of valuation, it is not very cheap. And I think the investor will have to wait for maybe a year or so to actually make money on his investment.
Okay. Aditya, your view, I know there's not enough in terms of charts, just some 10, 11 odd months that is there. But anything that you would keep an eye out on here?
I think the correction is done with Vinny. It's a good time to continue to hold on to the stock. Almost formed a double bottom kind of a scenario around 600 odd levels. And my sense is in the coming time, stock is going to see higher levels from here. So maybe a 750 kind of a level is something which is possible on the stock, maybe in 6 months time frame. So continue to hold is what I would suggest. Decent stock as a disclosure, this could be in our client's portfolio as well in the consumption basket. So one of the stocks that we continue to like as a house as well.
Okay, let's move on then to the next query. We have Deepak Dave, who's writing to us from Gujarat. He's holding 500 shares of Afcon Infra and price is 480 rupees per share. They're making a loss on this one right now. Long-term investor. So can he look to add more shares or sell? That's his query. Shaina?
No, not add. I would say that he should sell, book profits, loss of profits or whatever that is from his buying price. I think he's making a loss. He must have gotten at the IPO because 480 was the IPO price. And basically, what I don't like about it is that the promoter pledges are very high for the stock. And so this is going to keep the overall pressure on, the stock price. They have got a very strong order book, about 35,000 crores. But at the same time, their performance has been, one quarter was good, second quarter is not that good. And for an EPC contractor, this is going to be the issue. So I would say it is better to switch, exit.
Okay. Exit is what you would say. Better to exit this one. Okay, Aditya, your view for this one? What is it that the viewers should do for Afcons? Should they add or sell?
I would also recommend a sell because charts don't look all that great, constantly making lower lows, lower highs. And again, one of the recently listed stocks, though the data is a little lesser on, but I feel stock is headed lower, at least to levels of 380 to about 360 is what I see on the stock. So it's a good idea to actually exit from the stock.
Okay, good idea to exit from the stock. That's the view there on the fundamentals and the technicals. Let's move on to the next query. We have Agnello Pereira, who's writing to us from Goa. He's holding 150 shares of IndusInd Bank. This is at a price of 1,579 rupees, holding it since 2017. So clearly a long-term investor. Wants to know what should he be doing now with IndusInd Bank. Hold, book his losses, switch to another banking stock and another stock. Shaina?
I would say that, he can hold for a little bit more time because this, the stock seems to have had all the bad news factored into the price. If you look at price to book, it is just about 1 time, which is pretty cheap for the size of IndusInd. If you looked at the Q2 numbers, while there was of course losses and huge provision write-off, etc., which impacted their overall profitability, on the asset quality there has been some improvement. Net performing assets were slightly lower, and also if you saw the provision coverage has improved. It's about 72%. So I think all these factors put together may see a bounce in the stock, and then I would suggest you should switch to a stronger bank, something like one large bank like an ICICI Bank, HDFC Bank, which actually can remain in your portfolio for the long term.
Okay. And Aditya, your view quickly on IndusInd?
I would concur with China and would recommend continue to hold for a target of at least 1200 on the upside.
Okay, continue to hold with the target of at least 1200 on the upside that one could do for IndusInd banks. Keep an eye on that. But China as well as Aditya, thank you so much for joining us on the show. As always, hope you'll have a great weekend. And thank you viewers for tuning in. But a quick look at the Bihar election numbers that have come in. 201 for the NDA, 37 for RJD as well. In that, BJP is 90 seats, JDU is 80, and then we have that is the LJP, that is Lok Janshakti Party, that is at around 23 as well. So we'll be keeping an eye out on those numbers there. But right now, clearly seems like majority coming in for the NDA side, 201 over there. But yes, we'll keep an eye out and keep you updated with that. But with that, we're going to wind down this edition of Your Stocks. Thank you so much for tuning in. Up next, your closing bell to take you to the last hour of trade. So thanks for that.
Market headlines to understand the reasons for the day's movers and shakers and Get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
All of the indices tracking the overnight losses on Wall Street are trading lower.
Nifty Bank support 20-day, which is 57,918.
NDA has gains in about 16 seats. India Alliance 14.
25,778, about a 0.4% lower. 10% pop on Pine Labs, 243 is where this one is now at.
We see a lot of demand for gold loan in these days.
For now, it's been quite volatile. Yes, right now we're seeing that massive recovery from the lows. The Nifty is absolutely flat, but there's some negative bias to that.
For the food prices, as such, this year the momentum remains very slow for a lot of food items.
They're well past the halfway mark of 122. 197 seats is where the NDA is leading.
The Nifty, very volatile. We're 60 points off from the highs, but 60 points off from the lows as well, at the 25,811 mark.
Okay, well, that's the day so far. Markets are tempered in their enthusiasm. It's not as if things are have gone wrong. Actually, they've gone, from a market standpoint, spectacularly right. I mean, there are electoral wins and then there are electoral wins. This is, pretty much a definition of a sweep. 243 seats, NDA poised to gain over 200 of those 243 seats. So this is absolutely, actually far better than any exit poll and anything which was put out there before the election result really came through. Markets are doing their own thing. Global cues are a little weak. 500-point rally, 600-point rally coming into today. So I think all of that is weighing as well. This is Closing Bell. We're coming to you live from the CNBC TV 18 Muthoot Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Reema here. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. Up ki bar, 200 par looks like, going by the, the numbers that we've got so far. But market's still sulking, right? We started off the week on a grand note. But over the last 2 days, you've seen the volatility kick in and markets now sub 25,800.
So I think it's just about giving up some of the gains that you referred to earlier, because from 24,300 thereabouts, we've rallied all the way up to 26,000, from 25,300 to 26,000. And then let's not forget the global context today, because we had that, AI shake-up in the US. You've got a lot of the Asian markets that have closed with deep cuts, 1.5 to 2% lower. So in that context, we're getting into the weekend, maybe some profit taking. That's pretty much about it. Nigel?
Well, that's right. Profit taking, and I think today belongs to the BJP as well as Nitish Kumar. What a super duper win out there. You're wondering whether or not the polls were correct. Well, in fact, the victory margin is even higher than that. So good on them. But the markets for the time being ignoring that. I guess that phone call from Mr. Trump is going to be the key trigger from here on. So let's hope that that's coming sooner rather than later.
Absolutely, and I think markets are all about what next, right, Nigel? And I think, as you said, the next one, of course, is going to be when that trade thing gets resolved with the US. Bihar is done, but still, you've got to just an absolute devastating blow to the opposition, and if I can use that same devastating sweep in a positive way for the NDA. So. That's what we have. We've got just the, up and down on the Nifty in terms of what's pushing things up and down. So actually both the financials, Axis adding the most, ICICI taking out the most, SBI, Reliance. Reliance has been having a fairly decent run lately. And Infosys, Tata Steel, etc. on the other side. Well, I think let's just quickly run you through what you should be watching out for as we go into the last hour. So 100-point cut, nothing very large, but we are around 800, 25,773 at this point. Metals, IT sector are leading the losses. Banks also trade with some cuts. Digital payment transaction services provider Pine Labs has seen a very strong listing. It was up about almost 18%, has given up some of those gains, but it's still strong. Grow is still going strong. So IPOs this week, pretty good. Strong results from Bharat Dynamics. Well, and of course, the defense index is the top moving index, 1% nearly on the Nifty defense index today. And Muthoot Finance is perhaps the stock of the day. Large, very, very large gold financier, number one, top one, and another 9%. It's a big breakout move. The companies raised their guidance. We have the management and we'll play out some sound bites as we go along. How should you position yourself is the question. Mitesh is with us with that crucial answer. Mitesh, good afternoon. Your thoughts?
So I think, the morning was pretty good when we kind of opened down and managed to roll down to that 25,750 zone as the support area, bounce back from there, but you come back again. So as long as you're above this 25,750, 730 zone, there's still chance of a recovery. But in case we start closing below that, I'll be slightly worried and then, maybe look at retest of 25,500 or in the bad case scenario, even 25,350, which was the low which we got on 7th of November. 25,320 actually, but yeah, the pivot is around 25,350. So having said that, I think, I'm keeping a close watch. The indicators are with that all choppiness, the decline from 26,100 to about 25,320 and then bounce back and then coming back into the range. They've all started to shrink. So maybe, we might not see much of a damage, but in the worst case scenario, 25,350 on the downside could be tested in case we keep declining. And on the upside also now getting past 26,100 is a challenge. So these are the two levels I'm watching for. If you ask me a view on the index, in the short term, I'm extremely neutral, but eventually I do expect that the markets will get past this volatility and move on the higher side. On the stock side, I have one buy and one sell. On the buying side is Sun Pharma, which I would recommend buying with a stop at 1735.36 and a target of 1780 on the upside. While on the selling side is HDFC AMC, which I would recommend selling with a stop of about 54.25.30 and a target of around 5,300.
Thank you. Mitesh, we'll come back to you. For the week, though, the Nifty is still up 1.2%. Mid-cap index is up a similar amount, 1.25%. The big winners this week include Asian Paints up 11%, Adani Group stocks higher, Adani Enterprises leading with a 7% up move, IT stocks right on top with HCL Tech TCS also clocking in 4-5% kind of gains. Gautam Chorcharia, head of global markets India at UBS, is now joining us here in the studio. Gautam, great to see you. So if you had to tell us 3-4 big takeaways from the conference this time, what would those be?
Hello, everyone. So I think the first thing I would say is we saw after a long time, initial signs of optimism, both select, I would say still select corporates, quite a few financials actually, and also among some global investors. I think the way to put it is, it's not a case that global investors are waiting to jump in or as such, but at least more engaged in terms of looking at bottom-up ideas constructively. So, which we have been seeing a little bit for the last 2-3 months, but in the conference it is very, very clear that they are willing to engage.
Got it. So that's one. Yeah. Anything else that really stood out for you, which marks a change from what was the situation, say, 6 months back?
So sectorally, financials. I think that's where the optimism, again, it's not a full-fledged bullish commentary or anything, but clear optimism on both sides, from the corporates as well as from investors. That's one big takeaway, I would say.
And they're bullish that the jump that we've seen in loan growth, courtesy GST 2.0, the festive season, etc., that will sustain. Yeah. I mean, is there enough from what you heard for you to raise your EPS estimates for any of the banks? So our analyst hasn't raised estimates yet, but the corporates are also, again, they have seen tough few quarters. So it's not that they are jumping in with excitement, okay, we'll have a great uptake. So the classical line is still second half should be better than first half. But beyond the initial headlines, if you probe here and there, then they are seeing early signs. Like some banks are seeing pickup in loan growth, which have historically been more conservative or lower growth. Some of the NBFCs are seeing clear bottoming out of credit cost trends. The NIM trends clearly are bottoming out. So a lot of these, if you add that together, and because as market participants and talking to investors, we to look at these early signs rather than clear signs, then yes, there is incrementally you're more bullish on financials post the conference than you were before.
Absolutely, absolutely, and I think there is room for them to surprise and do well.
So Gautam, great to have you here now, and thanks for keeping the promise. Right, that's what we said on day one. You want to see what you have to say on day 4 or day 3. My question is simply this: when you interact with a lot of the foreign clients and the foreign participants who came in, I guess no one dislikes India. No one's going to say we don't like India. The problem is they like other markets better for one reason or the other: valuations, the AI theme, etc. So how is that conversation shaping up?
So look, the AI part of it is tactical. A lot of investors were playing that investment cycle or trade this year, and obviously India didn't present enough opportunities on that. There are opportunities in rest of Asia, of course the US. But is it a case where investors are comfortable that India will be fine from an AI, anti-AI, etc.? Still a bit early. Okay, so I don't think the investors were necessarily looking or still are looking at India either from a pro or anti-AI trade lens itself.
So why I'm asking this is, by the way, folks, today the Kospi has ended with a 4% drop, right? So a lot of these markets have run up so much. And then you realize they're very prone to shakeouts like this. Someone sneezes in the US, Nvidia, something goes off, and people are very quick to rush to the exit. So can that over positioning or hyper over positioning, can that start reversing? And then therefore you realize, oh, I should be in India as well, because these markets are prone to very, very sharp volatility now.
I've heard that from few investors, that is India an anti-AI trade, and therefore...
Yeah, therefore, de-risk with India.
Yeah. But again, at least my view and experience in the market suggests that that's not how it plays out. If investors lose money in the US or lose money in Kospi, they're losing money. It's not that they are able to rotate away in time and...
So when those markets do well, we anyway don't do well. When they fall, then also it's a problem.
At the margin, India can outperform or doesn't fall as much. Like today is a good day, a good example. But does it mean meaningful flows coming which will drive India up? That's what I mean doesn't happen like that.
Any new sub-themes, new ideas that emerged for you in the conference particularly?
So look, themes, I won't call it new necessarily, but themes which we have been bullish on and got reinforced, and I would say reinforced where our analyst estimates are ahead of the street or they're more bullish, is the broader power renewables part of CapEx, equipment, the entire supply chain or entire ecosystem, where our analyst estimates are significantly ahead of street. That was very clearly reinforced, not just at the conference meeting the companies which attended, but including some of the expert panels or the tours we had around the conference. So that ecosystem, I think, will surprise investors and markets, or not just in the next 2 quarters, but for the next 3 to 5 years. The level of activity in that broader ecosystem is very, very strong. So that was one key surprise, I would say, beyond financials. Otherwise, consumption broadly mixed bag, but not big surprises. Pockets doing very, very well, jewelry, etc., for example, including the outlook. But again, I won't say it's a big negative, a big new surprise as such. Yeah.
All right. Hi, Gautam. Good to see you in the studio. Gautam, I wanted to ask you about the state elections. There was some focus on it, but actually, we are nearly at the level that we were pre the exit poll that came out. So no talk at all about the state election, non-event, or at least it's a sentiment positive. What's your take?
It is sentiment positive for sure, but I think everyone was expecting this outcome, I guess. I don't think there was much anxiety talking to investors that the current government will have a negative outcome and therefore it can impact policy making, etc. So that was not a base expectation anyway. And obviously today, the global regional markets is not helping.
Okay, all right. So the big trigger then is going to be the India-US trade deal, right? I mean, all eyes on that. That's what will bring back the animal spirits.
Absolutely. That remains something which investors are watching very, very closely. So in many of the macro meetings, including with policymakers, that kept coming back, how, when, what. Obviously, no one gave an answer about when exactly. But I think there is a broader hope building up that it's going to be imminent.
Gautam, just to go back to the point you said, one of the key themes that emerged from all of this is renewables and power.
Yeah.
There's also an argument there that whether we could be in a situation of overcapacity, in the medium term, not in the near term maybe, and the fact that the stocks have already had a good run. So can you just expand on that thesis? And I don't know if you had any corporate tracks to that effect. What really came out and what makes you so convinced on renewables?
So look, capacity, if you just look at a linear curve of whatever the corporates have announced, etc., and you build in some demand side and you say overcapacity. But first, why our analyst is bullish and which is reinforced, capacity doesn't come up in a linear curve. There's always misses, delays, etc. Second is the entire value addition for the equipment suppliers. There's value addition happening by backward integration. And that will be much more difficult, much more challenging than simple expansion. And there again, our analysts' work suggests that the street expectations of overcapacity, that's not imminent in the next 2-3 years, but will take possibly longer.
Okay.
And look, demand, how quickly the demand picks up for renewables will also depend on how the transmission capacity, etc., comes up. So 5 years out, who knows? But
Or
it's
at least
not,
in the near term, it seems to have a runway.
Exactly.
Gautam, was there I just always wonder, there's so many meetings, hundreds of meetings, right, between investors and kind of right there in the middle of all of it. Is there an aha moment in a conference? You point out, will say, it'd be nice to get a note saying, well, things we learned at the conference we didn't know before.
We keep looking for that, but in today's environment of all of you around, it's difficult to get those moments.
But it happens, right, sometimes?
Rarely. These days it's much more rare than a few years back.
Because there's so much information which is already out there.
Exactly.
But this kind of reinforces some of the...
If you connect the dots, pick up early signs, like the financials I said in the beginning, that those are clearly early signs.
But think about it, it's a nice product.
It is.
The aha moment of the conference.
But to me, the aha moment is a simple one-line thing. I think the clearly early signs of optimism.
Early signs
Incredible optimism, not just classical second half hope, but clear optimism.
All right, well, we'll leave it there, Gautam. Thanks very much. Lovely speaking and great conference.
Thank you for coming down.
Thank you.
Okay, well, what we're going to do is go across to my colleague Gaurav now. Pine Labs is the one that we're going to talk about. It's made his D Street debut. And Gaurav is here with what the business is about. And of course, more importantly, now that it's listed against not a direct comparable like a Paytm, but where are valuations at? Gaurav, take it away.
Well, as when we look at Pine Labs, we have already seen some kind of valuation. We already saw that the price to sales, when we look at the valuation, and when you look at the listing, it was already at some premium. But even if we look at the peers, like Paytm, although it is not an immediate peer, we saw it was actually in line with them. Now, when we look at the IPO, overall the price band was set at around 210 to 221. It got listed at a higher price and now it is trading around with 17% gains. If you look at the company, they were actually raising money to debt repayment, investment in tech, and at the same time to expand internationally. Now, when you look at the business, although the profit figure, it has just turned profitable. For this quarter, the profit was just at around 4.78 crores. And from here on, company says that when you look at the company's losses, they said that this was because of they were scaling the ecosystem, they were pursuing acquisitions, and at the same time, there were some international expansions that they were taking up. Apart from that, when you look at the revenue stream, company is actually earning revenues from merchants, and at the same time, they also earn from banks. So that is something that the business model they have. So it seems that they have a sound business model. In fact, when we look at valuation, it is in line with the peer right now if you compare it with the Paytm. But other than that, the growth strategy going ahead is a key thing to watch out for, because company is now planning to go global. Now, given that there is some scope for the digital payment system globally, we may see some gains coming up for this company. As of now, we are seeing the investors showing some optimism. The stock is up almost more than 17% after listing.
Thank you very much for that. Just about 15% of the company's revenue right now comes in from the international markets, but that's a segment that they're targeting. And they also have about 1,000 crore of cash on the company's books. But the other one that we're focusing on is Bharat Dynamics. In Focus posts a very strong set of numbers, actually. Upasna joins in with more. Upasna.
Well, it has certainly been a good quarter for the company. It was a beat across the board, except on the margin front, we saw a slight decline. Now, revenue saw an uptick of nearly about 1.1 times versus the street estimates of 27% growth. EBITDA margin saw a downtick of nearly about 180 basis points. This was due to higher material and finance cost, which led to this. Now, net profit saw an uptick of 76%, which was aided by higher other income. Now, when we talk about the order inflow for Q2 for the company stood at 810 crores, which took the order book above 22,000 crores, which is nearly about 5.5 times the TTM sales. Now, company has also announced order win. It has signed a contract worth 2,100 crore with Ministry of Defence for supply of anti-tank missiles for the Indian Army. And this order is supposed to be executed in a span of 3 years is what the company has indicated. Now, Phillip Capital estimates that with this, the company's order book will go above 24,000 crore, which is nearly about 6 times the TTM sales. So all in all, good set of numbers from Bharat Dynamics, and we can certainly see the stock surge in on the back of this.
Okay, well, thanks very much, Upasana, for that. We'll take a break. We are back. The other big conversation today, Sunil Kaul from Goldman Sachs on the other side with why they've upgraded their view on the Indian market after a full 1 year. Okay, welcome back. Sunil Kaul is Global Emerging Market Equity Strategist at Goldman Sachs, and he's now joining us. Sunil, always a pleasure having you with us here on CNBC TV 18. Start by saying congratulations. You, I think, downgraded your view on the India market about, it was, I think, what, October last year? And the markets behaved itself in line, I should say, with what your view was. And now you're upgrading your view. You're saying things are turning, things are changing. And obviously, it's not because markets have run away and you're trying to play catch up. It's not. But you are, in that sense, preempting a turn here. So just 1, 2, 3, 4. What are the top reasons, Sunil, for why you're changing your view now?
Listen, Prashant, always a pleasure to talk to you. I would say, look, I think the reason we downgraded is the same reason we are upgrading right now. I think the key reason we downgraded our view a year or so back was because we were expecting growth to slow down and we were expecting earnings downgrades to come through, which is exactly what happened over the course of the last 12 months. Obviously, all the tariff news flow did not help at the margin and people sort of de-risked from India. But I think the primary reason why India underperformed the emerging market so much over the past year despite, as we have spoken previously, that emerging market has had a great year this year, is because of the earnings slowdown and earnings downgrade cycle. And so I think that the key view we are taking in here is that we think the downgrade cycle has bottomed out. If you look at the earnings integers for MSCI India or Nifty over the last 3 months, they have stabilized. The current reporting season has actually been a tad better than what the street and we were expecting. The season is almost wrapping up. But for MSCI India, we are looking at this quarter about 13% year-on-year earnings growth. The street was expecting 9% earnings growth. So to that extent, it's been a good quarter. We have seen select upgrades in the market in certain sectors. And so the call really here is that we do expect earnings cycle to turn into coming quarters. And a large part of that is also because of the cumulative impact of all the easing both the RBI and the central bank have done over the past year. And some of them, obviously, GST, personal income tax cuts, a host of reforms from RBI, which ease liquidity in the system and allow banks to extend credit. We think, obviously, these things play out with a lag, and we think the lagged impact of all of this easing should start to show up in the numbers. I think that really is the key view there. So upcycle in earnings on the back of growth supportive policy from the government. And at the margin, I think positioning is pretty clean. You got 30 billion selling from the foreigners over the past year, which is the second largest selling in India's history. All the positioning metrics, all the conversations we have had over the past year shows that people have largely de-risked from India. So positioning is clean. Valuations are still a tad higher, but the premium has shrunk quite a bit at current levels in terms of premium for India versus the rest of the Asia or the emerging market pack. India tends to outperform over the next sort of 6 to 12 months on a forward-looking basis. And we did a detailed valuation paper as well, along with the upgrade note, wherein we looked at a variety of different valuation metrics. And the general sense we have is that India can hold on to the current valuations, which are about 23 times, but we think around 21, 22 times should be the fair value for India. So we are not expecting a large de-rating risk on multiples, about 5% in our base case. And so the view really is valuations hold on to current levels more or less, and earnings come through, which is what should drive markets higher. So we are looking for about 14% earnings growth for next year, which is largely in line with whatever return expectations are for Nifty at 29,000 target for the end of next year.
So Sunil, 10% EPS growth for this year and 14% for next year. Is that good enough for the FIs to come back into the Indian markets at scale?
We have, that's a great question. Look, I think we have a similar number for the broader emerging market pack, and maybe slightly better, but that's also because you have a couple of larger tech-heavy markets where, because of the AI strength, numbers are earnings continue to get upgraded. So those markets, Korea, Taiwan in particular, are printing close to 25-30% earnings growth this year, but also next year expected to be strong. So that's kind of upwardly distorting the numbers a little bit. But for the broader markets overall, we do think India stacks up pretty high after some of those markets. And so we have about 12-13% upside for Asian indices and EM indices overall for the next year. And so India at 14% local returns with 1 or 2%, actually 2 to 3% currency gains and a bit of dividend yield. You're looking at 17-18% dollar upside and probably close to 20% total returns for the market, which should be pretty good for the market, and is certainly better for what it has done this year.
All right. Hi, Sunil. Good to see you. And Nigel on this side. What's your view on the mother market, on the US market? Last night, there was some kind of tremors that we saw. Last few days has been a little bit jittery. But to be fair, those markets have seen a beautiful run. The economy has been pretty okay, and the earnings as well have been coming about in the US market. So what's the view, particularly on the AI theme? Do you think that it's getting a little bit into the bubble territory? And, do you expect the US markets to continue to outperform? Or do you expect the emerging markets now to play catch-up?
Look, I think we had another detailed report out just a couple of days back, Nigel, which was looking at our longer-term 10-year expectations for the global markets. And as a house, we have taken a view that the emerging market pack should outperform the U.S. equity markets over the next 10 years. So we have about 6-7%, around 7 to 8% upside, annualized annual return for US equity markets, and close to 11-12% upside for emerging markets. So we are taking call that the emerging markets should outperform over the next decade the US equity markets. Related to your question around AI, I would say, look, I think we still think that fundamentals are strong in the sector. I think the numbers that have come out from a lot of the AI-related companies, obviously we have the NVIDIA earnings next week, but so far the companies related to the sector that have printed numbers have been pretty strong, both in US, but also the spillovers in Asia have been strong in terms of the tech or the AI-related companies there. As a consequence of that, we have actually raised our earnings numbers for some of those markets which are tech-heavy in the EM region. So I would say fundamentals continue to remain very strong. Obviously, there have been some investor concerns around the overinvestment in capex cycle in AI, but we think those concerns are overdone. There is a lot of positioning and length that has been built up in the sector, and I think what we have seen, I guess, overnight in US, but also last week, is some of these AI wobbles wherein people are taking profits heading into the year end. So that's more a question on valuations, but we do see that the underlying demand trends are still very strong, and we still are quite constructive on the tech and the AI sector overall.
Sunil, hi, valuations, and I was exactly coming to this because going through your note. So you've still kept the overweights on the other markets that have really stolen the thunder this year, right? China, Japan, and South Korea. South Korea is up some 70%. Today it was down 4%, but otherwise, what a phenomenal move. And in your note, you say, and I quote, that at 23 times price to earnings, valuations in India are still high, but they are justified by a variety of valuation methodologies which have compressed relative to the Asian region. Explain that to us. How is India suddenly looking more moderate on the valuation front at 14% earnings growth?
Yeah, look, I think, as I said, if you look at the valuation metrics, and in the paper we looked at a variety of them, about 6. Some of them are absolute valuation metrics, some of them are relative valuation metrics. But basically, if you look at the how much valuations Indian market is justified based on the growth differential between India, GDP growth differential between India versus the rest of the pack, how much is justified based on the stronger ROEs India has relative to the rest of the world. Obviously, the two markets that are getting premium valuations across the board is US equities and India, and in both cases they are the markets that have the highest ROEs in the region, and some of that is therefore justified by the stronger profitability on the ROE side as well. We also looked at a variety of other approaches like the DDM approach, yield gap. It sort of takes into consideration where the rate environment is, but also where the medium-term growth expectations are baked into the market. So all put together, as I said, all of those metrics do point to some moderate valuation correction in India, but it's modest, and on a median basis, only 5% de-rating. So the message was, look, I think given the current state of the market, the current fundamentals, and the growth trajectory of India, you should still expect multiples to hold true. Obviously, there is the domestic bid and the support for equity market, which is to do with the market structure. That also helps at the margin. But also to your question about the valuation premium compressing, that has happened in both directions, right? At the peak a year back, India was trading at peak multiples, which was 25 times. So you have come from 25 times to close to 22 and a half right now as of last night. And so there is a bit of compression that has happened on India's side, but also for the broader region, we were trading at 11, 12 times forward, which has gone to like 15 times forward. So the rest of the region has outperformed and rallied, as you noted. Korea is a case in point. And so from both directions, you have seen the premium collapsing somewhere at 90% plus a year back to around 45% now, which is half of the levels at the peak. And as I said, when we look at the forward-looking returns over 3, 6, 12 months from the current level of premium, India tends to moderately outperform. And so we're not making a big deal around the valuations point, but I think, as I said at the upfront, the main key reason for the upgrade is that earnings cycle is turning.
Understood. And thank you for explaining it in such detail. Very quickly, Sunil, before we let you go to start your Friday, so you've upgraded India. What are you most bullish on in this market in terms of just key themes?
Look, I think we continue to like the consumer pack as well as financials. We have a variety of consumption sectors in the overweight pack. We still like autos, a little bit of preference towards the mass four-wheelers and the compact SUVs there, given the GST benefits there. We also like the staples pack. A lot of those stocks started to do well after the GST cuts announcement and have given back those gains. So I think the risk reward still looks pretty good. We have upgraded durables, and we also like the broader kind of tourism theme. So all of that is playing into the consumption, and we also think financials should do well in this environment, especially given all the easing measures that the RBI has undertaken, which cumulatively should release about 2 percentage points of capital in terms of total credit into the system. And so I think those two sectors should be the leaders. We continue to like some of the secular themes like defense in there. And the funding areas are largely coming in from the export pack, pharma and IT, as well as industrials, excluding defense, where we still think at the margin there will be moderation in the infrastructure spending from the government. So largely financials and consumer pack is where we are most excited about.
Thank you, Sunil, for joining in. That's Goldman Sachs. Sunil called 29,000 target on the Nifty, and some optimism is rubbing off. The Nifty is now back above 25,800. Inching towards 25,850, and it's IT, which is trimming some of the losses in the last few minutes. So if you pull up, we'll just get some of these IT stocks up, and you can see a bit of an up move. In the meanwhile, Nigel has now moved over to the F&O desk to bring us the latest trends.
Well, that's right. You were expecting the markets to be much higher today, but actually, though we're lower, we're still holding above that 20 DMA odd mark. So I'll view that as a bit of a positive. Until that 25,500 odd mark does hold out, well, we must say that, in fact, maybe the markets want to go ahead and test higher levels. Now, one technical level is moving towards that oversold mark, which is the Nifty PCR. That was at around 1.2. That's gradually come down to around 0.76 or thereabouts. So that's moving to the lower end of the range. And that's because call writing has come back into play. Whether you're looking at the 26,000 call, big amount of open interest build up out there. 25,900 call as well is seeing a good amount of open interest build up. And the premium is coming down on both those two strikes, which tells you that the bears believe that they can protect that 26,000, 26,100 odd mark. Individual stocks in focus towards the fag end of earnings, you'll be happy to see that there's a good amount of fresh buying on result reaction. So whether it's Bihar Dynamics, which is doing very, very well, you have Muthoot Finance as well, that's seeing a good amount of buying, open interest build up as well out there. While Vodafone Idea, this one's very interestingly poised, because now it's moving to around that 11 rupees odd, which was the FPO price. If it can get past that, it could be in for a bigger run. For the time being, the shorts are getting a little bit jittery. That, seeing a big short covering bounce that's playing out here, but it needs to hold above that level. 11 odd mark to start the next round of the up move. Finally, Biocon is seeing some unwinding after the big run that we have seen. However, Glenmark, the stock that I was talking about earlier today, it's crossed the 20 DMA, it's getting towards the 50 DMA, and that one in the last few days has been seeing a good amount of delivery-based buying as well as fresh long build-up. Stock is still down 15% from the recent peak, so I think we'll keep an eye out on that one. Net, we're down, but still we're holding above the 20 DMA. Back to you guys.
Thank you very much for that. Let's get back to some of the big movers, and that's Muthoot Finance. Strong Q2 numbers, and the management, Gaurav, upgrading their guidance for the full year. Tell us more.
Well, yes, when we look at the numbers of Muthoot Finance, actually a very great set of numbers. In fact, today is the last working day of our quarter two's earning, and it seems that Muthoot is actually closing this earning calendar very well. Because when you look at AUM growth, that is at around 46% on a year-on-year basis. And what the good news is that earlier they were guiding for 15% growth for AUM. Now they are guiding for 30 to 35% growth. So it was a much awaited upgrade in the guidance that they have done this quarter. Apart from that, if you look at the numbers, now net interest income that increased almost by 58% on a year-on-year basis. There was an impact of 300 crores additional impact, and this was because of the NPAs which declined. But apart from that, profit that increased almost by 87% on a year-on-year basis. So a very strong performance there as well. In terms of the guidance and the outlook going ahead, management is very confident that they will be able to achieve the 30 to 35% mark. In fact, if you look at the net interest margins also, in this quarter we saw an uptick. From here on, they say that there will be the margins, the yields will remain somewhere in the range of 18 to 18.5%. But given all the parameters that they have proven to be strong with, we saw that brokerages also became very bullish about it. In fact, CLSA, they upgraded the target price to 4,000 rupees. We also have Jeffries, who gave a target price to 4,000 rupees. And after that, we also had a chance to meet with the management. They also gave a very strong outlook. So let's go and also listen in to what they had to say about the outlook going ahead.
Instead of the yields, we should be looking at the NIMs. So NIMs, we are thinking at 10.5%. So occasionally we get some bump in the yields because of some old reversals of NPAs and old churning of the NPAs, etc. Churning is actually what is happening here. The old NPAs with a lot of old age, lot of interest accrued on them becomes replaced with a new set of NPAs. So on that, we get a bump in the income. That is one of the reasons. So, but instead of the yield, we should look at the NIMs. So if the borrowing cost comes down, maybe 10-15%, 15 bips is what we expect in the next 2-3 quarters. So we will still maintain our yield, maintain our NIMs, and probably reduce the yield. Instead of the yields, we should be looking at the NIMs. So NIMs, we are thinking at 10.5%. So occasionally we get some bump in the yields because of some old reversals of NPAs and old churning of the NPAs, etc. Churning is actually what is happening here. The old NPAs with a lot of old age, lot of interest accrued on them becomes replaced with a new set of NPAs. So on that, we get a bump in the income. That is one of the reasons. So, but instead of the yield, we should look at the NIMs. So if the borrowing cost comes down, maybe 10-15%, 15 bips is what we expect in the next 2-3 quarters. So we will still maintain our yield, maintain our NIMs, and probably reduce the yield.
Hey, look at that stock go 10% higher. Muthoot Finance, really the stock of the day in terms of the earnings reactions that have come through. Well, on that note, we have to take a very quick break. Come back on the other side. We'll get you some final trading calls of the day as well.
Okay, well, welcome back. 50 points higher now, so which means sharp recovery at this point. So, okay, I think it's not.
No, it is. It's unbelievable. It's almost as if there's something happening on the
50,
trade
right?
deal.
I said 500. Yeah. It's 500 off the lows. I said, okay, yeah, 600 off the lows, and a 0.25%. Look at that go. I mean, now
Massive.
The move is coming, right?
Yeah.
And we were wondering as we were starting the show, well, thoda tha to, market maybe should have done, and it is doing that now. So off from the lows, it's about a 200-point recovery for the Nifty at this point in time. Maybe if you can just quickly put up the what's pushing the index up and down, the index movers list out there, and it'll give you a quick sense of what's really happening. The weighted movers on both the upside and the downside, and there you go. So Reliance, I think, is shot up. So it's adding about 20 points. It was up in the beginning as well, but I think Reliance, SBI, Axis, Bharti Airtel are some of the big contributors which have started participating a little bit more. Reliance is a vertical liftoff, and I think that should be responsible for the bulk of the 50-odd point move that you're seeing right now, at least the incremental move that you're seeing right now. So, we were talking about Bihar, right? And it's a definition of an absolute sweep by the NDA in Bihar. Parishit is here with should I say, Parishit, the final tally or pretty much the final tally?
Well, it's pretty much the final tally. Yes, the Election Commission will call the election later in the day, but these results are very, very clear. The NDA is inching towards the 206 mark. 206 seats were won by them in the 2010 elections, and the JDU this morning, we were discussing as well, had predicted that they will cross 206. Whether that happens remains to be seen. But a poor performance by the India Alliance, especially by Congress and the other opposition parties. But within the NDA, you have one big hitter, and that is the LJP. We're not able to bring up the LJP numbers right now, but the LJP has been a big striker in the NDA camp. They had been given 29 seats to contest from, and they've managed to win 23 out of those seats. Remember, in the 2020 Assembly elections, the LJP had won only one seat. So this is a massive gain that the LJP has delivered for the NDA. Record numbers, JDU and the BJP both doing very well. Now let's just look at some of the other factors that have played out very well and very dominantly in this election. Now, when we speak about Bihar, you always speak about the Muslim Yadav combine. Now that has traditionally helped parties win elections. But this time, let's look at the Mahila factor. There were about 124 seats where women voters were in large numbers, and NDA has won 104 seats over there. And why is this important? Because in this election, more than 2.5 crore women came out to vote. They outnumbered the men. And that's why it's a strong victory for the NDA coming from the women voters of the state, which, according to several pollsters, have voted above caste and religious lines as well. What has worked? Possibly there was a scheme that allowed 10,000 rupees of transfer to every woman, free electricity, free jobs, several pro-household schemes that had been launched, and that has helped sway the woman voter. Also, the EBC, when I'm speaking about ME, the Mahila EBC combined, the extremely backward classes were 36% of the state's vote bank, and they seem to have also backed the NDA in big numbers. Let's also see how the NDA has performed in rural Bihar. Rural Bihar is extremely important. 82% of Bihar comprises of rural seats, and in these 223 seats, NDA has won 183. So clearly, when it comes to Bihar, it is the rural Bihar which has helped the JDU and the BJP, Prime Minister Narendra Modi and Nitish, win this election in a big way. The Jan Swaraj Party of Prashant Kishore, a lot of people were talking about that, but clearly they have not been able to excite the voters. People were saying 0 to 5, maybe there'll be a spoiler, but it's just 0. So today, the BJP, the NDA overall are mocking Jan Swaraj Party, but it's a long way for them. They've done some interesting things, some interesting experiments in this election. Let's see how things go. But just to bring up the NDA chart for you, BJP at 94, JDU at 79, both parties performing here In the opposition alliance, it was only the RJD firing. Congress was down to about 4 to 5 seats. The LGP 23, HUMS 5 and RLM 3. So strong performance by all alliance partners, and all of them have gained to deliver this number of 204. Back to you.
Okay, all right, Parikshit, thank you very much. So clearly there is some poll cheer, but then there is some inexplicable X factor that's led to the market doing what it has done. If you think that it's a global move in nature, absolutely not. Asian markets, like we've been telling you, they have been sliding. Asian markets have closed down between 2 and 4%, 4% being the fall on the Kospi, 2% being Hong Kong. Europe is down right now. Even US futures are down, I mean, 0.25% to about 0.5%. So what has happened on our screen is nothing short of breathtaking. Some tactical money, is it some FPI money that suddenly moved to India? Some tactical allocation. Well, we'll only know once those FII numbers come in later in the evening. But for the time being, let's quickly head across to Mitesh. Mitesh, whoever was thinking of going quietly on a Friday afternoon ending trade, I mean, suddenly this Nifty's move has shaken up everyone.
So, Surbi, I think, when the show started and I was hoping that the markets will not close below 25,750, I was literally begging that, it should not happen, because then that disturbs the short-term structure. But it's managed to bounce back. That's a good thing. Let's see how much more strength we have. Today is, of course, a day of a lot of events. The global markets are very different. The domestic cues are very different. So it's just a lot of push and pull. But for the time being, the stocks that I have, Wipro is a BTST with a stop at about 242 half for targets of around 248. And also a BTST on Titan, which I would recommend taking a BTST with a stop at 3814 for targets of 3860.
Okay. All right. Got that, Mitesh. Thank you very much for that. And we let you go now. Enjoy your weekend and, of course, the rest of Friday as well. Thanks for being with us. Dharmesh Kant is joining in. As we welcome Dharmesh, let's look at some movers and shakers beyond the index as well. Muthoot, of course, we've discussed, right from the word go, and Grow is the other one that's had such a phenomenal time since listing. Grow is up another 8.5%, and at now about 93,000 crores, it's so much closer to that milestone of 1 lakh crores in market cap. Dharmesh, thanks so much for joining in. It's a day of great gains, actually. So many stocks. Jubilant is surging on my screen. IPCA is up 13%. Piramal Finance 5% higher. And even today's listing, Pine Labs doing very, very well. Let's quickly talk about some of the result hits. Jubilant, Muthoot. Would you look at any fresh buys on these stocks?
Yeah, Gautam, Survey. I mean, Muthoot, definitely yes. I mean, the management has doubled their guidance with a strong, reduction in the gross NPAs. And management sounded very confident about the future outlook. We are also on the same platform. We think that NBFCs will be, doing a bricks business going forward into the second half of FY26. And if any rate cuts come forward, I mean, expectation is 25 basis point more rate cut coming maybe in the 5th of December. Then it's going to help further to NBFCs. So definitely a thumbs up on Muthoot. I think 20-25% more, price trajectory upside can happen by the time we end FY26. Jubilant came out with excellent set of numbers, and this is in contrast to what its peer groups have been doing. So a trading play definitely merits attention in Jubilant Food. I mean, if you are holder for say a couple of months, so maybe 10-15% more upside there. But having said that, let me be very clear on this. This is just a trading play. We are basically not recommending any of the QSRs on a long-term investment play. I mean, 2 years, 3 years down the line, I think all these stocks will be noted just on the valuation concern.
Dharmesh, hi, good afternoon. The defense pack is all running up once again. So had a long break, not all of them, but that frenzied move ended about a year ago, and then some consolidation. Are we perhaps in the throes of the start of another move here? And have you looked at stocks in detail? What seems to be a good bet?
Yeah, Dr. Prashant. I mean, defense will always be a play like that. Once, the move starts, you will have a couple of 3-4 months of good trajectory, and the prices will move up 30-40% in that kind of a time frame, and then again it will be a consolidation for a year or so. Typically, all the defense are basically a lumpy kind of an orders and execution takes place, and once an order gets executed, you have a time lag of 6 to 8 months before the fresh set of orders can be executed because of different set of approvals which are needed. I mean, look at the BDL numbers. The numbers were quite good, but they are sitting on order book of in excess of 23,000 odd crores. Same has been the case with say HL order book or a BEL kind of an order book. So it's a structural growth story in the making. and one has to be invested and stay invested. If you are trying to time it, then I mean you may go wrong for some period of time. That time horizon depends upon where you are entering the space. So practically, I think the entire defense space looks pretty attractive to us, and our topics out there has always been HAL and BEL.
HAL and BEL. I'm looking at some of the other volume plays. NBCC, good price action, good volume action today, 5% higher. Vodafone Idea is one of those updates. Vodafone almost 5% on Vodafone as well. There is IDBI Bank, which is up about 3%. RVNL, BEL, we were just discussing some of the defense names, SJVN. So largely speaking, it's been a pretty decent session for a lot of these PSU stocks. So that's the look of things on the upside. Dharmesh, any sense on Piramal Finance? The listing now in the new avatar, the entity as we know it. And the thing is, the stock's already moved up so dramatically since that relisting happened. What would your advice be?
I mean, Surya, when the listing happened, it was very cheap when compared to its peer group on the valuation metrics, but post that the stock price movement has been quite sharp. But the entire financial space looks very attractive to us, going by the way the space has panned out, particularly on the NPA side. The concern was on microfinance and low ticket size for the NBFC space. Barring say Bajaj Finance, none of the other companies came out with those kind of concerns. Largely, when 60 to 70% of the companies in the NBFC space have came out with a good set of numbers. So you have to stick to the good quality stock, and I think their huge growth opportunity is ahead in the second half of FY26. So space looks pretty attractive, and a few of the names like Aadhar Housing Finance or in the housing finance side, PNB Housing Finance looks pretty attractive. Piramal, if you are invested, you can continue to be invested, seeing the type of traction this company is gaining of late.
Okay, Dharmesh, we'll let you go on that note. Thank you very much for joining in. And we look forward to connecting again next week with the market action. For now, a quick break. Back with more on the other side.
cnbc.
Well, the recovery continues on the street, and it's been a good day and a good week as well, because by the time we close out, the Nifty would be up almost 2% for the week. Mid-cap index up about 1%, And imagine this, once again, the close of the week is very near the 26,000 mark. So all in all, the bulls have managed to prevail. However, now we move slightly away from markets. It is Children's Day, so it's time to unravel and reveal the next-gen CNBC TV 18 anchors, and it's over to Anandita Nair for that. Anandita, how is the market?
Well, from my perspective, it really depends on the time of day and where you are. For example, Phoenix is really crowded in the afternoons, but the mornings are quite a bit more relaxed. But my favorite market of all is where my grandparents live, Green Park. But I don't really think that's the kind of markets they want us to talk about, right, Aditya?
Yeah, I think they're more or less talking about stock markets. That's why we have a panel of 6 or 7 unexpected guests right here to talk about the markets. So, let's talk to Neve first. So, Neve, what do you want to be when you grow up?
I want to be a cricketer.
Sorry, what?
I want to be a cricketer.
Who's your favorite cricketer?
Rohit Sharma, because I like his batting stance and his captaincy.
So now you've heard what he wants to be when he grows up.
Okay, all right, and let's get another view. Where's Neil? Neil, who do you want to be when you grow up?
Cricketer.
And which is the cricketer that you idolize?
Shreyas Iyer.
Why? He's an all-rounder.
Because I like his catching.
You like his catching? He's a good fielder.
Yeah.
All right, great.
Nigel, you asked him which is the cricketer that he likes the most. He said Shreyas Iyer. If you asked him which is the anchor that he likes the most, he would say Tendulkar. Then we have so many others as well. Ekta, Isha, what happened to you? Are you not liking the markets today? Yeah, we have a little one shouting Papa as well. But Nigel, what a joy. And, the next panel of CNBC TV 18, what do you have to say to them?
Well, my multi-baggers are obviously in my arms right now. And Nitara, would you like to say hi to everyone? Hi.
Let's put the toughies to Prashant.
No, there's no toughies. Adrit, right? Yes. Adrit, of course, is our colleague Suma's son, who's the head of marketing of CNBC. Adrit, what do you want to be when you grow up?
A musician.
Wow. A musician?
Yeah.
What kind of musician?
Drummer.
Drummer?
Yeah.
You play the drums?
Yes.
Will you
What's your
sing
favorite?
Few lines for us?
Yeah, let's get
So, Amor of 69.
Summer of 69?
Wow.
You want to sing it? No?
I think all the kids...
I could be a kid saying no to something I don't want to do.
Well, she's going to talk? You want to put the mic?
Papa? She'll eat it up for sure.
I think all the kids will, will like to sing one line on Heal the World. Mangla?
Yes, let's do.
If the kids don't sing, I'll join in.
Oh, 1, 2, 3, go.
Heal the world, make it a better place for you and for me and the entire human race. There are people dying. If you care enough for the living, make a better place for you and for me.
All right, so that's the Children's Day special out here, but I'll tell you what.
I think we have time, Nigel. We can go on.
I think Prashant wants to sing another verse.
I want to sing. But Rima's kids, guys, come up. Come up ahead. No? I think
I'm sure this. All right, I'll tell you what. Let's move towards the bell and let's do the countdown because 10,
kids,
9,
all day.
8, 7, 6, 5. Come, Dolly. 4, 3, 2, 1. Go.
What a week.
Well, that's right. It was a good week for the markets, a good end, and we are definitely having a great party out here with all the kids ringing the closing bell on Children's Day. Doesn't get more special than that. Let's do one more, guys. Nice ring of the bell.
Ring it hard.
Ring it.
And by the way,
we have editors roundtable next, which happens right here. So we'll have to figure out how we'll do it. I think we'll have the kids on, right? On editors roundtable night.
Yeah, and I think after Prashant's kids, took that away, I think jobs are in doubt. It's not AI, it's the next gen that's challenging us. All right, we'll wrap. Yeah. We come back, and I think we'll have editors roundtable that's waiting for us on the other side.
market managed to snap its 2-week losing streak to clock the biggest weekly gains we've seen in 5 months. The Sensex and the Nifty and the mid-cap index all are up almost 2% this week. All sectoral indices have seen gains, with defense stocks being the biggest outperformers. And of course, we've had IT and pharma contribute as well. On Editors Roundtable, we decode the week gone by on the street, and we put the spotlight on India's booming IPO market. And we take stock of what the mutual fund trends are telling us. The October numbers came out. I'm Surbhi Upadhyay, and with me, as always, editors Prashant Nair, Nimesh, and of course, Nigel. And today we have with us none other than Nilesh Shah of Kotak Mahindra AMC, a veteran, a big market voice, and a great person to have, given that the market is...
supporter of CNBC.
Always a big supporter of CNBC. I was, when you say supporter, it's a politically charged environment right now. We've had the Bihar. I was like, which supporter? No, but it's phenomenal, because it's great to have you at this time with us, Nilesh, because the market's flirting with 26,000 again.
Yeah.
So lots of questions coming your way, I'm sure. Thank you so much for joining it.
My pleasure.
It will be the first question, I think, with Nilesh Bhai is going to be, what a win, Nilesh Bhai, in
Yes.
Bihar, right?
This was way above
243 seats,
expectation.
202, 203 seats.
Yeah.
What do you make of it?
Neeraj Bhai is still not very happy. He was expecting a full sweep. Like
What, 243?
entire 243 will come.
But I mean,
So
no one
I
expected
think
it, right?
this is the mandate for BJP and coalition government, and they should now take steps to ensure that the economic growth model goes all across India. When one challenge for us is the kind of inequality, Bihar today is at levels of sub-Saharan Africa. I hope this mandate allows it to move from Africa to Asia.
But markets were a little subdued today in that sense. So you think it's...
In some sense, this was priced in.
Priced in. So what
So
next?
it's buy on rumors and sell on news.
So Bihar done, US-India now?
Yes, now the focus will be on US-India tariff deal. There has been some encouraging announcements from US side. We need to see the details of the trade. I was in US very recently, and my feeling is that everyone was interested in listening about India, but no one was willing to cut the check immediately. If a tariff deal happens, there could be some buying emerging and a relief rally coming into the market.
But your sense is November में हो जाएगा कि...
I have no idea. Dawn को समझना मुश्किल ही नहीं, नामुमकिन भी है.
That is a good one.
That is what we call it. We look for these... this is reelable. This goes on.
One-liners, and trust Nilesh to always have a new one up his sleeve. Absolutely.
But Neeraj Bhai, as you rightly said, you went to US, you met some large investors as well. Nobody is still willing to, write the check for India. What's been the key concern for them?
So I guess a lot of them have investments in India. Some of them are restrained by tariff deal not happening. They don't want to take political risk. Some are concerned on valuation. Some are concerned on artificial intelligence trade not available in India. Now, we have to position ourselves. So my message to them was that, look, we don't have LLM models on AI, but we have people who are making apps on AI.
Yeah.
Like on the voice AI, we have Luna and Maya 1. They are world-class, better than the best, which can sing, whisper, emote. So in emotive voice AI, India is a player.
Yeah.
Now, these are the kind of explanation you have to make to global investors to convince them that India is still a long-term good story. So interest is there. Checks are not being cut right now, but a tariff deal can push them to start cutting the checks.
All right, so Nilesh Bhai, always good to hear your thoughts, and we'll hope that they write some checks. But in the meanwhile, a lot of people like me and, are writing checks for the future. And we take your advice very, very seriously. As I always tell you, the argument between me and my wife is who's putting the bigger check into the mutual fund industry. That we'll discuss later. But if someone is cutting a fresh check, right now, there are various assets out there, right? Debt is one instrument. You have equity and you have gold. Gold has done phenomenally well. Sometimes you're a little bit subdued at home because you have put so much of money in the mutual fund. Returns are okay just in the near term. Longer term, we're going to make money. But if you're putting fresh money, what would be the split between the three?
So our multi-asset allocation fund is like Hath Kangan ko RC kya. Whatever I say is reflected into my multi-asset allocation fund. At this point of time, we are about 20% in precious metal, about 55% in equity, and about another balance in debt. I think this is the allocation for an average investor. If you are conservative, take down equity a little bit, take down gold little bit, and put into debt little bit. If you are more aggressive, you can probably go more towards equity from precious metal. But overall, this is what we believe is the right allocation for an average investor.
Right. But and I guess... Nitish, you had a big call on silver. You still hold on to that view? Silver ma
yes. So around April 25, we put 15%, which was maximum possible in our multi-asset allocation fund in silver. We have maintained that and increasing it. Silver obviously is a momentum trade, but there are various factors coming into play from industrial demand on solar panel and electric vehicle side, some fishing by central bankers around the world, some, supply constraints emerging. So all put together, silver is in a short-term momentum trade. We are watching it carefully, but our outlook on both gold and silver continues to remain positive.
I just want to, on this, maybe we can pull up the stats from the numbers that we got, the mutual fund numbers from October. And while the headline is that the net equity number has come down, it's about 25,000. For me, because I look at personal finance, it's always a great sign because the flows into hybrids have gone up consistently through this year. And even this month, we had 15,000 crores go into hybrid funds. A bulk of that money is going in these multi-asset funds that Nilesh Bhai is actually talking about. But on gold and silver, there's consistent money going in ETFs as well. It was 8,000 crores in September. And even now, gold being where it is, it was still about 7,000 crores. So is there a risk that's building up there? A lot of people are chasing the gold, silver FOMO. What would you say to them?
So the risk is don't chase FOMO. Please understand why we are bullish on gold and silver. It's essentially central bank buying. We are in some sense running ahead of central bankers. Every month, please open reports to figure out what central banks are doing. If they are selling, you need to get out of your gold position, which is what we will do. If you are seeing that central banks are buying, then stay invested in gold. In the medium term, the gold prices will be influenced by central bank intervention.
Underlying gold to ek baat hai, but look at something like a Muthoot, right?
Yeah.
I mean, that's a stock equity gold play. And it has done phenomenally well.
It has done phenomenally well because now there's no fear of NPA. Whatever they have lent, it's far more valuable today.
Nitish Bhai, Grow listed this week. Not a view on the stock, but it's just a... So India is a unique country in the sense that for a country with a per capita under $3,000, the level of access to financial products is unparalleled, right? Because of Aadhaar, mobile penetration, UPI, etc., etc. 12 crore unique demat account, 13 crore ke aspas. What, when we say the growth is secular, are we talking about this 12, 13 crore, the number, absolute numbers increasing, and in a way it's kind of related to what Surabhi asked, which is mutual fund flow, etc. Or now, it has kind of happened now at this level, because workforce is about what, 50, 55 crores?
Yeah.
Family of 3, so that gets you to about 39, 40 crores already. Agar mota mota.
Yeah.
So is it about more household savings shifting into, is that the game here or more penetration and expansion? How do you think about this?
So total vehicle ownership in India, including two-wheeler, is about 35 crore. Ideally, all of them should have a mutual fund SIP. Maybe 500 rupee, but they should still have. So today when we have 12, 13 crore demat accounts, how many have more than 1 lakh rupee in those demat accounts? That number comes down dramatically. So there is one story of penetration. People who have put 10,000 will go to 1 lakh, people who have put 1 lakh will go to 10 lakh, and people who have put 10 lakh will go to 1 crore. The second is the expansion. All 35 crore two-wheeler, four-wheeler owners are potentially my customers. I have barely touched 5 crore in mutual fund, 12 crore in equity. There are more people, dirting their end in cryptos and gaming than they have invested. So there is both possibility. Penetration as well as expansion.
Numbers in those accounts going up? Because just more allocation into the asset class. Plus more numbers going as well.
Sure. But having said that, just to play devil's advocate, the fact is that at an index level, it's been a range-bound year, right? And we've seen some of that. If you look at the redemptions, I mean, the absolute number, I mean, amount of redemptions has been on the higher side. Flows in the large, mid and small, the traditional categories have sort of come down. Is that at all a cause of concern? And for the market it is, because that's the only thing that's kind of helped us right through the storm.
Keeping the market here.
Yeah, sorry?
Keeping the market here.
Absolutely. Yeah. So, I mean, you have your ear to the ground, you know the pulse. What's the sense on pure equity flows?
So some redemptions happened because it was festival season. By and large, people have taken money out to spend, which is good for the economy. We still believe that the flows will remain strong. There are new customers which are getting added every month. Last month, we would have added about 50 lakh. Second, incrementally, people are getting more and more comfortable with mutual funds, so they are putting. My only recommendation is that mutual fund matlab equity nahi. Mutual fund is beyond equity also. And which is why this multi-asset allocation category, debt fund category will become appropriate.
But equity mein flow kam hoga kya? If the market doesn't break into fresh highs and picks up momentum.
See, please remember that the last month inflation number came at 0.25%, lowest in our lifetime. I have never seen that number in my life. Now, when your inflation is low single digit, how much more return equity can deliver? The real return will be 4, 5, 6%. It can't be 20%. So people will have to adjust their expectation. You have to moderate return expectations. You are not going to get 20% return in 1 year. It may come in 2 years, but not in 1 year.
But going by this inflation print, what do you think? The RBI will go full hog, 50 basis points in December? That could be a likelihood? Or do you think they'll go for 25 and then another 25 in the following?
It's very difficult, Nigel. We have seen how Fed's,
trajectory, yeah. The last cut was more a hawkish cut.
Absolutely. So they'll have to consider rupee, they'll have to consider Fed, and they'll have to consider forward inflation. Now, yes, the last month inflation was lowest in history, but forward inflation could still be in mid-single digit. So it's difficult touch and go equation for RBI. If they had cut earlier, it could have been justified with this inflation number. But if they cut now and 6 months down the line inflation goes up, then they will be on the wrong side.
Okay, that's about RBI. What about from the centre's perspective? The collections haven't been as much. The capex spend has been superb, in the first half of the year. Now, the second half of the year, how do you see things pan out? Because capex spend obviously needs to cool down a little bit. They have front-loaded it out there. But the collections may not be as much. If that's the case, do you see the fiscal deficit getting widened a little bit? Would that be digestible from a market's perspective?
So with the GST cut, equations are open. The last month collection number came reasonably solid. April to October GST growth was about 9%, 1% less than the nominal GDP growth of 10.1. Now with this inflation, you are not sure whether nominal GDP growth will be 10 or it will become 9. If it becomes 9, then GST collection till now, despite rate cut, is reasonably good. So my feeling is that government has levers on the fiscal deficit side. In all probability, they will use those levers to ensure that we don't go down exceeding the fiscal deficit target. More importantly, we have also put target for the next year in last year's budget. So my guess is that government will leverage other tools to ensure that we remain on the path of fiscal prudence.
Nitish, one big theme of the last 6 months, and which is surprising as well, is the FDI money, the check, what do you say, in the banking sector. Unprecedented, something like an Etihad Bank gets 60% stake in RBL Bank. How do you read the FDI into financials? And overall, as a sector, what's your take now? I mean, there is a lot of belief that the first earnings upgrade will come in the financials in 27.
So again, Nimish, if we look at globally banks, they are generating billions of dollars of cash. Where will they invest? No one will be allowed to enter China like we have allowed entry in India. We are the only market where majority of our private listed banks are owned by foreigners. Which country will allow that? So we have provided a very good treatment to foreign capital in banking sector. And imagine some of the exits which private equity or funds have done in our private bank. I remember one large fund having a very, very big stake in a private bank, and then they exited at like 90% lower price than what it is today. So there is a institutional memory of leaving Indian bank early. Put all these things together, and then RBI gave a welcome sign for Yes Bank, MUFJ, for...
It's a big shift, right, from what the RBI stance was a few years back and now.
See, these were all, in some sense, slightly weaker banks which required a solid parent.
Yeah.
Now, it could have been domestic, it could have been global. This time we have given opportunity to global participants, and people have responded positively.
You think that trend is likely to continue? More FDI will come into the financials?
I think
it's a good proxy to the GDP as well, to the growth as
this
well.
is the only country where their capital will receive fair treatment compared to any other markets.
Yeah. But Nimish, most of these financials, I don't know, look at RBL, not troubled. Right?
Not troubled, not stressed.
Samman
to some extent.
Okay, there's Yes, which got
Yes
money.
was needed.
Yes was needed. So it's where capital is required. I mean, mostly, right? What we've seen so far. I think before that there was IDFC first, where there was almost a large infusion.
Federal, no stress, nothing.
Federal, of course, is the...
Federal was the latest
It's not that they were weak. It's just that they were in need of growth capital to go to next level.
Correct. No, absolutely. You know, what we'll do is, Nitish, we'll take a quick commercial break here. We'll continue the conversation on Editors Roundtable. Stay with us. More coming up. Welcome back. You're with us here on the Editors Roundtable. We're in conversation with Nilesh. Nilesh, we talked about secondary markets. Primary markets, what is the...
They are on fire.
They're on fire.
And there are so many IPOs coming that many a times we are stretched to research them.
Yeah.
Thanks to AI, we are able to read prospectus much faster. And I'll give you an example also where a management company came, this was before they had filed DRHP, but thanks to AI, we were able to extract their past information from ROC. And you know, when they presented their data versus when we talked about, there was so much of a difference.
Wow.
Hopefully
AI
now they
at
would
work?
have cancelled their IPO plan till such time they get their act together. So there's too many companies coming out with IPOs, too much of supply. Some are very exciting, some are overly priced. And we have to be very cautious in investing in IPOs after doing our work. Thanks to AI, we are helping
You're trying to keep up with the pace.
Has there been instances, Nilesh, where you really liked the business, but you did not put in money because it was highly priced? Or you think it's like a combination when dono saath mein ho jata hai ya phir nahi hota hai?
So again, like typically what's our approach to IPO, if you like price and valuation, both you go reasonably strong. If you like business and pricing is very expensive, you probably start small. Just keep your rumal on the table, learn about the company and then figure out why others are willing to give so much high pricing. When you don't like pricing and the business, it's better to stay out. So you try to size your trade depending upon how you have a view on the company.
So on that, and I know obviously you're not going to talk individual company names, but in general, what are the businesses that have come in, let's say the last 7-8 months, which have excited you? Most are tech. You know, every IPO that comes out, somehow or the other, the founders manage to put a tech tag on it. Some are genuine tech and are really, you know, using cutting edge technology. Some are tech for the heck of tech, right?
Yeah.
So you tell us, what has excited you?
So again, it's all about entrepreneur. We have been excited by a pharma company which is doing a wonderful work on basic research. We are excited about some of the consumer tech company. We are excited about old economic company also, which are into construction. So at the end of the day, Surbhi, it's the entrepreneur who is making money for you. If you like his vision, execution, and governance, then it's worth betting upon him.
So on that, now you have companies coming in, one listed today, where there is Pine Labs. I mean, no, there are companies where there is no one single promoter or entrepreneur. It's a bunch of private equity guys running the firm. So as you know, as people with domestic pools of capital, how do you look at these businesses which are also coming to the market now?
So again, we have been investing into professionally managed companies. In the past, there were few companies where there was no official promoter. It was more professionally managed. And as long as professionals were working hard, they did deliver shareholder value. Now, again, because of this private equity influx, we are seeing companies where PEs are owner who will be on their way out. And it is run professionally by the board and the management.
So you don't get a sense of hesitation that there is less skin in the game because they are private equity and they're here to only exit. I mean, when the time is right.
So it's all about what is the vision the management is showing, what kind of execution they are doing. And there might be a skin in the game through ESOPs or something else. Now, if you enter, let's say at 110 rupee when PEs enter at 100, there's a lot of skin in the game. If you enter at 500 and he has entered at 10, then there is a lot less skin in the game. Maybe it's my skin in the game.
And mine too, and Nigel's too.
Nigel's too, yes.
The other argument which a lot of people keep talking about is that domestic mutual fund money has given a lot of exits to private equity, the promoters as well. Look at the kind of blocks which promoters are selling. Today, Sagility, the promoter sold 16% and got sold. And the stock actually went up 5%. How do you read, I mean, what's your argument from a mutual fund perspective on giving exits to these PEs and promoters?
So Nimesh, many a times, you wake up in the night. Are we giving exit to FPI?
Yeah.
Am I telling truth to Nigel that you continue to invest? And am I giving exit to FPI? So obviously there are self-doubts when promoters sells, when FPI sell. You are worried because they are all smart people. But finally, we go back to basics. Are this company going to grow or not? And second, even after exit, many a times, like in today's case, the promoter is still holding a substantial stake.
Absolutely.
And the third thing, there was an incident where an ex-colleague of mine in a business standard conference told me, why are you launching NFO? Markets are expensive. You should not launch NFO. You should learn from your past mistakes and so on and so forth. So I said, bhai, if you are so bearish, would you like to short Nifty for 10 years at this price? He said, no. I said, 5 saal ke liye to short kar de, bhai. Bola, no. Bola, 3 saal ke liye to short kar de, yaar. He said, no. So I said, you yourself are not bearish on market from a 3-year point of view. I am taking money from people for 5 years. Where is the question of mis-selling?
Correct.
So many people who are now bearish on the market are the people who haven't participated in the market. I can't be guided by them.
Right.
But should we have a self-doubt when promoters are selling? Answer is yes. They are far smarter than us. If I'm buying from them, I need to be 10 times more sure.
Nilesh bhai, before you let you go, last time you gave a call on silver. 2-3 call देके जाओ next 6 महीने के लिए. Otherwise, people will bash us.
As I told Nigel, SIP करते रहो.
No, वो तो ठीक है. वो चालू है.
बस वही है.
But one or two
you can be lucky once. You can't be lucky all the time.
No, it's not lucky. But some well, right? One call.
One call.
So, I'll just say that moderate your return expectations.
Sure.
Moderate हो गया.
That's saying moderate the return.
1 year of moderate return only.
बोल दिया था.
No, but so let me try and frame the same question in a different way. A lot of hopes are now, hinged on the second half. Second half has to be blockbuster. At least that's what's got us to 26,000. Will it be blockbuster?
I'll put my money on it. It's not 100% confirmed call, but clearly there is a cycle moving now in favor of double-digit earnings growth. Last 6 quarters we grew in single digit. That has laid the foundation for this double-digit to come. Monsoon has been good. Reservoirs are above historical average. Rabi season will be good. Tariff deal can happen. The GST Bachat Utsav has rekindled the consumer demand.
Yeah.
there's more money, about 6 lakh crore in the pockets of taxpayers, consumers, borrowers, speculators, and government employees. All these things should result towards double-digit earnings growth. Now, can it go from instead of December to March quarter? Yes. Earnings can get delayed, but it's not going to get deferred.
Delayed but not denied.
Not derailed.
Delayed.
Yeah.
Amol Majumdar.
But moderate your return expectations.
Absolutely.
Oh, Amol
Check
Majumdar.
the India in real life.
India, absolutely. I mean, we'll talk about that post-wrap.
All right, fantastic, Nilesh. What a pleasure to have you in our studios. Please do this more often. Really, really charges
And
all.
the one-liners are the best.
Absolutely the best. Okay, on that note, we'll take your leave on this edition of Editors Roundtable. Many thanks for watching. Have a great weekend. We'll see you with the markets bright and early on Monday morning.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this Friday evening. It's a landslide for the NDA in Bihar elections. The alliance crosses the 200 mark in the 243-seat assembly, marches towards a historic performance. BJP emerges as the single largest party ahead of Nitish Kumar's JDU. RJD-led Mahagathbandhan decimated, fails to reach the 50-seat mark. Congress loses 90% of the seats contested. Prashant Kishore's Jan Swaraj party fails to open its account. India's first data privacy law is now operational. Government notifies the rules under Digital Personal Data Protection Act more than 2 years after it was passed by Parliament. Companies get 18 months to comply. Consent managers get 12 months to register to act on behalf of users. Sensex and Nifty gained 2% this week, the biggest weekly gain in 5 months. All sectoral indices end in the green, with defense and IT stocks leading the rally. Major relief for small and medium industries. Government withdraws over 20 quality control orders covering chemicals, plastics, textiles and mining companies. These rules were introduced 2 years ago. A crucial meeting at the Prime Minister's office to review Press Note 3 likely to be held today. This policy was introduced in 2020, making government approval mandatory for foreign direct investment from countries like China that share a land border with India.
3, 2, 1.
Fintech company Pine Labs lists at a 10% premium, surges 30% in intraday trade, but ends with gains of close to 14%, touches a market cap of close to 30,000 crores. Bitcoins drops below the $100,000 mark, hitting a 6-month low. All cryptocurrencies are down over 15% in the last 1 month due to risk. Police detain a medical college professor and a student as the probe into Delhi car bomb blast that killed 13 people continues. Security forces demolished the house of the Pulwama doctor suspected to have driven the explosive-laden car involved in the blast. Andhra Pradesh government woos investors. Reliance Industries pledges to set up a 1 gigawatt AI data center. Adani Group promises investments worth 1 lakh crore rupees.
बिहार विधानसभा की मतगणना में जो अभी तक नतीजे सामने आए हैं, एनडीए को बिहार की जनता ने पूरा समर्थन और आशीर्वाद दिया है और बम्पर जीत की ओर।
आपके समक्ष और आपके माध्यम से तमाम महागठबंधन के जो हमारे उम्मीदवार हैं अलग अलग इलाकों में, उनसे ये कहना चाहेंगे कि एक मनोवैज्ञानिक खेल भी चल रहा है।
लगातार हम देखते आ रहे हैं कि जनता का आशीर्वाद किसी को मिलता है और चुनाव चोरी हो जाता है। उसके खिलाफ बहुत दिन से कांग्रेस पार्टी और गठबंधन के पार्टियां चिंता जाहिर कर चुके हैं।
And the big story of the day, it's a landslide for the BJP JDU-led NDA in Bihar elections. The alliance has crossed the 200-seat mark and is marching towards a historic performance. As per latest trends, the BJP is currently leading the pack with a strike rate of 95%, followed by Nitish Kumar's JDU with a strike rate of 84%. Chirag Paswan's LJP, which was not in the NDA for last assembly elections, registered an impressive performance as well. The opposition, led by the RJD, has been decimated. The Congress seat tally has fallen to single digits. The left parties performed poorly as well. Prashant Kishore's Jan Swaraj party, a greenhorn, failed to even open its account. Remember, the state had witnessed a historic voter turnout. That's not all. The absolute number of women voters exceeded the male voters this time. Many political analysts have claimed that the Nitish Kumar government transferring 10,000 rupees each to 25 lakh women under Mukhyamantri Mahila Rozgar Yojana was the game changer. The opposition had alleged the move as a violation of Model Code of Conduct. Current Chief Minister Nitish Kumar is likely to take oath for a record 10th time. But there has been no formal announcement on who the Chief Minister is likely to be. My colleague Arunima gets us the latest report from JDU headquarters in Patna.
Outside JDU office, we showed you the shank, the dhol, tasha and the crackers. Now even the laddus are out. Laddu already खिला रहे, अभी तो फैसला पूरा आया नहीं है.
देखिए, बिहार की जनता हर जगह दिवाली बिहार की जनता जला रही है. हर घर में लड्डू बट रहे हैं. नीतीश कुमार जी की जितनी महिलाएं हैं, जितनी विद्यार्थी हैं, जितने लोग हैं, सब कार्यक्रम के कारण सबके घर में लड्डू और अनेक अनेक मिठाइयाँ बट रही है.
पूरा पटाखा, मिठाई, होली, दीपावली सब मनेगा अभी कुछ देर में.
जेडीयू सिंगल लार्जेस्ट पार्टी बनेगी एनडीए में?
नहीं, जेडीयू नीतीश कुमार जी ने जो विकास किए, इसी विकास का जीत है.
They're all ready to celebrate Diwali once again at the JDU office here in Bihar with Rajesh Bhardwaj in Patna. Okay, हाँ खा लीजिए. In Patna, this is Arunima.
परिवारवादी लोग राजनीति को जागीर समझते हैं, लेकिन लोकतंत्र की धरती पर निवास करने वाली बिहार की जनता बड़ा संदेश देगा ये जंगल राज के युवराज को, जो सोने के चम्मच लेकर जन्म लेते हैं और चार्टर्ड विमान पर बर्थडे मनाते हैं. ये जमींदारी भाव को बिहार की जनता समाप्त करेगी.
सोशल रिफॉर्मर है नीतीश कुमार जी, को पॉलिटिकल लीडर नहीं है, केवल स्टेट्समैन नहीं है, समाज सुधारक भी है और राजनेता भी. एनडीए सबसे बड़े जनादेश के साथ आएगा और जनता दल की प्रमुख भूमिका होगी.
Right, Parikshit Luthra joins us now with more. Parikshit, what are you picking up? What's behind this historic mandate by the NDA in the state of Bihar? What are the numbers telling you?
Well, what a day has it been. Let's look at the NDA numbers. They, as per these trends, have crossed the 2010 tally. In 2010, the NDA alliance had secured 206 seats. They are 207. Let's see if they continue and solidify this lead. However, it's definitely bad news for the India alliance. They've just landed up with 31. But there's something that I'd like to show you as far as the NDA is concerned. Just look at their numbers. BJP, 92, JDU, 84, which means that both key alliance partners have done the heavy lifting. The LJP, they had been given 29 seats to fight in this election, and they've managed to deliver at least around 21. The full counting is not over. So, strong performance by Chirag Paswan. The Hums party at 6, the RLM, Upendra Kushwaha's party at 4. Now, if you take the BJP tally, the LJP tally, Hums and RLM, they together would cross the 122 or the halfway mark. So they technically may not need the JDU. So what happens to the chief ministerial candidate? Amit Shah, before the election, had said there is no vacancy for the chief minister's post. But will the equation now change because the BJP and the other allies are so strong? That remains to be seen. But for the moment, there is no conversation. I was hearing a BJP spokesperson saying that there is no controversy, no question about who's going to be the chief minister. It will be Nitish Kumar. Let's just look at the Congress as well. The Congress is currently leading in about 1 or 2 seats, and their performance really dragging down the India alliance. So you've got 24 seats going to the RJD, just 3 for the Congress party. They were leading in 1 seat, but now I'm told they're leading in about 2. So just a poor performance by the allies altogether. Just one larger trend about the Rahul rally. Rahul had carried out a voter Adhikar rally all across the state earlier this year. And let's look at the Rahul Yatra factor. Was it important for them? Well, there were about 183 seats where Rahul had travelled to. Here, 161 are being won by the NDA, just 19 for the India alliance. So poor show for the India alliance in all those areas where they had campaigned very heavily through the year. So which factor has really played out? It's the Mahila factor and the extremely backward class factor that has really worked for the NDA alliance. We're told the women voters outnumbered the male voters in this election. 2.5 crore women had cast their vote, and that seems to have really worked in favor of the NDA.
All right, thank you, Parikshit, for that. Let's shift our focus to the day's market action. Dalal Street closed in the green for the 5th straight session. Nifty closed above the 25,900 mark. Broader markets moved in line with the benchmarks. For the week, market snapped the 2-week losing streak, recording the biggest weekly gains in 5 months. Sensex, Nifty and mid-caps gained nearly 2% each, while Nifty Bank gained 1% this week. The passenger vehicle business of Tata Motors has reported a weak set of numbers in the second quarter. This is largely due to the cyber attack on Jaguar and Land Rover. Sudarshan Kumar joins us now with the numbers. Sudarshan, JLR cyber attack taking a toll on Tata Motors.
That's correct. So as market closed, Tata Motors passenger vehicle after demerger, so commercial vehicle segment is different. And this result is for Tata Motors passenger vehicle, which houses passenger vehicle business of India and the JLR. They have come out with Q2 results. And if I can say, it's largely a forgettable quarter for both these companies, Tata Motors as a standalone business and also for JLR. If I can give you a few highlights, company has reported loss for both standalone and consolidated business. And the worst part is JLR has revised its EBIT margin guidance lower for FY26. Now it's expecting in the range of 0 to 2% versus earlier range of 5 to 7%. More than that, it has increased its cash outflow guidance from near to zero. They were expecting earlier. Now it's expecting up to 2.5 billion pounds. Now, what was the main reason of this kind of losses? One of the main reasons was cybercrime incidents, for which Tata Motors in consolidated business has reported an impact of nearly 2,010 crore rupees. So what's going forward? For standalone business, considering the increased demand following the GST cut and the festive season, Tata Motors is saying that also it will be coming out with new launches and that may improve the demand. For JLR, they have not given any updated statement on cyber incidents that they had faced. They are just saying that they have been restarting the operations. Global situation remains challenging, but they'll manage to improve the demand if you compare against H1 FY26. But overall, as far as Q2 FY26 is concerned, it's a forgettable quarter.
All right. Thank you, Sudarshan, for that. Shifting focus now, shares of Pine Labs made a strong debut on the bourses today, listing at a 10% premium from its issue price. The company's issue was subscribed over 2 times on the final day of bidding, and this was led by strong demand from the qualified institutional buyers, followed by the non-institutional investors. The company plans to use the proceeds from the IPO towards expansion, debt repayment, and international growth. Market regulator SEBI has proposed some regulatory changes to streamline the IPO process. Now, the proposed changes are aimed at removing certain operational bottlenecks, improving transparency for investors. SEBI is proposing amendments to introduce a technology-enabled framework that will allow pledged shares to be locked in seamlessly. Currently, all pre-issue held by non-promoters must be locked in for 6 months after the allotment in an IPO, barring few exemptions. But depositories are not equipped to mark pledged shares as locked in, creating compliance hurdles. The proposed changes seek to simplify this process for IPOs. India's wholesale inflation has dipped into the negative territory in October. The negative rate was led by a decrease in prices of food articles, crude petroleum and natural gas. However, fuel and power became costlier. The index for this group rose by 1.12% during the month. And major relief for small and medium industries. The government has withdrawn over 20 quality control orders covering chemicals, plastics, textiles and mining companies. Abhimanyu Sharma joins us now with more details. Abhimanyu, how will this move benefit the industries?
India has withdrawn over 20 quality control orders in the past 2 days across the chemicals, textiles and mining sector. India is reviewing several QCOs across several sectors after they have been termed as non-tariff barriers by several countries, including the United States. QCOs have also been opposed on certain fronts by the domestic industry over apprehensions of an increase in input cost, which is leading to a reduction in overall competitiveness of several exporters. It remains to be seen whether India is going to withdraw or dilute any more QCOs moving ahead. Now, the QCOs which have been withdrawn for now include 7 QCOs from the mining sector, particularly for aluminium and aluminium alloys, copper, nickel, tin ingots, refined nickel, refined zinc and primary lead. The withdrawn QCO amongst plastics, they include polypropylene, polyethylene, PVC, ABS and polycarbonate. Now, amongst the chemicals and textile sector, the withdrawn QCOs include for ethylene glycol, all polyester yarns and fibers and terephthalic acid. The move is expected to ensure ample availability of raw material as well as an increased competitiveness for several industries, many of which import several of these products for which the QCOs have been withdrawn, and these products are expected to become cheaper, which is going to possibly lead to more competitiveness for several industries.
Right, thank you Abhimanyu for that. Time for a short break. Coming up next, India's first data privacy law is now operational. The government has notified rules under Digital Personal Data Protection Act more than 2 years after it was passed. More details when we return. Welcome back. India's first digital data privacy law is now operational. The government has notified the rules under the Digital Personal Data Protection Act more than 2 years after it was passed by Parliament. Companies and stakeholders get 18 months to comply with rules. Ashmit Kumar is here with more on the rules. Ashmit, a landmark day for data privacy. Please take us through the new rules and its implications for the public and the industry.
Well, indeed, a new era as far as data protection is concerned. You pointed out correctly, it's been a long wait, over 2 years, for these rules to be notified. 2023 is when the DPDP Act had been passed by the Parliament. But in terms of what the rules entail, well, I'll take you through them one by one. There's a lot to unpack. But firstly, as far as the implementation is concerned, the part of the rules that concern with the setting up of the Data Protection Board, which is the nodal regulatory agency, those parts of the rule come into effect immediately. But as far as the industry, the time that industry has been given to become compliant with various provisions and rules of the DPDP, well, those provisions of the rules will come into effect in a staggered fashion over 12 and then 18 months. So 18 months is what the industry has to basically make sure that they're fully compliant with the DPDP Act and the DPDP rules going forward. On data localization, this was a big watch point as far as the industry is concerned. And here is what is interesting as far as the rules are concerned. As a thumb rule, what has been given to understand is that personal data can be sent overseas for processing. There's a blacklist formula that will be followed, that certain blacklisted countries is where data cannot be sent. But for big tech players, that's your Googles, your Amazons, your Metas of the world, there's an additional conditionality that has now been imposed. The government says that a committee will tell these big tech companies what data sets cannot be sent overseas, irrespective of whether the country is in a blacklist or a whitelist. So that's another additional compliance that big tech players will have to look at. Speaking of the big tech players, they will also have to ensure a compliance audit. They will also have to audit their own algorithms to ensure that no harm is caused to the user. Furthermore, as far as consent mechanism is concerned, you and I, as persons, as data principals who will be giving their data to large companies or to smaller companies, we are liable. We now have a right under the DPDP rules to receive a notice from the company. The notice has to very clearly tell us what those individual pieces of data are, why that data is being procured, and importantly, a similar formula will then need to be adopted in case there's a data breach. You and I, as users, will need to be informed by the company immediately whether or not there's a data breach, what parts of data have been leaked, how it impacts me, and what measures I should undertake. And similarly, the companies will also be required to ensure that this information is then transmitted to the Data Protection Board within 72 hours. Another key aspect is that the government has been given the power to ask for any information from any entity when it comes to national security. So that's a wide power that the centre has. So clearly a lot to unpack, but clearly a new era as far as data protection is concerned, the rules being notified by the government.
Right. Thank you, Ashmit, for that. Moving on now. The Prime Minister's office will convene a meeting to review the Press Note 3 today. In 2020, India had mandated government approval for foreign investment from countries like China that share a land border through a press note. Now, Tim Z. Tepuria joins us now with the details. Tim C., what can we expect?
Well, as we speak, the meeting is underway. Prime Minister's office had called a meeting to review the Press Note 3 today. Meeting was to be headed by Principal Secretary to PMO, that is Shaktikanta Das, along with key stakeholding ministries represented such as DPIIT, DEA, MEA, etc. And just to give a backdrop to this meeting, India has been considering reviewing Press Note 3 in the backdrop of escalating trade tensions with the US. Recently, government's think tank, Niti Aayog, had recommended lifting Press Note 3 restrictions, citing that there are changes in circumstances since the policy was introduced in 2020, that is way back in COVID's time. And Niti Aayog is believed to have also approached PMO seeking this review, and that is post which this review meeting is likely to have taken place today. Press Note 3, just to give a backdrop, is a 2020 policy amendment that requires prior government approvals for all foreign direct investments from countries that share a land border with India. It mandated that any investment from these countries where India shares a land border with, where beneficial ownership of the investment is based in such countries, could only come through the government approval route. And this review meeting comes at a time when India-China relationships are showing signs of normalization. We recently saw that India and China have resumed direct air services, and that is the crucial country that this review could be actually looking at as to how Chinese investments can come back to in India with some relaxations in Press Note 3. That is what the review meeting is focusing on. As we speak, as I said, the review meeting is on. It can conclude any moment. And as soon as it concludes, when we hear back from our sources, we'll keep you updated on it.
Right. Thank you, Timsy, for keeping a track on these developments. With that, it's a wrap on this edition of Business 360. News and updates continue right here. Thank you for watching.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Real estate investment trusts, REITs, a vehicle that allows common investors like you and me to participate in the rapidly growing commercial real estate sector in India. I'm talking swanky, large grade A office spaces, mega campuses which are being rented by top dollar MNCs who are, of course, operating their big, large global capability centers here in India. And then, of course, there are, swanky malls, warehouses, and now even the data center promise. All of this is likely to boost non-residential real estate in a big manner. At least that's what the industry estimates are saying right now. So here are some numbers. From less than a market cap, a total market cap of less than 1 trillion USD, to be more specific, we're talking about 0.3 trillion USD. The Indian real estate sector, according to estimates of a lot of the consultants and CII itself, it's expected to scale up to a level of $5 to $10 trillion by 2047. That's the Amrit Kal dream. This means from accounting right now to about 6 to 8% of Indian GDP, the sector can potentially start contributing anywhere between 15 to 20% of India's GDP by 2047. Now, those are big numbers. So REITs do allow us ARM investors to be a part of this mega transition. SEBI has also given this instrument a more favorable play from a regulatory perspective. So is it really time to give REITs a very serious look when it comes to our portfolios? That's exactly what we discuss on this show. And to help us demystify this investment class, we have today Vishal Dhawan, founder and CEO at Plan Ahead Wealth Advisors, as well as Ashish Shankar, MD and CEO at Motilal Oswal Private Wealth. Gentlemen, thank you so much for joining in. You know, a couple of months back, we did a very basic primer on REITs on Let's Talk Money. And at that time, I must say, REIT prices, just if you map the one-year chart of some of these listed REITs, they hadn't run up. But now we're talking, 20% plus in most cases. What's really going on? Ashish?
Yeah, so I think, Surabhi, it's important to sum up what's happened in the last 1 year. And in that context, how should people look at allocating their capital? It surely is becoming a very important asset class. And I think it's a very opportune time we are doing this for your viewers. So REITs, simply put, is fractionalization of commercial real estate, rented commercial real estate, right? Because if you directly go to buy a commercial real estate, it costs a lot of money. I mean, it could be in the region of 10, 20, 30 crores, right? Now, this REITs allow retail investors to own units of a large pre-leased commercial property, right? Now, secondly, people should not rush in to buy these REITs just because they've gone up 20, 30% last 1 year. They're not exactly equity shares, right? Yeah. They own income earning assets underlying the structure. So let's understand what are the three components of the income, right? First, all these REITs are supposed to have minimum 80% of income earning assets, right? So they get rent out of these assets, which are basically leased out by software company, GCCs, or any other commercial establishments. That is point number one.
So REITs earn from that rental income, first
That's
of all.
right. That's right. Second, the rules say that 90% of the net distributable cash flow has to be given back. So there's certainty that the money is coming back to you as well. Right? So there is a certain income yield on REITs. Yeah. That is point number two. Point number three, right? There is an escalation in rentals which happens every 3 years. So it's generally 15%. So to that extent, the capital values of these REITs also get re-rated. Okay. So broadly put, I'll just explain the maths. Let's assume a REIT is earning a rental yield of 7%, which means if the REIT is valued at 100 rupees, 7 rupees is the income, right? Now, if the value of the rentals go up by 15% every 3 years, then the capital value of the REIT should also go up from 100 to 115.
15%.
Right?
Yeah.
So essentially 7 plus 5, 12% is the base yield from the asset that you can expect to get.
Okay.
So that is the base yield. But now there is another...
This is over a 3-year period.
This is over a 3 to 5 year period.
3 to 5 year
right?
period. Okay.
Now let's come to the second component of the return. What often happens is, like bonds, right? Depending on where interest rates move, whether it goes up or down, the capital values of REITs also go up or down. Because you can pay more for the same asset if interest rates are lower, or you will end up paying less for that asset if interest rates move up. Because your expectation of yield changes basis what the interest rate is at that point in time. Because if you go to an FD, let's say in an FD, if you're getting 8% and in a REIT you're getting 7%, REIT is arguably a slightly more risky asset class because it's volatile. The prices are volatile. Right? So you'll go and put money in the fixed deposit.
Okay.
You will expect 9% from a REIT. Right. Similarly, if let's say the FD rates or the interest rates prevailing right now go down to 5 or 6%, you will be willing to buy the REIT at a 7% yield. So the prices move up of the REIT when interest rates go down,
fall. Okay.
And vice versa, right? So that's something in a technical parlance is called cap rate compression.
Okay,
right?
Lots of technicalities, but I think what you've explained is this is really important because that capital appreciation part is not very well understood.
That's
Largely speaking, when interest rates are falling, REITs are supposed to do better.
Do better. So three components of returns we discussed. One is the income part. Second is growth in the income, which is the reset of the rentals. And third is the capital appreciation. And then there are some minor nuances. Every REIT also keeps adding, inventory and, your returns keep going up. But broadly, these are the three components that one has to be very careful. So now in that context, last 1 year, the capital appreciation has been
20%,
extremely
25%.
good.
These REIT units, by the way, if you look at, you can do this, simply go online and look at 1 year returns from these REITs. And there's so many of them, right? There's Brookfield, there's Mindspace, so many of these REITs, 5 REITs actually, which are now listed in India. If you plot a 1-year chart, then the gains are anywhere between, I think, 15 to, more than 15, 20%, 25% in some cases, right?
Right. So making an entry right now into these REITs, one has to be very careful in terms of what your expectation. Because the more the REITs deliver upfront, the back-ended returns tend to taper off.
That's a very important point, and we can only say this. Of course, investors will do their own thing. It just reminded me of the gold ETF flows. I was looking at the data that came out yesterday, right? In the months when gold was going through the roof, September and October, gold ETFs got the maximum amount of money. Absolutely. Because as investors, it's just, behavioral sciences. True. I think we end up chasing returns. But Vishal, come in on this. So, Ashish has explained just the basic structure of how that REIT works. What has the experience of the past been? Because now we have several listed REITs. When we combine all these three, the rental yield, the capital appreciation, the reset of rentals, how good has the return been from these products, say, over the past 2-3 years?
Yeah, so I think it's important to sort of look at different time frames because clearly the last 1 year has been fantastic for REITs. But the period before that, because REITs first got listed in 2019.
That was the first REIT.
That was the first REIT.
Brookfield.
So it's, that was Embassy.
Embassy REIT, yes.
Right.
Yes.
And it's been about 6 years now. So it's been through these cycles. So when Embassy got listed, there was this shortage of REITs. It was the only one there. It suddenly saw a big move up. And then you went through COVID, you saw people work from home. A lot of people believed that, that's the future.
And
no one's
there's
going to go back to commercial
never
space.
return to office.
Never going to return to office. So you went through this period where, REIT returns were very subdued.
Yes.
You had interest rate cycles along the way as well. So I think, if you look at investors who've remained invested for long periods of time, their returns are quite normal.
And what does that mean? Define
So they've been
normally?
anywhere between 11 to 13% for long periods of time.
Okay.
Which is pretty much how the combination of rental yield plus the rent increase plus capital appreciation's been. But anyone who's come in the last 12 months has seen an abnormally high rate of return.
Absolutely.
And I think it goes back to the principle saying that, a REIT is also a long-term investment asset. And therefore, when you're buying into a REIT, even though it's income producing, and therefore there is a tendency to believe it's more like fixed income than an equity asset, I think the time frame definition is really important. And therefore, getting into REITs with a 7 to 10 year horizon probably is a good idea for investors because they'll go through these interest rate cycles. Typically, interest rate cycles last for 2 to 3 years on the way up. Then they remain flat for 2-3 years. Then they go down for 2-3 years. So you go through the entire cycle and you'll probably get a normalized rate of return.
Okay, so let's establish reasonable return expectations from this product first. Ashish, like Vishal is saying, that if you just normalize COVID onwards, the slump and the rise, and what history tells us is between maybe 11 to 13%. Now we can't extrapolate past returns into the future. But would it be reasonable to expect 13 to 14% kind of a return from REITs, say over a 5 to 7 year period?
See, I would peg it more at 11 to 13. Right?
11 to 13.
If you get anything higher, I would say it's a bonus. Because look at it this way, right? And I'm just comparing it to stocks because it's easier for your viewers to understand, right? So if you take a stock, right, there is an earnings underlying a business, right? And typically your dividend yields are closer to 1 or 2% in stocks in India right now. So bulk of your returns come as capital appreciation. But in a REIT, what happens is that a large part of your returns come in the form of income, and some part comes in the form of capital appreciation. Right? Capital appreciation comes because of rental reset plus cap rate compression. So just to give you a maths, 1% lower interest rates results in a 10 to 12% gain on the capital front. So part of the return capital gains has lower taxation, as you know, it's 12.5%, right? Now, the other thing to consider is how are you getting the income from the REIT? So
and how is it going to be taxed? That's really important. Let's understand that.
So there are 2 ways the REIT pays out income. One is dividends. There are some REITs which pay out more dividends. For example, Mindspace pays out more dividends. There are some REITs who pay out more interest income. For example, Embassy. Right? So income return from interest income is taxed at MMR.
Your maximum marginal rate.
Maximum marginal. So for a person who's at the highest slab, it doesn't make sense. For a person who has a lower slab, it probably makes sense. But for a person at a higher slab, it makes more sense to get dividends.
And how are those dividends being
taxed? So dividends in your hands are tax-free. Right? They are taxed at the REIT level, which is lower than interest income at the marginal rate. So for people at the highest tax rate, probably the dividend makes a lot of sense.
Okay. And then there is capital appreciation, which is capital gains tax.
Which is capital gains tax. So the blended taxation is much lower than fixed income instruments. So the way to look at a REIT is on one side you have a fixed income instrument, right, which is giving you guaranteed income or certain income. And on the other side you have equities which are obviously uncertain depending on the earnings of the companies. This is a hybrid asset class in between.
Okay.
Because about 60-70% of the income comes from dividends or interest, and about 30 to 40% comes by way of capital appreciation.
Okay, got that. So now we've understood the brass tacks. We need to take a break, but after the break, we boil down to further specifics. There are 5 different listed REITs. They own different kind of assets. Like Ashish explained, some give you more interest income, some give you better dividends. How do you decide which one is right for you? And then we also look at changing regulations. SEBI has turned a far more favorable eye to REITs. What does that mean for us? We'll find out after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we are demystifying the world of REITs, real estate investment trusts. And why are we doing that? Because they seem to be garnering a lot of interest now. Because A, commercial real estate has been booming in India, and B, the actual listed price of these REITs, that price has also been going higher. So therefore, it merits a closer look before you decide whether you want to invest or not. Vishal, let's talk about this, right? 5 listed REITs now in the country. Tell us a little bit, I mean, some nuances, and then how should we decide? Do you invest in all 5? Do you pick 1, 2, 3? You know, how to go about it?
Yeah, so there are clearly 5, and one of them has got listed just very recently. So Embassy was where it all started from in 2019. So they're very Bangalore focused as a REIT. So one of the important things around REITs is they are in different geographies in terms of the concentration of assets that they have. So Embassy is very Bangalore focused. You have Brookfield, which typically has built its model around campus style spaces. So if you went to a college campus and you looked at mixed developments inside it, commercial, residential, retail, all together in those campuses, that's the Brookfield model. They're of course in other cities as well. So they are in the north. They've just made a large purchase in Bangalore. So Brookfield's their global player. You have Mindspace, which is very Hyderabad and Mumbai centric.
Okay.
So again, a lot of these REITs have tenants who are similar. A lot of technology, commerce, banking and financial services, global capability centers, especially Brookfield has 60% plus of its assets rented out by GCCs. So you've got that third player. You've then got Nexus, which is different because it has largely malls and retail spaces. So it's different from the other three simply because it's focused in a different area. Those malls are across the country. They continue to buy more mall assets and sort of create exposure. And then you've got the most recent one, which is Knowledge Reality, which was essentially put together by Blackstone and Satwa. So those are the 5 players who sit there. So there are going to be 3 sort of key elements that you think about. One is which geography do you really want to go to? So if you believe that Bangalore, for example, is the hub of where a lot of development and a lot of demand for these assets is going to come, then obviously a more Bangalore-centric REIT may be important. If you believe that you're trying to chase global players, then you'd probably want to look at something which has got Blackstone or Brookfield in it. If you want to look at the retail spaces, then it's Nexus. So I think one of the things that investors need to be very mindful of, besides what Ashish mentioned around how they pay out their income, is what is the kind of exposure that you want to really take as far as the REIT is concerned.
Do you want to be in offices? Do you want to be in a certain part of
exactly.
the country? Do you want to be in a narrow market? But that also raises another question. The question of concentration, because from what you describe, clearly technology and GCCs, that's a huge part of the whole REIT story. So from an investor perspective, if I'm looking to take an exposure to, say, a largely Bangalore-centric player where, technology tenants are the large chunk of that rental income, am I taking on too much risk?
So there is definitely risk in it. And I think, the risks come from the fact that those contracts which are there, a lot of them will have lock-ins in place. So I think it's important to understand how those deals are structured. It's also important to keep in mind when those deals happened, because there is a reset on rentals that happen over a period of time, because you end up doing a contract for, say, 9 years, for example. And when it comes up for a release conversation again, you could see appreciation happen on the price further because the rentals have gone up over a period of time. So I think there is nuances in this, and that's why it's important for investors to try to be diversified when they build their REIT portfolio. It's very tempting to just look at last 1 year returns and say,
oh wow, great asset class, let's buy.
This is the best one to buy into. But I think you need to get into a little bit of detail, and ideally our suggestion is between 2 and 3 REITs is a good way to look at it, until the point where you start getting index solutions come in. You will probably see ETFs get created out of REITs, etc. But you'll be able to buy much more diversified.
Just buy the REIT index, so
exactly.
to speak.
You could buy a REIT index. So the REIT index is already in place. Unfortunately, there are no products based on the index yet.
Which brings me to the next part of the conversation, because maybe we're moving in that direction. So viewers, what has happened recently is that SEBI, in its latest classification norms, is now willing to look at REITs not as a hybrid instrument, but as actually equity, which means when mutual funds need to buy the equity part of their portfolio along with buying equity stocks, they can also take more exposure to REITs. Now, what does this mean? It sounds great, equity exposure, etc. But Ashish, it also gets a little confusing, because at the end of the day, what is REITs? REITs is taking a bet on commercial real estate in India, right? I can also do that by playing the equity stocks of these developers, if I'm that convinced. So how does one decide, and especially with this new equity classification?
See, the difference is that, as I mentioned earlier, right, REITs have an inbuilt income, which stabilizes the volatility. Right. If you look at a stock, the earnings are far more volatile than, let's say, a rental income asset.
That's true, very true. Great point.
So it's a great way for a portfolio manager to reduce the volatility in the portfolio. Plus, the classification on equity is a big advantage because in hybrid funds, you can buy REITs and still enjoy the equity taxation, right? So the SEBI classifications of, let's say equity hybrid, equity minus hybrid. So these two categories, REITs can now substitute the equity part and bring down the volatility on the portfolio. So I do believe that you will see more exposure from equity funds or hybrid funds into REITs going forwards. I mean, they allowed 20%. And overall as an asset class, right, today REITs, if you look at the market cap, is about 1.5 lakh crores. Okay, the AUM is about 2.5 lakh crores. It's about 0.3% of overall market cap. Globally, it's about 3%. So there is a lot of room for the market caps to increase, for the assets to increase. And I see a lot of more REITs getting listed. So there's another classification that SEBI has allowed REITs to come into, which is called the SM REIT.
Yes,
which
small
is
and
below 500 crores. We've not yet seen a REIT list there, but I do believe that going forward, you will see few more REITs listing in that category. So as an asset class, this is going to become fairly large. And like Vishal mentioned, I think for a retail investor, right, he can enjoy the best of both worlds. He can have REITs stabilize his volatility, plus you can diversify as well, because these are basically fractionalized units. Only thing to keep in mind is that REITs also are a play on the economy of the country.
Absolutely.
Right. So if the economic outlook improves, REITs will move up in terms of price and vice versa. So from a near-term point of view, like he mentioned, like 5 to 10 years, it doesn't matter. Your returns will normalize to that,
11 to 13%.
10 to let's say 13% bucket. But let's say if you're getting in today, I mean, you've seen a huge run up over the last 1 year, then near-term returns may be lower and you may get returns slightly. You have to wait longer. So those nuances one has to keep in mind.
Fair enough, and I think these are excellent points that both of you have raised because it gives us lots of food for thought before deciding to invest. I'm ending with the simple question, right? You go back to your portfolio. Now the question is whether you should take direct exposure yourself, buy 2-3 REITs as Vishal said, or should you let the fund managers do it for you because now mutual funds can technically buy a lot more REIT, right? And if you're doing it yourself, then as a part of the total portfolio pie, a well-diversified portfolio, at what level will you or would you want to cap that REIT exposure, Vishal?
So we think that till the products actually come in a material manner on the fund side, on REITs, investors may need to build this independently, especially keeping the tax structure in mind because of the way dividends are taxed relative to interest.
And do you have any favorites in that case?
So we think that Brookfield and Knowledge Realty may be good options to consider. It's important to have that time frame right, and it's important to keep looking at what's happening. So I think one of the important things that investors miss very often is there is an NAV that is published every half year by the REIT, and that's done by an independent valuer. So typically you will find that as market prices go up, you would find that there's a discount to NAV which becomes a premium. And normally when you start seeing big premiums to NAV, you need to be very careful about what's happening. So what you're seeing right now is a stage where the NAVs are very close to market prices, very small discounts or some premiums, which typically means that over shorter periods of time, investors may not make a lot of money until the NAVs itself get reset. And that's why it's important to
So watch for the NAV and they come out half yearly. Got that? Right. Final word with you, Ashish, to buy or not to buy. That's the $0.3 trillion question right now.
Yeah, so given that the exposure of mutual funds to REITs is still very limited, I do believe it makes a lot of sense for investors to build this allocation directly. Now, how much should it be? See, it can, as I said, it's a hybrid between an income generating asset and a capital gain asset. So it can be an in-between equity and debt, and it can still give you income. So for people who, let's say, want income out of their portfolio, this can be a very, very good option. And you could build maybe 10, 15 to 20% depending on what stage of life you're at
your need for income,
currently.
steady
income. And your need for income. And like I said, the other nuances to look at is how the income is coming, whether it's coming from dividend, it's coming from interest, and what is your marginal tax rate at that point in time. So I do believe that it makes sense to build exposure directly. But the only caveat is that look at it from a 3 to 5 year point of view, because by then, the volatility evens out.
All right, gentlemen, fantastic conversation. Thank you so much. And we've come such a long way, right? From the time where commercial real estate investment was only for the rich and famous. Now it is for you and me. But there are lots of details and nuances to keep in mind. So make sure you check all of this before you make the investment. Thank you for watching. We'll see you next week, same time, same place with another theme.
Let's talk money.
It's a sweeping victory for the BJP JDU-led National Democratic Alliance in Bihar, which has ruled the state for the better part of the last 2 decades. The alliance has crossed the 200 mark and is marching towards a historic performance. The BJP has emerged as the single largest party with a strike rate of over 90%. Nitish Kumar's JDU2 improved its strike rate significantly from winning 43 of 115 seats it contested in 2020. It is now ahead in more than 80 of the 101 contested seats. Outside the Patna office, JDU posters proclaim Tiger Abhi Zinda Hai, underlining Nitish Kumar's continued imprint on Bihar's politics. Bihar's longest-serving chief minister, who has taken oath for a record 9 times, Nitish is well known for frequently switching sides and alliances. He had broken ranks with the NDA in 2022 and allied with the RJD for less than 2 years. That was his second alliance with Lalu Prasad's party. Chirag Paswan's Lok Janshakti party also emerged as a major force, contributing more than 20 seats to NDA's kitty, a big jump from just 1 seat in the previous election. Chirag's party was not a part of the NDA during the 2020 Assembly election. In 2020, Lalu Prasad's RJD was the single largest party with 75 seats, but this time the Mahagathbandhan has been decimated, failing to touch even the 40-seat mark. Congress's tally has fallen to single digits. Prashant Kishore's Jan Swaraj party, a greenhorn which fought elections on its own accord, failed to open their account. So what may have really worked in favor of the NDA? First, the woman factor. The incumbent Bihar government transferred 10,000 rupees each to 25 lakh women under the Mukhyamantri Mahila Rozgar Yojana. The opposition had alleged the move as a violation of the Model Code of Conduct. Remember, around 2.5 crore women cast their votes this time around, outnumbering male voters. Secondly, the Nitish Kumar government gave free electricity of up to 125 units to all domestic consumers, leaving many villagers with zero bills. Third, pension scheme. The old age pension amount was also more than doubled for 1.2 crore people, from 400 rupees to 1,100 rupees. Fourth, the social arithmetic worked for Nitish. The CM enjoys the support of several OBC and non-Jatav backward caste constituencies. Fifth, the Jungle Raj narrative. The NDA repeatedly invoked the dismal law and order record of the Lalu era, a message that appears to have resonated with voters. All these factors together seem to have blunted the opposition's focus on unemployment and its allegations over the special intensive revision of the voter list and vote theft. Joining us now to take this forward is Gopal Krishna Agarwal, the BJP spokesperson, Rakesh Ranjan, spokesperson of the RJD, Karthik K. Batra, assistant professor of Azim Premji University, and Mrityunjay Sharma, political analyst. Thank you very much for being with us today. Let me ask you, Mrityunjay Sharma, who do you think was the kingmaker in this election? Was it the women of Bihar? Was it the extremely backward castes, which hold 35% or 36% of the votes in the state?
So, see, more than often than not, what we say is the women voted for Nitish Kumar and the NDA because they got 10,000 rupees in their kitty just before the elections. But that would be simplifying the case too much, because women have voted for Nitish because of a lot of initiatives that have been taken in the last 20 years, on which Nitish had built a trust with women. So whether it was the Cycle Poshak Yojana in the first term, whether it was 50% reservation for women in the panchayats, 35% reservation for women in all across the jobs. And hence, when you do an initiative like this, the women who inherently are on your side, that vote bank gets more strengthened, and they feel like it's more of an extension to what you have been already doing. See, if it is just about announcements or doling out money, even Tejasvi or the India Alliance, they said we'll dole out 30,000 rupees directly as soon as we win. But then that did not, had credence among women. They did not believe in that because there hasn't been a history of, let's say, women-centric schemes. That's one. Also, it would be simplifying to say that only the women voters voted in Bihar for Nitish Kumar. See, there has been a very 20-year-long history throughout which Nitish, in spite of whatever debates may have been there in terms of the amount of work that has been done, but he has gained a certain amount of reverence and respect all across Bihar. First, for the kind of governance and turnaround of Bihar after 2005, and second, because of his personal image and probity. See, in Bihar, being in power for 20 years and not having a speck of dust on you in terms of corruption or in any kind of a personal involvement, that's a huge, huge thing. We are undermining that. Third, even for women, the 10,000 rupees may have mattered, but what matters more for them is the law and order. We often speak of law and order, but the biggest beneficiaries of improved law and order is the women itself, right? And hence they have been rallying behind Nitish Kumar for all these years. But more than all of this,
Sanjay Kumar, I'm going to come back to you. Let me just get in the BJP spokesperson for a quick reaction. Gopal Krishna Agarwal of the BJP is with us. Gopal Agarwal, will Nitish Kumar, in these current circumstances, be the chief ministerial candidate of the NDA? The reason why I ask is because when this election started, you had Amit Shah saying there is no vacancy for the CM's post. But now today, the BJP has the numbers to form the government on its own with the allies, the LJP, the Upendra Kushwaha party and the Hubs party as well. We also saw the JDU putting out a tweet that Nitish Kumar is going to continue as chief minister. That tweet was later deleted. What do you think we can expect?
See, Parishit, we have to understand that there is, in this situation, nobody should preempt the whole future aspect, what will happen. We fought the election, all the 5 parties together in a Gathbandhan, and we understand the coalition, the requirements of coalition government. It is the issue of the central government, which is also important for the elections. It is also important that all the 5 parties decide together. And we also have the aspirations of all the within MLAs. So the things are to be analyzed, and then only the aspirations of the MLAs, all the 5 parties coming to consensus on board with consensus. Then what has been decided before the elections also is an important factor. And what is the NDA politics in the center. All these factors will be considered, and then decision will be taken. I don't think preempting on these decisions and just deciding on one factor will give us the proper future results. So
but I think you've given us an important factor. You've given us an important headline that it's not in the clear that Nitish Kumar will be the CM. There could now be a change, considering the election result and the strong performance by Chirag Paswan's party and the BJP itself. So that will be something interesting to watch out for. Let me also go across to the RJD spokesperson, Rakesh Ranjan. Rakesh Ranjan, what do you think went wrong for the India alliance across the state of Bihar? You had the Tejasvi carrying out a yatra across the state. You had a Rahul Gandhi, but Congress is now down to low single digits. Would you say and blame the Congress for bringing the alliance down, or do you think everyone in the opposition has to bear responsibility for what has happened?
Yes, good evening, Kartikeya, and all the panelists. I don't think we need to blame anyone, because all our allied partners out collectively and unitedly. Even you find not even a single person who can justify this mandate, because most of the people and each and every people are in anger with the BJP, and they casted their vote against the BJP. In Bihar, most of the people, I think, they don't like to talk about the BJP, because BJP...
But Mr. Ranjan, how are you saying this? Because we've seen the Yadavs and the Muslims moving away from the opposition, from the RJD. The women have voted in big numbers, and we've been putting these numbers on our magic wall. Even in the Muslim-dominated areas, the NDA has done better.
Just a narrative. Just a narrative. They are trying to set a narrative to justify this. No. How can you say that women and Yadavs and these all kind of shifting away from the... This is the...
Doesn't the number show? Look at the numbers, sir.
On the number, it is just... the machine can say a number.
For the RJD.
That's why.
Right, let me get in now.
It is the centralized operation, and just the results are already decided, and then what Election Commission of India is doing are acting accordingly to just justify that those number and those decisions.
तो आपका कहना है राजीव रंजन जी कि कहीं ना कहीं आप इलेक्शन कमीशन पर सवाल उठा रहे हैं. Kartikeya Batra, if I can get you in right now. Rakesh Ranjan of the RJD saying that this is narrative.
I am telling you not only about the Election Commission of India. I am telling you why even the single person, including the PM, not even spoke about the education, migration, and even all kind of the developments. Bihar even still not copying any of the single indicator of the development.
Okay.
And then,
all right, Kartikeya
saying
Batra,
that, no,
how do you see the response of the RJD spokesperson today? Clearly a time of big introspection for the opposition, for RJD, for the Congress, for what went wrong in the state.
I think it's really tough to be an RJD or a Congress spokesperson today, Parikshit. I think let's first cut some slack for the gentleman. And it's just been a rout. It's been a sweep. And it's been an unprecedented sweep, an unexpected rout. So I think it will take some time and some soul searching for the opposition to also understand what exactly happened. Whereas any irregularities that the opposition or any voter feels about the election process, they need to be addressed by the ECI with as much enthusiasm as possible. There are some hard facts on the ground which were very visible. And those were, I think, well summarized in your initial narrative that you kind of set with the 5 points. So, yes, there was very little anti-incumbency against Mr. Nitish Kumar on the ground. Yes, the women, especially belonging to the caste groups that usually side with the NDA, were highly mobilized. And I agree with Mrityunjay that it's not just because of 10,000. The 10,000 was grease to a machine that had been built over 20 years. Yes, the Jungle Raj narrative still resonates, unfortunately for Tejasvi Yadav. And yet at the same time, there was a lot of anger, a lot of disappointment amongst male youths regarding jobs and development. Now, one has to also understand, Parikshit, that mathematically the last election looks very close, but it wasn't. Because the LJP was fighting separately and so was Mr. Kushwaha. So actually, if you juxtapose those numbers in today's alliances, the MGP started with a very big disadvantage of 4 percentage points. And they had to bridge that gap. Instead of bridging that gap, what happened was that due to a variety of reasons, whereas the MGBs kind of stagnated. At the end, I think their vote share will be the 37 to 38% range. So they will have not built on 2020. But the NDA has mobilized higher percentage of votes, which means they have eaten into that others chunk that used to go to the smaller parties, the independents earlier. Yes, there has been some to and fro. The VIP has switched. The IP Gupta party came to the MGP. But broadly speaking, the NDA blasted on all cylinders. There was a policy narrative in terms of mobilizing women, the BJP strategy on the ground, the last minute delivery, so many things. Nitish Kumar's face, his credibility. And one last thing.
All right, Kartikeya, we're going to take a short break at this point. We'll request all our guests to stay with us. We have to take a break. We'll be right back and we'll go back to everyone. Gopal Agarwal, Mr. Rakesh Ranjan, and we really appreciate the fact that Mr. Ranjan is coming here and telling us about the opposition's view today. Mrityunjay Kumar, we'll come back to you as well. But let's look at the big numbers on your screens. 204 for the NDA, comfortably crossing the 122 midway mark. Will they reach 206 and cross 206? What they won in 2010. Will this be a record victory for the NDA? That remains to be seen. The RJD plus just 34 seats altogether. A poor show by the Congress party. The heavy lifting being done there by the RJD. And within the NDA, you had the LJP, Chirag Paswan's party, delivering very well. They had fought on 29 seats that were allotted to them. And they are delivering victories on at least 20 and above over there as well. So we will analyze what's happened in this election, whether new social combine is coming up and what really worked for the NDA and what did not work for the Tejasvi-led alliance. Lots more coming up on the other side. Welcome back to Election Exchange. We are decoding Bihar's sweeping mandate for the BJP-led NDA with our panel of experts. Before that, the numbers once again, a strong performance by NDA partners, especially the BJP, the JDU, the LJP, 204 seats. Will they cross the 206 number? That remains to be seen. The RJD, the Mahagathbandhan, 34 plus. So the heavy lifting being done by the RJD, by Tejasvi's party. The Congress down to low single digits. 5 seats going to other parties. So what will be the big trend that this election will throw up? Will there be changes in the social combine which brought political parties to power in Bihar? Traditionally, we had seen the Muslims and the Yadavs being a very strong force. That is still a very strong force, but we've seen the EBCs, the extremely backward classes, and women playing a big role in this election as well. Let me go back to our panel of experts. Mrityunjay Kumar, just to ask you, what will this election show as a long-term trend as far as Bihar's politics goes? What do you think has worked in the past and is no longer working? Are people now voting for development? Are people voting for consistency? Do you think that's why some of the Muslim-dominated seats, the women-dominated seats came out to support the NDA in big numbers?
Parikshit, in fact, in 2010, you were talking about the 206 mark. When in 2010, the NDA got 206, it felt like there was a very clear explanation to it because there was a governance turnaround of Bihar and, people felt like this is, 206 is no surprise. It's just an extension of what they should have received in terms of the number of seats. But this time a 204 is quite complex to explain. If I had to very simply say, this is a result of, let's say, a 20 years of pro-incumbency and a 15 years of anti-incumbency of the rule that RJD had during 1990 to 2005. See, what has happened is when Lalu and RJD were in rule, or even in 2005 until 2010, there were clear, dichotomies in terms of whether those 15-year rule was really a misgovernance era or an era of social revolution, so as to say. But now in 2025, things have been much clearer in hindsight. I think those 15 years have been very clearly established across people, across circles, as an era of very deliberate misgovernance. And hence, people do not want that era to return. Now, RJD hasn't been able to break out of that image. If RJD were able to break out of that image, people would have voted for them. But let's say the statements that are given by their leaders, their supporters, the kind of songs that come out in their campaigns, that essentially show that the RJD is just an extension of that time itself. Now, what happens is, by the way, RJD always banks on the fact that Muslims and Yadavs will keep voting for them. And they do vote for them, even in this election, even with this result, I can guarantee you. That electoral combination, Muslims and Yadavs have largely voted for them. But sadly, that has not been sufficient for them to come in majority and form a government. They will need another vote block to combine with this MY vote block for them to be able to form a government. Now, what had happened essentially in the press conference in which they released the manifesto also, where Mukesh Sahni, they
go across to all our guests again. Yeah. We have to take comments from everyone. We're running out of time. But Gopal Agarwal, what does the state of Bihar, the people of Bihar, expect now onwards, now that you've got such a strong mandate?
I just want to tell one thing is that the MY combination that the opposition Thakbandhan was talking about is now completely disseminated. Because I think slowly even the Muslim population of the country is also realizing that the opposition is taking them for a ride in the name of secularism. Ultimately, what PM Modi ji's schemes are doing, government's welfare scheme is doing that even minorities are getting the maximum benefit out of it. For almost 70 years out of the current post-independence, opposition have ruled at some place most of the time. But what has happened to the Muslims minorities? Their situation is completely not conducive. They have been going from worst to worst. And every time they were supporting opposition, they were just milking them in a vote bank politics, not doing anything. So I think this MY combination, the slogan of MY, is completely disseminated in this election. And your analysis also shows that even in the Muslim-dominated constituencies, NDA has performed well. So that shows that they have realized now that they were being exploited in the name of simply the secularism, and appeasement was in words but in not in action.
You know,
So
Gopal Agarwal, I'll just take a final word from Rakesh Ranjan. He's smiling right now. He's putting up a brave face. You have to really give him that. Rakesh Ranjanji, the Prime Minister has tweeted to say good governance is one, development is one, pro-people spirit is one, social justice is one. Can we now say that the opposition is going to take out a campaign against the Election Commission? Are you going to be questioning the fact that 80 lakhs votes were missing in this election? Is that the plan that the opposition will take?
Yes, the party will decide. Now we are considering the things and let us discuss and then decide. But one thing I want to here, Gopal Agarwal was saying about the development, good governance, and this all kind. All data are saying otherwise. Even if we talking about the welfare scheme, even they fail to deliver every welfare scheme. Even the gas cylinder, the price of 350, now they raised it to more than 1,000, and then it's delivering the welfare scheme. Even the PM in all their rallies failed to deliver or name even a single project, the single indicator, the development indicator, who means they delivered, and in that indicator, he can say that confidently now Bihar is topping with this indicator, be it education, be it the health sector, be it means employment, each and every sector, they fail to deliver all the promises they have made. Despite that, they are saying the women and these all people are casted their vote in their favor. No. It is beyond understanding. You cannot justify it because it is something you have made and deliver nothing to the people and then are claiming to that. Even in the election,
so Rakesh Ranjan is saying these numbers cannot be explained. They're not justified. They're accusing the NDA of not doing anything on the ground. Let's see what happens in the days to come, Mr. Ranjan. I've unfortunately completely run out of time, but I'd like to thank everyone, Kartike Batra, Mrityunjay Sharma, Rakesh Ranjan and Gopal Krishna Agarwal for joining us. With that, it's a wrap on this special edition of Election Exchange. Don't go anywhere. News and updates continue after a break.
Hello and welcome to a new edition of Market Masters. The UBS India 3-day conference is underway. First up on the show today, my colleague Nimesh had the opportunity to speak with a very rare voice, UBS country head Miki Doshi. Nimesh quizzed him on a whole host of issues: India's recent underperformance, the potential of a fair trade deal between India and the United States, and the exponential growth in India's primary market space. Take a listen.
This is a big event for us at UBS. This is our second year of the conference after we integrated with Credit Suisse. The turnout's been superb. Like you rightly said, the FI turnout and even domestics have been around. I think the mood is clearly one of wanting to see the opportunity and see what the the investment outlook looks going forward. Yes, you're right. It has been a rank underperformer. China and Korea, as you know, have been clearly beneficiaries of less flows into India or outflows out of India into those markets. Multiple reasons. I think some of the flows have gone into the IPOs. We've had a robust IPO calendar this year, continue to have one next year. So that's part of the reason why. Secondly, I think Liberation Day obviously wasn't very favorable for us, which I think, again, we're hoping that that changes going into 2026 and is positive for us. So yeah, the mood is upbeat. We actually had the ex-deputy governor of the RBI yesterday. Again, very supportive. He thinks RBI is going to be out there and supporting the growth in this country. So I think, yeah.
Sure. I'll ask you about banking and RBI stance as well. But you spoke about Liberation Day, and since then we've actually underperformed. Yes. You're having Piyush Goyal at your conference today, though it's virtual. But as a house, what are you expecting in terms of the India-US deal? By when you think it will see the light?
When it will see the light, I don't know. The hope is...
But you're hopeful?
Very. Oh, extreme. I think it's in the interest of both countries, actually. We're no longer a country which anybody can neglect, right? I mean, and if you've seen what our Commerce Minister has done in the last, I guess, 18 months, from Switzerland, Luxembourg, to Norway, to UK, to New Zealand, one by one, we're getting our agreements in place with various countries, right? And I think the US is going to be right up there. So am I hopeful? The answer is 100% I'm hopeful.
So what's the base case at UBS? That the 25% extra will go and the base 25 will remain, or even that will be reduced further to sub 20?
We have not actually done, I personally have not taken a view on that. I think at least as first case, the base case should at least be that the top 25% should go. Okay.
Coming to banking, Miki, you spoke about a deputy governor at your conference. The biggest FDI in the last 1 year has come into the financial space. Never ever we thought of in the last 15-20 years that Etihad Bank will get an access of 60% stake in RBL Bank. It's unheard of, right? What's your sense? You've been a banker for so many years. Right time to open up the banking sector, and you think more deals will come?
First thing is, I think clearly the financial sector is a proxy to our large population, right? 1.4 billion people, 1.5 billion people. The consumer play in India, if you play it via financials, there's a great way to play it. Yeah. India has had some world-class banks. Yes, you're right. Historically, the RBI was quite stringent on allowing foreigners to come in. If they came in, licenses were given, with a certain business plan. Growth was controlled by them. And I think there's no harm in the way we approached it. I think we've had some, ICICIs of the world, HDFCs, Kotaks, would not have happened that easily if we just allow them to come in the manner they may have wanted to. I think going forward, yes, it's a mature market. I think there's need for a synergy between what the global banks can bring to India in terms of products, in terms of the reach, etc. So yeah, I think the time is right, and I can see more of this happening. Okay. I think the dialogue which we actually as a house have with a number of jurisdictions where people are keen. If you ask the Japanese, they're keen to expand here. They ask the Koreans, they're looking for opportunities. So yes, there is keenness.
Okay. You briefly spoke about IPO as well as one of the reasons why some bit of FI money has moved from secondary market to the primary market. You've seen so many IPO cycles in the last 20, 25, 30 years. What do you make of the quality of paper that's hitting the market? While there is an argument of valuations very steep for some of those recent listings like Linkard, but what's generally your sense of the IPO paper in India?
So you're absolutely right. There have been multiple cycles and cycles which have not worked out for many corporates or for investors, right? And go back to the Y2K 2000 boom era, where there were a lot of small companies coming to the market. You know, the one thing if you notice now, the size of the IPOs, right, are clearly differentiated from the past. Yes. And I've always maintained that it's easier to get a large IPO done than a small IPO done, right? You know, the size of assets which the domestic mutual funds and of course, we've always had the global investors coming in, you know, it's huge. So to make a difference in the portfolio, these large IPOs. So I think what we've seen is most of the IPOs clearly at the right valuation have done well, and I continue seeing that. I think we've seen the other advantages. You know, it's no longer just a single economy, or it's just, you know, it's across sectors. You're seeing the IPOs coming out. I mean, I was just looking at this morning's papers, from, you know, defense to education to consumer. You can buy glasses, etc. So I think it's a very varied sector. India is no longer just a 2-3 sector market, and I think it's going to continue. I think you see that in our pipeline too.
Sure. I want to ask more about the UBS, you know, strategy in India, because, and I'm asking you because, you know, recently we saw the deal of UBS buying 5% in 360 ONE, and you want to eventually, you know, build this wealth business. Yes. As a financial, as a theme, how much bullish you are across the capital market theme, whether it's wealth management or exchanges or brokerages?
Like I said earlier, right? Financial services is clearly perfect for, you know, playing the consumer market, yeah. Right? I think, you know, and it could be across the whole chain of retail to ultra high net worth, in terms of wealth management, in terms of investment banking, in terms of broking, pure corporate banking, right? We've seen how how banks have grown on that side. Extremely bullish. I think yes. The reason we did this deal, or the hallmark of this deal, is you're combining the largest wealth manager in the world, the premier wealth manager in the world, with the largest standalone domestic wealth manager, asset manager in India, right? I think it's a win-win for both, providing access to our global clients to come into India with 360 ONE, and as you're seeing the markets open up for domestics to go overseas and various.
So the plan is to stick with 5% in 360 ONE, or you want to increase further going forward?
I think it's early days. We've just got, you know, the marriage was consummated in April. The other agreements have just been signed. I think we'd like to see how it plays out. But clearly, you know, I think it's in the interest of both that it grows. I think even when we did the announcement in April, we did say that this is the start of the relationship. So I'm hopeful that it does grow.
Okay. Vicky, you know, globally, the one big talking point has been the AI, and India has been seen as an anti-AI in that sense. We don't have much of an AI play in India. It can cut both ways, right? If there is a bubble which bursts in AI, India will be safe. But what's your general sense on the entire AI theme, and how can India, you know, be a part of it going forward?
So from again, you know, obviously I'm learning a lot about AI. Actually, one beautiful thing about UBS, they had the senior management start a course. We were sent away on a course for 2.5 days to the UK, to Oxford, to actually study the impact of AI. So we all, as a house, we really believe that AI is here to stay. There's no doubt about that. It's going to change how work gets done. Of course, having said that, I don't think it's sole reliance on AI. India, has it missed the boat on AI? No, I don't think so. I think even when you look at technology, how, you know, from the old technology where, you know, the 90s, we may not have been cutting edge to start off with, and you've seen what we did there. I think this is the first wave. I think it doesn't necessarily end with the first wave. And knowing how smart our engineers themselves are, I don't see any reason why we won't participate in this growth. And we'll get a sense also, like you said.
You're not worried about India not yet participating in the AI?
No, not at all.
Okay.
Not at all.
Okay. You've seen so many investment deals in the last 20-30 years. We've seen a lot of M&A deals picking up in India as well, and India now actually doing a lot of outbound deals again, right? Mid-cap companies buying out big assets, over $1 billion and all. What's the sense there? You know, is there a lot of easy liquidity which is helping a lot of M&As to happen, outbound M&As as well?
So I think two things, right? First, M&A domestically, I would focus on the fact that there's also a generational change happening, right? I've been back in the 30 years, right? That's already one generation. Companies which were set up in the 80s, 90s, they may have a generational change. The second gen may not want to be part of the company. You're seeing a lot of inbound interest. I mean, immense interest. In the last 2 days, the number of clients we've met, private equity firms you met, they're all looking at opportunities in the inbound M&A space, right? So that's here to stay. In terms of the outbound M&A, I think we've had a cycle in the past. We've seen some of the larger players going out. Again, I think it's a matter of how confident the Indian corporate has become. And they do believe that if they can actually benefit from the acquisition, potentially one of the themes which is quite popular is go acquire the front end offshore, bring the back end back in India, and it's a win-win situation. And I think it's a matter of confidence that you're seeing these transactions happen. Sure. Corporate India is no longer worried about going overseas.
Welcome back. We spoke with Gautam Chachoria, head of global markets at UBS, and began by asking him about the scale of the conference and the key themes he's looking forward to. Listen in to a slice of that conversation.
It's a bigger event this year than last year and earlier. We have more than 250 plus investors and 65 or 70 odd corporates. But again, beyond that, we have interesting panels, including from government officials, ex-RBI officials, panels on consumption, on AI, on manufacturing, defense. So host of thematic panels, which we have curated for our investor base to hopefully get something out from this conference. And beyond that, we have multiple tours going on. Like we did a couple of days of macro tour in Delhi and Bombay last couple of days. And we have thematic tours on the ground consumption, manufacturing, defense, etc. Again, the big themes, obviously, from talking to investors, and this is still early discussions, is around what happens to growth in India second half and later, and also the trade deal. And the big longer-term thematic around manufacturing as to whether we see more manufacturing, specifically around defense, but in a broad way, pick up in India.
In terms of the foreign participation, Gautam, hi. So, what is your expectation in terms of just where investors are coming from? Because a lot of them have given India the skip, right, in this year, in this calendar year. They've gone to other Asian markets. And the biggest grouse is that India doesn't have a deep tech story. So, what's your sense? Do you see that tide turning, even in your conversations in the run-up to the conference?
So, look, a few things. One, we are seeing increased foreign investor participation this year. So we have more number of investors traveling, and this is across the world, not just US, but across countries in Europe and even Asia. Beyond Hong Kong, Singapore, we have investors attending the conference. Okay, so that's the first point. Second is, look, foreign investors have not been investing in India in aggregate for last 5 years, not just last few months. Beyond the yearly buying and selling, net they haven't invested literally anything over the last 5 years. The last few months, obviously, there's an AI and tech thing, there's the India-US trade deal, valuations, and opportunities in other markets in Asia. So that's not helped also. But what we have seen in the last couple of months, and more so in the run of the conference also, is we are seeing interest pick up in bottom-up stock ideas. So we're still not seeing foreign investors talking, okay, let's allocate a lot more money to India, it's bottoming out, etc. But we are seeing in the last 2 months a bottom-up discussion. And it's across sectors, not just one sector. Whether it's financials, consumption obviously, but even manufacturing, defense, etc. We're seeing a lot more discussion from the team here, sales and research, with foreign investors on bottom-up ideas.
All right. Hi, Gautam. Good to see you, Ben. And you were quite positive on consumption, namely the two-wheeler and the four-wheelers. And actually, the last couple of months have worked out very well for them. What is your view right now? And from the auto pack itself, consumption/auto, what do you like?
So look, broader consumption theme we continue to like. There are enough tailwinds in this sector. Rural, urban, credit, obviously the government policies around GST and upcoming pay commission and some of the freebies. But again, it has to be more stock and sub-segment specific, not just sector specific, but sub-segments. Like in autos, the theme which we have been pushing is more premiumization. And within two-wheeler, scooter and EVs rather than a broad two-wheeler or broad four-wheelers. So it's also stock specific. It's not a very broad-based view. Again, in the last couple of months, everything has benefited. But for the discerning investor going forward, these themes will matter more because that's where we see higher visibility and higher comfort of growth actually playing through. So we are much more comfortable about the premiumization theme than aggregate, say, car sales volumes, which at the margin, in fact, two-wheeler and cars both, the expectations might be running a bit ahead versus what our analyst thinks. We are much more cautious on the industry level volume outlook being priced in by market. But at a stock and sub-segment level, there are opportunities. The broader consumption beyond autos still looks attractive, whether it's retail, whether it's food delivery, QSR, selective FMCG also. So broader consumption, we remain constructive.
Okay, so constructive on some of the broader consumption themes. You mentioned manufacturing, and there will be obviously more conversations around that theme at the conference as well. Right now, what's the house view? And when it comes to the whole capex side of the market, what is the position? Because a lot of these stocks, obviously, through the course of the last several months, they've come off their very high, very lofty levels.
So again, similar to consumption, there is pockets which we are very, very high conviction on, pockets in defense, but also in the capex cycle part, specifically around energy, around renewables. They remain attractive, both near term as well as from a longer term cycle, including what they're pricing in. So that remains an attractive space in general for us. And again, in the last quarter or two, we are seeing some pickup or at least stabilization in private capex. It's no longer a drag or not growing enough. Will it be a proper full-fledged private corporate capex cycle? I think it's too early and premature. And one of the things which we have been telling and we'll highlight again, it's that one of the things we have to remember, don't compare it with what we saw in, say, 2004 to 7. That kind of private corporate capex cycle, if you are defining in that parameter, that's going to be difficult. But from where we are now, uptick in the next couple of years is fairly likely.
I know index targets are what they are, Gautam, but 2026, what's the Nifty target for you?
So we don't have an official target for Nifty for next year, but we do see a small upside from here for sure. Look, at a broader market level, there is the flows from retail investors, mutual fund, which will help stabilize markets. On the other hand, there's also a big pipeline of capital raising, which also sucks away some of the liquidity. So on a technical side, it seems to be a more range-bound outlook. But on the fundamental side, that's the key part. So we are expecting growth to pick up. as the policy easing flows to the economy. The only joker in the pack is some level of sentiment and uncertainty, specifically around US trade deal. I think that's also a question of time. We will have clarity around that, and then hopefully we'll see a growth pickup. And that will be the key for markets to break out of the band we have seen in the last couple of years.
Welcome back. Well, keeping it with the UBS conference, we also spoke with Sunil Thirumalai, Global Emerging Market Strategist at UBS India, on his global and Indian market outlook. Listen in.
Yes, it's a very interesting time. So particularly for the India context, after a year of deep underperformance, the things which are changing are corporates, giving you any positive signals. That's something that we are really keen to understand over the next couple of days. I think coming to your question on our positioning and in our underweight position on India, there are a few reasons behind it. Right? If we actually look at the last 3-4 years of actual fundamental performance that we see, delivered by companies in India, the listed companies, the large companies in the index, you actually don't see any extraordinary growth or either on top line or on earnings. It's pretty much in line, if not a tad lighter than the rest of emerging markets. The markets which are actually doing far superior are the tech markets like Taiwan, Korea, China too. And I think it also starts with the fact that the nominal GDP growth has actually come off significantly. And that matters a lot more for stocks, for top lines, for earnings, etc. Till let's say pre-COVID, or even till 2 or 3 years ago, India's nominal GDP growth was head and shoulders above other emerging market peers. But now it's not. There are other markets which are very within touching distance, right? So while that could stabilize and there could be some improvement, we don't see a catalyst that can take it back up to 12-13%, kind of, nominal GDP growth. In the absence of that, the valuations are actually, reasonably rich. So, in our numbers, historically, India used to trade at a 35-40% premium to other emerging markets. It's now, even after a year of underperformance, it's still at a 60% plus premium, right? Now, in the context of all this, I mean, the report that you're referring to that came out this morning, actually, we've done a lot of work on the AI theme itself. It's a global effort, trying to understand where we are in the cycle, how much more to go at a global level, and which countries, which stocks are more exposed, etc. India is conspicuously absent, on that theme, and I think that's something that, from a global investor's perspective, other markets like China, like Taiwan, like the Korea, which are giving you better opportunities. Now, the specific question on, the secondary market versus the primary market, I think that's actually one of the reasons for the underperformance of the secondary market. So if you actually see, no doubt the flows of household money into the stock markets is continuing. SIP investments, the flows are fairly high. They're not going much higher anymore. I mean, they're kind of showing signs of plateau. But the other interesting change is that the capital raise activity by corporates has actually shot up significantly. I mean, when we did some numbers pre-COVID, the total on a run rate basis, about 10% of the money coming in through SIP and mutual fund flows and other direct flows into the market from households, about 10% of it was the scale of corporate demand for equity capital. Now that number is touching 25%, and combine that with the fact that foreigners are also, not excited. They are finding other, markets to invest, and hence money being taken out of India. That's what is preventing the secondary, market to do well. So you have a decent supply of paper. I mean, all these IPOs are good. They're really good headline, material. But it also means that's money being taken away from the market.
Sunil, you're building a very believable, compelling bear case, justifying that call. So therefore, let me ask you, and we are barely, 3-4% at the index level, we're barely 3-4% away from the all-time highs. Given all the negatives that you described, the fact that MF flows have slowed down, there's no two ways about that, and FIIs have not returned, is there a possibility of some price correction in India? So far, it's largely been time correction. What do you see ahead for the broader market, for the index?
Okay, so let me take a step back. From a global perspective, we are reasonably positive on global equities, right? So, there's on S&P 500, there is a 10-11% upside till end of 2026. On our emerging markets target, it's a tad lower. So we are actually arguing for the US regaining leadership. The setup globally for equities is reasonably good. Global macro, on our economist numbers, US economy should start, revving back up and, accelerating in the back half of next year. China numbers, while they are slowing down, they have actually been upgraded from what it was a month ago for the next year. And in this context, where are valuations, and let's look at the rates market. There is an anticipation that potentially the Fed could start expanding their balance sheet. There will be stable coin demand in the US. I mean, all of that will keep yields in check. So it's a reasonably benign environment for global equities returns, right? So I think it will be really hard for a more than a 5% correction, in the market. Of course, we need to be clear about a dollar correction versus a rupee correction. Our call is for the rupee to depreciate till end of next year. But keeping all of those things in mind, I think it's more likely that the time correction will continue rather than a very sharp, price correction, because the supply of money from households is still continuing. That's a fantastic buffer, for the market. It makes it, very defensive and very protected against a big correction.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this Friday evening. It's a landslide for the NDA in Bihar elections. The alliance crosses the 200 mark in the 243-seat assembly, marches towards a historic performance. BJP emerges as the single largest party ahead of Nitish Kumar's JDU. RJD-led Mahagathbandhan decimated, fails to reach the 50-seat mark. Congress loses 90% of the seats contested. Prashant Kishore's Jan Swaraj party fails to open its account. India's first data privacy law is now operational. Government notifies the rules under Digital Personal Data Protection Act more than 2 years after it was passed by Parliament. Companies get 18 months to comply. Consent managers get 12 months to register to act on behalf of users. Sensex and Nifty gained 2% this week, the biggest weekly gain in 5 months. All sectoral indices end in the green, with defense and IT stocks leading the rally. Major relief for small and medium industries. Government withdraws over 20 quality control orders covering chemicals, plastics, textiles and mining companies. These rules were introduced 2 years ago. A crucial meeting at the Prime Minister's office to review Press Note 3 likely to be held today. This policy was introduced in 2020, making government approval mandatory for foreign direct investment from countries like China that share a land border with India.
3, 2, 1.
Fintech company Pine Labs lists at a 10% premium, surges 30% in intraday trade, but ends with gains of close to 14%, touches a market cap of close to 30,000 crores. Bitcoins drops below the $100,000 mark, hitting a 6-month low. All cryptocurrencies are down over 15% in the last 1 month due to risk aversion and a sell-off in tech stocks. Police detain a medical college professor and a student as the probe into Delhi car bomb blast that killed 13 people continues. Security forces demolished the house of the Pulwama doctor suspected to have driven the explosive-laden car involved in the blast. Andhra Pradesh government woos investors. Reliance Industries pledges to set up a 1 gigawatt AI data center. Adani Group promises investments worth 1 lakh crore rupees.
बिहार विधानसभा की मतगणना में जो अभी तक नतीजे सामने आए हैं, एनडीए को बिहार की जनता ने पूरा समर्थन और आशीर्वाद दिया है और बम्पर जीत की ओर है।
आपके समक्ष और आपके माध्यम से तमाम महागठबंधन के जो हमारे उम्मीदवार हैं अलग अलग इलाकों में, उनसे ये कहना चाहेंगे कि एक मनोवैज्ञानिक खेल भी चल रहा है।
लगातार हम देखते आ रहे हैं कि जनता का आशीर्वाद किसी को मिलता है और चुनाव चोरी हो जाता है। उसके खिलाफ बहुत दिन से कांग्रेस पार्टी और गठबंधन के पार्टियां चिंता जाहिर कर चुके हैं।
And the big story of the day, it's a landslide for the BJP JDU-led NDA in Bihar elections. The alliance has crossed the 200-seat mark and is marching towards a historic performance. As per latest trends, the BJP is currently leading the pack with a strike rate of 95%, followed by Nitish Kumar's JDU with a strike rate of 84%. Chirag Paswan's LJP, which was not in the NDA for last assembly elections, registered an impressive performance as well. The opposition, led by the RJD, has been decimated. The Congress seat tally has fallen to single digits. The left parties performed poorly as well. Prashant Kishore's Jan Swaraj party, a greenhorn, failed to even open its account. Remember, the state had witnessed a historic voter turnout. That's not all. The absolute number of women voters exceeded the male voters this time. Many political analysts have claimed that the Nitish Kumar government transferring 10,000 rupees each to 25 lakh women under Mukhyamantri Mahila Rozgar Yojana was the game changer. The opposition had alleged the move as a violation of Model Code of Conduct. Current Chief Minister Nitish Kumar is likely to take oath for a record 10th time. But there has been no formal announcement on who the Chief Minister is likely to be. My colleague Arunima gets us the latest report from JDU headquarters in Patna.
Outside JDU office, we showed you the shank, the dhol, tasha and the crackers. Now even the laddus are out. Laddu already खिला रहे, अभी तो फैसला पूरा आया नहीं है.
देखिए, बिहार की जनता हर जगह दिवाली बिहार की जनता जला रही है. हर घर में लड्डू बट रहे हैं. नीतीश कुमार जी की जितनी महिलाएं हैं, जितनी विद्यार्थी हैं, जितने लोग हैं, सब कार्यक्रम के कारण सबके घर में लड्डू और अनेक अनेक मिठाइयाँ बट रही है.
पूरा पटाखा, मिठाई, होली, दीपावली सब मनेगा अभी कुछ देर में.
जेडीयू सिंगल लार्जेस्ट पार्टी बनेगी एनडीए में?
नहीं, जेडीयू नीतीश कुमार जी ने जो विकास किए, इसी विकास का जीत है.
They are all ready to celebrate Diwali once again at the JDU office here in Bihar with Rajesh Bhardwaj in Patna. Okay, हाँ खा लीजिए. In Patna, this is Arunima.
परिवारवादी लोग राजनीति को जागीर समझते हैं, लेकिन लोकतंत्र की धरती पर निवास करने वाली बिहार की जनता बड़ा संदेश देगा ये जंगल राज के युवराज को, जो सोने के चम्मच लेकर जन्म लेते हैं और चार्टर्ड विमान पर बर्थडे मनाते हैं. ये जमींदारी भाव को बिहार की जनता समाप्त करेगी.
सोशल रिफॉर्मर है नीतीश कुमार जी, को पॉलिटिकल लीडर नहीं है, केवल स्टेट्समैन नहीं है, समाज सुधारक भी है और राजनेता भी. एनडीए सबसे बड़े जनादेश के साथ आएगा और जनता दल की प्रमुख भूमिका होगी.
Right, Parikshit Luthra joins us now with more. Parikshit, what are you picking up? What's behind this historic mandate by the NDA in the state of Bihar? What are the numbers telling you?
Well, what a day has it been. Let's look at the NDA numbers. They, as per these trends, have crossed the 2010 tally. In 2010, the NDA alliance had secured 206 seats. They are 207. Let's see if they continue and solidify this lead. However, it's definitely bad news for the India alliance. They've just landed up with 31. But there's something that I'd like to show you as far as the NDA is concerned. Just look at their numbers. BJP, 92, JDU, 84, which means that both key alliance partners have done the heavy lifting. The LJP, they had been given 29 seats to fight in this election, and they've managed to deliver at least around 21. The full counting is not over. So, strong performance by Chirag Paswan. The Hums party at 6, the RLM, Upendra Kushwaha's party at 4. Now, if you take the BJP tally, the LJP tally, Hums and RLM, they together would cross the 122 or the halfway mark. So they technically may not need the JDU. So what happens to the chief ministerial candidate? Amit Shah, before the election, had said there is no vacancy for the chief minister's post. But will the equation now change because the BJP and the other allies are so strong? That remains to be seen. But for the moment, there is no conversation. I was hearing a BJP spokesperson saying that there is no controversy, no question about who's going to be the chief minister. It will be Nitish Kumar. Let's just look at the Congress as well. The Congress is currently leading in about 1 or 2 seats, and their performance really dragging down the India alliance. So you've got 24 seats going to the RJD, just 3 for the Congress party. They were leading in 1 seat, but now I'm told they're leading in about 2. So just a poor performance by the allies altogether. Just one larger trend about the Rahul rally. Rahul had carried out a voter Adhikar rally all across the state earlier this year. And let's look at the Rahul Yatra factor. Was it important for them? Well, there were about 183 seats where Rahul had travelled to. Here, 161 are being won by the NDA, just 19 for the India alliance. So poor show for the India alliance in all those areas where they had campaigned very heavily through the year. So which factor has really played out? It's the Mahila factor and the extremely backward class factor that has really worked for the NDA alliance. We're told the women voters outnumbered the male voters in this election. 2.5 crore women had cast their vote, and that seems to have really worked in favor of the NDA.
All right, thank you, Parikshit, for that. Let's shift our focus to the day's market action. Dalal Street closed in the green for the fifth straight session. Nifty closed above the 25,900 mark. Broader markets moved in line with the benchmarks. For the week, market snapped the two-week losing streak, recording the biggest weekly gains in 5 months. Sensex, Nifty and mid-caps gained nearly 2% each, while Nifty Bank gained 1% this week. The passenger vehicle business of Tata Motors has reported a weak set of numbers in the second quarter. This is largely due to the cyber attack on Jaguar and Land Rover. Sudarshan Kumar joins us now with the numbers. Sudarshan, JLR cyber attack taking a toll on Tata Motors.
That's correct. So as market closed, Tata Motors passenger vehicle after demerger, so commercial vehicle segment is different, and this result is for Tata Motors passenger vehicle, which houses passenger vehicle business of India and the JLR. They have come out with Q2 results, and if I can say, it's largely a forgettable quarter for both these companies, Tata Motors as a standalone business and also for JLR. If I can give you a few highlights, company has reported loss for both standalone and consolidated business. And the worst part is JLR has revised its EBIT margin guidance lower for FY26. Now it's expecting in the range of 0 to 2% versus earlier range of 5 to 7%. More than that, it has increased its cash outflow guidance from near to zero. They were expecting earlier. Now it's expecting up to 2.5 billion pounds. Now, what was the main reason of this kind of losses? One of the main reasons was cybercrime incidents, for which Tata Motors in consolidated business has reported an impact of nearly 2,010 crore rupees. So what's going forward? For standalone business, considering the increased demand following the GST cut and the festive season, Tata Motors is saying that also it will be coming out with new launches, and that may improve the demand. For JLR, they have not given any updated statement on cyber incidents that they had faced. They are just saying that they have been restarting the operations. Global situation remains challenging, but they'll manage to improve the demand if you compare against H1 FY26. But overall, as far as Q2 FY26 is concerned, it's a forgettable quarter.
All right. Thank you, Sudarshan, for that. Shifting focus now, shares of Pine Labs made a strong debut on the bourses today, listing at a 10% premium from its issue price. The company's issue was subscribed over 2 times on the final day of bidding, and this was led by strong demand from the qualified institutional buyers, followed by the non-institutional investors. The company plans to use the proceeds from the IPO towards expansion, debt repayment, and international growth. Market regulator SEBI has proposed some regulatory changes to streamline the IPO process. Now, the proposed changes are aimed at removing certain operational bottlenecks, improving transparency for investors. SEBI is proposing amendments to introduce a technology-enabled framework that will allow pledged shares to be locked in seamlessly. Currently, all pre-issue held by non-promoters must be locked in for 6 months after the allotment in an IPO, barring few exemptions. But depositories are not equipped to mark pledged shares as locked in, creating compliance hurdles. The proposed changes seek to simplify this process for IPOs. India's wholesale inflation has dipped into the negative territory in October. The negative rate was led by a decrease in prices of food articles, crude petroleum and natural gas. However, fuel and power became costlier. The index for this group rose by 1.12% during the month. And major relief for small and medium industries. The government has withdrawn over 20 quality control orders covering chemicals, plastics, textiles and mining companies. Abhimanyu Sharma joins us now with more details. Abhimanyu, how will this move benefit the industries?
India has withdrawn over 20 quality control orders in the past 2 days across the chemicals, textiles and mining sector. India is reviewing several QCOs across several sectors after they have been termed as non-tariff barriers by several countries, including the United States. QCOs have also been opposed on certain fronts by the domestic industry over apprehensions of an increase in input cost, which is leading to a reduction in overall competitiveness of several exporters. It remains to be seen whether India is going to withdraw or dilute any more QCOs moving ahead. Now, the QCOs which have been withdrawn for now include 7 QCOs from the mining sector, particularly for aluminium and aluminium alloys, copper, nickel, tin ingots, refined nickel, refined zinc and primary lead. The withdrawn QCO amongst plastics, they include polypropylene, polyethylene, PVC, ABS and polycarbonate. Now, amongst the chemicals and textile sector, the withdrawn QCOs include for ethylene glycol, polyester yarns and fibers and terephthalic acid. The move is expected to ensure ample availability of raw material as well as an increased competitiveness for several industries, many of which import several of these products for which the QCOs have been withdrawn, and these products are expected to become cheaper, which is going to possibly lead to more competitiveness for several industries.
Right, thank you Abhimanyu for that. Time for a short break. Coming up next, India's first data privacy law is now operational. The government has notified rules under Digital Personal Data Protection Act more than 2 years after it was passed. More details when we return. Welcome back. India's first digital data privacy law is now operational. The government has notified the rules under the Digital Personal Data Protection Act more than 2 years after it was passed by Parliament. Companies and stakeholders get 18 months to comply with rules. Ashmit Kumar is here with more on the rules. Ashmit, a landmark day for data privacy. Please take us through the new rules and its implications for the public and the industry.
Well, indeed, a new era as far as data protection is concerned. You pointed out correctly, it's been a long wait, over 2 years, for these rules to be notified. 2023 is when the DPDP Act had been passed by the Parliament. But in terms of what the rules entail, well, I'll take you through them one by one. There's a lot to unpack. But firstly, as far as the implementation is concerned, the part of the rules that concern with the setting up of the Data Protection Board, which is the nodal regulatory agency, those parts of the rule come into effect immediately. But as far as the industry, the time that industry has been given to become compliant with various provisions and rules of the DPDP, well, those provisions of the rules will come into effect in a staggered fashion over 12 and then 18 months. So 18 months is what the industry has to basically make sure that they're fully compliant with the DPDP Act and the DPDP rules going forward. On data localization, this was a big watch point as far as the industry is concerned. And here is what is interesting as far as the rules are concerned. As a thumb rule, what has been given to understand is that personal data can be sent overseas for processing. There's a blacklist formula that will be followed, that certain blacklisted countries is where data cannot be sent, but for big tech players, that's your Googles, your Amazons, your Metas of the world, there's an additional conditionality that has now been imposed. The government says that a committee will tell these big tech companies what data sets cannot be sent overseas, irrespective of whether the country is in a blacklist or a whitelist. So that's another additional compliance that big tech players will have to look at. Speaking of the big tech players, they will also have to ensure a compliance audit. They will also have to audit their own algorithms to ensure that no harm is caused to the user. Furthermore, as far as consent mechanism is concerned, you and I, as persons, as data principals who will be giving their data to large companies or to smaller companies, we are liable. We now have a right under the DPDP rules to receive a notice from the company. The notice has to very clearly tell us what those individual pieces of data are, why that data is being procured, and importantly, a similar formula will then need to be adopted in case there's a data breach. You and I, as users, will need to be informed by the company immediately whether or not there's a data breach, what parts of data have been leaked, how it impacts me, and what measures I should undertake. And similarly, the companies will also be required to ensure that this information is then transmitted to the Data Protection Board within 72 hours. Another key aspect is that the government has been given the power to ask for any information from any entity when it comes to national security. So that's a wide power that the centre has. So clearly a lot to unpack, but clearly a new era as far as data protection is concerned, the rules being notified by the government.
Right, thank you, Ashmit, for that. Moving on now. The Prime Minister's office will convene a meeting to review the Press Note 3 today. In 2020, India had mandated government approval for foreign investment from countries like China that share a land border through a press note. Now, Tim Z. Tepuria joins us now with the details. Tim C., what can we expect?
Well, as we speak, the meeting is underway. Prime Minister's office had called a meeting to review the Press Note 3 today. Meeting was to be headed by Principal Secretary 2 to PMO, that is Shaktikanta Das, along with key stakeholding ministries represented such as DPIIT, DEA, MEA, etc. And just to give a backdrop to this meeting, India has been considering reviewing Press Note 3 in the backdrop of escalating trade tensions with the US. Recently, government's think tank, Niti Aayog, had recommended lifting Press Note 3 restrictions, citing that there are changes in circumstances since the policy was introduced in 2020, that is way back in COVID's time. And Niti Aayog is believed to have also approached PMO seeking this review, and that is post which this review meeting is likely to have taken place today. Press Note 3, just to give a backdrop, is a 2020 policy amendment that requires prior government approvals for all foreign direct investments from countries that share a land border with India. It mandated that any investment from these countries where India shares a land border with, where beneficial ownership of the investment is based in such countries, could only come through the government approval route. And this review meeting comes at a time when India-China relationships are showing signs of normalization. We recently saw that India and China have resumed direct air services, and that is the crucial country that this review could be actually looking at as to how Chinese investments can come back to in India with some relaxations in Press Note 3. That is what the review meeting is focusing on. As we speak, as I said, the review meeting is on. It can conclude any moment. And as soon as it concludes, when we hear back from our sources, we'll keep you updated on it.
Right. Thank you, Tim Z, for keeping a track on these developments. With that, it's a wrap on this edition of Business 360. News and updates continue right here. Thank you for watching.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra. These are the top headlines from the startup world.
3, 2, 1.
Fintech company Pine Labs lists at a 10% premium, surges 30% in intraday trade, but ends with gains of close to 14%, touches a market capitalization of close to 30,000 crore rupees.
CodeYoung, a global learning platform for kids, has backed an investment of approximately $5 million in Series A round led by 12 Flags Group and Enzia Ventures. The round also marks exit for early investors. The investment will help CodeYoung expand its presence in the international markets, build AI-driven personalization tools, and introduce new learning categories.
Fang Oral Care, a new age oral care brand focused on teeth whitening and everyday oral wellness, has raised 10 crore rupees from Mamaearth's parent company Honasa Consumer. With the investment, the brand plans to deepen R&D, expand its product portfolio, and scale its digital presence across e-commerce and quick commerce platforms.
India's first digital data privacy law is now operational. The government has notified the rules under the Digital Personal Data Protection Act more than 2 years after it was passed by Parliament. Companies and stakeholders get 18 months to comply with the rules.
Bitcoin drops below the $100,000 mark, hitting a 6-month low. All cryptocurrencies are down over 15% in the last 1 month due to risk aversion and a sell-off in tech stocks.
Well, those were the headlines we've been tracking for you this evening. Let's start with the big story. India's first digital data privacy law is operational. The government has notified the rules under the Digital Personal Data Protection Act more than 2 years after it was passed by Parliament. Companies and stakeholders get 18 months to comply with the rules. Ashmit Kumar is here with more on the new rules. Ashmit, a landmark day for data privacy. Take us to the new rules and its implications for the public and the industry.
Well, indeed, a new era as far as data protection is concerned. You pointed out correctly, it's been a long wait, over 2 years, for these rules to be notified. 2023 is when the DPDP Act had been passed by the Parliament. But in terms of what the rules entail, well, I'll take you through them one by one. There's a lot to unpack. But firstly, as far as the implementation is concerned, the part of the rules that concern with the setting up of the Data Protection Board, which is the nodal regulatory agency, those parts of the rule come into effect immediately. But as far as the industry, the time that industry has been given to become compliant with various provisions and rules of the DPDP, well, those provisions of the rules will come into effect in a staggered fashion over 12 and then 18 months. So 18 months is what the industry has to basically make sure that they're fully compliant with the DPDP Act and the DPDP rules going forward. On data localization, this was a big watch point as far as the industry is concerned. And here is what is interesting as far as the rules are concerned. As a thumb rule, what has been given to understand is that personal data can be sent overseas for processing. There's a blacklist formula that will be followed, that certain blacklisted countries is where data cannot be sent. But for big tech players, that's your Googles, your Amazons, your Metas of the world, there's an additional conditionality that has now been imposed. The government says that a committee will tell these big tech companies what data sets cannot be sent overseas, irrespective of whether the country is in a blacklist or a white list. So that's another additional compliance that big tech players will have to look at. Speaking of the big tech players, they will also have to ensure a compliance audit. They will also have to audit their own algorithms to ensure that no harm is caused to the user. Furthermore, as far as consent mechanism is concerned, you and I, as persons, as data principals who will be giving their data to large companies or to smaller companies, we are liable. We now have a right under the DPDP rules to receive a notice from the company. The notice has to very clearly tell us what those individual pieces of data are, why that data is being procured, and importantly, a similar formula will then need to be adopted in case there's a data breach. You and I, as users, will need to be informed by the company immediately whether or not there's a data breach, what parts of data have been leaked, how it impacts me, and what measures I should undertake. And similarly, the companies will also be required to ensure that this information is then transmitted to the Data Protection Board within 72 hours. Another key aspect is that the government has been given the power to ask for any information from any entity when it comes to national security. So that's a wide power that the centre has. So clearly a lot to unpack, but clearly a new era as far as data protection is concerned, the rules being notified by the government.
A new era in data protection, right, Ashmit? Many thanks for taking us through those details. Now, moving on, sustainable investment giant Mirova has pumped $30 million into Varaha's regenerative agriculture project, its largest carbon transaction to date and its first in India. The Kheti project will support over 3 lakh smallholder farmers across Haryana and Punjab to adopt climate-friendly practices that boost soil health, cut emissions, and generate high-quality carbon credits. With strong digital monitoring and deep on-ground execution, this partnership aims to make India a major hub for high-integrity, nature-based climate solutions. Joining me now to discuss this further is Madhur Jain, the MD and CEO of Varaha. Madhur, thank you so much for taking time out and being here with us on Startup Street. You know, before we get into the fundraise, right, if you could sort of take us through what Varaha does, what's the gap in the market that you're solving for? Madhur, I think you're on mute there. If you could just unmute yourself.
Yeah, thank you for having me today on the show. So, I mean, like most activities that humans do, agriculture also leads to emissions which go out into the atmosphere. In fact, agriculture leads to almost quarter of the total global emissions that happen each year, right? Which means that agriculture is also contributing towards the overall climate change that we are witnessing at the moment in terms of rise in temperatures, erratic rainfall, etc. Now, this change in weather patterns actually affects the smallholder farmers the most. And these smallholder farmers are actually responsible for producing almost 35% of the total food production for humanity across the globe. And hence, this dual nexus of climate change and smallholder farmers' yield being affected is a major problem from a food security point of view. However, the good thing is that there is scientific evidence of several decades of research which proves that agriculture can actually be a net sink for carbon, right? So if you do agricultural practices in the right set of manner, it can help not just reduce these emissions, but also sequester them through the agricultural interventions and practices. So that is where Varaha focuses upon.
Absolutely. And you know, this is Mirova's largest ever carbon transaction, right? So what does this kind of scale of investment signal about global confidence in India's regenerative agricultural sector?
Yeah, no, of course. So see, if you look at what are the key ingredients for creating high quality carbon credits at scale, so it's basically the presence of high quality scientific and tech talent. Secondly, you need large amount of agricultural presence in the country. India has almost 400 million acres of agricultural land holdings. We have several cropping patterns. We are one of the largest producer of all the major cash as well as food crops, which we also export, not just consume internally. And so I think all of these ripe conditions in terms of talent, scientific data, evidence, agricultural land holdings, I think it's a culmination of all of those things which allows a fund like Mirova to make such large investments in a country like India.
Right. And you know, how will this, they've made this $30 million infusion into your project, right? So how will this sort of help Varaha work with these 337,000 smallholder farmers across Haryana and Punjab? What kind of a boost will this sort of give you?
So absolutely. So see, the good thing is that this project is already there on the ground. So it's not like we have to start from scratch. And these were the ingredients which allowed Mirova to take a bet on Varaha and our project in India. But I think with this boost, what it does is it allows us to train more and more number of farmers and reach the scale intended as part of this deal. It also allows us to double down on the tech and science platform, which can then deliver carbon credits with utmost confidence, integrity, and scientific rigor, which is required to create these credits. And then the third point is buying the machinery, which is actually required to perform these practices in a sustainable fashion on the ground, which then allows for carbon sequestration in the agricultural farms. So these are some of the key aspects towards which this financing will be utilized for.
Sure. And what kind of income uplift can farmers realistically expect through the revenue sharing model for high quality carbon credits?
Yeah, so see, there are two aspects to income, net income increase for the farmers. So one part is that Indian scientists have already showcased that by doing conservation agriculture / regenerative agricultural practices helps increase yield by 5 to 6%. It allows for reduction in agricultural inputs, which is again 4 to 5%. So even without carbon credits, performing these practices over a period of 5 to 7 years leads to an increase of overall 12% increase. Now, because of carbon credits, there is a further net income increase for the farmers in the region for almost 6 to 8%. So overall, the net PNL for the farmer, because of increase in income from agricultural production, reduction in cost, and then carbon credit being added to it, on a net basis increases by almost 20%, which is significant when you count the number of farmers this project is going to impact over the coming few years.
And the Kheti project is also expected to get CCB certification, right? So how does this help position India's carbon market on the global stage once this certification comes through?
Yeah, so see, when you talk about carbon credit, the key angle which is being explored is just climate, right? That how much impact you are causing to the climate positively and then quantifying it. But once you also add the second C and B to it, which is community and biodiversity, it allows for climate plus impact for these corporates which are actually buying these carbon credits. So if the income upliftment is happening for the farmers through this project, plus the inclusion of women farmers provides an added benefit that these companies are able to provide through these investments. So that comes under the community umbrella. Plus, by adding regenerative agricultural component, it also allows for increasing the microbial health, which is a good indicator of the biodiversity increase in the region because of these practices.
Absolutely.
So by making these investment, you're able to account for several of these attributes as well, which makes India an ideal destination for these investments.
Sure. All right. So India is the right destination for these kinds of investments. All right, Madhur, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best going forward.
Thank you so much. Pleasure. Bye.
Well, moving on the hot seat today is the sector exploding with creator demand and long overdue for disruption. Music licensing platform Hooper has opened its pre-Series A round at 160 crore rupee valuation, marking a 2x jump, backed by Inflection Point Ventures. With 300% revenue growth this year, a fast-scaling AI-led product stack, and a catalogue spanning Bollywood, regional and global music, Hooper is betting big on building a world-class music licensing ecosystem from India for the world. Joining me now is Gaurav Dagaonkar, co-founder and CEO of Hooper. Gaurav, welcome to Startup Street. Hooper today services 30,000 plus creators and 180 plus B2B clients and has grown over 4x since inception, and like I mentioned, 300% this year. What have been the key growth levers and where are you seeing the strongest demand? Brands, agencies or digital first creators?
Thank you so much, first of all, for having me on Startup Street. You're right. India has witnessed a massive boom in content creation and especially in the realm of commercial videos. So today, apart from individuals who are influencers, we're also seeing brands make about 5 to sometimes even 50 videos a day, and MNC is making about 10 to 20,000 videos a year. Now, what happened historically was that when you needed to create a commercial video, you needed a music license from a label, a publisher, and a copyright society. We recognize this gap and we've built a marketplace where labels and artists can list their music and can download a license and use it without any legal hassles. Our biggest growth has been in the space of B2B because we are seeing over 80,000 brands create close to 40,000 videos a day. And we feel that India is poised to sort of increase its content creation by almost 3 to 4x in the next 2 years.
Okay.
With AI now coming into the picture.
All right. Gaurav, you've raised 4 crore rupees in the first tranche and are in advanced talks for more. What's the overall target for this round and how will this capital extend your runway?
So we launched a new product called Hooper Smash, which has Bollywood and trending songs. And this round was mainly to launch Hooper Smash, market it, which we already have done. In fact, the round has been slightly oversubscribed. The business has been growing at a 3x, 4x increase in revenue year on year. We also have strong unit economics in that we keep a commission and pass on the rest to the artists. So right now we are looking to become profitable this year itself with a strong demand from labels and artists. And that is the plan as we go forward.
Sure. Gaurav, India's creator economy is exploding, but so are copyright issues. With AI-generated audio on the rise, how is Hooper ensuring brand safety, copyright compliance, and most importantly, fair payouts to creators?
Well, with AI-generated music, first of all, it itself is trained on music that they've not licensed. So sometimes there's a gray area in using it for commercial content. With Hooper, we are now backing labels and artists. We've made their music accessible to brands and influencers to use in a legal manner. And it's a very simple model where a label, like we've got Yashraj Films that has listed its music on Hooper Smash, and we've got over 180 brands that are licensing music. The platform keeps a commission and passes the rest in a very transparent manner to the label. For brands, what is really important here is the fact that they're getting trending music. So that increases their engagement, sometimes up to 10x or even 15x on the videos that they create. There's higher engagement, and most importantly, there is copyright safety.
Yes.
We've seen a spate of lawsuits against brands by record labels, and hopefully that will come to an end as these brands start licensing music in a legally defined manner.
Okay, you know, Hooper has worked with 300 plus independent artists and disbursed 4.5 crores in royalties. How are you re-architecting payouts and transparency in an industry known for opacity, and from auto-tagging and copyright detection to content gen tools? If you could tell us which AI features are actually moving the needle on monetization and compliance.
Sure. Before starting Hooper, after I graduated from IIM Ahmedabad, I was an artist for a for a good period of time. And empirically, it's been one of the most opaque industries. I've seen that opacity myself. And coming from an engineering background, I decided to add a layer of tech and make it transparent. That's what Hooper has done. The entire model is based on a fair, real-time, transparent payout to artists and labels. And when we look at AI as a part of our tech stack, I think what most clients today want is better recommendations. So if you're a brand from the South, or if you're a brand that's into fashion, what kind of music should you use? So at one level, the platform Hooper and Hooper Smash, we're able to recommend the right music for brands. So we have our own AI tagging methodology. Not only that, we've gone one step ahead, and we're actually able to even tell you what video script should you create, what video should you create with the song in order to get higher engagement. Finally, the last leg of AI enables us to acquire the right kind of music which will serve our brands and influencers better.
Sure. You know, Gaurav, you're also closely collaborating with the Indian Performing Rights Society, or IPRS. Is India finally moving towards real-time tech-enabled royalty distribution?
Of course, I'd like to think so. At the same time, there's a lot of awareness building that we need to do both on the artist and label side as well as the brand side. With the IPRS, I think it was just a natural extension of what we do, because ultimately all of us are on the same side, that music should be used by brands, by content studios, but in a fair and ethical manner. So now with the partnership that we have with the IPRS, once a brand procures a license, they don't need to go to multiple players. Every player, be it the label, the publisher, the artist, the IPRS, gets paid out in an all-inclusive manner. And I think it's a landmark partnership that we've done with the IPRS. Yes, it's about time that India, being the global HubSpot, probably one of the largest countries, creating content, sets a standard at a global level that music is being used ethically and fairly in this country.
Okay, on that note, Gaurav, I'll have to wrap up our discussion. We've completely run out of time. But many thanks for joining us on Startup Street, and wish you the very best for all your expansion plans.
My pleasure. Thank you so much for having me here.
On that note, it is time for us to head into a short break. But coming up next, Salesforce debuts its first ever Agentforce City at Dreamforce, a live showcase of how AI agents could transform work. We show you how it works. On the other side, stay tuned.
Welcome back to Startup Street. Salesforce has unveiled its first ever Agent Force City at Dreamforce, a live showcase of how AI agents could transform work. Global brands like PepsiCo, Pandora and Williams-Sonoma are already testing it. CNBC TV 18's Aishwarya Anand brings this report from San Francisco. Take a look.
We are here at Dreamforce 2025 and Salesforce has built something entirely new this year. It is what they are calling the Agent Force City. So what does it entail? Well, take a tour with me and let's find that out together. It is not just the showcase of products. It is a full-scale demo of what the company believes could be the next big shift in enterprise software. Workplaces powered by AI agents which can reason, act and work alongside people. The centerpiece of this is Agent Force 360, a platform that is designed to help businesses build and deploy their own intelligent agents, the ones that can help process data, automate end-to-end small businesses, and even draft content. And this vision extends beyond dashboards. Slack is being redesigned as the operational hub where these AI agents live, collaborate, and execute tasks alongside human teams. On this floor, companies like Pandora, PepsiCo, Williams-Sonoma are showing that they're already experimenting with the AI agents, whether that is to reimagine customer experience, supply chain efficiencies, or service automation. Well, we spoke to a couple of them to understand what's working, what's the hype, and what would the day-to-day changes in the business would look like. So let's go and find that out. For PepsiCo, AI is becoming a connective layer across markets, helping teams bring together data across regions while keeping experiences local.
We operate in over 200 countries, which is complex and I think answers to your question, over $90 billion worth of sales. We have over $23 billion brands, and daily we reach over 1 billion consumers. And in order to deliver what our customers expect, so that they in turn can deliver what their consumers and our consumers expect, we need to make sure that we are personalized. So the first step is taking a look internally and taking a look at all the data that we have globally and then also localized, and understanding how much of that can be a lift and shift model and how much shouldn't. And we determined what that right balance is. And when our partnership with Salesforce, they are able to offer us a solution that solves the 80% of the instances that we can then leverage across, but then 20% of the time we know where we need to be local on that local information, and how do we take that with all of the customer records, that is customer 360, which is the unlock, and then how do we bring that to life in a personal way.
Pandora is using AI to solve one of the retail's hardest problems, helping customers choose from thousands of products in highly emotional purchase moments like gifting.
We're super happy to be presenting here Gemma, our first agent that's exactly helping that online. And we are all about gifting. Gemma is helping us exactly with that, to really narrow down what are the best options. Pandora has more than thousands of options for that.
The company is also using agents to manage holiday spikes, especially customer queries around orders.
So the other agent that we are very proud to speak about is Clara. Clara is already, Gemma is in test in Australia. Clara is already at full deployment in US and in Europe. And Clara is helping us on the customer service side. The deployment of Clara already helped us to increase NPS for Pandora on more than 10%.
Williams-Sonoma handles thousands of real-world service cases daily, from furniture deliveries to complex product issues, making it an early adopter of agentic service workflows.
This isn't just about automating the customer service interaction, that is part of this, but this is also infusing AI into the human experience, where our human customer service agents that are handling very complex customer service scenarios, a lot of it around furniture delivery, like very complex real-life problems, they're more efficient, they're more effective, they are faster when we are putting this technology in their hands. So we're seeing really, really compelling results.
For Williams-Sonoma, agents are also stepping into creative roles, connecting recipes, products, and entertainment.
Just a few days ago launched Olive, our Williams-Sonoma sous chef agent. And this agent is able to connect the dots between product, recipes, entertaining, education, And ultimately, it's there to help our customers, not just about let's find you a product, but if you're hosting Thanksgiving, for example, at your house, or you have a dinner party, how do we help you pick the menu? How do we help you with culinary skills? How do we help you across the board? This is what these agents do, and we launched that in less than 30 days in partnership with Salesforce.
As we walk through Agentforce City, what stands out isn't just technology, but the scale of ambition. Salesforce is betting that the workforce going forward is going to be built on autonomous and trustworthy AI agents. But the real test is going to be to see how fastly and responsibly do companies actually convert this mission into actionable outcomes. From Dreamforce 2025 in San Francisco, with camera person Saroj Singh, Aishwarya Anand for CNBC TV 18.
It is Friday and it's time to take stock of all the deals that took place in the startup world. This week saw a total of 24 deals valued at $152 million, according to Venture Intelligence. Some of the notable deals included software provider for construction industry, Attentive.ai, raising $30 million from Insight Venture Partners, Vertex, Tenacity Ventures and InfoEdge. Climate tech company Varaha raises $30 million from Mirova, while Tita College of Business raises $18 million from Owl Ventures and Bertelsmann India Investments. That's not all. Low-cost flight operator Star Air raises $16.91 million in a Series B funding round. Bombay Shaving Company bagged $15.34 million from Sixth Sense Ventures and others. According to Venture Intelligence, this year has seen a total of 819 deals worth $8.4 billion.
And with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
और मीडिया के मेरे साथी, प्रिंट मीडिया और इलेक्ट्रॉनिक मीडिया के मेरे साथी, सबसे पहले तो आज इस जनता को धन्यवाद देने के कार्यक्रम में मैं सबसे पहले तो आदरणीय प्रधानमंत्री जी को, भारत के करोड़ों कार्यकर्ता जो टेलीविजन से जुड़े हैं, बिहार के लाखों कार्यकर्ता जिन्होंने दिन रात एक किया, और यहां उपस्थित हमारे सभी कार्यकर्ता बंधुओं के तरफ से आदरणीय प्रधानमंत्री जी का हार्दिक अभिनंदन, स्वागत है। स्वागत के साथ साथ जो बिहार की जनता ने प्रचंड जो जनादेश दिया है, उसके लिए मैं सब बिहार की जनता का हार्दिक अभिनंदन करता हूं, स्वागत करता हूं और धन्यवाद देता हूं। इस जनादेश ने, जो जनादेश ही नहीं, नतीजे बताते हैं कि यह सुनामी है। इस सुनामी में इस बात को स्पष्ट कर दिया है, बिहार की जनता हो या देश की जनता हो, आदरणीय प्रधानमंत्री जी पर अटूट विश्वास उन्होंने व्यक्त किया है और प्रदेश को आगे ले जाने के लिए विकास की राजनीति पर मुहर लगाई है। हम जानते हैं यह चुनाव आदरणीय प्रधानमंत्री जी के नेतृत्व में बड़े स्पष्ट रूप से विकास बनाम जंगल राज के बीच था, और लोगों ने विकास को जनादेश दिया, उस पर मुहर लगाई और विकास को आगे बढ़ाने का संदेश स्पष्ट बिहार की जनता ने दिया है। आदरणीय प्रधानमंत्री जी के नेतृत्व में जो पॉलिटिक्स ऑफ डेवलपमेंट है, विकास की राजनीति, प्रो रिस्पॉन्सिव गवर्नमेंट है, प्रो एक्टिव गवर्नमेंट है, और जो डबल इंजन की सरकार है, उसको स्पष्ट अपना जनादेश देकर बिहार की जनता ने सुनामी के रूप में स्पष्ट कर दिया है। जैसा मैंने पहले कहा, यह रोड मैप विकास का जो था, उसने जंगल राज को बिहार की धरती पर नो एंट्री का स्पष्ट संदेश दे दिया है। मैं यहां यह भी आपके साथ चर्चा करना चाहता हूं, हमें जब 2024 में लोकसभा में प्रधानमंत्री मोदी जी के नेतृत्व में सरकार बनी, तो उस समय हमारी भारतीय जनता पार्टी की सीटें कुछ कम हो गई। ये घटना भारत की जनता को और भारत की मतदाताओं को नागवार गुजरा है, नागवार गुजरा। उन्हें विश्वास नहीं रहा कि किस तरीके से भारतीय जनता पार्टी की सीटें घट गई, और यह जो उनके मन में दर्द, यह जो कसक, यह जो टीस और जो मन व्यथित हुआ, यह जो पीड़ा हुई, भारत की जनता ने तय कर लिया कि अगले कोई भी चुनाव आएंगे, बढ़ चढ़कर हिस्सा लेकर के मोदी जी के प्रति अटूट विश्वास बताएंगे और जनता को बताएंगे। ये प्रधानमंत्री जी के प्रति अटूट विश्वास और प्रेम का नतीजा है, और ये अटूट प्रेम और विश्वास भारत की जनता ने 2024 के चुनाव के बाद हर चुनाव में स्पष्टता से दिया है। हरियाणा में चुनाव हुआ, हमारी लोकसभा में सीटें कम हुई थी, उसका मुंहतोड़ जवाब हरियाणा की जनता ने दिया और तीसरी बार हैट्रिक सरकार बना करके दी, ये हमारे ध्यान में आया। उसी तरीके से महाराष्ट्र में भी लोकसभा में कुछ हमारी सीटें कम हुई। महाराष्ट्र की जनता को पसंद नहीं आया, महाराष्ट्र की जनता को नागवार गुजरा, और जब विधानसभा के चुनाव हुए तो उन्होंने सूद समेत वापसी की और पूरी की पूरी ताकत के साथ भारतीय जनता पार्टी और एनडीए की सरकार बनाई। हम लोगों ने यहीं, आप सब दिल्ली के कार्यकर्ताओं ने इसको स्पष्ट रूप से देखा कि जब दिल्ली के चुनाव आए तो आपके नेतृत्व पर अटूट विश्वास रखते हुए दिल्ली की जनता ने भी 3 दशक बाद पूरी ताकत के साथ भारतीय जनता पार्टी की विशुद्ध सरकार बनाई। ये जनता जनार्दन का आशीर्वाद आदरणीय प्रधानमंत्री जी को मिला, और अब भारत की जनता ने यह स्पष्ट मान लिया है कि अब दोबारा ऐसी गलती नहीं होगी। हमें भारत को विकसित भारत आपके नेतृत्व में ले जाना है, आपके नेतृत्व में भारत को आगे बढ़ाना है, आपके नेतृत्व में भारत को विकास के साथ जोड़ करके चलना है। और इसलिए जब जब चुनाव हो रहे हैं, बार बार पूरी ताकत के साथ अपने सारे रिकॉर्ड को तोड़ करके चुनाव में जनता वोट दे रही है, यह हमको ध्यान में रखना चाहिए। और यही हमको आज के नतीजों में भी बिहार की जनता ने बता दिया है। हाईएस्ट स्ट्राइक रेट हमको देखने को मिला है, और आपने तो बहुत पहले चुनावी सभा में बताया था कि 14 तारीख का इंतजार करें, और 14 तारीख को बिहार की जनता स्पष्ट संदेश देगी, और बिहार की जनता ने स्पष्ट संदेश दे दिया है। यह अभूतपूर्व समर्थन प्रधानमंत्री मोदी जी को अटूट प्रेम और अटूट विश्वास का नतीजा है। यह डबल इंजन की सरकार बिहार की जनता को चाहिए, यह स्पष्ट संदेश है। और मैं यहां यह भी कहना चाहूंगा कि जहां प्रधानमंत्री मोदी जी की तरफ अटूट विश्वास जनादेश ने दिया है, वहीं नीतीश कुमार के सुशासन पर भी मुहर लगाई है और उनको भी ताकत दी है। इसलिए जब हम डबल इंजन की सरकार बोलते हैं तो केंद्र सरकार का आशीर्वाद, मोदी जी का अटूट विश्वास और विकास की प्रगति पर चलने वाला बिहार, और उसको कार्यान्वित करने के लिए नीतीश कुमार जी के नेतृत्व ने पूरा काम किया है। इसको भी हमको धन्यवाद देते हुए बिहार की जनता को धन्यवाद देते हैं। इस चुनाव में समाज के सभी वर्गों का हमें आशीर्वाद मिला है। उधर जो महागठबंधन था वो समाज को बांट करके चुनाव की राजनीति कर रही थी। रणनीति उनकी ये थी कि समाज को खंडित करो, विभाजित करो और उसके माध्यम से राज करने की बात करते। पॉलिटिक्स ऑफ अपीजमेंट, तुष्टीकरण की राजनीति, वो बिहार को बिहारियों के सहारे नहीं चलाना चाहते थे, वो बिहार को घुसपैठियों के सहारे चलाना चाहते थे और उनका समर्थन करते थे। बिहार की जनता ने उन लोगों को मुंह तोड़ जवाब दिया है और यह स्पष्ट संदेश दे दिया है कि बिहार की जनता राष्ट्रवादी ताकतों के साथ खड़ी है और राष्ट्रवादी ताकतों को आगे बढ़ाएगी। मैं महिलाओं को विशेष करके धन्यवाद देना चाहूंगा, जिन्होंने बढ़ चढ़ करके चुनाव में हिस्सा लिया और स्पष्ट संदेश दे दिया कि प्रधानमंत्री जी के नेतृत्व में बिहार आगे बढ़ेगा और नीतीश कुमार जी के सुशासन ने वहां अच्छा काम किया है, उसको उन्होंने मुहर लगाई है। युवाओं का समर्थन हम लोगों को मिला, किसानों का समर्थन मिला, मेहनत का लोगों का समर्थन मिला, समाज के सभी वर्गों ने हमको आशीर्वाद दिया है और इस आशीर्वाद के लिए पार्टी की ओर से मैं बिहार की मतदाताओं को बहुत बहुत धन्यवाद देता हूं, बहुत बहुत धन्यवाद देता हूं। महागठबंधन ने बिहार के लोगों का कदम कदम पर अपमान किया, सारे चुनाव प्रक्रिया को देखें तो उन्होंने बिहार के मतदाताओं को अपमानित करने के काम के बजाय और कोई काम नहीं किया। यहां तक कि मोदी जी का विरोध करते करते छठी मैया का भी अपमान करने में पीछे नहीं हटे। ये भी हमको ध्यान में रखना चाहिए। उन्होंने जो हमारे प्रवासी भाई हैं, जो दूर दूर के क्षेत्रों में जाकर के अपनी जीविका के लिए काम करते हैं, उनका भी अपमान किया। और तो और छोड़िए, प्रधानमंत्री जी की दिवंगत माता, उनको भी अपशब्द कहने से गुरेज नहीं किया, उसमें भी उन्होंने कोई कमी नहीं छोड़ी। लेकिन बिहार की जनता ने ऐसी पार्टी को और ऐसे लोगों को मुंह तोड़ जवाब देकर के एक स्पष्ट संदेश दिया है। राष्ट्रीय जनता दल राजद को तो इस चुनाव के नतीजे ने करारा जवाब दिया ही है। जो लोग बिहार की जनता को भ्रमित करने के लिए लगे हुए थे, घुसपैठियों के सहारे सरकार बनाने का सपना देख रहे थे, उनको स्पष्ट संदेश तो बिहार की जनता ने दिया ही। लेकिन सबसे बड़ी बात यह भी है कि जो कांग्रेस, जो परजीवी पार्टी है, आज उसकी बिहार में स्थिति क्षेत्रीय पार्टियों से भी कम हो गई और उनकी वह दुर्गति हुई है, वो भी हमको देखने को मिला है। इसलिए मैं पुनः बिहार की जनता को धन्यवाद देता हूं और मैं भारतीय जनता पार्टी के उन लाखों कर्मठ कार्यकर्ताओं को, जिन्होंने बूथ पर दिन रात एक किया, जिन्होंने इस सुनामी को ईवीएम में कैप्चर कराने में वोटरों के साथ खड़े होकर के उस वोट में तब्दील करने में जो उन्होंने योगदान किया है और जो उन्होंने मेहनत की है, उसके लिए मैं पार्टी के अध्यक्ष के रूप में उनका बहुत बहुत धन्यवाद देता हूं। और इन्हीं शब्दों के साथ आपके और प्रधानमंत्री जी के बीच में ज्यादा समय न रहता हुआ पुनः आप सबको बहुत बहुत धन्यवाद और प्रधानमंत्री जी का बहुत बहुत अभिनंदन।
प्रधानमंत्री मोदी जी के नेतृत्व में बिहार में ऐतिहासिक विजय, प्रचंड विजय हुई है। प्रधानमंत्री जी का अभिनंदन करेंगे। नरेंद्र मोदी, नरेंद्र मोदी, नरेंद्र मोदी। सभी कार्यकर्ता अभिनंदन कर रहे हैं। अब मैं माननीय प्रधानमंत्री जी से निवेदन करूंगा कि कार्यकर्ताओं को संबोधित करें।
भारत माता की, भारत माता की, भारत माता की। भारतीय जनता पार्टी के राष्ट्रीय अध्यक्ष जेपी नड्डा जी, राजनाथ सिंह जी, अमित भाई, अन्य सभी वरिष्ठ महानुभाव और देश के कोने कोने में टेक्नोलॉजी के माध्यम से हमारे साथ जुड़े हुए सभी देशप्रेमी नागरिक, भारतीय जनता पार्टी के कार्यकर्ता और यहां उत्साह और उमंग से भरे हुए आप सभी साथियों, जय छठी मैया, जय छठी मैया, जय छठी मैया। ये प्रचंड जीत, ये अटूट विश्वास बिहार के लोगों ने बिल्कुल गर्दा उड़ा दिया है।
आज बिहार के घर घर में मखाने की खीर बनाना पक्का कर दिया है और मुझे खुशी हुई कि यहां भी मखाना की खीर सबको खिलाई गई है। हम एनडीए के लोग हम तो जनता जनार्दन के सेवक है। हम अपनी मेहनत से जनता का दिल खुश करते रहते हैं और हम तो जनता जनार्दन का दिल चुरा कर बैठे हुए हैं और इसलिए पूरा ये बिहार ने आज बता दिया है, फिर एक बार एनडीए सरकार, फिर एक बार, फिर एक बार, फिर एक बार। और मैंने चुनाव में बार बार कहा था और बिहार के चुनाव में जब मैं जंगल राज की बात करता था, कट्टा सरकार की बात करता था, तो आरजेडी के लोग कभी विरोध नहीं करते थे, लेकिन कांग्रेस वालों को बहुत चुभता था और बहुत बहुत मोदी क्या बोल रहे हैं, ऐसा क्या बोल रहे हैं। लेकिन आज मैं फिर कहना चाहता हूं, मैं कहूंगा अब वापस नहीं आएगी कट्टा सरकार, अब वापस नहीं आएगी, अब वापस नहीं आएगी, अब वापस नहीं आएगी। साथियों, बिहार के लोगों ने विकसित बिहार के लिए मतदान किया है। बिहार के लोगों ने समृद्ध बिहार के लिए मतदान किया है। मैंने चुनाव प्रचार के दौरान बिहार की जनता से रिकॉर्ड वोटिंग के लिए आग्रह किया था और बिहार के लोगों ने सारे रिकॉर्ड तोड़ दिए। मैंने बिहार के लोगों से एनडीए को प्रचंड विजय दिलाने का आग्रह किया था। बिहार की जनता ने मेरा ये आग्रह भी माना। बिहार ने 2010 के बाद का सबसे बड़ा जनादेश एनडीए को दिया है। मैं बहुत विनम्रता से एनडीए के सभी दलों की ओर से बिहार की महान जनता का आभार व्यक्त करता हूं। मैं बिहार की महान जनता को आदरपूर्वक नमन करता हूं। मैं आज लोकनायक जयप्रकाश नारायण जी, भारत रत्न कर्पूरी ठाकुर जी को भी आदरपूर्वक नमन करता हूं। कर्पूरी ठाकुर जी के गांव से मैंने बिहार में चुनाव अभियान की शुरुआत की थी। अब आज की ये विजय हमें संकल्पित कर रही है कि बिहार के विकास को नई ऊंचाइयों पर ले जाएं। साथियों, एक पुरानी कहावत है, लोहा लोहे को काटता है। बिहार में कुछ दलों ने तुष्टीकरण वाला MY माय फॉर्मूला बनाया था, पर आज की इस जीत ने एक नया सकारात्मक MY माय फॉर्मूला दिया है, और ये है महिला और यूथ। आज बिहार देश के उन राज्यों में है जहां सबसे ज्यादा युवाओं की संख्या है, और इसमें हर धर्म, हर जाति के युवा है। उनकी इच्छा, उनकी आकांक्षा और उनके सपनों ने जंगल राज वालों के पुराने सांप्रदायिक माय फॉर्मूले को पूरी तरह ध्वस्त कर दिया है। मैं आज बिहार के युवाओं का विशेष रूप से अभिनंदन करता हूं। मैं बिहार की बहनों बेटियों को नमन करता हूं। मैं बिहार के किसानों, श्रमिकों, दुकानदारों, पशुपालकों, मछली पालकों, सभी को नमन करता हूं। साथियों, मैं एनडीए की पूरी टीम को भी बहुत बहुत बधाई देता हूं। नीतीश जी ने शानदार नेतृत्व दिया। भारतीय जनता पार्टी के प्रदेश अध्यक्ष दिलीप जायसवाल जी, सम्राट चौधरी जी, विजय कुमार सिन्हा जी, उन्होंने लगातार मेहनत की। हमारे जीतन राम मांझी जी, कुशवाहा जी, चिराग जी ने बहुत बेहतरीन लीडरशिप दिखाई है। एनडीए के कार्यकर्ताओं ने भी बूथ लेवल पर तालमेल का अद्भुत प्रदर्शन किया है। मैं देश भर के भाजपा कार्यकर्ताओं का भी हृदय से अभिनंदन करता हूं। आपने बिहार के हमारे कार्यकर्ताओं के साथ मिलकर भाजपा की एनडीए की झोली को एक शानदार विजय से भर दिया है। मैं जम्मू कश्मीर के नगरोटा के लोगों का और उड़ीसा में नुआपड़ा की जनता का भी आभार व्यक्त करता हूं। उन्होंने उपचुनावों में भाजपा की जीत पक्की की है। साथियों, आज सिर्फ एनडीए की विजय ही नहीं हुई है, ये लोकतंत्र की भी विजय है। भारत के लोकतंत्र पर भरोसा करने वालों की भी विजय है। इस चुनाव ने भारत के चुनाव आयोग पर जनता के विश्वास को और मजबूत किया है। बीते कुछ सालों से लगातार भारी मतदान होना, वंचितों, शोषितों द्वारा ज्यादा से ज्यादा मतदान करना, ये चुनाव आयोग की बहुत बड़ी सिद्धि है। साथियों, ये वही बिहार है जो पहले माओवादी आतंक वहां पर हावी था।